coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hump day. Whoop, whoop, whoop.
Why are you looking at me when you say it?
You always say hump day. Whoop,
I don't ever say
you say hump day? Whoop, 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 whoop.
Sometimes.
Okay, maybe it's in. Whoop,
Yeah.
I think it's
my hearing's not that great. I don't know where it's coming from in the
that's
room.
fine. Yeah, it's Wednesday. Yeah.
Woo!
There we go. There we go.
LFG.
Say again?
LFG.
Yeah. I never wrapped my arms around that. I never wrapped my arms around it.
It was a good effort. It was an A for effort.
It was an A for effort.
Yeah.
It was an A for effort. I still see some emails with LFG on it. It makes me smile. It does. It does. So how are you guys today?
Amazing. Amazing.
Too bad?
Yeah. I had to change my car battery yesterday.
What happened?
It was a little kerfuffle.
What happened? Yeah, because I was leaving and Beth was like, "Do you know how to jump a battery?" And I'm like, I do.
Well, I know. I also know how to.
Oh, please, my heart is breaking here. You didn't know how to jump a
Of course I
barrel?
did.
Okay.
Yeah. I had the cables and everything. I can change tires.
But you have a new car. You just leave your lights on, or
No,
like
no.
what?
It's like I got the car 3 years ago. So it's,
Your
the
battery
battery.
should still be good.
Well, it's a used car, so it's,
Yeah.
3, 4 years. Who knows? I mean, 3 or 4 year old battery.
Yeah.
It died, but I pulled into the spot. So my cables, I had like 20-foot cables or something like that. So
That's even large.
yeah, no, they're long cables, but they couldn't reach all the way to the end. So I had.
Oh, because you nose in, you don't back in.
I know.
Yeah, you had a car next to you or whatever.
Yeah.
Yeah.
So I had Beth come out. Beth came out. And
What'd she do? Hold the cables and then you pushed your feet and then you held the battery or something?
So we can
Like a daisy chain? What is this?
We connected 2 sets.
No,
of
don't do
cables
that.
together.
Oh, you scissored it?
Yeah, like this. Connected them together. So
You're not supposed to do that.
Definitely not supposed to do that.
Yeah.
But it worked.
Okay.
Yeah, and it got me to Pep Boys, so I got a new battery.
All right.
That's
Yeah.
good. It was just a battery.
But it was good. It worked. So if you've ever,
What's a battery go for these days?
it was 280.
Oh, I was going to say close to 300.
Yeah, it was like $300.
That's wild.
Yeah. So, but
Yeah.
if you've been wondering if you can
I remember
connect,
batteries were $39.
Probably, yeah.
Not lying.
if you were wondering if you could connect 2 jumper cables together to extend them,
It's not optimal.
it's not optimal. Make sure they're separate. They're
Almost
not touching.
blew up our garage.
Yes.
And
But
also,
it worked.
Beth's car is ginormous.
Yeah.
you want that.
Yeah, you
No,
need
I
to-
know,
that's what
but
call it.
not through a jerry-rigged
Yeah.
system with electrical
Yeah.
faults.
Yeah. And I got lucky because I'm sitting there and I'm like, oh.
I don't even have jumper cables in my car. Like, I know I should carry them, but at least you had some.
I got lucky because I thought, because I couldn't stretch the cable wasn't long enough. I thought I was going to have to
Son,
push.
it's a Batista problem. Just don't worry about it. You'll deal with it. You'll learn to make do. But
I thought Omaha already. I thought I was going to have to push the car out
Sure, yeah.
and put it in neutral, but my car locks up, like the parking lot.
Oh, yeah.
The parking brake
Yeah.
locks on when you don't have the car. Like you can't put it in neutral
Right.
and push it. Like you
See,
can an
here's
older
the thing,
car.
though, Nikki.
But Gus came out the door
Yeah.
as I was trying to do this. And I'm like, oh, thank God. 'Cause I
Gus
didn't know
is jacked.
Yeah, Gus is jacked.
And he's 24.
And he's, yes.
And his back works. Like.
That's true. So I didn't blow out my back, too. That was good.
But what do you learn from this, Nikki? Always back in.
Yeah.
back that shit up.
Yeah, you back that thing up. You
Yeah,
should
yeah,
always
yeah.
back in.
Yes.
You
So-
know, if you're in a garage, they're going to have a portable.
Yes, that was going to be my backup.
They have
Yeah.
a portable bag.
Yeah. There's wonderful ladies here who work at the security desk, and the building management staff is really nice.
Yes.
But I'm glad you were here.
I listen. You MacGyvered it. Do you
Yeah.
Do you know what MacGyver?
Yeah, of course.
You know what MacGyver.
Yeah, Richard Dean Anderson.
Yeah, there we go.
Yeah, it's a
The
national
audience probably
treasure.
doesn't know what MacGyver.
No, because we know it because our generation through SNL MacGruber. MacGruber, do you know? Come on, that's how I know it.
Well, MacGyver was a TV show that basically with gum and some wire, he could basically fix anything.
Sure.
He needed to get done.
Everybody's telling me I gotta get the jumper box or like a trickle charge.
Yeah, they have those.
It's on the list of things now.
I have one for my motorcycle.
It already happened. So like now I have a brand new battery. Like this won't be an issue for another 3, 4, 5 years. So
Your battery should last longer than that, though, man. Something's hinky about
He's hanging out on Rush Street with the music playing. The
3 to 5 years.
Yeah,
How much longer is a battery?
7-10 years. I mean, it depends on the weather. Like, it's rare that it would happen in the summertime. Like, well, I mean, I know October's not the summertime, but it feels like summertime when it's 60 some odd degrees here. Usually it's, the first winter, the battery's a little bit weaker and then it's got to start up.
Yeah.
Mm-hmm.
But I'm glad you were here and I'm glad Beth was able to help you. So.
Thank you, Beth.
And thank you, Beth. You save us all.
Yes.
I just stood there. I did
saved the
nothing.
day.
I was scared.
Nice.
Yeah. I was going to mess with Beth. I wanted to do like a like when you like connect them.
Very
Kind of.
What is wrong with you?
Not
why,
funny.
Why would that be
What's wrong
funny
with
to
that?
her?
You don't have to look across the pond.
Why would that be funny to she? Okay.
That would be funny.
She's
That
just
would've
she's just trying to get
been-
home
really
to
would've
her.
hammed it up, like chewed up the scene, like laid on the floor and
No,
stuff.
Yeah.
she's just trying to get home to her kids, and she's dealing with your giant toddler ass.
That would have been good. That would have been good.
Anyway, shenanigans all around.
Yeah.
Well, how was your evening, Bat?
Uneventful, not like his. My evening was fine. Well, last night, chemistry tutor.
Oh,
Not for me.
How was your house, by the way? Your house didn't blow up yesterday.
Carbon monoxide.
There was so much drama.
All right, I wasn't going to mention it unless you mentioned it or somebody brought it up. So
I just wanted to know how it turned out. Like, if
I'm gonna let you know. So, you have to know ahead of time. I've had the fire department at my house before for other
Multiple times.
false alarms,
Yes.
and mostly when the girls were a lot younger, and when
They're on speed dial. It's like, oh no, the Batistas have a problem this morning.
Yeah.
Here we go.
yeah,
Yes.
and when the fire department came, there were half a dozen of them, and 4 of them looked like models. So my girls were like, I can't believe we're down here like in our pajamas. I don't have makeup on.
Right?
And the wife was strategic enough. She went upstairs and put makeup on.
Sure.
And came down a little bit later. So they were prepared this time, or my wife was prepared
Sure.
this time. So what happened was the carbon monoxide was beeping.
Your carbon monoxide detector was beeping. It's
And
very
just a
scary.
simple-
Yeah,
It's scary.
Yeah,
It's just a simple plug-in. But I said to my wife, we don't have the heat on.
sure.
So, unless it's the stove, which I doubt because we haven't used the stove in 2 weeks.
All we do is
excel
order
in different
DoorDash.
rooms. Yeah, we all excel in different rooms.
It can
Yes.
only be the water heater. And,
Yeah.
and I don't think that just went bad, like overnight. Long story short, it's beeping. I said,
But when a thing beeps, it doesn't tell you what's wrong. It's just like, hey, it's detecting carbon monoxide.
Well, it actually does.
Oh.
So I told her, Google how many beeps it's beeping. Like
Okay.
it'll beep 2 times, 3 times, 4 times, 5 times,
Sure.
whatever, to tell you what it's doing. I said, but in the meantime, take the battery out, replace the battery. It's probably just the battery.
Yeah. But open some windows and some doors.
Open some windows.
Sure, yeah.
Yeah, of course. Vinny was still sleeping. Open some windows. She goes, well, I'm putting some makeup on. As soon as I finish putting on some makeup, because the fire department's going to come soon. When I call them, I'll change the battery. So she tried to change the battery. She couldn't do it. Then she got the battery open, put a new battery in. It's still beeping. It's beeping 4 times.
Okay.
And that means that there's a carbon monoxide problem.
Okay.
All right. Well, make sure
yeah,
the
all
doors
right.
are open. Lucky in the first floor there we have a lot of doors, and she opened up all the doors. Plenty of ventilation coming through. It's 60 some odd degrees. No problem. Everybody's happy. Everybody's healthy. She calls the fire department. Fire department comes. Within a couple of minutes, they say, you want the good news or the bad news? She goes, the good news. She goes, well, you have no carbon monoxide leak or anything else like that. She goes, okay, what's the bad news? She goes, well, it's beeping 4 times plus 1. So if you listen to it, it's beeping 5 times, not 4 times. And 5 times means that the unit is bad. The unit is bad on it. So you just need a new carbon.
It's like, but that's annoying that you gotta know like friggin' Morse code. Like,
You just have to count to 5.
Yeah, but if you can't,
5 is all.
But the
don't
fifth
you
one
take
is
that tone
lighter.
with me, mister.
She got to 4 and said, I need to call the fire department. So
That was the right thing to do in hindsight. Like, you don't mess around with stuff like that. Like, I don't know.
or you count to 5.
I just detach mine.
Look, dude.
If it starts beeping, I just unplug it, like pull it out. You know.
That's fine.
It's fine.
Yeah.
Yeah.
So yeah, all was saved. Fire department came. Everybody was.
Thank you. Hey, man, that's your tax dollars at work, so thank you. Thank you. Is it the Glencoe FD or Glenview FD?
Glenview.
Glenview FD, the ones that look like models. Okay, duly noted.
You guys did good. You guys did good. So that was her. That was her morning. Worked out fine. Vinny got up 20 minutes early. He was actually early for school, which was pretty good. Yeah.
Yeah, that's nice.
Yeah.
So it worked out.
Yeah, it worked out fine.
Not too shabby.
Yeah. Chemistry tutor last night seems to be a weekly thing now.
Oh, chemistry's the weak link in the.
Used to be math
Uh-huh.
last year. Math is doing okay now.
Oh, good.
Yeah, so chemistry. Chemistry is the little
Yeah.
in the armor. Yeah. So
All right. All right. Good times.
okay.
Yeah.
Okay. Hockey game tonight. Coming.
No, I will.
If
will not-
that ever happens, I think that would be harder than getting Tom to come to one.
Yeah.
Also, it would take me like 3 hours
Yeah.
to get
I
there.
know.
Like it would. It's not a.
I'm just teasing.
It's not a.
He's going lower and lower in the rotation anyway, so he plays less and less. So don't worry, don't
Ooh,
come
what
out.
happened? Not hustling?
Kids are getting good. You know, kids who want it. You know what I
Yeah.
mean?
Sure.
Kids who want the jersey, just go a little bit lower. You know what I mean? That kind of thing. So it happens.
He just wants the prestige.
Yes.
The
yes.
wearing
And
the
it
jersey.
is.
Yeah.
But you know what? They don't support hockey in the high schools. It's really because it's a club sport, even though they wear the colors and they're represented by the school and they have the school name on it and stuff, and big turnouts for games, especially on the varsity team. And there's a big rival. They're number 1 in the state for the varsity team.
Your school that Vinny goes to is number 1 in the state? Wow.
For the varsity. He's
Sure.
junior varsity.
Sure,
There's
sure.
2 varsity teams. Usually it's New Trier is up there.
Yeah, I was gonna
and-
say. I was like, I don't know about that.
Yeah, no, New Trier's usually up there, and then the Catholic school,
Loyola.
Loyola, yes, Loyola St. Viator is pretty good too. But yeah, this year they just don't get a lot of support at school. I guess because they in the parade one year they threw candy. They're supposed to throw candy for the kids and stuff like that. The hockey team threw them in the tubas of the marching band.
Aw, that's not
Said-
cool.
the school said no more support
That was
for the
it?
hockey team. That was it.
That's not cool.
So they let them march in the band in the parade this year, which was last weekend, and
And they did it again.
no, they weren't allowed to have candy. And the guy who got them into the band gave them a great speech. He said, "Listen, you bleeps, you better be hugging and kissing babies and walking in a straight line, and I don't want to hear nothing from anybody or no problems from you kids because they did a lot to get you in this parade." So they all just stood there and smiled as they held their thing. It was really kind of cute. Anyway, fun. That was our day.
I don't know how we got onto a parade, but but here we are. Just
Here we
magical
are,
journey.
Vanetta. Here we are.
Here we are.
Here we
Just
are.
Magical,
Yeah.
wonderful journey of thing. Hey, can I tell you? So this is weird.
Mm-hmm.
I went to work out last night because that's like a thing that I do. But I got to the gym later than I normally do because I had to run some errands, and it's like it throws everything off when you go later because it's a whole different group of people than normally.
Oh, it's like going to the bathroom at 6:30 instead of 6:40.
Yeah, I
I'm
don't
really
know.
upset about that. That really threw off your whole day.
You need a routine. He needs a routine.
After we had a short conversation, he was like, "I'm 7 minutes late." I mean, like, what am I going to do today?
This is right.
Like,
Look
7
at-
minutes here. I'm crowning.
I'm better now.
I didn't.
Oh,
Go ahead.
no.
You were
I'm
working
sorry.
out.
I'm sorry. That was too much. That was too far. But he did say that. He was like, "I'm 7 minutes late. This is too much. I don't know how we're going to do this today."
I don't.
You were
Go on
working
with your
out?
story. I'm sorry. That was too much.
TMI?
TMI.
Too much. Anyway, so yeah, and the gym's like the most crowded I'd ever seen it, and then but it was just like
He goes to the executive bathroom too. I want to out him for that,
okay, do you want to just
so everybody knows.
You gotta learn how to pump the brakes when she's in this
Yeah.
kind of mood.
Yeah.
what kind of move? So I'm in a mood because I'm just getting constantly interrupted, and they're like, "Oh, she's not cool with that." And I was like, and talking about your bowel movements, they're like, "She should totally be into this." So nope, it's fine. You know what? I'm gonna just move on. You guys don't get my story.
No, I want it. You can't do that. You
We
can't
got a
do
great
that.
show for you today. Nope, we got a great show for you today. Can't get my schedule out here. I don't know why it's not working. But yeah, for some reason the image in the email is not loading. But if you want to read the schedule, I don't know, it won't load.
Schedule today,
my
we got
page.
Option Jive at 8
Yes.
o'clock.
Yeah.
8:40, we got What's Your
Assumption?
We got 10 trades. And then the Skinny on Options math with Jacob coming on. Be very, very nice.
All right, that's gonna be good. Yeah, so
Got
we're gonna
it.
do some
Live for the
viewer
trade
submitted
desk,
trades today.
So again?
Some viewer submitted trades
That's
today.
correct.
So.
That's correct. For What's Your Assumption?
And then who's gonna be on for live from the Tasty Trade trade desk today? Who's coming in?
Quinton, it should be the
And Ryan.
usual suspects.
Yes.
Oh, nice.
I mean, even the S&Ps are up 50 handles, almost a 1% move. So we'll see how busy the trade desk
so
is.
back.
Okay. All right. Pretty good. All right. Well, hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hey, this is my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Breaking
coming
news.
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is October the 15th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings?
We had a few banks. Morgan Stanley from yesterday, PNC, Bank of America, and then today you got like Schwab, USB, United Airlines might be.
TSM tomorrow morning. That's
What is
a
it?
big one. TSM.
TSM tomorrow morning is
is a
another
big
one.
one.
Okay.
So that's your.
Things are happening. Things are Things are popping
not
off.
Great.
Federal Reserve Chair Jerome Powell said the central bank is nearing a point where it will stop reducing the size of its bond holdings, but gave no long-run indication of where interest rates are heading. But Powell generally stuck to the recent script on the economy and interest rates that policymakers are concerned about the labor market tightening and skewing the balance. But basically, his speech was enough to reverse the market in a way I have not seen the market reverse in a long time, and then it kind of just petered out. Like, what happened yesterday?
I mean, everybody.
Like, we were down like 80, right?
Say again?
We were down like 80 at one point, like as much as 80, and then it just all reversed.
Well, I mean, listen, you got 1.5 days of down move. I mean, you should have been pouncing on this. No, I'm kidding. Listen, we look at last. I'll go one step even closer. Look at last night. We were up around 15, 20 handles, closed down 15, 20 handles in about 5 minutes at the end of the day because of a tweet again or
Cooking oil.
What's that?
It was cooking
oil, yeah.
Cooking oil, yeah.
Soybeans and cooking oil, yeah.
It's unbelievable how fast the market moves, and the size of the market right now makes these moves so much bigger. I mean, an 80-point move in the S&P is a little over 1%, 1.25%. I mean, a significant move, but 1.25% at all-time highs.
But what happened at the close?
Again, another tweet from Trump talking.
Yeah, that was when we got.
Oh, that was when the tweet came at the close, and then everything. Wow.
So, I mean, news gets digested very quickly, and it also gets reacted very, very quickly. So, it's not really like the why isn't so much as what are you going to do about it?
Sure.
Kind of thing.
Hey, can we look at bonds this morning? What's going on?
118.10. They started in September. They were in the 113 handle. That's a $5,000 move on a bond from September.
That's like a yearly move.
Yeah, right. Yeah, you're right. And it was a hard hold. Don't get me wrong. We hung out in that 14, 13 range, what seemed like months, but it was really only weeks. And then you have this big move up. So, I mean, bonds are at this level, 118.10, they're probably fairly priced. I mean, Ivy rank's only 14. They're probably off your radar right now for any kind of premium selling. And directionally, it's anybody's bet right now.
Okay. Hey, in other news, Wall Street's fear gauge surged to its highest level since May. The revival of the U.S.-China trade war has ended a streak of summer calm that had brought the lowest volatility since January of 2020. Remember? Oh, no, you were on the right slide, Beth. Yeah, sorry, there just isn't a headline on there. But after one of the quietest summers for the stock market in years, Wall Street's fear gauge has once again shot higher. What do we do?
Vol's coming in a little bit today. I mean, almost 3%, 60 ticks to the downside. Just got below 20. The VIX itself, just below 20 as well. But we were up there yesterday. Into the sell-off, it was like, oh no, they caught us. And then now you get a 50-point rip or two.
Yeah, volatility got up to around 22 just 3 days ago. Yesterday, you were right. Volatility kind of hung in there for a while. I talked about it all day long on the show. We got down to around 6,600, 6,630 was the opening price from Sunday night. And that was a number I thought we would get back to the day before. It took us another day to get down there. We went under that to under 6,600. We talked about it on the show. You actually sold a put spread in the 0 days. I think it was time to lean, a little bit long. That maybe the low print for the day was in. Volatility was contracting a little bit, but then it stayed bid all day long. I guess maybe because Powell was speaking.
Yeah.
It stayed bid all day long.
I think you have more of that today, too.
And now you're getting the volatility contraction. So
we will see. The U.S. dollar was on the defense early this morning after comments from Fed Reserve Powell boosted wagers on interest rate cuts this month. The greenback had lost ground to the safe haven yen and the Swiss franc on Tuesday. China also reported their consumer prices dropped more than expected in September. That came in like late last night. But what is the dollar doing this morning?
It's a little bit weaker, right? I mean, the euro's up small, the yen's up small. You mentioned the Swiss franc; it's up small. I mean, very small moves, just a couple of ticks. And the DXY $DXY has moved about $1 in the last 3 days. Still at the higher end of its range.
We got long the Aussie dollar with Glenn yesterday.
Oh, that's fun.
In our not with Glenn, NFA. Not financial advice.
It's up.
But
it's up good. 39, just over a third of a percentage point, 255 ticks.
Decent move. I can actually take it off on the tastyFX product. So we did like a little micro lot there. Made a couple shekels.
Nice.
Good.
Yeah.
Hey, gold and silver keep hitting record highs. They touched all new highs again on Tuesday. The precious metals have rallied strongly in the past month amid global trade tension, the federal government shutdown, and increased stock market volatility. Gold up 50% for the year. Silver also up like 100% for the year. I don't know.
Incredible. Absolutely incredible.
Yeah, and it's up $36, and it just sold off about $36. Gold up 1%. It was up around 1.25% just a moment ago. No sky. I mean, it's blue skies ahead. I mean, the last 3-4 days, it's gone from around 4,000 to over 4,200. I promise, if it goes down just a little bit and I can get out of my
You'll never trade it again.
I'll never trade it again. I promise.
Yeah.
I mentioned this yesterday. I threw it out there to the trading gods. Obviously, they weren't listening. Hopefully, they're listening right now.
Good luck. Good luck with that.
Very much.
It's been crazy.
What about you, Nikki? What are you doing in metals?
77. I'm sorry to interrupt you. A 77 in gold is huge.
Yeah, that's opportunity, baby. Or you could just be a gold bull like Liz and just win. Just keep winning.
Yes.
Yeah. Sometimes the best trade is just doing nothing and
Yeah.
just being long it. But yeah, I mean, I've been trading it through this move. I'm in the same boat as you are, where it has just been a face ripper, and I have had zero opportunity to manage the trade, and I have not added to it, thankfully. So I have a strangle on in silver, which is okay because I did it at higher prices, like where we're at right now, or a little bit lower, I guess, like 2 or 3 days ago. But it has both of those have been painful. You're on both sides of the market.
Sure.
There's no way.
Well, you have to have some here. If you trade enough and you have 20, 30 positions on, you have to have some that don't make money. I mean, it's just numbers. I mean, it's just the odds. It's just the way it is. You just hope that those are a lot smaller than the profitable ones that you have. So you got to kind of manage them all. You're going to have these problem children unless you avoid them, like I have done for 6 months, but then I stepped on my own foot. It happens.
Staying in the commodity sphere, oil dropped yesterday as investors weigh a supply surplus outlook. And again, U.S.-China trade tensions. Oil prices fell in early trade, extending losses from the previous session. I think oil's down again this morning. What are you doing in crude oil?
58.65. It's actually up small this morning, 37 cents. Off of its lows, I guess, of just under 58 to 57.50 or something like that.
We added yesterday. We bought another one of the micro crude contracts.
I remember.
100 barrel notional. So we got in
58,
like right at 58. So we got in at 58.13. But I'm long another one at 63.20. So I've got my basis at
dollar cost average. I'm just kidding.
Well, I was long at 63, and now I'm even more long at 58.
Mm-hmm. Yay!
So I need a 60 handle, and then we also have a put spread in the oil futures that's right at the money, the 58.56. So we are long oil here.
Okay.
Probably have enough.
Yeah. Yes.
Probably a position.
Long oil, short gold. It's been a fantastic trade. Really amazing. Really
Kill a
amazing
man born
stuff.
to die, son.
Yes.
Just wrong in all of the ways.
Yes.
Commodities are fun. Hey, let's shift gears to Bitcoin. Bitcoin and Ether tumbled yesterday as, again, U.S.-China tension ramped up. It's a theme. Wiped out the rally the day before that was fueled by a conciliatory tweet. What are you doing in Bitcoin and ETH, and why can it not keep its wings up?
Yeah, it really can't. It's down another $900 today. It caught a little bit of a bid, trade up to 114,000. It's 112,000 right now, trading right near its lows. Why can't it catch a bid? Well, I mean, I don't know. Everything else has.
The correlation with risk assets has certainly been basically none.
Yeah, right.
It's been Bitcoin and Ethereum have both been choppy relative to the market that's been pretty much straight up other than Friday. Mm-hmm. So it's been kind of a weird deviation.
It's been on a 6 or 7 day slide here.
Yeah.
Probably a little bit overdone here.
Anything going on in like IBIT or Ethe or Coin?
I'm long them both.
Okay.
Taking a little heat. Some of the other stocks
up around $5, so you'll get
nice.
Yeah, but it's come down like 50.
Oh yeah.
In the last 3 or 4 sessions.
Yeah,
it got up to
like
400.
390 to 340 where it sits now. Now it's 346.
Yeah.
Well, in other crypto news, the Department of Justice seized $15 billion worth of Bitcoin held by a man in Cambodia who oversaw a massive pig butchering fraud scheme. The seizure is the largest forfeiture action by the DOJ in history. Look, I'm going to need a receipt. I'm going to need a clear chain of custody for where these seized Bitcoins are going, because I don't know that they're going to end up like going to the people. That's all I will say.
I want to know the pig butchering, how you amass this much capital.
It's a huge web of human trafficking and like money laundering and all of these crimes. And because like, you know how you sometimes get those random text messages is like, hey, are you coming to my barbecue? And you're like, what is this?
Yeah.
Like that's like the tip of that iceberg of getting you into like a pig butchering scam.
For Cambodia.
Yeah, right?
Yeah, probably close.
Big number.
But it's part of an overall larger problem. Like people are being fleeced in a wide array of schemes. So just be careful. But good job, I guess.
If you get that text message and you don't have a Coinbase account and they say that somebody has hacked into, some device has logged into your, what's that?
I got one of those like yesterday.
I got one of those yesterday too. They logged into your Coinbase account.
Yeah.
Call this number. Don't call that number.
Click on anything. Don't.
Especially when it's coming from like a...
It's coming from Cambodia.
Yeah. It's coming from like a WhatsApp number.
Yeah. Yikes.
Don't do it.
Yeah.
Shifting gears to some tech news, Oracle Cloud Infrastructure announced they will deploy 50,000 AMD graphics processors starting in the second half of 2026. The move is the latest sign that cloud companies are increasingly offering AMD GPUs as an alternative to NVIDIA. A couple tickers here: Oracle, AMD, NVIDIA.
Yeah, and NVIDIA. NVIDIA's took a 2-day slide here down to about 180. It's about 184 right now. Oracle, which has become like a meme stock back in September, where it went from like, 230 to 330 or almost 330, is sitting at right around 300. It's 304 this morning, up $5.
Yeah, all the chip stocks are going nuts this morning. You did have ASML earnings this morning.
Okay.
Stock is up like $40 or $50. If you look at
$981 stock with very wide markets. And
very hard. Very hard.
Unless you had a directional bias.
Yeah, but if you look at the rest of the space, you got TSM is up $12. Even if you just go to SMH is back to basically highs. I mean, $3 or $4 off highs. It's up $7, $8 here in pre-market. So,
what about AMD?
AMD is at 223, so it's up about $5 here. Not exactly at the highs, but 10 points.
They've had a good run. They've been able to sustain it since, announcing some partnership news last week. Speaking of partnership news, when will they run out of money? The answer is never. They're literally propping up our economy. I'm talking about OpenAI. They announced another partnership yesterday with Walmart. Walmart said they'd reached a deal with OpenAI to allow shoppers to buy items directly through ChatGPT. I want to see a Venn diagram of people who like ChatGPT and people who shop at Walmart. Like, those are just two circles.
You want to see how the circles intersect each other?
Right, yeah, that's a Venn diagram. Right, like, I don't see people of Walmart being like hardcore ChatGPT users, but maybe that's just my own bias.
You have to go to the library.
Yeah, maybe that's just my own bias, but what are we doing?
How about a web of all the things that ChatGPT and OpenAI are connected to now? I mean,
I know.
Every single day there's a new company that's getting 50 billion and 500 GPUs, 5,000 GPUs, blah, 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 blah. It's every single day.
Every single day. No, you're right. It is crazy.
I mean, like now we're at Walmart. What's next? Like DoorDash? I mean, can you order DoorDash and Chipotle partner with OpenAI?
Logic chain. After Walmart, it's the 5 and below. Be part of now. Yeah.
Maybe.
What is Walmart doing this morning? I guess that tech
Unchanged
company.
At 107. That's a new high.
Okay.
Rallied $7 on this news yesterday.
Yeah.
7%.
Wow.
Huge move.
Yeah.
Crazy.
That is crazy. What a time to be alive. Also, what a time to be alive, because Sam Altman says ChatGPT will soon allow erotica for adult users. Ooh. Who asked for this? He says they're actually going to revert back to probably some GPT-4 models, like, because it's really the version of GPT that people liked the most. And he also said they will relax some of ChatGPT's safety restrictions. Again, who asked for this? So the chatbot's responses will be friendlier, more human-like, and, if you want, more erotic. No.
How else are you going to get the robot to do that, thing?
Oh, I hate this timeline. I hate this so much.
half the things I follow on Instagram are AI inspired.
Oh no. Oh no. I don't want to be here. But also there's actual really good human authors that write really good smut. And you should support authors.
Well, they're unemployed now.
You should support authors. Yeah. All right. Well, hey, Microsoft announced they are ending support for Windows 10, which runs on 40% of PCs. Awesome. The end of support date comes about a decade after the initial release of Windows 10, which is typical for most Windows versions, but it comes just 4 years after Windows 10 was replaced by Windows 11. They say you can still get maybe some security protection, but again, it runs on 40% of PCs. So
the worst thing since the end of the Blue E. Blue E, that was the turning point. That really messed some people up. Who did
Clippy? Was Clippy Microsoft?
Yeah, there's Microsoft. Yeah. Yes, Microsoft Word. What's Microsoft?
Well, ChatGPT is Clippy 5.0.
You're right.
I mean, that's what it is.
Microsoft up about $2, but the whole market is up here. Actually, the Dow is the weakest of the group, up 0.5 percentage point, which is 234 points.
That's bonkers. My mom, before she retired, she worked for the Social Security Administration, and I'm pretty sure they were running Windows 98.
I was going to say Windows Me. You remember Windows Me? That was the turning point. 98 was good, though. That was
But anyway.
Remember the Command and Conquer days?
Yes.
Good luck with that upgrade. Hey, it is rumored that Apple is finally ready to launch the Home Hub, which is a tablet device and smart cameras that have been rumored since 2021. A new report suggests that the Apple Home Focus tablet is expected to launch in March of next year. It'll come in 2 configurations and will cost around $350. And most notably, it's being made in Vietnam to sort of relieve some of the trade tension pressure of what's going on in China. Apple is trying to get more into home devices. There could also potentially be an Apple robot. What? Give it to me. But yeah, they want basically to be kind of like an Amazon Echo but it's basically like a giant iPad that controls your whole house. What is Apple doing?
Apple's hanging out at $2.49, up around $1, $1.50. It's been on a 4-day slide from around $2.55 down to about $2.45. It's sitting at $2.49.
Okay.
Change.
It's pretty good. Hey, another
27 in there. It's expanding, but not great.
Another partnership news yesterday, Spotify announced they're partnering with Netflix to bring video podcasts to the streaming platform. Spotify said the move is the next step in evolving the company into a multimedia experience. YouTube is eating everybody's lunch as people discover that I watch podcasts on my TV in my house on YouTube. And Netflix is like, yeah, we want some of that action. So they're going to do The Ringer. I don't know, Nikki, if you listen to The Ringer. Sports
one.
podcast, yeah. So that's coming, and also some true crime podcast. One that I listen to called Serial Killers. Yeah, it's also come on. Look, I like to listen to murder.
Imagine that. What's his?
Ed Gein.
Yeah, Ed Gein.
I haven't seen that. The Monsters, I haven't seen it yet. But he's like the basis for like the Texas Chainsaw Massacre and for Silence of the Lambs. Like I know the case because it happened in Wisconsin. He would skin people alive.
Yeah.
Not a fan. It's been going. It gets a little monotonous.
Oh, it's not the murder and skinning of people is monotonous.
Episodes. I think it's 8 episodes.
Okay. They draw it out.
Yeah.
Everything's drawn out now.
Yeah.
All the shows could be like 4 episodes.
Yeah.
And it just milk.
Netflix up $1.50, $2. Spotify doing even better, up around $5, $6.88.
Yeah.
Oh.
Netflix been kind of like meh.
It's been
kind of meh.
Mid, kind of mid.
Yeah.
When are Netflix's earnings? Because that's normally a pretty good time.
Yeah.
October 21st.
Okay, so soon.
Middle of next
6 days
week.
or so.
Yeah.
All right. So put that on your radar, maybe.
Yes. Spotify was up like
November.
$3 or $4 too, but Spotify looks the same sort of chart as Netflix. Kind of been chopping around.
Yeah. Okay.
Meh.
Meh. Congratulations to Boeing. They handed over 55 aircraft in September, the most that the company has delivered since 2018. Its production has finally seemed to stabilize after a host of safety and production crises. Boeing CEO Kelly Ortberg said the company is planning to increase 737 MAX production to 42 a month by the end of the year.
Boeing hanging out at $2.15, up around $1.50. Earnings October 29th, Ivy rank of 29. It's also been meh.
UAL has earnings after the close today.
Yes.
Maybe that's one to look
UAL
at.
caught a bid yesterday,
Yeah.
too. It was trading around under 100. It got up to around 104 or so, where it sits right now.
Okay, maybe someone leaked the number there. Hey,
Ivy rank.
in other news, Nikki, you had one of these Aura ring.
Yeah, it's.
Well, they've reached an $11 billion valuation. You think that's overblown? They just, in their new round of funding, they raised $900 million, or a reported revenue of over
$900 million they raised?
Yes, in a Series E funding. I can show you the article if you'd like to see.
Seems low. Everybody's getting like $9 billion.
It's
$900 million.
They need OpenAI to come in and be like, hey, baby girl, we're going to give you $10 billion.
This could be an easy one for OpenAI.
Yeah,
The OpenAI could just buy the whole thing. Why not?
Wow.
But what did you like or didn't like about it? I've never had one, so I don't.
I don't have one either. My wife has one.
Hey.
All the girls have them. What'd you like about yours?
But they actually are expanding. They find that women are now like its biggest like demographic.
It was too big and too like I just didn't like the. It just wasn't.
It wasn't for you.
Used to
And
it.
I never really
mine.
did anything. What'd you say, Beth?
I love mine.
Do you? Yeah.
I
don't know.
Likes hers too.
But also, it didn't, like, this is going to come out weird, but I'm going to explain myself. But it looked weird on you, not in that way, but it looked like you were married.
Yeah, that too.
You were blocking yourself.
Yes.
So it would look like a very prominent wedding ring. And so
that was another
because
problem.
Mike Butler wears one too, and I was like, are you booed up? Like, are you married now? And he's
That was
That's
another
what I gotta
problem.
do. I gotta make one into like a pinky ring.
Yeah.
A little diamond on it or initials or something like that for you guys. You younger guys.
The other problem is you actually have to do something with the info. Like, I would just get the info and it'd be like, oh, well, you only...
You haven't moved in 5 hours.
Yeah, you haven't...
No shit.
And I'm like, yeah, no shit. I'm sitting at my freaking desk. Like, what do you want me to do?
You're like, I'm hungover.
Yeah, like, you know.
Yeah.
I got my beer fridge right next to me.
Yeah, like...
I'm not
what do you-
moving.
You know.
The company is based in Finland, and this, successful rounds and rounds of fundraising, maybe they could IPO. So
I think I got taken. Like there was another one that were coming out with one of these rings, like maybe like a year ago or something like that. It never needed to be
charged.
Yeah,
that's not how that works.
Yeah.
On your own kind of like a watch, like it worked on your own kind of movement. And
Oh,
stuff
sure.
like that. So
You get it on Temu? What is this?
probably
Send your data to China.
taken. I think I got taken.
Yeah.
Okay, great.
Do you still have it in the house? Because it's probably listening to you now.
But do I have what?
Do you still have it in the house? It's probably like listening.
No, I never
to
got
you.
the product.
Oh,
I mean, it's still in,
Oh, so you just got.
Oh, it was like a
scammed.
Kickstarter
See,
kind of thing.
Beta, yeah.
We got to
Yeah.
worry about this as they get older.
I know.
They see these things. And
I know.
Nest egg.
They
You're
they just,
inherited.
yeah, they just put their credit card down.
Yeah, you got to
that's
be
fun.
careful with that. Just careful.
Oh my.
Hey, Lay's potato chips, which is owned by Pepsi, is rebranding. It's its biggest rebrand in nearly a century. Lay's announced they'd redesign their chip bags and their recipes, and what they are calling the largest brand redesign. Lay's baked and Lay's kettle cooked chips are also getting an ingredient update. They are showcasing the potatoes now on the packages to show the chips journey from farm to you. Look, I don't care about your redesign. I don't care about any of this. What I care about is that you're charging me more and the bag is only a third full. I don't care about your stupid potato and its stupid journey. I want more chips.
Shrinkflation.
Yeah.
100%.
I opened a bag and there were like 4 chips in there.
Yeah, the bags are not. The amount in there is not the same.
No.
There should be some sort of legislation that they can't have so much volume in it. And then
Yeah.
they're always worried about like shelf space. Take
Yeah.
these bags, put them to the size
Yeah.
that they are, and let's move on.
It's a
Who's an
scam.
advertiser?
Everything's a
Let's get going.
scam.
I agree with you guys.
Anyway.
I'm
But
not a chip person, by the way, unless the chips are out. Then I eat them.
I like the Flamin' Hot chips.
Flamin' hot.
Flamin' Hot.
ooh.
I like the fries.
I'm a crunchy one.
It doesn't give you acid reflux though?
Not yet. No,
Not yet?
no,
Okay.
no. Probably soon.
Probably soon.
That's coming
That's
soon.
coming
I mean,
for you.
I have the back problem.
Yeah.
So that was like kind of step one. So
Yeah.
acid reflux. That's
I
coming
love
soon.
the
Imminent.
Yeah, it's imminent. So I'm gonna enjoy while I have,
you
while I
can.
still have stomach.
I like the ketchup chips. You can really only get them in
like
Canada. Oh, those are my favorite.
Hannah's not talking to us anymore.
What's the other all season, all spice?
Oh yeah, all dressed.
All dressed.
Yeah, those are good too. And I do like a good salt and
You
vinegar.
can't just call it ranch.
No.
Hey, well, since you can handle some heat, Taco Bell announced a new collab with Frank's Red Hot. The chain announced the launch of 3 new food items in collaboration with Frank's Red Hot. The latest items include a burrito, soft taco, and nacho fries, as well as a new Frank's Red Hot Diablo sauce. The full lineup will be available at Taco Bell starting tomorrow. What are your thoughts?
I love a good gimmick. Maybe not as much as Sasha and Rob, who are the number one fast
He's
food
from
gimmick.
Indiana.
Yes.
Hey!
But
Well, I mean, you guys love your strip malls. I mean,
Yeah, that's
you know,
true.
Strip mall food is.
Goated.
this sort of I don't know how if you're getting fast food and you see something like this, like new Frank Red Hot, covered burrito, how you don't get it. I don't know how you don't pull that trigger. At least on the side, just a couple bites of it to just see how it is.
Absolutely. When Rob, my son-in-law, first came into the family, which has been a while now, and they're on their second child too. So I mean, he's got some good status with me. But when he first came into the family, maybe 7, 8 years ago, whatever, we would drive by a fast food restaurant, and it would amaze Nick. He'd go, "Oh, best fries. Oh, you got to get the Mountain Dew from there. Oh, the cheesy something enchilada. That's where you got to go for that. Oh, red rice." He like everything. He knew.
You could get him going on a Jack in the Box mini taco. It's the number one. I'm like, I didn't even know they had.
We don't have Jack in the Box here, though.
He knows them all.
But he knows.
He's had them all. He has a ranking. He's got it. He knows.
Okay.
It's amazing.
Does he have a newsletter? How do I subscribe?
That's a good idea, actually.
He does.
Or like a podcast.
You can do reviews of all.
Yeah. How does he feel about eating in his car? What is
in his car without his shirt on?
Yeah, he doesn't. He doesn't have the tools for that.
What is Yum Brands doing? Anything?
Oh, Yum Brands.
Yes.
We're going with this.
Yes, that's where I was going with this.
It's been meh. Although it did catch a bit yesterday, went from 140 to 144, where it sits right now.
Untradeable though.
It is.
Okay.
Like, you look at the options.
It's
here,
where
they stink.
good option traders go to die.
Yeah.
Well, sad news if you're hoping to see some World Cup action, because the cheapest ticket currently available to see Team USA play in the FIFA World Cup is $1,640, and prices will likely go even higher. They, of course, switched on all the dynamic pricing and just all of the price gouging. But so Americans eager to watch the U.S. men's national team play on their home turf in 2026 are going to maybe have to refinance their mortgage.
Yeah.
Can you put this on like Klarna or
I don't know.
Do like 5 installments type thing?
Do you remember when the World Cup was here?
Buy now, pay later.
Do you remember when the World Cup was here, Nikki, in the 90s?
I do. I think
No.
the Sting were still around. I don't know if like.
Oh, I don't know.
I think like soccer was getting some popularity.
Yeah, I was young, but I just remember in Indiana, people were excited and they were driving to Chicago to go see the World Cup. I think in like 98, 96. I don't remember, but
Beats me.
anyway. Hey, finally today, for my viral video of the day, I didn't get to tell my gym story because of
You
the
can tell it
patriarchy.
now.
No, because of the patriarchy. But I will just say one thing about it, which I was going to share with you, which you took away from me, and I won't get the chance
you've
again.
told us.
Is I did my first pull-up yesterday. I did 2 pull-ups.
Oh,
Yes.
I knew you couldn't keep it inside.
I was very proud of myself, and I can do 2 pull-ups now, unassisted, no bands, no weight, so.
Firefighter holding your weight.
Right? Now I want. So my goal now is I want to be able to do like muscle ups where you get like up above the bar and then like I spin around. I'm just kidding. But this guy is going viral. He's so good. People think he's AI, so he has to keep putting out videos. Now this is impressive. Watch this. This is scaffolding in New York City.
It's like Spider-Man.
Yeah.
Combo.
Okay, he's trained. I mean, he was a gymnast at some.
No, he's just Asian. But that's impressive.
Yeah.
Like that, they're far apart.
Yeah.
It's like American, like Ninja Warrior.
Yeah.
Thank you, Beth.
It's incredible.
Right? So that's my next goal.
That's something I've never been able to do.
Yeah.
Yeah.
If you get to that point, we're gonna have to do some sort of video with that. That's gonna have to
We
be
will
on
showcase
camera.
you.
Yes.
From 7 to 7:15, the 2 of us will be quiet.
Yes.
Won't say a word.
Lies.
Watch your video. I
Lies.
promise. Good job. Mm-hmm.
What's coming up next?
Out of the gentleman out there.
Yeah, that's impressive. He's not AI.
That was good. We're gonna take a quick 90-second break and come back. We got more with Confirm and Send next. Viewer emails. Back in 90 seconds. Take it live.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, my son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Wednesday, October 15th. But before we do, let's take a quick look at the market. Even the S&Ps up 50 handles to 67, well, 36 and change. They trade up to 67.41, which is about 0.75 percentage point. NASDAQ, cancel crash, by the way. NASDAQ up 246, Russell up 26, Dow up 235, and volatility in by 2 and we'll round up 2.5% to just over 20.01. It was down to 1990, down near the lower end of its range, and its higher end of its range. Bonds up 2. Bitcoin not catching a bid. That's the one commodity. We call it a commodity, call it currency. I don't know. Call it what
asset.
Asset. It's been the weakest asset so far of the group. Hasn't really caught a bid, down to 112 right now, just a couple $100 off of its lows. Bitcoin, Ethereum down $19, 41.14. It too really hasn't caught a bid, but it's been a little bit more two-sided action. Oil up 41 cents, about 5 cents off its highs for the day, but as you can see here on the right side of the chart, relatively low range. Gold back up 41. It is about $30 off of its highs. Still another 1% move. You can see here it hasn't had a downtick since August. The summer of 2025 is going to be a big one, or has been a big one for gold and silver. Silver up almost 70. Oh, there you go, 78 cents, trading 51.40. That's all I've got for right now, son. You did mention ASML had earnings as
up like $50.
Yeah, Mike.
What do you think gold's implied volatility is?
Oh, gold's implied volatility. I was going to give you the IV rank. The IV rank's in the 30s, right?
Yeah, no, it's the 70.
Oh, 77, right, right.
What do you think its actual implied volatility is?
Please make it over 20.
Oh, yeah.
Is it?
It's like 25, 26, 27 on some of these.
Typically, it's like around a 14.
Yeah, it's like 2 times the normal
it's
implied.
Still not enough for the movement, for somebody who has been fighting the move.
Oh, yeah. I mean, at a 1% move, I mean, you're well past the implied volatility, especially with the move that we've had, the 50%. Been crazy.
Yep. Great.
Incredible. Confirm and send.
Let's do it.
Let's do it.
Wednesday, October 15th. I'll go one.
Sure.
How do you trade the yield curve using different maturities like 2 and 10-year bonds?
I have not traded the yield curve in quite some time. Going back to when we first started rate cuts and hikes, which have been a new thing. It's funny, I had a conversation with Errol the other day. He's like, who trades bonds? And I was like, listen, prior to the last 3 or 4 years, there was nothing really to trade. There was no yield. You weren't trading any curve. I mean, there was no yields across any of the curve.
No, you're right.
I mean, there was nothing. But then I said, in the 80s, 90s, when you had interest rates, they were a real thing. There was a competition to assets, in bonds. Like bonds were
with interest rates at zero, it really became a non-event to look at trading bonds or doing anything with bonds. Tom has been trading currencies, and even from the floor of the CBOE, currencies and bond futures. When you had to call up and get horrible fills, it was the worst experience. Even as a quote-unquote market maker, it was a disgusting experience. Now you could trade them quite easily. I mean, like you could look at /ZT, which would be the 2-year notes. You can look at the /2YY, which would be the yield.
Yeah.
It's not my type of trade. It's very slow moving typically. I would rather be long one or short one rather than the trade itself, just because it's such a slow moving product. But again, you can go right to our drop down. I'll put it up there for you quickly right here. If you go to click on futures up here, there you got the bond futures. There's the ZN, the 10-year note. You'll see that they all move around the same. Again, you can go to futures and look at it here. That's the easiest way to do it.
Yeah. Ever since the inverted yield curve, that was where it was like, oh yeah, I can't go this long. And it was 8 months, 9 months?
Yeah.
Or maybe even more. Where I was trading the 2YY and the 10-year yield, which were dollar denominated, like they trade to the rates. And after that, I was like, this is just tying up capital. I can't do this.
It wasn't like IBM stock that you could be buying under zero and hold it into perpetuity because, you feel it's going to have some value someday. This is a product that has all of that built into it, and the cost to carry of the amount of currency, the amount of dollars that you're holding just ate up any kind of advantage to have an inverted yield curve. It was a very, very tough trade. And then it moved all basically in 1 month.
Yep.
Next question, please.
All right. So what is the target delta range for being considered flat delta in a portfolio? It's a great question.
It is a good question because one investor's floor is another investor's ceiling. My 500 deltas one way or the other might be extremely small to you out there, might be large to me. I mean, I guess if you were saying, hey, what should you be? I would say all size accounts, if you're trying to have a delta neutral portfolio, should be somewhere, under 100 deltas. Now, that is impossible to have, especially in a larger account. So you've got to come to some sort of moment with yourself where you say, I'm going to have X delta versus the amount of theta decay in my account. Now that can be 1/10, 2/10 of the amount of theta decay, some number that you like to have. I mean, for me, it's a couple of hundred deltas, one direction or the other.
Yeah, I think the point being that you have to be a little bit flexible. You can't think that you're going to have a zero delta or
if something moves, you don't have zero delta anymore. You'd be adjusting every 10 seconds.
Yeah, and you should get the range should widen out with movements in the market. Like you should expect and be comfortable with expanding long delta into a down move like we had on Friday. Like you don't want it to get too big, but you should expect it to get bigger into those sort of moves. So I think an easy way to think about it is just notionally to what capital you have. So if you have 100 grand and you're 200 deltas in either direction, SPY beta weighted deltas, you're basically 1-to-1 with what your cash allocation would be to SPY shares. Like that's in either direction, whether you're 100 short or 100 long delta.
Yeah, because you're saying you're at $130,000 and you have a $100,000 account. Yes. Great way to do it.
So if you have
you did a market measure or an option, I mean, that must have been a market measure on it last week. That was really good. That looked at, I think it was Dr. Jim did it. It was really good. He looked at exactly what you were saying right there, and I thought it was really good to look at. Very nice.
Next question.
How do you think about scaling into trades when the initial position moves against you?
I think this is tough. If you have a larger size account, I think this is a much easier question. So you can, layer into positions if they go against you. I don't think every trade that I put on is my full max allocation. Like I've done more trades in
oil.
Yeah. Like you want to have some bullets, ready to go if you get a move that continues against you and your lean is still, directional to that point. But it's easier said than done. I mean, smaller size accounts, you probably don't have that flexibility. So I would say if you can, you should be, putting half or less of your full amount on every trade. I mean, the question is really sizing. I mean, you got to be comfortable with the size. You can't be, going full bore at everything.
I agree with you, and I got to say this is probably one of the hardest things to do. Usually, when something's going against us, we're looking to roll down the untested side or roll up the untested side. We're actually looking to create less delta. So the first thing I would say to you is if you like the position that you have, and let's say it's a premium selling position, and then the stock moves too far in one direction, we'll go to the upside since we're up today, and you have too much short delta, you're going to put on another trade because you haven't reached your asset allocation. You might look at something that has a little bit of long delta, so your overall position is less short than what you have on now. That would be something I would be okay with doing. I would not be looking to say I have a strangle on, I have short delta, and the stock's going higher. Now I would not be looking to put on the same strangle again at a higher price, thinking that, reversion to the mean and the price or everything else like that. I would be looking to do another strategy. If you wanted to be short that product, you could sell a call spread.
Or you take off the put side.
Or you take off the put
that's
side.
A way to lean a little more directional with limited capital. If you start with an iron condor and you're testing on the put side and you close the short call spread, that is synthetically getting more long delta without adding risk to the position.
100%.
Which is that's something that I like to do with my defined risk positions. It's like, you know what, the call side is done with, and now I'm going to lean long into the spread.
Yep.
Good question.
Next question, please.
I'm bearish. Do you prefer debit spreads or credit spreads? This confuses me.
I'm bearish. So you want the stock to go down. Do you prefer debit spreads or credit spreads? If the volatility of the IV rank is high, I am going to default to a credit spread. If the IV rank is low, I'm going to default to a debit spread. That doesn't mean I'm necessarily going to make either one of those, but that's the first thing I'm going to look at. Then I'm going to look at how much credit I receive on my credit spread. Can I go to around the 30-ish delta with 45-ish days to go and collect around 1/3 the width of the strikes? If I can, then that's probably what I'll end up doing if I'm looking to use a small amount of buying power. If I'm looking to use a large amount of buying power, I might do a strangle, a delta strangle if I want. If I want to be more bullish, maybe the put's going to be closer and the call will be further away. Or maybe I'll look at a Jade Lizard where I'll sell a naked put and sell a call spread. But I'd be looking to do something with short premium if the IV rank is high. If it's low, then I'd be looking to do something that's more than a 1-to-1 shot, or something diagonalized like you like to do. You like to do something that has a little bit of directional bias or delta neutral if you want to, where you're doing 1 month versus the other. Now, if I'm doing 1 month versus the other, meaning front month versus back month, I don't want the monthly implied volatility, that number on the right-hand side of the platform, I don't want those two to be more than 2%. Meaning I would like to have very high implied volatility in the front month, so like 40 in the front month and 35 in the back month. That I would do easily. But if the front month is lower, like 30 in the front month and the back month's 32, that 2% is about as rich as I would like to make it. I don't want to pay more than that because the back month volatility, even if it expands, doesn't expand enough to make up for the front month volatility expansion.
Well said.
Oh, thank you. I've been doing this a long time. I figured I would really give all the answers to that. I got a little ahead of myself.
Next question, please.
Yep.
This is a good one because it goes into our segment that we have coming up next. So is put skew on indices like SPX reflected similarly in individual stocks? And what is the skew index?
Wasn't I supposed to read that to you?
You were, but you were sipping your coffee and I didn't know if you were keeping up with the order here, so I just threw this to you. But would you like me to take it? I can take it.
Is putting Skew on indexes like SPX reflecting similarly in individual stocks? I mean,
it can be different. It can be call skew. It can be no skew. Yes. You know, there are different skews that can exist on different time frames too.
Yes. Well, ETFs or indexes like SPX that mirror the market are I almost said always, and nothing is ever always.
Yeah.
Typically, the majority of the time, like a high majority of the time, well over 85% of the time, we'll have put skew. That's just how...
In the near term.
In the near term. That's just how, in the 45-day time frame. That's just how the pricing model, ever since the crash of 87, before that, it was pretty much no skew one way or the other. You can go, $25 out of the money, $25 out of the money to the call on the put side, and they both would be priced at around the same price. Now you'll have put skew. That protection to the downside in indexes that mirror the market is what, everybody is looking for when they have a portfolio typically of mostly long stocks everywhere else. That's how they buy their protection. So you're always going to see that. So yes, does skew reflect in most stocks? Yeah, sure. But you'll look at NASDAQ stocks, they typically always have call skew.
Yep.
And that's how their pricing is. Why? Because it's the opposite of what I just told you a moment ago. Everybody's looking to the upside on these, high-flying stocks, the Mag 7 stocks, the OKLOs of the world, whatever
Quantum,
the soup du jour is in the day. They're going to have the velocity of the move is considered to be to the upside. The velocity of the move in an index like SPX is considered to be, or the worry is to the downside. So each one of them have skewed. Nothing's for free, man. But you can take advantage of that volatility skew if you have a directional bias in the opposite of the way it's going. If you're bullish on SPX, selling those puts or some sort of wide put spread, like a synthetic short put, is phenomenal in put skew. You go further out, collect the same credit, collect more credit, going closer. I mean, take advantage of it. Now, if you have the opposite view, then you got to come up with something different.
Well said.
All right. Well, even the S&P.
And as for the skew index, we're going to talk about that next with our option jive. All about the skew index. So stick around for that, and we'll. Very
nice. Well, even the S&Ps moved about as much as they've moved last night before I went to bed. They were up, down around $5, down around $3, up around $4 or $5. They're up 47 right now, which is a big move, about 3/4 percentage point. Let's take a look, if I could, before we get to that option jive. Even the S&P's expected move, $29, just under 30 right now.
Cancel crash.
45, yes.
Up only.
We'll take a quick 90-second break and come back. We got more Tasty Live after this, all about the skew index next. So stay tuned. You're really going to like this. We'll be back in 90 seconds.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive.
Time for an option jive. Nikki, all about the Skew index. Go.
All about the Skew index. Let's do it.
Let's do it.
It's a good one. So similarly to the VIX, the Skew index measures investor sentiment and volatility. However, it focuses on significant market movements by analyzing out-of-the-money options. I think the key here, and the Skew index is something that you can pull up in the platform. So if you type in Skew, it's just a tick. So it measures on a day-to-day basis based on the previous day's option prices.
It's a little bit lagging, right? Since it's the day before.
Yeah.
I mean, like today it's 146 and change. That's not going to update until after the close, correct?
Correct. So it's just a tick. So
yes.
But I mean, options aren't trading today on SPX.
That's correct.
So right now.
Yep.
I can actually pull it up real quick just to show. Oh, sorry. I messed up.
Whoa.
Sorry. I thought I could pull it up. I can pull it up.
You can. 1 second.
I can do it for you. There you go.
So there you go. So you have to make it into a line chart because it's just a tick.
Yep.
So when you change it in the platform on you're right there. Yep. You can change it to a line chart. So you got it.
So typically I have it like here, which is the bars that you always see. You can't see it in this. I go down. I go to the lines here, right there. Click it.
Oh, it's our new hands. Sorry, guys. We're trying new things. So it's important to understand that it measures both out of the money options on the put and the call side. So this is looking at tail speculation in both directions, not just as a fear gauge. People get caught up in the idea that Skew is
that's a good point.
Is a fear gauge. It's also a gauge of speculation on the upside. And so, you have to take that number as both an upside and downside kind of tail event speculation here. So
that is a great point.
Yes.
I never thought about it like that, and that's a great point.
Thank you.
You're welcome.
Next slide here. So typically, Skew values fall within the range of 110 to 180. So we're right in the middle of that range, on the higher end of that range, with a medium of 142. So we're at 146 right now. We're right there. We're right in the middle. There's not like a ton that you can gather from the Skew.
Go home. Nothing to see here.
Nothing to see here.
Go home.
Generally, in practice, a higher Skew value suggests a greater perceived tail risk. And again, that's to both directions. And so we're going to look at a couple buckets of Skew data here. And so we're going to look at the Skew index from 1990 to present, and we're going to analyze the Skew levels every single day. We're going to bucket the Skew values into 4 levels. So we're going to do these in 25% data sets. We're going to use percentile here. And we're going to analyze the moves in SPX and VIX. We're going to look at 1 week prior, 1 week after, 2 weeks after, and 1 month after. What do you think is going to be?
So I like this. What they're looking at is that they're actually kind of going backwards in time, if I'm understanding it correctly. And they're saying, all right, the market moved this a week after Skew was this. Is that correct? Is that what they're looking at?
Yes. Okay. Yes. So we're going to, but so we're going to look at the 1 week prior to see what the move is, and then take the Skew, the Skew number, and then look at what happens moving
It wasn't
forward.
predictive.
Yeah.
What it's looking at here, right?
Yes.
And you're asking me, what do I think it's going to show? Like the 1 week prior, 1 week. Oof.
Well, like, what do you think happens in the future? Like, so we're going to look at, the 1 week prior and see where the skew index is. So skew will be low, high, and then we'll have it kind of in the middle. What do you think will happen? Like, what happens when skew is high the week prior?
You might think
1 month out,
right? You might think that that's going to show that we're going to have a much larger move because the skew they're buying. Like, I'm going to say it shows kind of the opposite. I'm going to say when skew is higher, that it's going to show that the moves are actually tighter than what the skew would represent.
See, market maker right there.
Just fading the public.
Yeah, you got to fade what's priced in. I mean, like when high volatility presents itself, it's not always gonna happen that way. So the buckets of the results filtered skew levels as shown below. So we're looking at a high of 183. So this is the maximum value that we had, and then we're bucketing these in 25% percentiles here. So the third quartile is going to be from 154 up to 183. 142 up to 154 is kind of our median. So this is where 50% of those 50% happen between 119.5 and 154.85. So those are our middle 50%, and then the bottom is 119 and below, which goes all the way down to 101.23 here, which is the minimum in the data set. So this gives you your range, the minimum being 101 and change up to 183, and then we bucket them in 25% buckets there. And so when we look at the data, so this is the next slide here. So we're looking at the skew value and how many, and the occurrences within that bucket, those 4 buckets that we have, and then the average SPX moves. And you'll see the positive returns were slightly lower after the skew index was at its highest. And this isn't a shock because you typically, it's a reflection of what happened, right? You usually don't have a skew that just all of a sudden increases. Like you don't have just...
It kind of clusters for days, doesn't it? Like at a level,
But it's a reflection of something happening. Like Friday, you have a big down move, and then skew gets wider.
Sure.
You get a higher skew number. It's like the VIX increases, and then options get bigger. Like they get more expensive. It's because something happened. It's not just a random occurrence on an up day on a Tuesday and nothing happens that option prices get more expensive. You don't typically see a big move in VIX until something happens. It's the same thing with skew. You don't have tail speculation unless there's some sort of thing that happens.
That's correct. To make the skew move. Right? You have some sort of thing happens to make the skew move. So it's not predictive is what you're really pointing to.
Yes. So there were no glaring outliers, and this trend didn't seem to hold for too long. So when you have a high skew, it doesn't really give you anything. There's nothing to take from this data set. It's overall kind of random.
I used to say some things are good to know, some things make you money. This is a good to know, and then you have to decide what strategy is going to benefit from making the money on that. So not predictive is what you're really showing here, which is kind of what you would have thought, I think.
So then looking at up moves in the SPX. So 1 week prior when you had a high skew, again, there wasn't, it was pretty much the same across the board. There was no outlier really to take from this data set. Whether skew is high or low, it's not really predictive of what happens in the next week, 2 weeks, 1 month after. It's all kind of the same. And a lot of that is obviously positive drift here. So, but again, looking at up moves versus down moves, the numbers show no huge outliers. So then the next study that we're going to look at is looking at the VIX and the average moves in the VIX around different skew levels. So now we're looking at skew and VIX together. And on this slide, so the VIX had larger moves with the highest levels and lowest levels in the skew. And this is, of course, kind of intuitive as well. When you have really low skew, low volatility, you tend to have those outlier risks. When you have high volatility, like on the tail end of volatility, you typically see big moves as well. It makes sense if you dig into the higher skew numbers, monitoring tail risk, meaning that being at either end of the extremes would present more volatility in the market. When the market is kind of in the middle volatility, or 20, 25 VIX, it's priced in the fear. When you're at a 10 or 12 or 13 or 14 VIX and something happens, it tends to be more extreme than when it's a 20 VIX.
And the reason why we talk about ramping up when volatility is high and kind of tightening it up a little bit when volatility is low, even this last move that we had, volatility was relatively low. We talked a lot of times about we were doing diagonal and calendar spreads. We were doing debit spreads. Now, they're not very sexy, and they are a little bit on lean towards directional bias on them. It's not the selling premium, let the stock kind of win thing. When you got volatility expanding the way we have, we went to, hey, let's look at, this is how you change the risk profile in your portfolio. And this is also how you keep yourself out of harm's way. You know, listen, 60, 70% of the time, you don't catch it all the time, but you keep yourself out of harm's way for that volatility expanding and not hurting you as much. You don't have as many naked options on your portfolio when volatility is low. And that's really what this is showing. It's a great little slide.
Very good. Couple takeaways here. So, while the Skew index is an interesting metric to observe, I definitely think it's something that you should keep on a watch list and be, understand the functionality of it and what it is actually looking at. It may not carry much weight in the future moves of either the market or the VIX. We can liken this to the VIX, which is calculated similarly using SPX options. The VIX spikes after large down moves in the market and represents the future expected move. In reality, the actual moves are much lower than anticipated. When volatility is super high, it is usually overstating what actually happens. When volatility is super low, it usually understates what actually happens. This is just the core philosophy that we trade around in practice here. So our focus remains on high IVR and taking advantage of high VIX environments for premium selling. Skew index, it's a cool thing to look at, cool to understand. Doesn't really give you all that much when you back test.
And it's so funny because the media will talk about VIX and the fear index in the opposite light. Like they'll say VIX volatility is high, fear is high. And they look at it as like, well, that means, we're going to have more movement to the downside. Doesn't mean anything like that at all. All it means is that the tails, the wings are priced high. What can you do about it? Everything that we do here is what can you do about it? And that's really what this really showed. And there's a lot you can do when volatility is high. When volatility is low, you've seen it over the last couple of months. It's a struggle. You got to be directional and you got to be directionally right. And it's a hard trade. At least for me, it has been. You're gifted, so it's easy. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got the opening bell, and then what's your assumption?
Right.
We got trades.
We'll be back in 90 seconds with Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Everything that you have ever wanted, it's already the best day. It's only the rest of your life.
Nikki, we're back, my son, and you know what that means. Time for a little bit more Tasty Live with the opening bells imminent in about 2.5 minutes to take a look at what's going on in the market. Even the S&P is holding steady, up 46 and change. Been around the same price every time I've quoted them. NASDAQ up 230 and change. Russell up 28. Dow up 203 and volatility in under 20, in by 52 cents. Still elevated and high. You can see here from this most recent range before we broke out here. We were around 20 would have been a high. You know, under 19 would have been a low. We're sitting right at 20. Still time, I think, to put on plenty of trades. We'll see what the volatility in the rest of the market does all day long. Bonds up 4 ticks, 118.13. Bitcoin not catching a bid, trading near its lows, $200 off of its lows, making it difficult for the Uptober that we've been looking for. Ethereum down 32. Oil up 35 cents, trying to hold on to a bid here. If it does, it'd be the first time it's done it in about a week or so. Gold continues to rally, back up over 4,200, 4,209, up $46. Silver with an equally, if not greater, move, up 80 cents to 51.42 or so. On the earnings front, ASML catching a bid. Was up about $50 or so to 10.31. Bank of America is trading up $2. On the downside, you got PNC, which looks like it's down around $8 or $9 to 180. And
Morgan Stanley also in there too.
Morgan Stanley up $6 or so. Yeah. Last time I looked, it still is. Opening bell in just a minute.
I got to ask you quickly. Back in the day, did you have any sort of saying like an Uptober, or do you think we just are like brain rotted?
You got. What do you do it when you lay in bed and look at your phones. What do they call it? They call it something.
Doom scrolling.
Yeah.
You doom scroll the brain rot. So you doom scroll, which is just like,
just looking.
like
You're not even knowing what you're looking at.
Yeah, it's just
working, absorbing, not knowing.
The mind isn't working. The mind is actually rotting. It's brain rot. So it's doom scroll, brain rot.
Yes. Yeah, that's.
So you didn't have anything like that. No, like funky saying about, the Santa Claus rally. That wasn't one. Is that we made that one?
Yeah,
too?
we had the Santa rally. I guess that's an old one. But that, we didn't have as many as you. You guys love your cliches.
No, it's not us. Gen Z made all those.
Gen Z made all those?
Yeah.
You're just
The
embracing.
millennials are just like forgotten in the middle,
Are they?
They're just
You're
like,
the forgotten generation?
Yeah.
Oh, how sad. We just had the opening bell, and we've got What's Your Assumption coming up next, where we're going to look at 10 different trades. Let's see what's moving the market. We'll take the buckers here. I'm just looking at the S&P 500 for my son here. Looks like AZO, which is something we don't trade, a $4,000 stock. Silly to even look at, to be honest with you. You go down here, you've got ABT, which is Abbott Labs, down 4. I'm just showing you the S&P 500 stocks. It's not your usual suspect of stocks on the downside here, which is going to mean that the market is probably a broad-based little rally here. Tesla up $8 and change, Meta up $7, AVGO after selling off a little bit yesterday, up $6 today. Oracle up $6 and change. AppLovin up $15. Caterpillar. So it's your usual suspects to the upside here. Pretty broad-based. AMAT up 5 and change. If you go here to the high option volume list, we can look at that too. It's going to show you similar to the upside. Let me move that. I apologize. ASML up $47, just off of its highs by about $2. OKLO up 13. BE's back. I don't know if you're looking at that, son.
Oklo is up 14, 15. These things are just going nuts.
JP Morgan, Roblox up 6.
I think you're kind of seeing the vol bid, not only in those stocks because the volatility is through the roof, but in pretty much the market as a whole. Like I'm looking at this Oracle position where Oracle's been chopping around 300-ish, 310. It's at 308 right now, but it's been kind of in a tight range for the better part of 3 or 4 weeks, like 2-3 weeks, I should say, between 280-ish and 310-ish. I have a wide iron condor that's far out of the money. I mean, we're talking, and it's in November, the 240, 220 put spread. I have the 330, 350 call spread. So it's 20 points wide. I'm closer on the call side now, but that spread basically hasn't moved for 2 weeks. I've had this on since the 1st, so it's been exactly 2 weeks. And it hasn't moved, like for or against me into these moves in both directions.
Why do you think that is?
I think volatility is just, well, that's what I'm saying, is that volatility not only staying bid, and I think this is a reflection of just vol futures and the VIX itself staying at 20 here, is not only bid in these BEs and OCLOs and INQs, but it's across the board. Like you have not gotten paid for anything over the last 2 weeks or so.
No, you have not.
Unless you've been directional and you caught the directional move.
Because you were selling premium, volatility expanded into it. That's a deadly sin. You're never supposed to let that happen. Why'd you let that happen?
Getting bailed out on MP today a little bit. That's
MP. Nice. What's it doing?
It's down 4. I mean, it's up about 40, but it's down 4 today. So it's a sell off.
Drowning man reaching for a straw here to keep yourself afloat. 94 and change. You are right. MP down around $4.
Yeah. That's the big question though. Is the vol coming out? If we get vol contraction, does it come with much higher prices, or is it going to come from just this chop back and forth?
Well, MP is a good one to look at here. You got an IV rank of 90 now, which is really high, but look at what it was. It was well over 100 at one point here. Volatility just through the roof intraday. Now at 90, it really means that MP's volatility has come down significantly from what we look at. Now, you got the monthly implied volatility, 100 and change. It was probably up in the 130, 140 range not too long ago. If you look at MP in November and you look at, let's see, the net change here, you'll notice in November that with the stock down almost 4 and change, the 100 put is up 60 cents. The call is in by $2.
Yeah.
Big move in volatility to the downside here, which makes sense, and off of highs in NP. So
it's crazy.
Maybe you've withstood the volatility expansion. Now it's just time to keep your delta in check.
We were looking at that butterfly right at the money in BE yesterday. Remember
in NP?
No, in BE.
Oh, BE.
Bloom Energy. I had the 95, 105, 115 butterfly on that expires in 2 days, and we were looking at it yesterday. It was trading at $1.50. Remember? We were talking about how super high implied volatility like this.
Sure.
These spreads, even though they're really wide, 10, 15% of the stock's price, they trade for nothing.
Yeah, they trade for nothing.
Because the stock is now up $25 from where we were looking at it, over the last 48 hours.
Yes.
So it could be at 100 at the end of the week, or it could be at 150 at the end of the week. I mean, that's what is priced into these markets, and that's why these butterflies in something like this, you got to hold them until the end.
Cheap shot, but they're
cheap shot, but
cheap shot, but you got to hold them. You're right. It won't come to fruition until about 3-4 days before expiration.
Yeah.
Let's look at BE here, who has an IV rank of 102, which is showing you that volatility continues to expand. You can see it here. It continues to expand. Now let's look with the stock up $10. Let's look at a straddle, which would have been delta neutral.
It probably didn't move.
It moved a little bit. $10 move. It moved about $3 on a $10 move in the stock, just because volatility is continuing to uptick. But again, a $10 move when the daily expected move is closer to $5 or $6, and you
think you'd be getting killed, but you're not.
Yeah, and if you look at it, it just collapsed by about 70 cents. So gotta be very careful when you got long premium in these products that have very high implied volatility to them. Mini S&P is catching a bid up 49.
Yeah, you get that vol crush and a downside move, and those calls go from $10 to $2 quick.
Yes.
That's. You got to kind of, if you are trading on the long premium side of these sort of things, you got to take the money and run when you get it.
So here we sit with the mini S&Ps at 67. Let's just round 67.40.
Yeah, 1%, 2% from all-time highs and big old nothing. Who cares?
So that was the dip.
That was it. All this. It's crazy.
It is crazy. Yeah. I remember last week you said, maybe we just, sit around, $6,700,
For the rest of the year.
For the rest.
You have 100 points up and down. You have just big moves, one-day moves. You just take a little.
Here we are over the last 4 days. You had to move up. You had to move down. You're sitting around 6,700. I mean, it really is crazy how much it moves. Let's look at the expected move.
And there's nothing to do. I can't manage anything because any volatility is still
bid.
You expect on a 50-point up move, you expect a couple points of vol to come out, or not in VIX futures themselves, but in single name stocks. You expect to have 2 or 3 points of vol come out, and you could take off the put side or take off the call side if you get a little bit of a down move. Not getting any of that. Nothing.
You're 100% correct.
Stinks.
You're not getting paid for even the short volatility that you may have put on over the last couple of days. You're getting paid on delta, if you had delta right, but you're not getting paid on the short premium.
Do we do an SPX trade?
We can. I think I would wait a little bit. If you look at ES, volatility is actually a $30.50 expected move, so it's actually expanding a little bit here. I don't know. If you're going to do anything, I'd probably do both sides.
Yeah. What do you think about? Let's do it on. We got nothing else to do.
Volatility hasn't really moved here. It doesn't seem like it's.
No, that's good. I think that's a good thing.
No, but I have a feeling that we might have a little bit of a movement to the downside here.
And then you want to sell a put spread? You want to buy that dip or no?
In what?
If you think we're going to have a little bit of a downside move because volatility is staying bid,
yes.
Would you sell the put spread into that down move and just do the one side as opposed to now you're talking?
If we have the move down, we haven't had the move down yet.
Yeah, but if we don't have the move down, then we get the vol crush.
If Yes.
And we got to sell the premium now. That's the trader's dilemma.
That's the trader's dilemma. So, you can go outside. One thing you can do is go outside the expected move now with the 20-ish delta. So if you
That's what I was thinking. I was thinking that
66.90 if you wanted to go $10 wide, if you're playing that game, if you want to go $20 wide, you go 66.70, 66.90. And on the upside, which you're collecting around $2.25, let's see on the upside, if you did like the 67.60, 80, you'd be collecting around the same $2-ish.
I was going to do the 66.50, 66.35, so you're 15 points wide.
66.50?
Yeah, SPX. You're in ES.
Oh, SPX, sorry.
SPX.
Okay.
66, it's a 20 delta on the downside. 66.50, 66.35, and then you do the 67.25, 67.40.
Go for it.
And it trades at 390.
Go for it.
And we try to do.
See, volatility actually up.
Yeah, it is
22.10.
You might get a little 10-point dip.
You might, Rabbit. You might.
All right, so I'm in at 385. We'll put this in at. What do you want to take? 75 cents?
66.50, 66.35, 67 a quarter, 67.40 for $3.85. You're dead.
Dead?
I'm just kidding. Come on, I'm just having fun.
All right, you want to do 75 cents out of it?
Yeah.
We'll try?
Yeah.
So there'll be a 310 net debit?
Yep.
All right, we'll put that in just so we have it
Fortune favors the
working
brave.
the whole time. Yeah, well, I mean, vol is upticking a little bit. I think you might get a little bit.
Vol
might get
expansion,
something here.
$31.5 expect to move in October. Weekly's the one you're trading, 0 days.
Yeah.
All right, good job, son. Let's take a quick 90-second break and come back. We got more Tasty Live here. What's coming up next? We got What's Your Assumption? Viewer submitted emails. We'd love to hear from you.
I already know we're going to have some spicy trades in this one. INQ, BE, ACLO, they're going to be, you're going to have tickers you've probably never seen before, is what my guess would be.
All right, well, let's find out right after this. We'll take a quick 90-second break. It's Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with What's Your Assumption?
Let's do it.
I'm ready. Even the S&P's up 48. Really haven't moved too much this morning. Volatility down 40 cents to 2010. Hasn't moved too much either.
Yeah,
maybe a little bit of an uptick.
A little bit.
Bonds up 10. Everything's status quo.
Yeah.
All right, go.
Let's do it.
Viewer submitted emails. What do you got?
Yeah.
Trades, I should say. Ooh, I bet. You're right. Here we go.
Yeah. Oh, this is from Liz and Jenny.
Oh.
Yeah, our very own. They get long, bullish, weekly, October 31st. So this is October. This is an October trade into Halloween.
How can you lose money?
What do you do?
I bet bullish. Stocks down 1%, 68 cents. Taking a look at the, it's at near its lows. This is a Bitcoin derivative, right? I mean, it's going to follow Bitcoin here.
Yeah, ETF, spot.
Yeah. They want to go to the weekly October 31st options. You've got a $4 expected move in here. Sell the naked put, sell a put spread. Ivy rank is good at 62. Sell a wider spread if you want to do like a synthetic, although the wings are a little bit bid.
I think if I didn't have a position on here and I have multiple positions, I'm long stock, short puts, short calls. So I have covered calls and short puts. Selling premium here is certainly on the table. It's been a high volatility, product to trade. You got 50, 60% implied volatility. Super liquid. Mikey's been in a strangle all year long, just rolling it and kind of adjusting, leaning.
He's been fighting.
No, it's been awesome.
Oh, it's been good. Oh.
I mean, every roll is $3-4.
Right.
There's a lot of volatility here. So I think if you don't have a position on and you wanted to lean long, I would just sell the puts. You could sell like the 60 strike put in November, $2 and change. Buying a wing, if you're in, an IRA or a cash account, you buy like the 40 strike or something like that. Do this at $2. You can wheel into it and then sell calls against it because you do have that call skew. So I'm locked and loaded with Liz and Jenny. October, I'm ready. I'm waiting. I'm fully loaded for it. So
they got shorter dated options in here that have decent markets too, penny wide markets. I just want to show you something.
Do
they
it
went to October
spread.
31st. If you didn't have a position on in here, and I already hear you saying that you already have a position on in here, you're not going to do anything more. You're looking at the 62-64 call spread, trading just around $1.15 or so. That's risk one to make one. If you go up a strike or two, you can, get a little bit better with just about a 50-50 shot, 62.5, 64.5. You're buying it for $1. Here you can, it's a $2 wide spread. You can make a buck, lose a buck. That might be the kind of things you want to do also if you're going shorter dated, 2 days, 3 days, that kind of thing.
Agreed.
Good bang for your buck if you want to be long IBIT.
We're with you, ladies.
We're with you. We hope you're right because we could use the help.
Yes.
Next one, please.
All right. Tevin in Huntington Beach, California. GDX. Oh, no.
I can't talk about this because it took me about I don't think I ever got.
Yeah, you never got out. You're still here.
Never got back to even in GDX.
So they are bullish.
So I abstain.
Bullish, 30 days. Government shutdown dragging out, silver shortage, perhaps a call diagonal spread. I think this is if you haven't ridden the wave up, I like this as a defined risk way, probably a relatively cheap way, like versus selling puts. I don't know if I want that sort of risk. I would rather do something like this. So I'm with you there. 30 days out.
Government shutdown, by the way. I think, what are we in?
2 weeks, I think. 2.5 weeks.
Yeah, going into the third.
Yeah.
Has anything changed for you, just out of curiosity?
No, TSA was fast and easy. I mean, I haven't seen anything
I wonder
change.
when the shoe is gonna fall, because I haven't felt any change either.
Yeah, no, I agree. If I was going to do something diagonal spread here, you're bullish for 30 days. I would go out to December and I would buy something like the 80 call or the 85 call, depending on how directional you want to be, and then sell something in November. You can sell, like, if you're buying the 80, you could sell the 85 against it and do this at $3. It nets you, 17 delta here. It's a cheap shot to the upside. You probably have, $200 in potential profit if you do get a move to 85 here. You have some positive theta decay in the short term just because you're selling, $2-ish, $2.50 of premium in the November cycle. So you got a little bit of a mulligan here. It plays into the call skew. If you wanted to get cute, you could sell 2 of the calls.
Yep.
Do like the 85 twice. Nets out an 80-cent debit. So you have basically no risk to the downside. Kind of gives you that upside skew. Be careful, though, because this has been a face ripper.
That's correct.
Did I talk myself into that?
Probably.
The 1x2?
It sounds like it.
I think I did do that.
It definitely sounds like it.
We'll see. I'm going to put this one in. So this is what I call a... Oh, God.
Oh, that was easy.
Oh, God, that was too easy.
That was so easy.
I did the 80 in December, and then I sold 2 of the 85s in November for an 80-cent debit. This is a crab trade.
Right. It has
calendarized ratio.
Right. It has a little bit of short delta to it.
Yes.
When you place it.
Yes. In the short term.
Yes. You want a slow move higher in
or vol contraction. Because the vol is going to come out of the front first.
That's correct.
It's a neutral. After about 2 weeks, you'll have long delta.
Right. Before that, if you get a little bit of a rally.
I mean, dude, I can't get long gold here. You can't. Can you?
I hear it. No, I'm not. So
I know, but you're abstaining because you're smarter than I am.
Oh, I've been slapped enough time. You get used to it. What's next trade, please?
Grind higher over like 2 weeks.
That's right. That's right.
Hopefully. Pray to the gods, the gold gods.
Whoever's listening.
Yeah, whoever's listening. All right, so we got that one in. Next one, please. Tesla bullish earnings trade. Ben in Bermuda. Very nice. Tesla up $4. Been pretty choppy around here. All right, so bullish for Tesla earnings, which are on the 31st. Is that the 31st? Yes.
Let's take
the 22nd is what I have.
Yep.
They're going to the 1031 500 calls. Bought at $4.80. 50 contracts. The big boy trade.
Oof.
How would you play this?
Well, it's been going sideways. It's been going sideways since September. IV rank of 27. They're doing an earnings trade here.
But you got, so he's in at $4.80. They're marked at $5.80.
Yeah, it's a good trade.
It's a great trade. Right. What do you do now? 50 contracts. That doesn't 50 contracts for Sosnoff account.
For Ben
in Bermuda.
Yeah, he's
got,
he's a big dog, obviously.
You manage that position? You do anything?
I mean, he got the move he wanted today with the stock up $4. I mean, if I'm going to do an earnings trade, I'm going to probably do this on the, and it's after October 22nd, after the close. I would probably be looking to do this trade on the 22nd and not when Ben did it.
Yeah.
Good on him. I mean,
do you manage the position? You do anything?
I would be looking to take off, 50%, maybe even more than that, and wait till earnings and put on another trade.
Or you take some of the risk off. You can sell a call against it. You can either go in the short in a week prior, or even if you sold like the 505 call against it. Like if you think Tesla's going to be above 500, you could take all your risk off the table, sell the 505 calls.
But that's not why they do these trades.
I know.
When they just buy calls like this, they're really looking for the home run.
Yeah, I agree.
That's what they're looking for. I'm just a trader, so I'm looking for a little bit, maybe, take a little bit of risk off there.
I agree.
I think if you don't manage the position by taking a little bit of the risk off, because October 22nd is a eternity away, then you sit with this. I'm not going to put on this trade. You can if you want to. Stock's up $5. I would take something off.
Gonna have to pass. We did do that call ratio.
Good on you, and I'm pulling for you.
Yeah, no, this is. I mean, you hit a home run. You're up 25% overnight.
Yep.
He did this yesterday.
Got the move you wanted. You know, what do you want to do?
Good trade.
Mm-hmm. Next one, please. Oh boy.
Bitcoin forever.
Wow. Well, at least
bearish.
At least, hey, listen, I like doing this.
Slimmy. Look at this. Is Slimmy.
Oh, my man, what's going on? It's worth zero utility. Only purpose is speculation. Love you. Hi, bet. Hey, Slimmy, how are you?
We miss you, Slimmy.
We do. Bitcoin bearish
Hi,
forever.
Slim.
Hi, Slimmy. Thanks for writing in. Do appreciate it. Bitcoin bearish. What do you think?
Forever to zero. I like it. I mean, that's what makes a market.
That's what makes a market. And you know what? In Slimmy's defense, he's probably been short BTC here. And I think that's what he's trading from 49 up to 55 and back down to 49. So it's probably worked out for him now. Take a little bit of heat. We always take a little bit of heat because I too would have been if I was trading it. You know, those 6 up days looked.
He's talking Bitcoin, BTC.
Oh, it's
Bitcoin, BTC, USD.
Got it.
Yes.
Well, what do you want to do in Bitcoin at this level? I'm looking for a bounce in Bitcoin.
I think so too.
Be quite.
I'm long it. We had Liz and Jenny get long it, and want to get more long it. So, Slimmy, we're on the other side. We appreciate it.
But I'm still pulling for you, Slimmy.
And we know Slimmy also has his gold stash in the backyard.
Yes, he does.
Him and Frankie are in the same.
Yes, he does.
No
so he
doubt.
can lose a little bit of money on this call.
Yeah.
And make it up in his gold coin.
Be fine.
Also, there. All's well that ends well.
Yeah.
Nice blast from the past.
Yeah. BE, here we go. Ash in London. Going to put me in. I'm kind of. I have the ability to do 2 or 3 tranches. Now with this move, I'm a little. Like they've taken a couple fingers off. You know, like it's
trade up to almost 126. It's 121 right now, up $7.
E-minis just rallied up 59.
Yes, the E-mini S&Ps did just rally up to 59. Volatility hanging out and bid at $20.07. So you think you have to roll up your putties on your spread?
On the SPX one?
Mm-hmm.
What do we got? What's it trading at?
Roll down calls, to be honest with you. I thought we were going to kind of get a little bit of a...
I mean, the put spread's still at $1 and change. Like it's trading at like $1.20. I mean, the spread... I guess it's moved 60 cents.
Yeah.
No, we did it at 385. It's marked at 450. So I think you got to kind of sit. Have some intestinal fortitude. My God.
This is what makes a market. But at least you have to have that conversation.
For sure.
And you make your own directional.
If volatility was contracting, that put spread would be 60 cents. And we wouldn't be having that conversation because we just close out the put spread.
Yes.
But volatility is staying bid here.
The flip side of that would be rolling up, and we get that volatility contraction. You'll be actually in the catbird seat if we don't move back down.
Yeah. All right. We'll address that next. B neutral.
Very good. B neutral. You already have a position. What do you want to do?
I have this. I'm all over this. I have short delta. So I am leaning short. I'm not neutral here. I am short. I'm short volatility. I've got the butterfly that expires in a couple days, which is shockingly like at the expected move or inside the expected move, despite being 20 points in the money. And then I have some short delta via a strangle out in November. So I'm locked and loaded to the downside. I don't know if I could be neutral here. If I was doing something, I think I would do like a wide iron condor in here.
Yeah, I think it's an iron condor candidate too, even though it's going to trade relatively.
And just keep your size small here.
The 110 straddle, which I only looked at earlier when the stock was up $10 or $11, it was up around $4. It's now up $1.40 or so. So on a $10 move, a very large move, it's only up 7 right now. You made some money. Now you're still up money, but again, it's at the expected move for the day, and you're up $1. If that stays here, you'll probably be down on the day on something like that. That was the right call.
Very nice.
Next one, please.
And we're striking out today. Hood.
You have a position in Hood?
Terry. Canada. I do not have a position.
Oh, so here you go. Ivy rank at 37 is pretty good. Looks like volatility has been expanding. It has earnings November 5th. Hood up $3 near mid-range for the last, let's just call it month or so. Down from around 120 up to about 150, sitting at 138, up $3 and change. What do you think in Hood?
All right, so Terry wants to do a 1-1-2.
You know these trades, like the
This is your.
It's like a ratio.
Yeah,
it's a put ratio here. I've been doing them on the call side with like. We just did one in GDX.
Yep.
It's like a crab trade.
Yeah, like a crab trade. Yep.
You got to be careful if you're using these in futures.
Yes.
That's where everybody gets caught. I see a lot of people doing those, but got to be careful. All right, so looking at 112. So buy one of the 130 puts, sell one of the 128 puts. We're doing this in the...
Not doing it in
before the no... So you're looking at
October 31st expiration, which is only 16 days. Doesn't give you a lot of time here, but go ahead.
I can't do that.
What's that?
I can't do that. It's too. It's too short of a duration. I'd rather go into earnings.
Agreed. They're trying to avoid earnings.
Yes.
I think is the reason why they're doing this, because earnings are November 5th.
So they're selling the 2 of the 112 puts at a $2 credit. So you finance that long put spread with 2 of those out of the money short puts.
You want to slow move lower.
Yes.
The stock at 137. You don't want a fast move down. Expected move is $15, which gets them, with their short puts, they're at the 112. Is that what they're looking at? 112?
No.
Yeah, at 112, they're outside the expected move. It's not a bad play. The implied volatility, what you have here. Terry, it's pretty strategic.
What do you think of doing November? We'll do the 130, so we'll be at the 130 strike. 130, 120 for the long put spread, and then sell 2 of the 105s. And you do this at $1.20.
Put it up there on the screen.
Gives you a break even basically at 100.
Yeah, 88 pop. Yeah, I like it. Again, you want the same thing. And if 2 weeks time goes by and you get that smaller move down, or maybe even just going sideways a little bit in hood, which it has been doing, the spread makes money.
And you have 2 calls that you can sell because you're naked.
You are using the buying power from two puts. You can sell 2 calls as an adjustment on this trade. You're right.
So you have a little bit of ammo.
So let's go a little bit further on this trade. So if you're not a 2-lot trader and you're a 1-lot trader, probably too much buying power to use on a position for you here. Because then when you adjust this trade, you'll probably sell out of the long put spread and make a 2-lot strangle somewhere, wherever the stock is. So,
you take the value out of that spread, whatever it is, into the down move. And you probably do that like if you're going to roll it out to December, you're getting tested on the downside. Your long put spread goes to basically max value. You close that out. You roll it to December, and then you sell the calls. And now you're in a strangle at, with an extra couple dollars in premium from the long spread.
And you got filled at 114 on that.
Yep.
So good job out of you. About 2
I like it.
4 cents.
That's a fun one.
Off a mid price.
Cool.
Good job.
Intel.
Uh-oh.
It's Mike in South Bend. What do you think here?
Intel up 56 cents, trading near its highs. This is one of your U.S. stocks, right?
Yeah, the basket.
The S&P is up 64. Really surprised by this move. Volatility now 1995, down a little bit, but not a lot.
67.50. We're 50 points off highs.
Yeah.
There's nothing.
It's
crazy.
Intel earnings October 23rd. I think I would probably abstain just because of that. Now they got a 3-month time frame here, so it's a little bit different, Mike.
And they're bullish. Thank you for your attention to this matter. We appreciate it.
This tweets, right?
Yeah. So if you're bullish for 3 months, I think you could consider like a poor man's covered call, something like that. If you got a little bit extra capital to use, you could do like a 1x2 if you're going to, because you want to sell some up.
Kind of hard to pull here after the stock's gone from 25 to 36 where it's sitting right now.
I'm going with the assumption that they have. You could do something like, and it depends on what, if you're.
So you want to look at.
I'm neutral here, so I have some short premium that's right at the money. So I don't need this position. If I was going to put on a 3-month bullish trade,
you might look at January or something.
January, you buy if you want the upside. Like if you're bullish, and you want
on the screen for you. So in January, if you wanted to buy something with a 70-ish delta, the 30.
That would be the more conservative route. If you want to lean a little bit more bullish, you could go out of the money or right at the money and buy the 35 and do a diagonal spread, sell something in the shorter duration. You can roll that out and kind of leg into an upside. Poor
like in
man's
November, the 40s, like by 35, 40, $3 in debit, relatively cheap.
Net out 20-ish delta. I mean, this is, and you have some positive gamma. So if you are right on your assumption that we continue to drift higher, this gets bigger up to 40.
Right. And after about 2-3 weeks, maybe 4 weeks at the longest, you'll be looking to take this 40 call and move it.
You can roll it to, and then you continue to reduce basis.
Yep. Very nice. Very nice. Try to collect another $1 in premium on there so that after 3 months, you basically, all things being
finance the
call. Stock works, you finance the call that you bought. Yeah, I like the play. Good job. Next one, please. CAG. Here you go. It's one that you didn't think you were going to see. ConAgra. IV rank of 53. No earnings looming. Stock's been beat up. It's caught a bid the last 2 days. Small. They're bullish over a 6-month time frame. Trade rate cuts make staples with dividends great again. Covered call into Q1. All right, Zachary.
At $18, it's a cheap shot. I don't mind that. I think it's tough to sell premium here. I mean, you got 30% implied volatility, so it's relatively low when you look at like equity. We were looking at BE that has 100% implied volatility. I mean, there's not a lot of juice here in an $18 stock. I mean, there's only so much you could do here. I think cover call is probably your one.
Right, but you're only going to reduce your basis by about 45 cents. But the expected move to November is what I'm looking at. The expected move is only $1.17. I'll put it up here. Here's your expected move, $1.17. You could sell the calls maybe for 45 cents, changing your basis by about 45 cents, whatever you're paying for this becomes your basis. You really have to want this 7.5% dividend that it pays here, and you really have to be bullish on CAG. So
you wouldn't sell the call, is what you're saying. You would just be long the stock. You just buy the stock.
I think so. Or I would look to do like the 17-19 spread and forget about
like a cheap shot as opposed to tie up a couple $100 bucks.
Capital. Here, you buy the 17-19. You're paying $1.04. If you're right, you're paying $1.04. It's a $2 wide spread. You could make $1 again if the stock really doesn't.
Shot.
What's that?
If on a 50-50 shot.
If on a 50-50 shot, don't worry about the dividend. Take that extra whatever money it is, $1,500 or something like that. Put in BIL and collect. I don't know what it pays now.
You're talking about the difference in the money that you're saving, not buying the stock. Assuming you're in a cash or an IRA account.
Yeah, BIL pays 4%. So you're guaranteed, right? Well, I mean, it is 4% and change, right? So if you bought it now, it's going to pay you 4% in a month. Take the 4%, stick that in your pocket. That's guaranteed. Give up the extra 3% on your money. Buy the call spread. If the stock doesn't move, you break even, make a couple of pennies. If the stock goes higher, you make on both ends. You make actually $100 and the 4% on the money. I think that's a better way of doing it. I would abstain from that trade if it was you or I, but that's just my.
I like it.
All right, let's go. Next one, please.
We're going to pass on that, but I think that's the way to do it. E-mini's up 75.
Yep.
NASDAQ up 320. Cancel crash. PPD. PPD. Is it PDD or PPD?
I don't think it's PPD because that's
stock. It's got to be PDD.
PDD. Up $1.14. IV rank at 21, relatively low. Earnings are November 20th. Stock the higher end of its range, but going sideways last couple of days. Caught a small bid last couple of days. They're bullish.
I love this. Is it a double top to go short, or is this resistance?
I don't know. You're saying bullish, so we're going to go look at what this is your assumption. So we'll go with you with the bullish assumption. PDD. What do you think here?
Got earnings coming up on the 20th. It doesn't look like they're confirmed though. But when you look at volatility here, it does look like it's somewhere after the 21st expiration. That's where all the volatility is. Bullish. I mean, you just go naked put.
I mean, if you're bullish,
You want to do like a Jade Lizard?
I from our research, a Jade Lizard has less delta to it. Obviously, that's not from our research, but does better than the naked put. So yeah, that is something. If I was trading PDD on somebody else's assumption, I'd be looking at a Jade Lizard or put spread rather than the naked put.
What do you think of like the 120, 130, 135? So you do like a $5 wide. You're selling the 120 put.
I would stay mechanical here. Your break even would be under 115 instead of selling the naked 120 put, which would get you to 118, 119, some 118 and 117 and a half or so, or 117. This would be under 115 there. I would definitely do that.
All right. I'm going to try and
markets are a little bit wide in
Yeah,
here on the
not great.
30-35 calls and even on the put. So I would put it in at like 505, and if it doesn't get filled, I wouldn't really play with it. Markets there are not great.
All right. We're working at 505.
Yep.
And you need that 5 cents to cover the upside risk.
Right. You look at the natural price here, it's 502. But let me put it up there on the screen for you. The natural bid is 430. The natural offer is 575. You got very wide markets on all of these options. Mid price is not going to be where you get filled on a spread like this. You're going to get filled above it or below it. If you don't get filled at your price, you don't make the trade. Get a little bit of a downtick, maybe you'll be able to get filled.
One more here?
I believe so.
PayPal. We sold puts in this a week or two ago. PayPal bullish. Andres in Buenos Aires, Argentina. 30 to 45 days out.
PYPL. Let's look at what you did here. PYPL. Yeah, you sold puts on the 30th, bought them back on the 6th, made
$75.
Like yeah.
$80. Yeah.
Something like that. Something like that. Now PayPal up 66 cents. Just to give you an idea,
kind of reverse that move though. We sold that into the move up to 77.
That's correct. That's correct.
Now we're back down to 68-ish.
Those puts that you bought are actually higher than where they are right now. So it was a good close, and now you have some powder dry if you want to do another trade in PDD.
All right. So yeah, they noticed the volatility spike. I wanted to take advantage.
PayPal, I'm sorry, PYPL.
Yeah. So
Just to give you an idea, I was looking at PDD. The mid price now is 510. You're in at 505. A moment ago it was 490. That's why you got to go in at your price. You know these things should trade somewhere around $5 using the strikes that we use. So go in at your price. I'm sorry. Go ahead.
Should we just sell out the puts again?
You certainly could.
I mean, they're 40 cents higher than what we closed them at $1.91. They're trading at $2.20-ish, and that was
again
8-9 days ago. So they're they basically back to their value.
Yep. Go stock going up a little bit. I go in at your price. Let them come to you.
All right. Let's do it.
Okay.
What do you want to try?
I missed net gas this morning. Net gas was under $3. I told you I want to get long net gas.
218.
When it goes under $3, I missed it. And my buddy just reminded me, take a look at net gas when it goes back under $3. Maybe we can do something in net gas.
There's no good way to trade natty gas. I mean, you can use the options in the futures, but if you look at like QG or what's the other one?
No, it's definitely a futures type trade, or I guess you can use UNG if you really want.
Yeah.
You can go to the micro futures too, right?
Yeah. Well, the QG is a mini natty gas. I think they just came out with MNG in the last couple months, which is the micro
nat gas.
But the mini trades at $25 a tick, so it's still big. Like it moves, you get it, and especially on some of these days where you have a big move in natty gas.
Oh yeah. You can have a $2,000 move fairly easy.
Yes. Yeah. So things are big.
You definitely got to be careful there.
Yeah.
All right. Awesome. We'll do 5 trades. Not bad, to be honest with you. A lot of them
we had a lot of positions on already in those, so I don't think it was a bad performance. I'm okay with our performance overall.
You're okay with your performance?
Yeah, it wasn't our best.
You don't hear that every day. All right, let's take a quick 90-second break. Even the S&P has caught a bid. They're up 74. Volatility 1990 down 59 cents. NASDAQ catching a bid. Russell is your leader of the clubhouse, up almost 43. Dow up 350. Bonds are up 8 ticks. Bitcoin over 112, 112.6.
Do we take the put spread off now?
You could.
We were talking about taking it off if we had the vol crush too, it'd be trading at 60 cents. It's marked at 55 right now. Should we try and just leg out of
Yeah,
that?
but you're down on the overall spread, right?
Yeah, of course.
You're
You're getting
the puts. Just kidding to you. You see, this is where now you're on your own. And you can't
Yeah, you leg out of the put spread. Now you're leaning a little bit you have a little bit of short delta, 20 points higher from where we started. I mean, that's what you have.
My God.
You started the trade.
I understand.
I got even more short by closing the put spread.
You're on your own private Idaho. You go, run. I like it.
Oh, do I get the 60 cents from yesterday too? Is that one mine too, or do we share that?
That was
we
ours.
Share the profits. That one's ours.
That was ours.
Okay, got
We're
it.
gonna take it. You didn't listen to me. You went against the family. We're gonna take a quick 90-second break and come back. We got which is great, by the way, because if you would have listened to me and we went lower, you would be blaming me. It's your trade, and it's everybody else's trade out there.
I would never blame you.
We're going to take a quick 90s, and then maybe not when the camera's rolling. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live. There's no wrong answer. Because the market...
Unless you knew the future. I mean, of course.
We'll take a quick 90-second break and come back. We got more, but right now I'm more right and you're more on. More wrong. We're going to take a quick 90-second break. More Tasty Live. Yeah, I'm just playing with you. Right after this with the Skinny on Options Matt, Jacob.
Black Scholes, a nice refresher for you.
Oh, somebody asked me yesterday, and I sent them an email about this. How do you do option pricing? This is it.
Yeah.
Black Scholes.
If you don't want to take the market maker's word for it, you can price all the options yourself with this formula.
We'll be back in 90 seconds. It's Tasty Live.
Might take you all day.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Today's episode of Market Measures is brought to you by Segue. Segue is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man, the ski and options math. Jacob, what's up, my friend?
Good morning, lads. Not so much. I mean, what's up is the market today, but...
Yes.
Always and forever.
Same as it ever was.
It's to the moon. No downticks.
Yes.
Can't find them.
Yep. Doesn't matter anymore. Cancel
Nothing
crash.
mattered. There's no reality.
Yeah.
No. I mean, at some point there might be. We'll talk about how time change works today, and we'll see that, the models say that at some point it's coming, but they're really unclear about when.
Well, if they figure it out, can you let us know?
Yeah, for sure. We'll just cue you in on the future knowledge as soon as it comes in.
Oh.
You're gonna look at Black Scholes today?
We're gonna look at Black Scholes. We're gonna look at Black Scholes. We're gonna highlight how Black Scholes isn't true. That's gonna be a key thing today.
No.
Which is important given how obviously untrue it is.
Our world is
gonna be
crumbling.
set on fire here. All right, go ahead.
All right.
It's okay. No, it's okay. It's okay if the Black Scholes model isn't true, because no models are true, because true isn't a property of models.
Because nobody knows the future, at least not yet. Until the robots.
No, just because that's like true isn't a property of models. True is a property of like statements or assertions. Models are descriptions. They're things like a Lego set isn't true or false. It's just on the table. You've built it or you haven't built it, but it's not true or false. That's the wrong kind of way to think about it. Let's get into it. We're going to start off with what is a model, and we'll move forward into just sort of getting us to the foundations of Black Scholes, which lies in this mathematical concept of what are called martingales, which sort of, I mean, in the original Black Scholes formulation, it did not stem this way, but under sort of a more modern construction, you go from the efficient market hypothesis to martingales to the Black Scholes model. Something like the Black Scholes model has to be pretty good as a model, and we'll sort of walk through that process today. And see where the like and pretty good and these sort of things come into play. This is one of my favorite quotes from John von Neumann, that he likes to assert constantly that mathematics is incredibly simple. It's life. That every time someone says math is really hard, it's like, well, that's just because you don't realize how complicated the things you deal with are, right? That 1 + 1 = 2 is very simple. And even really advanced math, like, the geodesics on a Riemannian manifold, are still very comparatively simple.
That wasn't English. That wasn't English. That was some. Can you say that again?
What language are you speaking?
I said geodesics on a Riemannian manifold. So you have a weirdly shaped thing, and you're trying to draw what the equivalent of straight lines are over the weird shape. That's what a geodesic on a Riemannian manifold is. But even that's like really simple compared to like an actual world thing, like a cat. Right? If you took a cat out and you asked, how could you possibly describe this? It would be a much more complicated description than any of the mathematics that we've put up here, just because there's so many little miniature details and everything is very fine. And so models are an attempt to apply the simplicity of mathematics to the complexity of reality. And what they mean is that you take something that is simple enough to have a precise mathematical description, right? So over on the right here, I've got, a model of a molecule, right? It's just a picture with some spheres and some rods. It's not really what molecules look like. It's not a real molecule. But it's supposed to capture some of the salient features. Like, okay, molecules don't really look like this, but what they really do have are atoms that then bind to each other and have sort of fixed angles that are determined by their number of connections, right? And so those aspects of it are captured in the model, right? Are in this, Lego set construction, right? So we're trying to simplify reality to the point where we can do mathematical reasoning, but we need to maintain enough of the features of reality so that the things that we reason to can be applied. And so models like maps are not true or false, but they can be accurate or inaccurate. And that's sort of the better way to look at them. So we're not going to show the Black Scholes model is true. We're going to show the Black Scholes model it is understood and has some degrees of accuracy and some ways in which it is inaccurate in how it describes reality, and we'll try to keep all that in mind.
Okie dokie.
So with that as our goal, we're to set up a model for so the goal initially, right? You were saying we're going to get to pricing options. We're not going to do that yet. The goal right now is just to come up with a model for how prices change, right? How an underlying is going to change over time. And then if we come up with such a model, we may be able to back into pricing of options and other things, lots of other descriptions. But the goal here is to construct a model that will describe how an underlying price will change over time. And it's not going to be perfectly accurate, but it's going to try to capture enough of the relevant features that then when we do mathematics on the model, we can get results that we can look at in relation to the market. So let's go forward. So as an example of a model, and it's not a random example, we're going to use it pretty heavily in a bit, but as a reality model distinction is, and I'm very sloppy about this. I usually just say Brownian motion when I'm referring to the model. But if you take a physicist and a mathematician, you put them in a room, they will eventually realize that their language is slightly different. And Brownian motion is the real world phenomena of how a particle suspended in either a gas or a liquid moves, right? So you take some radiated particle, you put it in a warm room, and you just record where it goes, and you'll see it moves around. This ends up being described in science by the model called a Wiener process. And if you think Wiener process is kind of funny, so did my whole class. There's a whole host of...
We're Batistas. You just said Wiener, okay? Come on, we're going to chuckle a little bit.
I assure you, entire rooms of math graduate students have chuckled at the phrase Wiener measure.
You know, this is why...
Is the follow-up. The Wiener measure is the probability that a Wiener process stays within a certain bounds. It gets you the Wiener measure.
There's hope for humanity. I'm just happy.
There's a Wiener sausage. Where you fatten out a Brownian motion so that it has some width to it, and then it's called a Wiener sausage.
Fat wieners, skinny wieners, little wieners, big wieners. It's all.
Also, I think I don't have an allusion to him, but one of the key mathematical figures in the past for a lot of these things is named Doob, which is also just a funny name. So there's the Doob representation theorem. He has lots of theorems named after him.
Does that have anything to do with noob?
No. It's just his last name is D-O-O-B.
Okay. All right.
But so the Wiener process, right? So this formal mathematical model is that you start something at the origin. And we say almost surely a lot in probability. That just means that we accept the fact that some things happen with probabilities, could happen with probability 0, but we're going to ignore them. So doesn't matter. We'll start at the origin, and then we're going to have sort of 2 or 3 conditions that'll get us there. One is that we have Gaussian increments. So if you have the distance between it at any 2 points, that'll be distributed like a normal distribution with variance given by the time between the two. The increments are independent, so that if you have the displacement over some time interval and the displacement over another time interval, and those 2 intervals don't overlap, then what it does on one and what it does on the other shouldn't be related. And then the last one is that the paths should be continuous, that it doesn't teleport around as it does these things. It has to move from one point to the next point. There's no such thing as a next point, but to an adjacent. It has to stay in one place. Right? Small changes in time should only result in small changes in position. Those are the descriptions. Let's go forward. I'll work through a brief history and explain this picture on the right. So the sort of the earliest credit to a Brownian motion, massively predating Wiener processes because there was very little math at the time, goes to 60 BC. I think it's on the Lucretius writes a text called On the Nature of Things.
So the aliens gave us this. It was 60 BC. This is when aliens were building like the pyramids and stuff like that. So the aliens.
This is a Roman. This is. No, the pyramids are much older than that. Remember, ancient Egypt was so long that ancient Egypt archaeology was a field of study in ancient Egypt.
Okay.
Wow. They had thousands. They were digging up old
way to take a joke and ruin it.
They were from 1,000 years before.
Way to take a joke, use logic, and ruin it.
I'm so sorry.
Okay.
The YouTube chat's a little behind. They're still on the wiener jokes. We got it.
That's good.
We have a whole chat.
We have a lot of master's degree students in the chat room.
It's very funny in there. So Lucretius tries to describe how he sees dust particles, floating in beams of sunlight, and he tries to describe how that's moving. And ironically, actual dust particles do not behave this way because they're sort of dominated by the air currents. But what he winds up describing is almost exactly how we then later think of even smaller things moving. So in 1827, Robert Brown, this is the reason it's called Brownian motion, he takes one of the early microscopes and manages to study pollen floating around and sees how that moves under a microscope. And then in 1900 is the first financial idea of this application, where Becquerel has his dissertation, which is the theory of speculation, where he sort of puts forward a Brownian motion as a way to guess at, when you don't know how something is going to go, what is sort of a minimal way to be as honest as you can about, I don't know what's happening. What should I guess? Is how he arrives at it. And then in 1905, the idea of atoms and molecules is still pretty hotly debated in scientific circles. And Einstein publishes a paper where he says, well, taking it very seriously and assuming that the actual motions of a particle of an atom should be caused by it being struck by other atoms, but that's quite unlikely. There's lots of them flying around, but that they're very small, so they usually miss each other. So you don't just get like it sitting still because it gets hit 50-50, one on each side. There's some randomness. Sometimes it gets hit by more from one way and more from the other way. And he does the whole reasoning that you get to a thing like this picture on the right, where you have something, and I'm saying that at each time it's randomly going left or right. But it's not so many that we can be very confident that it's going to be 50-50. It's going to be more likely to be close to 50-50, but it's going to come out somewhere to the one side or the other, and it's going to wind up following this normal distribution. And this is the math that Einstein did in 1905, where he showed that if something is getting impacted randomly in various directions, but only does so, a certain number of times, what you'll wind up with is a normal distribution of its position. As we saw before, the Wiener distribution, the Wiener process is exactly that. It's something that is normally distributed at every time slice. And then for my understanding, the best way to think about it is as the scaling limit of simple random walk, which is a 1952 result due to Donsker, right? Where you take something that just goes up or down plus minus one once a second, and then you speed it up, but you make it steps smaller. And then there's only one way to do that, where it doesn't either sit in place because you made the steps too small too fast, or run away to infinity immediately because you sped it up too fast. There's one specific ratio, it's the square root, that you do that at, and you wind up with a well-defined object that's the Brownian motion, or the Wiener process.
Very good.
So those are Brownian motions and Wiener processes. Why are we talking about them? Well, I said we're trying to model prices, and we're going to see that this is sort of going to come to us as the necessary tool for modeling prices, provided that we accept the efficient market hypothesis, or at least the weak version. The efficient market hypothesis states that current prices reflect all available information, right? Which is to say that you're not going to find an arbitrage, that the current prices are correct. There are sort of three forms for this. The weak form is the only one we need to do math, because we don't care about newspaper articles or hidden boardroom meetings. We can just say what happened to the prices in the past. Well, we say that all the previous price information is factored into the current prices, that there's not a discrepancy there. Then there's the semi-strong, which says that, all publicly available information, so press releases, newspaper articles, all these things is already factored in. And then there's the strong EMH, which I think is the most suspect one, which says that even private or secret information is already in there, right? Which sort of gives an assumption that they've already traded on their secret information, and therefore it came into the prices. That one, I think there's a reasonable space for debating how true that one is, but it doesn't matter because we don't need that to do the math of it. All we need is the weak one. And even if you sort of have some doubt that you think there really might be some discrepancy between prices and information, the idea that you have the information necessary to determine what is wrong about current prices is not something you can do from your own home. It's not a realistic goal. We shouldn't be trying to trade based on assuming that. So we'll throw it away. We'll take at least the weak efficient market hypothesis, and we'll try to treat it very seriously.
Ye
And
of
if we do
little
that-
faith say, I can't do it at home. I could do it at home if I wanted to.
Yeah. As long as you believe in yourself real hard.
Saying you don't have the inside information to be.
Yes, right. It is possible that some amount of inside information maybe could give someone an advantage. I'm not willing to claim that the strong efficient market hypothesis is absolutely true, but you and I don't have this information.
I'm
so
going to blow
what are we
this
gonna
all up on you when you're done.
All right. Sounds great.
I'm serious.
I love it.
Go ahead.
Yeah. But so taking the efficient market hypothesis very seriously, we can arrive at the way to model prices are going to have to be what are called martingales. So this is our formal models. So it's going to have a full mathematical definition. A martingale is a random process where if you take all of the information up to some specific time, and then you ask what is the expected value of this object in the future, right, at some future time, well, it's just whatever its current value is, right? That all of the information is baked into the current value, right? That's the weak efficient market hypothesis, and that the future value is going to have to be centered around the current value, right? That's what makes the current value correct as well. So this is the efficient market hypothesis given mathematical form, but it also provides a mathematician's idea of a fair game. It's more broad than just prices. What we need to do in order to actually apply it to finance is we need to remember that money today and money tomorrow are not directly comparable. That we suspect that there's some sort of risk-free rate and a risk-neutral measure which we can use just to adjust future prices and current prices. So that we say that the expected value in the future isn't the current value, it's a risk-free rate adjusted version of the current, e to the RT times the current value. And that's just necessary to account for the fact that there's a sort of a constant ballooning in prices. So if we have the weak efficient market hypothesis, when we apply it to financial models, what it says is that prices should be martingales in the risk neutral measure. And now, like I said, martingales are really well understood, very thoroughly studied. We have so many good results about them. And one of the most powerful results is that all continuous martingales are time changes of Brownian motion. They have what are called Brownian paths. And we'll go forward one and I'll describe this a little bit more. Yes. Some of the best studied objects in mathematics and probability theory. And the martingale representation theorem says that any martingale, which has a finite quadratic variation, which this quadratic variation, to give it what's going on there, it's taking the limit as the partition. If you partition the space from 0 to t up into some number of subintervals that go from s to t, and you take the limit as you make the partition very fine, and you look at the square of how much it changed over each interval. And that measure, so for most well-defined, well-behaved things, right, for continuous for deterministic functions and things that you write down normally, this is 0. As you shrink the spaces between things, they get smaller. When you square it, it gets much smaller, and thus, even when you take this limit, you get 0. But random wiggly things like Wiener processes have finite. The Wiener process quadratic variation is exactly t. Other martingales will have other quadratic variations, but no matter what martingale you have, if you take its quadratic variation and you take a Brownian motion and you run that Brownian motion not at a constant rate, but at a rate following the quadratic variation. So when the martingale is moving more, the Brownian motion moves more, and when the martingale is moving less, the Brownian motion moves less. What you get is that that Brownian motion has the exact same distribution as the martingale. So it's speeding up and slowing down the Brownian motion, the Wiener process as you go, and this gets you a recreation of the martingale. So at the bottom here, I have sort of a picture version. It's called the Skor-Hot embedding that relates a simple random walk, which is not a continuous martingale, to a Brownian motion where you just look at the Brownian motion every time it crosses an integer, and then that path that makes a simple random walk. Right, so you can make a Brownian motion out of simple random walks by scaling the simple random walks down, or you can make simple random walks out of Brownian motion by just closing your eyes anytime the Brownian motion isn't at an integer, and then adjusting your concept of time so that you only see when you blink. When you open your eyes and blink when it crosses an integer, those are the only times you think time advanced. Now, price continuity implies Brownian paths because once you're continuous, the Brownian motion must be continuous. So the path must look like a Brownian motion, even if it speeds up and slows down sometimes. There's not really a good justification for why prices would necessarily be continuous, right? You can think that especially on things like an earnings announcement. There might be a price jump. But because we only sample the market at discrete times, right? Even if it's every 10,000 times a second, there's still little gaps between all of your price checks. So you can either say that it jumped or that it just, connect them with lines, and you get very little difference. I'll cite Marcelo Alvizio, one of my advisor's other students, whose dissertation was on the effects of jump processes, introducing jumps into financial models, and his results were that very little changes. Almost nothing is different. But he had to say it for dissertation length conclusion. So we had a lot of results about that. So we've got this fact that if we take the efficient market hypothesis very seriously, then we know that prices should be like Brownian motions, but possibly sped up and slowed down at various times. Right, so that they should, or geometric, due to the risk neutral measure issue, possibly sped up or slowed down. If you don't assume the speeding up and slowing down, if you assume that it in fact has a constant speed, right, the time homogeneity, then things get much simpler. Now it's no longer any martingale describes prices. Now it's specifically the Wiener process in a Brownian motion describes prices. And this is great because it means that we can now do that thing I said where we want to apply mathematical reasoning and get results, right? We want to be able to have a model that was simple enough to understand, right? Like a picture with sticks and toothpicks and marshmallows to picture your molecule, but can have, results about it that you would like to have. That said, we know it's not true. We know that the model market doesn't believe it, right? That it did until 1987. And since 1987 crash, the prices are very clear that it's not a constant speed, a constant volatility geometric Brownian motion. But the argument I gave up till now was pretty convincing that it should be some sort of time change of a geometric Brownian motion. And so we've had about 40 years now of various dynamic volatility models. I think they sort of started in the early 90s as people recovered from the crash and have been going strong ever since then, where they come up with all sorts of different models, and they're all a little bit hard to understand or justify or explain why the time changes are what they are, right? Why volatilities dynamics are like this, other than the local volatility model, which says, well, because prices are these, this is what the market says it must be. But this doesn't, so the Black-Scholes model isn't true, but it also, which we knew because models aren't true, but it also isn't accurate because it assumes that you have constant volatility, but it can be good for a lot of purposes, right? It depends on the situation, how much accuracy you need from a model, right? As an example, the position of the Earth in the galaxy is some complicated spirally thing as it rotates around the sun, and the sun rotates around the center of the galaxy, and it makes this complicated positional thing. If you want to have simplify it to a model for the position of the Earth, you could say, well, we'll just assume that the Earth is where the sun is. And if you're doing, interstellar travel where all the distances are way, way bigger than that, that's a pretty good model. If you want to guess where the Earth is, well, you look where the sun is and you say, it's probably pretty close to there. If you're trying to do something like from the Earth to Mars, it's now a really bad model because how much it's off by is now a really relevant portion. And so this is sort of a key thing when dealing with models, is to figure out how inaccurate they are and when those inaccuracies matter, right? And so for the Black-Scholes model, the inaccuracies come in from the constant volatility assumption, and how much they matter depends on how dynamic volatility is, which we will try to get to in our coming weeks. But I think this is all the time we have for today. Well, we're way over, but that's okay.
No,
we were late coming.
You did great. Is this your last slide?
Yeah, we're going to takeaways.
Awesome.
Next.
We'll go to your takeaways, and then you actually cleaned it all up by the last analogy you used with the sun, but I'll get to that in just a moment.
Nice. Yeah, I'm glad to have gotten to your.
No, I'm being serious with you. I'm going to get to you. I'm not done with you, man. You do your thing.
No, I'm excited. Look at it. So for today, our takeaways are that models are a key tool for applying mathematical understanding to real-world situations, which are necessarily more complicated than math. In the modern construction, a weak efficient market hypothesis is going to say that prices should be modeled by time changes of geometric Brownian motions. The Black-Scholes model neglects any time change concepts. So like all models, is not fully accurate, but it has this really nice feature to me where we can really pinpoint where the Black-Scholes model and reality diverge. So even though we don't believe the Black-Scholes model because we know it's not fully accurate, we can make a lot of use of it because we know sort of where the discrepancies are coming from. So we can try to account for them in our understanding and our reasoning, which I think is one of the more powerful features, right, of a model, at least of a flawed model. All right, Tony, what you got?
So Black-Scholes uses interest rates, correct?
Mm-hmm.
Yeah.
My interest rate might be different than your interest rate that you get as a liquidity provider. Like, you know, like I might have a connection with a bank that gives me a little bit of a better rate. So my volatility and my interest rates might be a little bit different in the back end than yours. So we all come to a different agreement. Let's say, for argument's sake, that the market has a very tight market. It's a penny-wide market, and $3 is the natural mid-price. It's $2.99, $3.01. And I only have it worth $2.98 because my interest rate is better. Selling it at $2.99 theoretically locks in a penny for me. But if the market's $2.99, $3.01, I'm not going to sell them at $2.99. I might go into $3, and if I get eaten at $3, they start taking them. I'm going to move my interest rates to match what the market, or move my model, whatever the variable different is, to match what's on the screen. Because with so many liquidity providers, it doesn't matter how right I am. Maybe I am right. Maybe they are worth $2.99 and they are too high. I don't have enough liquidity to make it make a difference, to make that price $2.98. $3 with $2.99.
And you wouldn't want to.
And you wouldn't want to.
Because the market's pricing in a higher price. So you're
anything I buy on the bid someplace else, because my prices are a little bit lower than anybody else, I feel like I'm locking in a lot more credit than somebody else, a lot more edge than somebody else. But really, it's what the market is going to tell you what is. And it's retail investors, our 1 lots, 10 lots, whatever we are trading.
But that's coming from somebody that, like, so in your example, you're not the biggest.
Well, it's his son example. Like, it's doesn't mean so much in the shortest time frame. Now, if we're going further out and further out in time, then it can have a much bigger bearing. But as individual investors, we have to trade what's on the screen.
Yeah.
We can think we have edge.
The biggest liquidity provider is going to be the price.
That is
I mean, like that. You're talking about like your specific edge of having that.
I'm making my own Black-Scholes. I'm tweaking my own Black-Scholes models with my own parameters in them, which makes them like, who's right? There is no telling who's right, and that's why it's flawed.
Yeah.
Good job, Jacob.
That was good.
Jacob, I think the real takeaway from today is that you love wiener. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Quentin, Ryan, just Quentin, just Ryan. We'll see what comes up next. You'll be surprised as much as I will be. Thank you, Jacob. Appreciate
falls out of the tube.
You're a good sport.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nigga, we are back and running out of time, so let's get right to it. Give me my... That's right, it's your friend and mine, Quentin. Quentin, how are you from the trade desk?
Fellas, how's it going?
Busy out
Doing
there?
Well, oh, busy today. I mean, with the market the way it's been, we've got so much action going on.
Sure,
right now.
1% move this way, 1.5% move that way.
Yeah, and I mean, because we're still like good amount below the highs on the S&Ps, and so I mean, there's still a lot of action going on.
Said like a buy the dipper.
Said like a buy the dipper.
We're 1% from all-time highs.
Right.
So we're still. It's a good amount.
Man.
It's a good amount.
To me, that's a good distance with the way the market's been moving.
That's true.
Just go like.
I hear you.
Well, give us your top 20 list. We'll let you get back to work answering those phones. Sound good to you?
Yeah, sounds good to me. Let's get that pulled up here. Yeah, we've had a busy, past couple of weeks. A lot of new customers, a lot of trades going in. And so enough out of me. Let's get to these top 20 symbols and their IVRs. We've got AMD, 60%, Tesla, 27%, GLD, 75%. A lot of customers trading that GLD. You see that a lot. NVIDIA,
I just saw the put spread.
Hopefully long and not short.
I just saw the put spread in GLD against my short embedded call spread I have. So this should mark the high in gold. So if you're looking for a bell or anything like that, or the gold bears want to come out, you can come out now because I have a lot less short delta than I had before. So go ahead.
Gotcha. All right, and then we've got NVIDIA, 20% or 19%, Meta, 44%. Palantir, 41%, Oracle, 69%, Bank of America, 20%, SMR, 45%, IBIT, 63%, Oklo, 68%, Apple, 25%, SLV, 97%, SoFi, 42%, TQQQ, 28%, Amazon, 46%, BE, 99%, ASML, 30%, Costco, 15%, and Goog with an L, 52%.
Good job out of you. I had to have a proof of life. I had you on the show for proof of life for your dad.
I'm at his custody. I gotta tell Marty. I gotta let him know.
You're free now.
Free.
You're free.
So I fulfilled my obligation to him. So I'm gonna let you go, and we're gonna bring in.
Thank you, fellas.
Ryan, I got a bone to pick with you.
He's very upset. This is not the
October thing. I'm very, very upset with you. Very upset.
We got 2 weeks left. It moves fast.
2 weeks left. There we go. All right. Fair enough.
It moves fast, and you got a discount.
That's right. It's on sale.
Yeah.
A lot of red on my screens. I don't know about you guys, but when I open up that crypto watch list, I don't see much that's up, unfortunately.
I don't like it.
I mean, I was almost going to sound so public. What's your best opportunity on here, knowing absolutely nothing on future price?
He's going to tell you volatility. He's going to say,
in terms of what I like?
Yeah.
I'm going to pick a token here?
Yeah.
Sui. I mean, that's where I'll just give you my bags, as we call them. I am overweight, or like, I guess my biggest position, best way to
talk
put
your
it,
book.
is Bitcoin, ETH, Solana, Sui. I have a couple tokens that we don't offer yet at Tasty Trade, but BitTensor.
Talk about them then. Shush your mouth.
BitTensor, Tau.
I saw that BitTensor trades.
It's trading up towards 500 now. You could have bought it, a lot lower for the last few months.
But they have, I think because it's a company too. It's like they have like a.
There are some funds that are being spun up that are taking an interest in what the BitTensor blockchain network is. The same team really behind Grayscale and a lot of those products, Digital Currency Group, they have some initiatives in this space. So what you're seeing is a lot of companies that are either raising capital or forming around building applications and participating on chain. We're seeing that with some of the Ethereum treasury companies. We're seeing that with some Solana treasury companies. It started with companies like Strategy, just buying Bitcoin and holding it on the balance sheet, then doing a little bit of financial engineering, obviously, as Michael Saylor is doing, that people are aware of. But if you look at these things as economies or ecosystems, you look at Ethereum, there are a lot of companies that are raising capital, not only to participate and buy Ethereum, but to generate yield or to finance ventures on chain. In the same way that you would look at, like, okay, the internet kind of popped up, what companies are investing in others to build in that space. That's what you're seeing quite a bit of. A bit of a tangent there. But back to the slide. Sui is probably the one that at 275 is maybe most interesting to me here. Ave is getting to levels where it's interesting to me. That's kind of traded within this $200 to $300 range, has had a hard time sustaining a $300 price. But that's one that when you look at kind of what could happen in DeFi, that's a player. Uniswap, not up here, but that's one that we've talked about. But I think generally speaking for me personally, if I can buy ETH 25% or so off of the all-time high at about, call it 3,800, somewhere around here.
Have that chance.
Yeah, it's kind of trading around there right now. You know, whether it goes up a couple hundred points or down a couple hundred points from here to me is less relevant to where I think it's going. But I'm okay with being wrong too, right? If it does break down, I don't think you fight that, right? If for whatever reason we start to see this sell off further and you see, let's say, a break in Bitcoin of 108, it's going to move towards 100,000. ETH, if it gives up kind of these levels where buyers have shown up recently and going over the past couple of months, then I think you just have to accept it for what it is, right? I'm pro crypto, but if price is telling me something differently in the short term, I'm going to pay attention to that. But at these levels, this is where I'm starting to add a little bit more to my position.
Did Friday spook you?
No, not at all. And you know why, Nick? Because we've seen it so many times before, talked about this to some extent. I mean, I was texting with a couple of the guys here and on the desk, like liquidations are coming. This was at like 4 o'clock. And the size of the move surprised me a little bit, the flush, but buying as much as I could at some of the prices that you were starting to see. In many cases, you saw exchanges were going down, like you couldn't buy. So we went to 50 cents. I don't know if there were even any buyers there, but those were the prices that you were starting to see. So I got a little excited, actually. It helps when it bounces back, like the next day. But I think if you look at what was happening, right, and we've seen this many times before, Trump tweets about tariffs or China. The market was kind of offsides to begin with. You know, you could argue that the VIX was a bit elevated ahead of this, but it's just been grinding higher and higher and higher. It's enough to just introduce some selling.
Deleverage.
And it's a Friday. It's illiquid. And in crypto, we know that it's super volatile. And we also know that the perps were all the way on one side, and it's about to completely dump. And you saw how much leverage was built up in the system as a result. I think it also explains why we didn't just completely bounce back. You get that initial kind of V bottom, but this stuff's going to chop, and we've gone from, you know, a couple weeks ago, hey guys, look, 3-month basis, you're up 30%, now you're down 30%.
The volatility now, because it seems like volatility in the crypto space, like if you look at an IBIT or an ETH, is relatively higher than what we've been used to in the last couple weeks now. Despite the leverage coming out of the system. Do you think that's now people speculating now on the upside? Like, do you think that's upside volatility that is now being priced?
No, not so much. I mean, I think what you're seeing even on our slide here, when you look at realized volatility, obviously it's backward looking and we're calculating it on a 30-day basis. So on a 30-day look back, vol has exploded. Now implieds have moved higher too, but I think this, largely what we're seeing is just the move to the downside and the size of the move to the downside and how this calculation works. So, we look ahead another 90 days or so, that's going to smooth out quite a bit, but we're trading the here and now. And so is it more volatile? Absolutely more volatile. If you extrapolate this and annualize it at the current rate, then you're going to get 140% vol on ARB. You're getting massive upside moves as well. But I don't think, to answer your question, it's necessarily like you're seeing a ton of people come in and buy call options. What you are seeing in IBIT, and we talked about this on the Tasty Crypto show last week, is that you do have a setup, or you did at the time, for a risk reversal. So the puts were generally ahead of this move too. We're rich versus the calls at the same delta. So let's say you go out 1 month, you sell the 25
but they were
delta.
skewed to the upside. Like you still had call skew, no?
That it had shifted a bit. So you had, the setup for a risk reversal, you had relative richness and relative cheapness in the calls, relatively expensive in the puts. So selling puts to buy calls, doing that for a credit, same delta away if you're bullish. That was an interesting trade idea we talked about with Greg. But I don't think you're seeing a rush necessarily given just how things are trading right now today to buy calls. But arguably they're cheaper if you think there's further upside in the future. As a trade idea, I suppose. Kind of seeing the opposite at the time in ETH. That wasn't the case. So you were seeing a bit more upside speculation and bid in those call options in the ETH-A ETF.
Very good. Good job out of you.
Yeah.
Well, we ran out of time with even the S&P's up 65. Really not a downtick. About
10 points.
10 points off of their
That's
high.
a dip. Didn't you hear Quentin? We're significantly off the highs.
We're dipping.
Yeah, it's a big dip. 10 points.
Bitcoin dipping still 111.4. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace. Good job.
Peace. Thanks, Ryan.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That brunette over there, that beautiful brunette, is Jenny Andrews. And I love being live from the SIBO, middle of the SPX pit.
Oh, it's a busy day. We have a spooze up 66 right now. It's crazy. This week has been crazy. We're getting some wild moves.
We are getting wild moves. And you know what? I like when we're down here. The energy's good and they're loud. They are working hard today. They're working hard for their money today.
They are working hard. Forget the guests. No guests are coming on. They are busy. Oh, there goes some jackets. The rule is show starts, jackets on, boys. They are very busy.
They are very busy.
Yeah.
Our floor official wanders around making sure everybody's got their jackets on. We love it. We love it. Thank you, Gary. He's back there.
Gary and his walkie-talkie. All right, so let's jump in the platform and take a look at what we have going on because the market's been kind of nuts. I'm going to go to SPX here and take a look at the chart. We've had some pretty wild moves. Up 69. Didn't
notice we still aren't back to where we were Friday.
This was Friday's close.
No. The bar for Friday, the high for Friday.
Oh, the high.
We are still not back.
No.
So on Monday we got back 50%. Yesterday went like a teeter-totter. Today we're back about 80%. I'm just eyeballing here.
Yeah, sure. There's no math on this show, Liz. Don't worry about it.
But I mean, it's pretty far and I've got one eye. So that's, it's not, all I know is that green isn't to the red yet.
Right. We're not making all-time highs, but we're making a comeback from the down move on Friday, which kind of scared the children a little bit. Let's see what VIX is doing, because yesterday VIX kept its wings up.
I'm going to guess it's 1915.
1924. She does that on purpose. Yeah, this is the last time. That is the last time I ever put my hand up to high five you.
So if you're getting,
it's going to be red all day.
If you're getting this hand I can't slap that hard with. If you get this one,
or you trying to knock me off my chair?
No, but if I tell my kids, if you're going to high five like you mean it. Because you can't go like this. You can't be like.
Last time. You are done. So VIX down $1.56. So it's down. Market's
down,
up.
But it's still just about 20.
But you expect to see market up, VIX down. Yesterday market was up and VIX was up.
Yeah.
So that was
and
kind
then
of
we
a
reversed. And we reversed while we were on last call.
Right. That was on how like crazy soybean news came out. Now I'm going to go to the soybean chart.
I'm not gonna lie to you.
It didn't really.
I don't know if it was soybeans. Something about cooking oil is all I saw.
Cooking
and then everybody's
oil.
like, "What do you make cooking oil out of? Corn, soybeans."
There wasn't a wild move in soybeans yesterday.
No,
there wasn't.
But this morning, this morning I heard he's tariffing China's cooking oil. Like what?
I don't know.
No more Pam.
But as far as movers and shakers, so the bonds are. Look at how high the bonds are.
Yeah.
But I don't want to short them here. I'll just wait till they get lower and get long again.
It's a pretty interesting time. I kind of agree with you. But here's the deal. I like bonds when there's not really a lot of stuff, a lot of other stuff going on. We got a lot of stuff.
If they're an extreme. I mean, anytime they get down.
Technically if you look at this, if this is extreme high. I would prefer them to be in the 16 handle.
Extreme high, but if you think about like all the years we traded TLT is still 91. Like, go back down memory lane and you would say TLT at 91 is low.
That's why I love charting. You can take any slice you want to make it look like whatever you want.
Yeah,
That's
118 might seem high, not today.
My
but
husband's a data guy, and he's always like, you can make the data say anything you want. You can.
You can show any period of time.
Any period of time.
Right. So then you say TLT 91. Well, that seems low because for years we were.
Yeah, but I still
hundreds.
don't want to do anything. I wouldn't be selling premium in TLT with an 8 rank when you've got ranks all over.
No.
As a higher rank.
And they're really, really loud. 5,000 calls. D's 5,000 calls. D's 6,000
December
calls.
19th.
1,100. It's got to be a spread. 5,000, 6,000 call spread. Got to be a. So
it's in December. It's in the December, and now it switched. Now they're on October 17th, which is
they're
today.
busy. They're busy. Lots of action today. Lots of action today. As far as other movers and shakers,
the your rare earths up. You got Bloom Energy. You got U. Can you check MP?
What is BE? Okay, so Bloom Energy up another 8%. These can't stop, won't stop.
Can't stop, won't stop.
If you're long them, congratulations. If you're short, Nikki calls in here.
Well, you look at MP. That's the one I didn't have, and that's the one that I was getting texted from your mom. MP. Market price. Just kidding. I don't know what it's called.
That's not up today.
That's not
down.
up today.
That's down.
Interesting.
Yeah.
Bloom Energy's up. UUU is up. Oklo's up. Some of the nuclear stocks are up. SMR's up.
So Oklo's up. It was up $20. It's only up $9. So it's really lost $10 that it had earlier today.
You should. Archer Aviation.
Oh yeah. Archer.
See what I did? Archer Aviation's a vertical lift technology, so I just went.
Archer's one of our favorites, and that's because Liz's husband is a pilot, and he's been very into this stock since it's.
But with Archer, act like you've been here before. We get to we'll brush 14 and then drop.
You say act like you've been here before. I don't know if it has.
But look at those 2 peaks. That's what I'm saying. Like you brush 14, you get close to 14, and then.
But is this new highs for Archer?
Probably. Yes, it is today.
This is new highs for Archer. So. Let's give a slow clap for new highs, Archer Aviation. And is Joby doing the same?
I think so.
In which Joby is one of their competitors.
No.
No. Today's Archer's day to shine, Joby.
I was in Joby for a while. I took all of my, for no reason, not a trade recommendation. I took up all of my vertical lift technology and put it into Archer. I was trying to clean up things and I didn't want.
Yeah, I get it. Originally I was just an Archer. Then I went into half and half split Archer versus Archer and Joby. Now I'm like you. I just have it all in Archer.
Because we don't really know anything.
We don't, and maybe I should have it split up between the two, but
we don't know anything.
It's all in Archer now because whatever Liz does, I do. I don't want to have her celebrating, popping the champagne, celebrating a big move in Archer, and I can't participate.
That's true. It's true. That's why I'm an Oklo.
So anyway, I don't know. Is anything else really moving? DraftKings finally catching a little bit of a bid.
A little bit of a bid.
Look at that.
That's what I'm saying. A wee bit of a bid.
But it was down. Finally, a little bit of bid. And this week, I'll have you know, I came in like 5th place, which was really good for me.
I don't know that I've ever heard you use the term, I'll have you know.
5th place in my fantasy league.
Congratulations.
I was proud of that.
Is that good?
Well, it's better than last place, which is what I've been getting every week.
5th is better than last. You get a participation trophy.
Okay, so I think
I mean, as far as movers and shakers, I don't think there's anything that we need to manage, right?
Oil is not really moving. 58. Our MCL is 58.
Is MCL down again today?
58.
Because oil was down yesterday. Is it down again today?
Barely. It's like unchanged.
So it's not moving.
Yeah,
okay.
not really moving.
Natural gas is going into our cycle.
Natural gas, we have. In natural gas, we have 13 days. 13 days can be an eternity in natural gas, but our center strike is the 2.9. It's getting a little bit closer.
We have no risk on the table. We locked in something.
Yeah.
I like having these on where it's, so you're saying there's a chance, you got a shot at making more money.
And maybe
if not,
later,
we've locked it in.
Maybe later today with the 40 rank and it moving down a little bit, maybe later today we'll add to our natural gas position.
Ooh.
Maybe we will.
That could be a
we'll
possibility.
See. But in the meantime, maybe we go full screen. I'm going to queue up something special we've got today.
Can't wait.
Okay. All right, Liz, are you ready for another amazing study by our very own PhD, University of Chicago, Jacob Perlman?
Jacob Perlman, and he has been giving us these SPX studies because we are live from the middle of the SPX pit in the city of Chicago, SIBO.
Right, and this Market Measures is sponsored by the SIBO. We're talking about impatient bulls selling 0 DTE puts. We're talking about those 0 DTE SPX options. 0 DTEs are days till expiration, and they have, we were saying before, these guys have been pretty active today. We found out, and I still think this is the case, the 0 DTE retail trading has taken over what the professional trading is. That's how much the volume is in these 0 DTEs. Yes, SPX is, it's a big dog, and I think it used to be mostly institutional traders. Now with these 0 DTEs that are cash settled, the retail market loves them. And so we did hear that more than half of the business now, more than half of the volume on these 0 DT SPX trades are retail
I heard
traders.
It was, way more than half. I heard it was 60%, which is, a lot more than half. Okay, but the 0 DTEs, it makes it easy to define your risk and do things like that. So Jacob has been breaking down these studies for us, and today we got a really good one because we're going to go just looking at impatient bulls. Hi, my name is Liz, and I'm an impatient bull.
All right, Liz, you ready to go? Impatient bulls. So here we go. What do we have? The 0 DTE option markets give traders access to rapid results and liquid prices.
And proof is in the pudding behind us. So far, our research has avoided making directional assumptions and focus on delta neutral approaches to selling 0 DTE options.
And you talk about rapid results. Rapid results meaning these expire today. They're 0 DTEs. You put a trade on in the morning, you're out before the end of the day. You're banking your profits that day. There's no more waiting.
You're banking your profits whether you close the trade or it just goes to cash settled, because there is you're not taking assignment on anything. There's nothing you can do. The cash settled is my favorite part about the 0 DTE cycle.
Okay, as the market has climbed higher and higher, it is natural to wonder what happens if we decide to pick a side.
Right? I like this. So today, let's crunch some data on how different approaches to selling 0 DTE SPX puts have performed.
Here's the study using over 2.5 years of data, and that's how old these 0 DTs are. They're rather
babies.
new, 2.5 years.
Yeah.
Options collected every 10 minutes.
Okay. They consider the results from selling one put spread every day with the at-the-money short strike. So we're setting up the study here.
Okay.
At-the-money short strike.
Considered a range of widths for the long strike as well as placing the trades at 9 a.m. or market open, give or take 5 minutes.
Right. So it's every 10 minutes they're collecting data. Trades were closed if they reached 10% of max profit, though they frequently close for more than that due to only checking every 10 minutes. That's why I keep reiterating 10 minutes, because if it's checked and it's higher than that, it's closed.
Okay. Examine the total number of winning trades, the total profits or losses, and the maximum drawdown. Now, pay attention. This is important.
Yes.
The maximum drawdown. That's the largest amount someone could have lost following these mechanics every day by starting at an unlucky time in the study. So when you see maximum drawdown, it's more than the actual risk in one trade, because this is if you started at a time where you had a loser.
And we're going to dive a little bit into that when we see the numbers, right? So that's kind of the one thing that we want to, put a pin in. We'll talk a little bit more about it when you start to see the numbers. But they repeated the analysis looking for 25% of max profit instead of 10.
All trades were assumed to exercise at mid-price. All times are Chicago time. Okay, here, slide 1. We've got, this is on the open. Selling these put spreads on the open using your short strike at the money. So 50 delta short put.
50 delta short put, and this is $10 wide, $15 wide, $20 wide, $25 wide, $30 wide. So let's kind of review those. So you can get as wide, you can get as big or as little as you want with as much risk or as little risk as you want. And that's why I'm glad he did this. But all of these are 10% profit.
All of these, the average P&L per trade is closing these at 10% profit. So you sell a $10 wide put spread for about $354. You put in GTC to take 10% out of it. That would be the $10 wide. And you could look at your platform and play with the strikes and look at your different collections for the different widths. So different widths have the wider the spread, the more the risk.
So just to give an example, let's just stick in this same column right now, Jenny, that $10 wide. If you're doing a $10 wide, the most you can lose is the width of the strikes in any one trade, right? Mm-hmm. So let's just say, you're doing 10% here. We know that if you're doing a $10 wide at the open, you're going to get between $3 and $4. Anywhere you are, you're going to get probably between $3 and $4, give or take. Maybe a little bit less, maybe a little bit more, but that's wrapped around. So if you're taking it off at 10%, it should be, $30, $40. But that P&L is taking all your wins and all your losses as if you did it every day.
And so if you're only taking between $30 and $40 on a trade, and your average P&L per trade on that is $25.
There are some losses
wins.
in there.
There are some losses, mostly
Correct.
wins, and you could see the win rate 90%. So these all have, no matter how wide you make them, these all have the very high win rate. The max drawdown, you brought up a $10 wide, you're collecting between $3 and $4. Let's say you're collecting $350. We know if it's a $10 wide spread and you're collecting $350, your real risk on that one trade is only $650. So that's why we brought up earlier that max drawdown. That's assuming you start at an unlucky time where you have loss after loss after loss after loss.
That's you're stringing a couple losses in a row. And I'm actually really happy he put this on here because that's a realistic portrayal of if you start and you open it up and you're like, oh, I'm down this much, you might call in the towel. But this is 2.5 years worth of data.
Right. And we talk about that.
There will be streaks of losers.
We talk about that. What if you start and it's a loser, a loser, a loser, and these numbers play out over time?
Yeah.
So I think that kind of shows you, keep with it.
Yeah,
keep with it.
And keep in mind here, so let the win rate 90 to 91% straight across the board. You can see your average P&L is a little bit, it goes up as you take more risk, and so does your max drawdown. This is exactly what you should see. Somebody might look at this and consider it a menu. They might like the $20 wide.
And these are not trade recommendations, but this is research that our amazing team puts together for us, and these are trades that we do.
Yes.
So
I did it this morning.
Next slide, we have the same trades, managing them at 10%, but putting them in at 9 a.m. instead of 8:30. So putting them in at waiting till 9 instead of 8:30. What do you think?
So, I mean, the numbers are moot. I mean, your max drawdown is a little bit higher, which I found fascinating here. But I did this. I put mine on today on the train at 9:54, and I was out. I'm sorry, 8:54. So right before 9 o'clock, and I was out 6 minutes later for 25%. So not the 10%. I would have been out earlier.
And we'll move on to those slides because here you can see whether you open at 9 a.m. or open at 8:30, these results are similar.
And you kind of take a look. They are very similar. The max drawdown, I think these are kind of a give or take. To me, in my opinion, if you're at 8:45 or 8:30 or 9,
it doesn't matter.
It doesn't matter. I wouldn't be stuck on that time.
Yeah, I don't think it matters. I think these show it really doesn't matter.
I wouldn't be too stuck on that.
What I like is the next look into these is managing them at 25%. So taking a little bit more profit out of these, I like the results. I like the results of putting on these trades and managing them at 25%. So here is placed at the open, closed at 25%. The average P&L across the board, the all looks pretty good.
The average P&L ticked up, as it should, because you're taking 25% instead of 10. Your max drawdown, which was surprising for me, went down on your $10 wide. But it's still kind of, they're still all there. You give up a little bit in win percentage rate, right? So we are in the 90s, now we're in the 80s across the board. But for every gimme, there's a gotcha. You're getting more P&L for it, but the max drawdown wasn't that bad.
No, not bad.
Now, I also like these results better because we kind of say if you're doing one side, if you're going a little bit more directional, I want a little bit more of a percentage because you're taking in less.
Right. With these zero DTs, if I'm selling just the put spread, I want to take in more than 10% of my credit. So if I sell this put spread for $4, I don't want just $40. I want more because you need just a quick you don't need time to pass. You just need a quick movement in the right direction.
Yes, you don't need time. 6 minutes is pretty quick.
Versus when you're selling both sides, that's when we take less of a percent because that requires time to pass. But if you're just selling one side, you just need movement in the right direction.
Movement in the right direction. Okay,
so,
perfect.
that is selling these at the open and closing for 25% profit. All high win rates, all good average P&Ls.
The next is at 9 a.m. So once again, I don't think, in my opinion, I don't see that they're all numbers are tweaked, but I don't see the difference between 8:30 and 9, even if you're taking it 25%. There's little differences, but I don't know that that's something I'd be like, it's 9 o'clock, need to do it now.
Right.
You can kind of do it between 8:30 and 9.
So as far as a real-time example, Liz, give me your numbers. You put this, we were on the train, tell me your prices.
SPX?
So she did the $10 wide. So this is the slide we're on. Open at 9 a.m. You did a $10 wide. What strikes? You were at the money.
I opened it at 8:53.02, and my strike was. You want the actual strike?
I don't need the actual strike number, but
and I collected 3:30.
3:30. So you sold the at the money. You sold
the
the 50 delta.
$10 wide, and at 9 o'clock and 33 seconds, I bought it back for 25%.
So 25%. So you sold it for 330, bought it back for
bought it back for 235.
235. So yeah, just under $100, $95 in just a matter of 6 minutes.
But that's because you got the
pop in the market, a little jump up in the market.
I mean, these results aren't going to be the same every day, but that's what we're looking for here, and that's what we're playing for here. So it's pretty interesting.
But in this, I know he mentioned we've been in a bull market. We've been in a bull market for 2.5 years while these SPX have existed. We've been the market's been going up. These have been working. Could they be a loser? Sure. Can we get to a period of time where the market's down more than up?
Sure.
Possibly. Yes, sure. That can happen. But for now, I think I like this better than the two sides, selling just one side.
I like selling one side too. And I will tell you, I consider this a menu. I did the $10 wide for, purposes of the show and putting this on here, but I don't think there's anything wrong with any of these because all of them are reaping decent results. It's just your risk tolerance with that max drawdown, in my personal opinion.
The risk tolerance with the max drawdown, if you take, and Liz and I were talking about this, you look at the $10 wide where your average P&L is $50, the max drawdown $2,600 if you have a string of losses in a row.
Yep.
You look at the $25 wide where your max drawdown is $8,000 and your average P&L is $90. We would rather do two $10 wides.
But that's us.
But that's us.
Correct.
Yes. We'd rather do two $10 wides if we're willing to add a little more risk because your max drawdown is still less than the drawdown on the $25
and technically,
wide.
your average P&L is higher.
Right. Mm-hmm. So, again, everyone can decide what they want to do. These are not trade recommendations. It's just back testing research from our amazing team.
I know. And Jacob does it great. People smarter than us. All right, let's go to 7. Let's see his takeaways.
Over the duration of the study, SPX has climbed from 38.35 to 66.44.
It's a big amount.
So it's no surprise that selling puts every day has been a profitable approach.
And sticking to defined risk helps traders know how bad things can go, and quickly taking profits helped avoid serial losses and large drawdowns.
Higher profit targets were able to take home more overall, but resulted in more exposure to drawdowns, especially for the wider spreads. We didn't see it as much with the $10 wide, but when you widen the spreads, the losses were a little bit bigger.
They do, and you should see that. You're taking on more risk. There should be more loss. There was not a clear difference in results for traders who sold their puts between open and 9 a.m. That was kind of our assumption, too.
Yeah, so our old studies on iron condors showed you're better off waiting until about 9 a.m. for selling both sides and doing those iron condors. But if you're just doing one side and you're just selling the puts, it doesn't matter. Open, 8:30, 8:45, 9.
Yeah, for sure.
Didn't really matter. Even narrowing our trading all the way down to SPX 0DTE credit put spreads leaves a wide range to explore. In the coming weeks, we'll experiment with short strike placement, trade management, and rolling. So there's more to come on this series on put spreads from Jacob.
And I love it because while we were doing this, I can guarantee a lot of them were traded right behind us.
It's happening. It's happening as we speak. These 0DTEs are busy.
They're busy. They're amazing. And I think it's been the biggest game changer in the last 2.5 years.
For sure.
Yeah,
for sure.
There we go.
All right. Okay. So that was another great SPX study. Now, should we
Stay tuned for next week because there's going to be another one.
Yes.
Okay. Do you want to pop back in the platform?
Yeah, sure. Let's do it. Let's do it. I will pop back into the platform. We can see SPUs are up 56.
Ooh, they pulled back a little bit.
Yeah,
they were up 67 when we were doing our Jacob study. I like that study, though. I really did.
I did too. I'm going to pull one up. Let's look at it.
I want to see what price it is right now, because right now it is $10.22. And if you were going to do a $10 wide, I think it's going to be wrapped around.
Wait, we're at 6,700. So 6,700, like we're
350. So you're
They're
right.
always about the same price.
Because your strike will move, but I think it's going to be around the same
You're always
price.
getting around the same price.
Between 3 and 4.
Should we do it?
You could, sure. Yeah, we're only on 56.
333, 335. Now I know the study was 8:30 or 9. This is 10:22,
So I'm not
but
gonna lie
I don't
to
know
you.
if it matters.
I mean, once again, this is not this. I don't know that it matters, and I think Jacob's going to dive deep into this because remember, and he's kind of
we're
alluded
filled.
to that. He alluded to that.
Here, we're filled. I'm going to push this out, and then I'll put in our GTC.
Because we're later, put in 10% or put in 20% or 15% or something lower.
Well, I don't know. I mean, I like the results of the 25%.
I do too, but it's a different time. All I'm saying is we're a little bit later. I don't know that it matters.
Okay.
No, do it. Do 25%.
Where are we here? I'm just gonna. I'm gonna follow the study list.
Look at that. They're saying hippie on the tape.
So I'm gonna follow the study. I'm gonna put in 25%, but we'll watch it. If it gets close or we're happy with their profits, we can change it.
Yeah.
So I just put in close percent 25%.
And the good news is we'll be on last call again today, so we'll be able to tell you whether it closed or didn't close, and we'll push it through.
I'm glad you said that because some days I just forget. It's still new to us going on last call.
I know. That's why I keep reminding you over and over and over again.
I keep saying it. We're on last call.
We're on last call today. Tuesdays and Wednesdays.
Okay, so I pushed it out. Did you send it to the follow page?
I did not, but I will.
That's SPX. We are also taking live tweets today. Send us a tweet, include the hashtag LAZJNY, just like Eric did, Blue Wackadoo, hashtag LAZJNY. He has, I mean, his P&L looks absolutely beautiful. He's got that peak in the middle. He's got like a butterfly mixed in with his iron condors.
So, and this is different than the study we were doing. He's doing both sides with a butterfly in the middle, and I like it.
Yeah. Okay, so as far as Twitter goes, we had Frank coming in with Tuesday's option volume 71.
Calls leading puts 14 to 9.
I mean, that's what we've been seeing mostly. Calls leading puts.
Yeah.
Okay, and another shout out to Archer.
Another shout out to Archer. There we go.
Mikey, happy hump day, ladies. You really need to get on the VXM train.
Look at this. Sell to open, buy to open. We love it.
When we get these big drops, grab a short. Okay. So
grab a short.
Grab a short.
And since the market always buys the dip, you can snag a quick 105 overnight.
So when we get these big drops,
so this is the VIX minis, right? Yeah, VXM. Okay. This isn't the VX. VXM. Which is smaller, which is good. Mikey, I'm glad you've got a smaller size. Jenny and I used to zing volatility futures.
Cost us quite a bit.
A wee bit of money.
All right, VXM, mini SIBO. I'm going to take a look. So I saw Mikey bought it at 1950 and sold it at 2050. So if I'm going to wait. I'll look for Mikey's entrance point of like 1950.
Now, here's my question, and I know the answer, but I just don't want you to do it. You would never put it in for 2050.
Wait, what?
You'd never put, I wouldn't put a sell order in when it gets up there high because I would be too nervous for this that it would be continuing.
Oh, no, I wouldn't sell it unless I bought it, unless I owned it.
Right.
I sell it. Yeah.
Yes. I just want to be very clear.
Yeah. So look at Mikey.
He's selling it without buying it.
No, he bought it. You can see he bought it at 1950 at 912, and then
when he said grab a short,
he bought it.
Yes,
and then he sold it at 2055.
Good for him.
Yeah. So quick money from Mikey. And did he buy it at the bottom? Low today, 19.
I can't see that low. You're gonna have to look at it on there.
1986, but I don't know what VXM. Maybe it missed Mikey's print. Maybe Mikey bought it lower than it's ever been.
He said overnight.
Oh, overnight. Yesterday.
Didn't he say that? Snag a quick 105 overnight.
Overnight.
Yeah.
So yesterday. Yeah. Got it. Nice, Mikey. We like it. As far as our account goes, What do you want to address today? What do you want to look at? We've got a handful of positions in here.
I want to take a look at Archer and see how it's working because we have a synthetic zebra on over there, and I know you were talking, you were going back and forth with somebody. We're going to do synthetics on Friday.
Synthetics. Someone asked us to go over all the synthetics to Friday. Friday we're going to go over synthetics because they didn't ask for. They asked for an actual show on synthetics.
Well, Friday we have TP on Friday.
After TP leaves.
Okay.
Then we'll get into synthetics.
But I would like that to be, maybe we can put a series together. I'm just saying it out there.
Yeah.
I would love to put a series together just because we can synthetically create things.
We can kind of go over them all once.
But I would like to use realistic portrayals of synthetics because there's some that you're just like, you're not going to use that.
Right, right. Yeah. So
you know what it is, but you're not going to use it. You need to know what your synthetic is sometimes when you get assigned. Then you're like, okay, so, then you're like, oh, I'm just long a put.
Right.
Synthetically long a put.
So, Archer, this is the synthetic zebra. The whole point of this was if someone has stock, it's not what we would never start with this, but if someone has stock and the stock has gone way up and you think, geez, I wish I could sell my stock, but I don't want to sell my stock, so I would rather have a zebra on it. It would be defined risk if the stock fell back down.
Yes.
So then we kind of came up with this synthetic zebra, and when stock is up, it's up. Archer's up $1.13, and we're up $1.16 on this synthetic zebra.
And that's exactly what it should be. It should be working one for one. Now, what we don't have the ability to do with these is ratchet it up.
If you go, no, like how we can normally ratchet a zebra.
Because what if you close all the options and put them on again?
It costs money because that synthetic the long stock, long put is giving you that synthetic long call. And in order to, when you're moving that long call in the ratchet, like you're not closing your stock. You're not closing your stock.
Oh, I see what you're saying.
So it costs money to move it. The only way I see to take some of this off would be, part of this is this embedded call spread, and this 11-13 call spread would be worth $2 at expiration. If it gets close to that $2, I would close the embedded call spread.
Because then you want full profit on your embedded call spread.
Right.
Yes, I get what you're saying. And that's the caveat, the non-ratchet.
So like reaching full profit on the embedded call spread is what covers the cost of that put. As far as what our position looks like here,
we sit on it. I mean, what's great about this is you have that defined risk area by putting those options on top of it. If Archer falls out of bed, which Archer is whippy, and I already said that. If you can only lose, how much can you lose there?
On this trade, we could lose $370.
Yeah, but that's it. So no matter where, even if Archer goes back down to 7, which it's been there before, you can only lose $350.
Now, in order to ratchet it up, you would have to close this, and you close this, it's worth $1.81, so you get $1.81 credit. But if you put a new one on, where you buy these 70 deltas and sell a 50 delta,
so on.
And what was it? $1.81?
Yeah.
It's not much. It's not bad. It's actually $1.91.
That's what I was going to say. That's not bad.
But you're not locking it up. You're moving it. So you're moving your put protection up. You're moving your put protection up.
But this one
is only costing a dime.
Hit curve view on this. I want to show how that'll bring it up so you're not losing $370 anymore.
But then we'd have to sell out these.
Yeah, sell those out. Oh, you can't do 6.
But if we could do it, if we could move this for even, I would move it for even. I have never found a scenario in Oklo. It's been very, if I want to move it all, it costs me.
So, but Oklo's different because Archer's got a 50 rank.
Yeah, like Oklo's all over the place.
But take a look at this, Jenny. So that's not bad, moving it all up, and you're paying a tiny bit for it. So because from this perspective, now if you moved it up like this, you can only lose down to 12.
Right. So let's do this as a test. So we're going to look at the analysis page. Here we have our current position. We make 1-for-1 money to the upside.
Correct.
And here's the green flag, 1-for-1. And our max loss here is 370.
Okay.
So I'm going to close it and put on the new one, and then we're going to return to the analysis page. And then that kicks in. This loss kicks in here at 13.
It might be 370 still, or it might be 380. But I think we don't start losing until 12.
Yeah, like here you've got it.
Do you see what I'm saying? I think it might be the same loss, but I don't think you start losing until 12.
And here you hit next loss at 11. So let's take a look at that.
Okay.
So let's do that. We're gonna close this. Close position 176.
Okay.
Close.
Okay.
Okay, and we're filled. We still have our stock, and then we're going to go to the table page and put on a new one.
So it was the 12 level, right? No, you're running 13. 12.
I was selling 150 Delta and then buying these 12s.
Okay.
So it's 20 cents. It's 20 cents more.
Yeah,
20 cents more. So maybe our max loss goes from 370 to 390.
And then go to the curve view. I want to see where it kicks in. So that's what I was going to say. Curve view on this. Yeah. So you don't start losing until
The other one.
We started losing at 13. But how much can we lose?
270. 270. So it
look at us, price discovery. So it is ratcheting it. You can only lose back to your last click.
Right. So now our max loss in a down move would be 270 instead of 370.
Yes.
It levels off at our long put. So that's just it. Our long put before was the 11. So this kept going and then leveled off at the 11. Now it would level off at the 12. So if you could keep moving these up and not pay too much, but in Oklahoma, it would be like, if I wanted to move it all up, it was going to cost me trying to move it up $1,000 every time.
So this is a very complex trade. I would like to state that for the record. This is.
But I'm going to put this on.
I think you should put that on. And we've been doing these, and I think our viewers are smart enough to understand it. If somebody's tuning in for the first time, they're like, well, this is insane.
So this is now. If no matter how low Archer goes, our max loss is 275.
And the reason we love zebras is you can ratchet it up and follow a stock up where you're keeping unlimited profit potential but moving your risk definition, and this is what you can do with the stock. So this is good for dividend stocks.
And what we want to make sure is that we still have that 1-for-1 profit potential to the upside. So here we are at 14 and our P&L at expiration is 114, and at 15 it's 229. So and at 16 it's 329. So it is going 1-for-1 up with the stock.
Yes. Archer to the moon, just like Alice.
So I like this. It's a way for people to keep their stock if they want to keep their stock, but keep defining the risk and moving it, and it does work. It doesn't work every time.
Well, you know what was confusing for us is the debit paying for it. So it worked. It brought you in by $1, so it worked. Now let's ship this.
I did. Okay, so I'll push this all out on the follow page, which is going to be confusing because, again, these are all like kind of hedges to our stock.
That's okay.
Publish to follow feed, yes. Okay. So, that is Archer. Another thing I wanted to take a look at, in honor of our train conductor, I'm going to flip this. SYM was our train conductor's pick of the week. And we're up $260 since we put this on last Wednesday.
We are, and this was the train conductor. This was
his pick of the week.
And this is what's it called? Buffer.
Oh, is it a buffer?
Yeah, go to the trade page. I'm almost positive it is.
I didn't know. Yeah, you're right. It's a buffer.
Yeah, so this is that's why I was like, this is a buffer trade. So go to the trade page. It's easier for me to see it on there because what you have.
Here, this is it. Where
buffer.
We've got a lot of profit potential to the upside, but we have a lot of room. So when you look at it this way, it's like, geez, we have $1,000 in profit potential, and our break even is way down at 62. Maybe we just leave this.
What you can, yes. Let's see if there's any adjustments we can make to it.
I think when you adjust a buffer, what you're going to be moving is you're going to be moving this up.
Probably. How much profit potential do we have?
It could be worth $1,000. Right now we're up.
So what I would like to do is how much extrinsic value is still left in the puts?
So right now we're up $260.
But we could make 1,000.
Yeah.
We're up 25% of what we can make. Because we can make 1,000, we're up 250.
It's tricky. We made $250 in a week.
And this is our train conductor's pick.
And then if we close it, he's going to say, how's SYM doing? Yesterday he's like, how's your
SYM? Not going to lie to you. Today's the last day he's going to ask us.
Maybe not.
I know. We found it yesterday. He's leaving us.
They might be moving him to a different train.
Yeah.
Well, we're not going to befriend the new conductor.
No, we're going to ice him out, Jenny said.
Okay, so as far as looking at this, you know what? The fact that this is going through earnings, does that change your mind?
Yes.
Yeah, it does.
It does. Close it.
Yeah, I'm going to close this. SYM, he gone.
I mean, honestly, $260 is a good profit potential in a couple days.
In a week.
Profit
sure.
in a week. And you're getting back $1,400.
Yeah.
And guess what? If we want to put it back on tomorrow, we can.
We had...
can you push it? Oh, we didn't get filled
yet. It's not filled yet. I'm working it. We had sold quite a few puts recently. I'm just going to see if anything else can come off. Starbucks, I know it says we were only up 15%, but we sold the 80 puts for 360. I will let that work. We have never been able to get out of our Oklo. That's been a real thorn in our side, but that's that big lizard.
Yeah, that'll benefit if it comes back down.
Yeah. Yeah, so
Okay.
I guess, should we put in a GTC for this?
It's hard for a big lizard, but yeah, you can.
If we paid if we took in 1638, I'm going to put in a GTC to buy it back for 1538. Do we want?
Sure. I think we had that in there. That's where it's working right now.
Oh, we have an order working?
No, but you see, that's where mid-market is.
Right. Yeah, it says we made $100, but
that's where it's working. Just leave it.
Oh,
you're
we're
filled.
We took $100 out of it.
I was like, you're taking mid-market.
The last time we tried to get mid-market $100 out of it, we never got filled.
Just keep pushing these through, though, because I don't think we got filled in SYM.
Okay, let me try to get out of SYM. I'm going to replace this. I'll go to 790.
Yeah, I mean, it looks like it's wide markets. And I think that might be part of the problem with the buffer in this. So we might be stuck in this just because.
SYM we could have on forever. Okay, so SPX Archer was pushed out, and now Okla we closed. That is a real bust. Because when we put that on, Okla was trading 132, and all we made was $100.
Yeah, but it went through it. It's fine. At least we made $100. Okay, it's significantly through it.
Yeah.
Significantly. Okay, let's go back, see if there's anything else they can manage. We did put quite a few puts in. The Pepsi trade, I know, is a bearish trade.
Any big winners?
Are you not alphabetized? Oh, you're going that way.
I was just seeing, like, if we have anything, 53% in DraftKings. Are those just puts? Oh, it's a zebra. It's a zebra in DraftKings.
Oh, and you're up $2. You can ratchet that.
Okay, let's take a look. This is going to be a regular zebra ratchet compared to that synthetic zebra.
Yeah, and take a look at this. DraftKings is up, 90 cents right now. This position's up 125. I mean,
yeah, but 222 since we put it on.
And it should be. So if it's trading 35.25 and we've got the 33, we should be up 225 and we're up 222.
Right. So how do we know when we start with the zebra, we sell the 50 delta? We sold the 33. That meant that was at the money. If DraftKings were 33 when we put this on and now it's 35.24, the stock, 100 shares of stock would have made $224. Yep. This position made $222. It makes just as much money as long stock.
It does.
So now the difference between ratcheting this and ratcheting that synthetic is that we're going to take in a credit to ratchet this.
Yes, and I think that's what was throwing us off. But you will see. Go to the curve view real quick so we can show.
Okay.
And let's go before and after.
And just to keep an eye on this, we paid $415 for this originally.
Okay. So let's see the curve view real quick.
Let me go to the analysis page.
Because you can do this as single click and show it.
Yeah. Okay. So you want me to go to the curve view?
Curve view. Watch this. So here we've got. You're still 1 for 1 all the way to the top side. How much can you lose to the bottom?
To the downside, what we paid for it, $415.
Okay. So you can put all 4 of these in because it's a regular zebra without the stock. Yeah. It's not 3 legs. So now we're going to put in as if we were going to close this and put in a new one. That's what the ratchet is in a regular one. You're going to close this and go 50 delta, 70 delta again. Sell
so
150 delta.
That.
Buy 150 delta. Buy 1. Buy 2 70 deltas.
Do we
sell
want to keep
deltas.
it in the same 16-day?
Yeah, sure.
Okay.
But just for purposes.
All right, so sell the 50 delta, buy 270 delta. I'm going to do 50, 65. Yeah. I think this is fine. So we're going to take in 332 credit.
We paid 417 for it. We're taking 332 credit. Now go to the analysis page. Take a look at that.
Now we still have unlimited profit potential to the upside.
And
now our risk is only $83 because
to the downside. We're taking in a credit.
Yeah, because we
reestablishing.
Paid $415 for it, and now we're going to take in $330. So that's covering most of our risk. So when we say, hey, you can keep ratcheting these zebras to the point where you have no risk to downside, one more ratchet up in this in DraftKings, and we're going to have this is going to be all green. All green.
It would be a credit where you can't lose to the downside. So yes. Now the risk still here is that it's going to fall down, but all you can lose is there.
Right. So this recent DraftKings trade that we paid $4 for will have only $80 in risk after ratcheting this.
Yes, correct.
This is why the zebra and the ratchet is so great when you're in a bull market.
Well, you could use the zebra and the ratchet to the downside in a bear market.
You can use it in a bear market.
It's puts. You're using puts, not calls. So, all right. Yeah, it's in a moving market. If things are gaining momentum, and like I said, I've said this before, and I know I'm going to get emails on it again, but I use zebras in my IRA because of the capital efficiency and the defined risk. I almost exclusively use zebras in my IRA.
Yeah.
Yeah.
And are they all bullish?
Yeah. In my IRA, for sure.
Mm-hmm.
Yeah.
I wasn't sure. I wasn't sure if you threw
I mean,
any.
maybe I've had a bearish one in there at one point, but in my IRA, I trade total. That's more of a set it and forget it. I get in there and ratchet it up.
Okay, I'm going to adjust this a little bit because mid-market's now only 322.
That's fine. That's still a good ratchet.
Yeah. But that was a good idea, going to the analysis page and seeing how the P&L adjusts.
And you can't do that with 6 legs. You can do it with 4.
Right. Now, I know these are all kind of higher level option trading. This isn't just like selling all the money put.
I will tell you, minus the synthetic zebra that we did in Archer, it's on the website. If you go to Liz and Jenny's strategy series, you can see us talk through what a zebra is and what a ratchet is. That's exactly what we did.
Oh, come on. Fill me, DraftKings. I'm going to let that work for a minute.
Yeah, let it work.
And I'm still working SYM.
Okay, well, you're working 2 things.
And I was sorting by P&L to see if there was anything else that was a big, like our Disney is almost 50%. And that was a Jade Lizard we put on
2 days ago.
Oh, no, it's 2 things. It's 2 things. It's a calendar and a short put.
Oh, so we have the 115 check that 115 calendar.
The calendar is up $30 and the put is up $25. So it's not, neither one of them are up crazy. The calendar I'll put in let me see what 10% or 20%. 20% on the calendar would be closing it for 318. It's trading 295.
Yeah, ship it.
I'll just leave that GTC in. And then I'll put in a GTC.
So let me ask you this. I mean, on paper, if you sold a put in a $100 product that's holding up $1,000 and you made 17% overnight.
It depends on if you've got capital, like just a lot of capital.
That would be the first one I would close if I needed capital.
If you needed capital back. We don't need capital back.
Yeah, so put a GTC in for it.
We got into Disney yesterday because of the whole like Taylor Swift, Disney Plus.
Yeah.
And because it didn't go up on that news. Oh, 50%.
The other thing that we sold yesterday, so here's another question, Jenny. Hims, you've got $100, 20% in one day.
Ooh, Hims up $3. Hims 20%.
It's $100, but it's 20%.
I know, and this is where I have the hard time because I'm like, oh, $100, sure. At Disney, it was like $20.
I know, but percentage to percentage, it's different.
I know.
So I would close this.
We sold this put for $5. Was this a roll? This was a roll. This was a roll. This was an absolute roll.
Hims?
In Hims, we had the weekly and we rolled it out. So that's why, because normally we would not sell a put for $5 in Hims. When I see that was a roll yesterday.
That was a roll. But we were looking at that. It was a really good return on capital.
But it was a roll. Like if I go to our order chains in Hims,
take a look.
Let's see what our net P&L is in Hims.
Oh, I can see our net P&L.
Like order chains. Oh, we're down.
I know, we're down. That's what
in the last year, in the last 365 days, we're down in Hims.
No, we're down that much. Yes.
In the last 60 days, $200. So that will help make my decision too. Like I'm going to keep that put for 50%.
Yeah. So we went from the 3-day to the 36, 38 day.
Yeah. So I'll just put in a 50% GTC. Spoos are only up 30.
I know. SPX not working well.
Starbucks.
8 days, 15%. I hold on to that.
Okay, so there's nothing else. There is nothing else.
Okay.
I can't get filled on DraftKings. I keep lowering and lowering.
That's frustrating.
Lowering this credit. This is 10 cents below mid-market. And if that doesn't fill.
Filled.
Finally. So.
That's a good adjustment. Push that out, yeah.
Activity, all symbols today, DraftKings, getting pushed out. And do you remember what that SYM was that the conductor told us all to buy?
Yeah, I thought it was quantum computing. He loves quantum computing.
I don't know. I mean, he does always talk about quantum computing, but I didn't know if I can't remember what SYM was.
I mean, he does love his quantum computers. He does.
All right, so Disney, those GTCs are in. DraftKings, we ratcheted the Zebra. Hims, the GTC is in. SYM, we are not getting filled.
I mean, that might be wide market. So if you look, it's a robot, Symbotic. That could be anything.
So if we, 1040, if we buy this back for $840, that's $200. Replace order, 880's 160. This is my, and if that doesn't fill, this is an issue with
non-liquid products. I mean, you have 4 legs. Take a look at how wide each leg is. Even at 50, it's 130 at 190. That's wide.
I know. When we see John today, and he asks us how his sim position is doing.
Jenny's going to flip her computer over.
John, give us liquid products. All right, Liz. So as far as management in our account, that's all we have to do.
I think we're doing good.
I'm just going to leave that closing order in for our SPX.
Oh, yeah, and that's why I said that. We'll wait. We need the pop.
Yeah.
We'll wait, and we're on last call, so we'll see if it closes.
Oh, yeah.
Yeah.
And if not, we might be one of the loser.
So somebody asked how to explain that maximum drawdown again. He explained it for us. So if you go back and,
where'd it go? Okay, so here, I'm going to read this to you.
So I read this, and then I read it to Jenny, and I was like, this is one of the key takeaways here.
Right here, maximum drawdowns, the largest amount someone could have lost, following these mechanics every day by starting at an unlucky time in the study, meaning a string of losses.
So, and it was only, I'm just using the $10 wide, 10% or even 25%. Yeah. So if you're getting $3, I'm just averaging, you're risking 7. So here it's going to be 7, 7, 7, 7. So 28. 4 losses in a row.
Right. 4 losses in a row.
Just kind of breaking that down a little bit. That's what that means. And
it was tricky. I mean, this was different. He usually,
because when I looked at that, I was like, what do you mean maximum drawdown is 28 if it's a $10 wide?
He doesn't usually put that into the studies.
I liked it.
Yeah, I did. Okay, so now, these were the top 20 symbols today, just to kind of show you what's happened.
What's happened?
What's happened? What's happened? What do you think? Anything on here that...
So when I was going through this with Tony, if I look at this, it's easier for me to tell you what I don't have than what I do.
I mean...
I don't have Bank of America. I don't have TQQQ. And I don't have Costco.
Oh, speaking of Bank of America...
Everything else, I have.
Speaking of, though, that makes me think of earnings.
They were this morning.
But today we do have you all.
Oh, yeah. Let's take a look at our earnings trades.
Let's get into... I'm going to see... I'm just going to refresh. I'm going to refresh. So... here's Mikey's explanation. Shorted it yesterday.
Yeah, I told you he shorted it.
He shorted it.
I told you that.
Mikey, you're crazy. You're getting crazy.
During the great cooking oil crash. I told you he was shorting it.
You're getting nuts, Mikey. Nuts.
Yeah. Good job, Mikey. I'm proud of you. You'd get a certified badass option trading card if I had it on me.
Don't be surprised if you get a phone call. Margin call.
But it is the minis.
I don't want to short VIX.
It is the minis.
It's the minis, but
it's the minis.
You just never know.
Yeah.
Ashvin, yes, series on synthetics would be great. Oh, good. We've got 2 people who will watch on Friday.
And honestly, I'd like to Jenny and I, we know synthetics pretty well, I would say.
Yeah.
Because when you're handcuffed with a smaller account, which they've done to us here,
yes,
you gotta get creative, and we have gotten creative, and and we'll get more into this. But I love synthetics because you can create anything you want using options,
and that's a really good point. So they've forced us, like, if we had Tom's money back in the, like, if we had an account and they were like, here, you girls have unlimited funds to trade with on the show, we would never have gotten creative. We would just be selling strangles or jade lizards or whatever. We would have never gotten creative. But the fact that they were like, here, girls, here's $25,000 to trade with, and we have to trade every day. We have been forced to get creative, and that's how new strategies have come up.
And I love it because what it does is risk definition. Yeah. You're defining your risk. You're getting creative. I think we're the only ones who can use risk definition with unlimited profit potential.
All right, 10:51. What say you on what's your assumption? Or do we look at just you all for earnings?
I want to see earnings. I do.
Okay.
And then we can do, it's because it's 51 already.
So whatever, I'm just curious, did Citigroup ever start getting close to our calendar?
And
No.
It never did. Is Citigroup gone? Are we still in it?
No, it's still there. It's the 105.
And you know what I was going to say? I'm going to go through I will go to the earnings and read it to you, okay?
All right, you all, I believe you all is tonight.
I'm going to double
tonight,
check.
Today, 15.
I'm going to go to Bob's post yesterday.
After the close today is you all. We have only a $6 expected move. You all trading $103. The expected move is only $6. Does that surprise you?
No, that's about right.
Doesn't seem like that much.
No,
to me, I'd like to see an $8 expected move.
UOL's not like a high flyer.
Yeah.
I mean, it's kind of like, I hate to use this. This is like kind of a paint dry.
I was going to say, I hesitate to say things like that right before earnings.
I know, but so I don't think that rank at all, or that rank or that move. I mean, $6 move and a $100 product. Yeah.
It's only a 22 rank though. Rank is, to me, rank is not high for you all considering their earnings. And 585 move seems small.
Can I see where it's been?
Seems small to me.
So I'm looking at Bob's list. So you got United, JB Hunt, Synovus, Pinnacle, Banner Bank, Great Southern Bank, First Industrials, Rexford. Nothing in here. Okay, but I'm going to say before the open. KeyBank, Travelers Insurance, Charles Schwab, you have some banking. Okay. Nothing before the open that we really are dying to get into either. Okay.
So I think it's you all or bust.
I think it's you all or bust. So if you open this up, let's take a look.
But yesterday was crazy because we were down on the day, turned green. Today we're up on the day.
Guess what we have the ability to do?
Red. Huh.
Trade this at 2:30.
Oh, we're on last call.
That's what I'm saying. See? She's like Dory. Hey. Oh, we're on last call.
Hey.
Yes.
What's your assumption?
What we have the amazing ability to do is possibly do something that is what we would normally put an earnings trade on.
I just wanted to show you what made it into what's your assumption.
Yeah, it did.
I bet October. I say we just have one big lizard or jade lizard.
I mean, we got to do whatever Liz and Jenny say to do.
It was October, so by October 31st. So both
and it's down today?
Yeah, it's down again. So here's October 31st. So if we think it's going to really be an October, how do we get long?
So the problem
way to get long.
The problem with IBIT, as I was going to say, sell a put to buy a call, or sell a put spread to buy a call.
A lot of
it uses too much buying power. Try a zebra. It's going to be cheap.
So a zebra, let's see, 50 delta.
I mean, you could legitimately.
It's 620. That's not bad.
I know you're supposed to go 50 delta, 70 delta, but if you think it's October, bring that 60 to the 61. Make it a little cheaper. Like you can play with this, so it's not exactly there, but you're going to make money.
Yeah, so you're giving up a little bit. Basically, what are we trying to do? Wash extrinsic value. If I buy 260s, I'm giving up $1.30 twice. I'm giving up $2.60, and I'm selling a call for $2.40, so I'm giving up 20 cents extrinsic value. If I move it up, I'm giving up $1.60 twice, so I'm giving up $3.20, and I'm getting $2.40, so I'm giving up 80 cents. So there's a fine line. You can tweak it and figure out what you're willing to give up.
If you want to be cheaper, if you're saying October, but there's only 16 days left.
I'm curious, how much buying power was this? 2,000.
It's expensive. Now, what we have done before is you can. Oh, there.
Let's just throw in a zebra.
Do you know what it reminds me of? Because I just called you Dory. Remember, I just said you're like Dory. I can hear mine.
So we were at the Notre Dame tour on Monday, and our tour, the leader of one of our group sessions was Dory. So I was never going to forget her. I forget every name. I was never going to forget her name.
Mine.
And every time my daughter would say, what's her name again? She was just being goofy because Dory is always forgetting her name. Anyway, I would say let's just put on our last trade of the day. Let's follow the Liz and Jenny. What's your assumption? Zebra.
So we looked at the zebra, and the zebra was what, $600? But if you're going to spend $6, if you go down to 58 in the 16-day, you have $1 in extrinsic value. I would rather the zebra over a single call.
Yeah.
Okay. Now, the other thing that you can do is, even if it is October, you can wash extrinsic value by saying, I'm going to buy the 59. You could buy the 59 and sell the 67, and that would give you some profit potential.
You could what?
I was going to say you could do a call spread.
Oh, you could do a call spread.
But you're not going to be able to get out of this until
620.
620.
And you know what? We're going to risk 620, but in a week, this wouldn't lose 620 if we manage early. But I think our real risk on this is about $300. If IBIT falls down to 60, this will be worth about $300 instead of $600.
And there'll be a lot of extrinsic value in it.
Yeah, so we're going to risk 620 just to
follow the October 31st.
Yeah, and I'll push that out.
Push that through. That should probably be it for the day because it's 56.
Okay. IBIT published to follow feed. Did I ever push out SYM?
I will take a look. Oh, SYM just got filled, so no.
Okay. Published to follow feed. And DraftKings, did that get pushed out?
Let me see. No.
DraftKings. Did Oklo get pushed out?
Oklo's the last one I got.
Okay.
So then I've got DraftKings, IBIT, SYM. We're out of SYM, so that's good.
Okay, yeah. So that's it for the day. Spoo's up 29. Will we get a rally and get out of our put spread?
Just reminding you for the last time, we're on last call.
We're on last call. If you haven't gotten enough of us, you can tune in at 2:30 and see us on last call.
2:30. But we have a meeting before that at 2, so I'll see you before then. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
See you today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. I'm here with Jamal and Glenn. It is FX Wednesday, and I've got a bone to pick with you because I'm down bad. Down bad in my one tasty FX position. However, I'm thinking of adding another tranche.
Okay.
To soften the pain.
Wait, what is it and what?
I'm short the dollar CAD.
Oh, yeah. Dollar CAD, Canadian dollar has not had a leg to stand on.
No.
Dollar's down today, but somehow against the Canadian dollar, still up there.
Classic.
Yeah.
Oh, yeah, I did sell that too. Yeah. What's going on, Glenn?
Yeah. What the heck?
Yeah, no, this is just I got some correlations to go through later, but this one, it confirms that this one's moving a little bit uniquely.
Yeah, of course.
More
against me.
Against you.
Yeah.
And I think the only reason is because you have the position on.
I'm for sure the only person in this office with this position on.
You could say more unique or very unique. I know Josh Fabian hates when people say that, so that means you should definitely say it.
Says very unique.
You guys see Succession?
Oh, yeah.
Instead of Greg, I'm going to say Glenn. Now on, okay?
You wouldn't be the first person.
When something doesn't go right, I'm going to be Glenn.
Honestly, that's one of my favorite characters of all time.
You got to make
the full character development of that guy.
You got to break a few Gregs to make a Tomlet.
Yeah.
Well, you know what, too? I love, like, their interaction. Like, Tom's always so, whatever on other people. But with Greg, he just was like this, well, no, Greg, this is what's going on. And, like, the way he would just talk. Their interaction was really funny.
Yeah, I mean, that show made me want to testify in front of Congress. I think that's one of my life goals now, is to testify in front of Congress.
Careful what you ask for.
I mean, you're flying close to the sun.
They testify. But you might not end up knowing why.
See, my goal is for 0 people in Congress to know who I am.
Okay.
That's
fair.
That's how you fly under the radar.
Actually, you know what? Look at him. He looks like a little congressman, doesn't he?
Yeah, and with the glasses, I can be like an expert, because you can either be there in trouble, or you can be as kind of a witness.
I imagine you just busting through the doors, screaming, "You can't handle the truth!" You know. Markets flying around today.
Yeah.
We'll talk about the FX world in just a bit, but I'm sure there's plenty of positions that are moving as well. E-minis up 27. They were up as high as 70 points a little bit earlier. NASDAQ up 170. Bitcoin back down to 110-ish, 111. Kind of crazy to see the lack of bid in Bitcoin given the recovery we've seen in the rest of the markets. But if we check out some of these other futures positions, to the downside, Ethereum, Bitcoin leading the charge, natty gas below 3. Scary stuff. And then to the upside, of course, naturally, silver and gold, can't stop those. Even platinum, all of the precious metals just ripping higher. Gold is well above 4,000 now. 4,000 is the new floor, I guess, at 4,200, and silver above 51.
Crazy.
What are we doing here?
Bitcoin is really interesting because it seems to keep hovering around that 110 level on the downside. I am, if I were long, I'd be a little bit worried about a break at this point. I really do feel like markets kind of teetering on an interesting edge here. I mean, the way we pulled back today, you think about Monday and Tuesday, markets were down and then they bounced back. I think this is fine, but I think the scary part comes if for some reason gold ends up going negative and markets go negative. I think that's where we get somewhat of a mini crash. I think until that happens, things are generally fine. There is risk off today. And some of the names that everybody's been paying attention to, the energy names, by energy, I mean, we're going to have the nuclear power names is really, I'm trying to think about what do you want to call that complex besides just by their names. The nuclear, the batteries, I feel like a lot of those names are actually higher and then they pulled back. You see the rare earth names have pulled back today. So first of all, I love this because this reminds me of other turbulent times in market histories. You see days where those names are all mooning, and then the next time you come in, they're all kind of faded. So I think that's what's making this market really interesting. But it's all well and good for now until I think futures go red and somehow gold goes red with it. Then it's a sell everything. So that's what I think.
Interesting, yeah. It is a complex picture today. Not really sure what's driving what. I mean, had a boost on, those bank earnings. pre-market. Now everything's getting hit. We had a Fed speaker. Wasn't good for the dollar. I think it was when she was talking, equities were fine. You kind of got a mixed bag today. Not really sure, but I agree with you, Jamal, that it feels like even though there's nothing slated that's coming in terms of news. I mean, I guess we're in earnings season now. There's a kind of a pause in the air. Not sure what direction.
What day was that last week where we had equities down, gold down, oil down, bonds down, Bitcoin down? There was a day like that last week. We don't have that right now. I'm just thinking like there's like 3 out of those 5 down, but there was a day like that last week maybe. Yeah, it might have been. I don't remember, but I think that's what if I'm worried as a long Delta person, I actually reduced some risk today, but if those are the days that I'm worried about, because that could just lead to panic a little bit. But we don't have that right now, I'm just trying to contextualize it, which is actually good.
Yeah, we've only Thursday the 9th, E-minis were down and gold was down. Gold was flat when Friday mayhem was happening, but yeah, we are in funny territory.
Feels like we've been trading in half days almost. It's like, if we're red, somehow we'll finish green. If we're green, they'll take some of it out, but we'll still be green.
Yeah. I mean, that's what, it's kind of funny because this morning we were up 70 and I was just sitting at my desk. No one was even around me. And I just said out loud, this is the funniest market in the world. Like, it's so funny because it's just like every 200-point sell-off is bought within 2 days. But now you're seeing a little compression from the highs. And it's like,
that's a first.
Maybe something's changing here. But yeah, nuclear names going nuclear. SMR up 14%.
I got out of that short put by the day today.
So did I.
Yeah.
So did I.
Nice.
That was one of those trades where it's like, for me, it's a no-brainer. It's a $50 stock, and you can get $500 for a short put. Sure, why not? So yeah, looking at the follow page, I can highlight myself and Jamal. I got out of the SMR position, just like Jamal said. I got out of the Costco call diagonal spread that was a calendar at 1,000. That was almost a $200 winner. And then I had the 1 day to 0 day iron condor that I was filled on right before the close. So unfortunately, I didn't have it posted, but that came in for $100 this morning too, into the sell-off from the highs.
Yeah, people should reward us when we post those because sometimes you just kind of forget.
Well, I had it on. Like I said on the show, I was like, I'm not budging.
Yeah.
And then it filled me with like 30 seconds before the close. So what are you going to do? But yeah, the 1 day to 0 day iron condors are interesting to me, especially if we continue to get this heightened implied volatility day to day. So we're seeing 50, 60 point implied moves now for going from 1 day into a 0 day. So you can set up a nice wide 100-point range and collect $200 on a $5 wide spread. So I'll continue to do that until I get blown out. How about that?
Yeah. It's usually how it works.
Yeah.
That's what most people do.
It's been good. But yeah, market's chopping around. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the money match promo that Tasty Trade has on right now. 1% cash match on any and all deposits up to 30 days. And also 30-day commission-free trading. So what perfect timing in these volatile markets if you want to open an account, check out the platform, trade whatever. It's a good little deal.
Yes, it is.
And then speaking of earnings, we do have a bunch of earnings next week. We've got a ton of earnings this week too. I just wrote a United Airlines earnings preview on the News and Insights tab on tastylive.com. And I put a link to that tab in the YouTube chat. So check that out as well. So Glenn, you've blessed us with slides.
I did. Yeah, I made slides today.
Perfect.
Quick little update for you guys because markets are in flux. The regime we're in is a little undefined. And so wanted to give you guys a quick US dollar correlation snapshot update. all those fun words. Everyone loves tracking correlations, especially if you don't track US dollar as closely as someone like myself does. Tying it to what other asset classes are doing can spur some interesting trade ideas or potential trade strategies. So first I want to hop into cross-asset correlations on the next slide. So here we've got a little more of a familiar story here. I've tracked major U.S. dollar pairs against S&P, gold, crude oil, 10-year treasuries, and copper, because that's had perhaps some more interesting price action than just gold straight up as a functional metal there. And we've got 3-month correlation of prices here. And this, to me, it's classic relationships. We've got your 10-year treasuries moving with dollar yen primarily. We've typically seen that very consistently be the pair that reflects interest rate sensitivity the most. We've got Australian dollar, your exposure to gold and copper, those commodities, those metals, as well as S&P 500. That's the top of the board there in terms of risk on correlation, risk off, kind of sentiment driven. But then we've got an interesting wrinkle here with crude oil and U.S. dollar as of late. Crude oil and U.S. dollar, a positive correlation right now with the highest impact in or similarities between euro dollar and dollar yen. I did a little bit of digging on this. Can't really get too much of a story. Might be more of a range-bound coincidence, if anything. I mean, we've had general bearish price action in crude oil over a longer-term horizon. A little bit of a bounce back as that's traded in kind of a range. U.S. dollar now flipping a little bit positive compared to recent months. Do you guys have any additional color on that? I think it's more of a coincidence than anything. U.S. crude production is at an all-time high, but crude oil typically just more of a supply and demand of its own. You have the historic kind of anecdotal inverse relationship with crude priced in U.S. dollars, but is that worth reading into from your guys' perspective, closer to crude perhaps?
It's an interesting question. We had Thomas on yesterday. We were talking about crude floors in terms of a break-even price, and it's around 60, and it's gone below that. But at the same time, I don't think there's anything that's too. I wouldn't hang my hat on something to just go nuts with the trade there. But
Agree. I can definitely agree with that. I wouldn't hang my hat on it. It's sometimes these correlations flip every now and again when there's political stuff or whatever it may be. And I think this is just a result of the current environment. I think, obviously the dollar has been suffering as a result of global trade potential between us and China. And in a way, crude oil has been kind of suffering from that too. So I think that's why it's happening right now. I wouldn't formulate, this is the thing. When I learned trading, I also traded alongside some traders who traded big, and they would see something like that, and they would formulate this real deep thesis and create a trade around it. And so that's why I'm saying that from that standpoint. There's people I know who used to do that, and that's just a lot. You don't need to do that, but a lot of people figure that out. I just think it's cool to be able to see that, and the reason why it's probably happening right now, but I don't know if it's something that's going to last long enough for you to formulate a trade.
Agreed. If we flip back to the slides here, switching over to FX correlations, this is a much more interesting picture to me. We have just dollar pairs here, didn't go into the currency crosses, but what this tells me, we have some pretty extreme correlations among dollar pairs, which screams to me that even though we don't have U.S. data, even though the government's in a shutdown, all of this U.S. dollar price action by pair is primarily being driven by U.S. specific factors. I call out the correlation between euro dollar and dollar Swiss franc, negative 0.91. That's the top of its historical range since they depegged from each other. And that negative correlation, just a function of, the US dollar being on the bottom half of one pair and the top of the other. So in essence, the euro and the franc moving very much in tandem, which you wouldn't necessarily expect given how much demand has been attributed to the Swiss franc from a kind of safe haven appeal. But yeah, there's no really euro-specific news that's driving that. You get a little more with British pound dollar because we've had some recent Bank of England commentary, a little more speculation on their rate cutting path. But this just screams to me that no matter what dollar pair you're trading, you have a lot of dollar exposure primarily. And then you look at your current trade there, Mike, with dollar CAD, and that one of the ones that isn't as correlated to the others. You're seeing around a 0.6, 0.7 correlation to other US dollar pairs, where it's more towards 0.8, 0.9 in a lot of those other pairs. So all this says to me is keep monitoring US dollar exposure. If you do have multiple pairs across positions across US dollar pairs, it might be driven primarily because of dollar factors above all else. And then lastly, wanted to cover what might be top of mind for everyone is just the relationship between U.S. equities and U.S. dollar. On the last slide, please. Plotted the rolling correlation of U.S. dollar and equities, and traditionally we see this be a negative correlation when stocks move higher, a U.S. dollar moves lower, and vice versa as a function of, risk sentiment, wanting more exposure to greater returns in the stock market, or a safer play with just holding U.S. dollar, U.S. assets, perhaps treasuries. But here we're getting some flip back and forth throughout 2025. The main storyline through the spring and the summer was kind of this greater U.S. asset risk, where we saw U.S. equities and U.S. dollar move in tandem with just some of the administration exposure, global perception of how some of those policies or growth perspectives would change. And we've seen that kind of erase now as U.S. equities continue to churn higher and U.S. dollar kind of stutters. And so this calls out to me that we don't have a clear answer of how this relationship will play out over the medium term, and that could potentially be a catalyst for some trade ideas once that is established. We're kind of in no man's land right now, as we've speculated when looking across asset classes, and this relationship is definitely one of them. So, I mean, today alone we've seen U.S. equities rip higher, dollar suffer, U.S. equities pull back a little bit, and U.S. dollar not necessarily getting that bid. So I think there is still a little bit of that overall U.S. asset nature at play, but we could be closer if this trend reconfirms to a more historic relationship where you have this stronger inverse relationship. That's what I got for you on a little update there for how the U.S. dollar is moving as it affects or pertains to other asset classes. Anything speak out to you guys?
Well, I love it. I think it's great analysis. For me, I think it is, when you look at a chart of DXY, you can see there's still plenty of room to grow for the dollar strength in general. But when you look at some specific pairs, when you look at the popular USD watch list on the tastyFX tab here, there are a handful of them that are moving half a percentage point. What of these stands out to you? Looks like the only one in the emerging USD that's over 0.5% is the Israeli
shekel. Yep, you got it. Yeah, we're seeing a bit of a mixed bag. What we've seen this week and last week has really been a tale of two trading sessions. We see a big move in the European session, and then U.S. markets interpreting that a little differently. And so we had some, dollar strength overnight, and that was immediately peeled back, and we had euro ripping higher Swiss franc going lower, and we're seeing an outsized move in British pound, perhaps a little bit of a catch up there. That one hadn't been able to capitalize on U.S. dollar weakness because of some of that Bank of England speculation. Now that one playing catch up a little bit, coming off of 2-month lows hit earlier this week. But yeah, if you're a U.S. dollar bull, this isn't really the momentum that you want to see. A big reversal yesterday that went against the U.S. dollar. So we're reestablishing some trading ranges. If you think that further U.S. dollar weakness is coming, then maybe we did bounce off that floor. Like I said, there's nothing really on the economic calendar that speaks out to me, but we have a ton of ad hoc event risk in the form of new developments in this trade policy. We have some other Fed speakers. Not sure how much weight markets will take to that after Fed Chair Powell's speech yesterday, where he all but confirmed the cutting path for this year, and a lot of his colleagues saying that we should get to a neutral rate as soon as we can. So not sure. Again, this is a kind of an interesting time period because the storyline that will emerge is the one that markets take seriously, and we don't have kind of that traditional hierarchy in the form of, oh, this is a high impact event, this is what people will take seriously. All of that kind of prioritization is in the wind right now, so not sure what the next big US dollar catalyst will be on our board here. So if you're thinking of trading ranges, then you could look to just some unique price points that confirm that. Like I said, we're probably closer to more room to run on the US dollar weakness side there if you're thinking of ranges. But if you're looking to trade some US equity exposure, Australian dollar might be the play. Always like calling out the Australian dollar Japanese yen pair, because while they're both geographically similar in terms of proximity, they are on the opposite end of the risk spectrum. So you have Australian dollar typically risk on, moves, as we saw, a positive correlation to the US stock market. Japanese yen, historic flight to quality. So this is a good one to monitor if you're trying to gauge risk sentiment. Other than that, yeah, I mean, tracking the China story, that'll play through in Australian dollar, somewhat New Zealand dollar as well. But a lot of options out there. There's just, you need that conviction, which is perhaps not as clear right now.
Yeah, for sure. Non-USD pairs. Austrazealand?
Yeah.
Is that?
You could say Aussie Kiwi.
Okay.
The Kiwi dollar is New Zealand.
What's the phrase you always say?
Australasian.
Australasian.
So yeah, if you look in Australian dollar, Japanese yen, Australian dollar, New Zealand dollar. You could even throw in Hong Kong dollar there, Singapore dollar, all Australasian.
Lovely. I'm already short this one, 5 microlots, the Australasian pair. But yeah, plenty of movers today, just on a one-day net change. If you look at non-USD pairs, things that are around 0.5%, Aussie dollar CAD, you've got British pound CAD, you've got CAD franc. So yeah, there's a lot of things that are moving to a pretty strong degree today.
100%.
Kind of like take your pick at what you feel is best for you.
Yeah, so even just like top of the board, British pound, US dollar, that at over 0.5% move and 70 pips there, that's a little bit outside what we've seen in terms of a typical one standard deviation move. So if you're looking to fade that, then you have maybe 10, 15 points to get back in that range. Yeah, looking at the daily Bollinger Bands, not necessarily bouncing off this high, but curious if you go over to the hourly. Let's see.
Oh.
Yeah, so we're right up there. If you think that there will be some more chop, but like I said, I could also see this being kind of a runaway, no news is bad news for the U.S. dollar. Just kind of a lack of demand, right? I mean, if we saw equities kind of start fading early, right before our show, and that demand not go immediately to U.S. dollar, I don't know what that says, but it's not, as bullish for the dollar as you'd hope to see kind of a reflex movement, 1-to-1 there midday.
Well, I just got short this British pound dollar, but I think for me it feels good because I have a larger position now in the short dollar CAD.
Mm-hmm.
So I'm short 15 microlots in the dollar CAD with 3 tranches, starting at 138, then 139, now 140. I'm short the Australasian.
You're short the Aussie long New Zealand dollar.
It's Australasian.
Australasian is the categorical term.
Yeah.
Okay. Just wait till we get into Scandinavian.
Let's not. We can't do that. But what I was going to say is so I'm short the dollar CAD.
Mm-hmm.
If I get short the British pound dollar, I'm getting long the dollar through this pair, but this pair is at a daily extreme, we'll say.
Yeah.
So it feels like a nice hedge against this other position that I'm battling, at least from a day-to-day standpoint.
Right. Yeah. So you're now kind of netting some of your U.S. dollar exposure.
Correct.
Very good.
Nice.
Lovely. Well, I mean, I guess if you want to go eat lunch, it's 11:30. You've done your due diligence here.
Well, if you insist.
You've fulfilled
He's nice.
your
I would
prophecy.
have made you stay here sometime. Even if it was like an extra minute or two.
But yeah, thank you for joining us. If you want to shoot Glenn a note, he's on Twitter, Glenn Freibarger with an A. Also give a TastyFX a follow as well. If you don't have an account through TastyFX, you can just click on this tab and open it through Tasty, and that will give you what we're looking at here. Beautiful charting, beautiful continuous positions through these currency pairs that definitely pop out and stand out during these wild times.
There you go. Thanks, guys. Always fun.
Yeah.
Always
likewise.
a pleasure.
See you next week.
What is it, pita pita?
It is pita pita.
It looks so good. I can't
Love
wait.
it.
They have the best like vegetables and stuff too.
And falafel.
Yes.
Great falafel.
Yeah.
But no turkey.
No. Hopefully nothing spicy over there too. There's no spicy falafel.
You got to start.
I told Tony that the turkey was spicy yesterday, and I've never seen his head go further down in shame. So love to disappoint.
Yeah. Yeah.
Always fun, guys. Thanks.
All right. Appreciate it. Thank you. E-minis up 31, NASDAQ up 200. We are just sitting in this range now. Interesting to see. But yeah, UAL earnings after the close today. I did a earnings preview for that one. I'll pop it in the YouTube chat. But basically, executives last earnings quarter had positivity in sentiment. They said, demand is high. We expect demand to continue to increase, which could result in a good year-end result.
Mm-hmm.
Stock price, interestingly enough, on the year is basically flat. I mean, it's up a little bit, but if you look at the move from the lows around 50 up to where we are now, it's up 100% from the lows. So with that said, implied volatility for earnings, 5.79 points of an expected move right now based on current implied volatility for the next 2 days, which is about 6% of the stock price. Not too crazy of implied volatility, but when you look at the 2-day cycle relative to November, December, you've got about a third of the implied volatility projected over the next 2 days. That accounts for the rest of the year's implied volatility. So still some projected movement here. I think if you're directional, you can certainly get away with a diagonal spread. I would probably go long December, short the 2-day.
Totally.
If you want to do short premium, I think you can go to November if you want to be really conservative. If you go to the 2-day, if you have a defined risk trade like an iron condor, it is going to be basically instant pain, instant gain. You don't have any defense if there's a big blowout move against you. So I typically like to go to the 30-day-ish monthly cycle around earnings for those kind of trades, just so that I can have time on my side just in case it's wrong. It feels like I want to be long United.
Why?
I just love United. I never have any issues.
You know, it's funny. I was actually going to ask you that. I mean, you've traveled more than I have this year. Have you noticed anything different? Have they done anything new?
But I'm also biased because I have micro status, we'll call it. I've got the silver status, which is basically nothing.
Yeah.
But it does give you free premium economy upgrades when you check in. I've got the United Club access, so I'm very biased here.
For sure.
But at the same time, knock on wood, I haven't had any issues with flights. Like flights getting canceled, flights getting delayed. Like really, it's been smooth flying for me.
Yeah, it's been interesting watching how they've monetized more, right? I mean, you've seen that with some of these airlines, particularly United. My only thing I wonder about is like, how is this oil price level? This actually should be good for them, right? I mean, this oil price level.
Oh, yeah.
Again, I don't know how much they hedge with that. I mean, you would imagine some degree airlines kind of do, but you think that might create a bullish case. So for that might be in as well.
Yeah, at least for cost. I mean, you typically see when you see oil slide, you'll usually see airlines kind of have a little bid. But yeah, I think I'm just gonna go with my gut here. And if I'm wrong, just doing one of these diagonal spreads. So if I go long the 105, let's see what kind of pricing I can get for.
Yeah, I was kind of starting to look at the same. I mean, it does seem better if you're going to do the diagonal to do NOV Ds probably, as opposed to trying to do a no versus like 2 day.
Yeah. Yeah, I like NOV Ds or just Ds 2 day and then roll into NOV if you want to. The 110 call on the upside is trading for 80 cents. The 110 in NOV is trading for $4. So, yeah, I think to your point, Jamal, I think I'll go from the 2 day and just reduce basis a lot more going to NOV, because this 80 cents against a $10 cost is not anywhere even close to what I would expect for an earnings cost basis reduction. Like I'm usually expecting like 20-30% in the weekly cycle off the option I'm buying. But this market has created this interesting dynamic where we're not really seeing super low implied volatility in the back months right now relative to the weekly cycle for these earnings announcements. I've seen a few other ones that are like this too. Like normally I would expect to see $10 of implied volatility in December with $6 in the 2 day, like a huge dispersion like that. But right now we're still seeing plenty of implied volatility in these back months, which is going to make it harder to do cheaper diagonal spreads. So yeah, I think I'm going to do.
I mean, because this thing could definitely move on earnings at time.
Yeah.
I'm looking at the last quarter though; it was actually kind of quiet. 7/16. What did April look like? Oh, April was during the storm, so that doesn't really count.
Yeah, I think I'm going to do this. So I'm going to do the 100, 110, long D's, short November. Pick up $400 against my $11 debit on the long option. That way, if this thing sells off, it'll be much easier to recoup if we get a rally back to like 90, 95. It's assuming it goes down below that level. So yeah, I'm gonna throw this on, and this is a $6 debit for a 10-point wide spread, so there's no risk to the upside. If you do get that rally, you're still gonna make a couple $100. You just don't have nearly as much risk to the downside because you're reducing cost basis by an additional $300. So let's ship it. 645, 5-cent improvement. Uh-oh. All right, we're long. UAL earnings. 645, long December 100, short the November 110.
Nice.
Yes, yes.
Yeah, we could. I think the bullish case for that is where oil is right now. I think that could help them some.
Yeah. Lower costs for fuel if demand stays strong. If they beat both EPS and revenue, you could see, even if you get a 2 or 3 point rally, like it's not going to matter. It's still going to be a good trade.
Yeah. And I always remind people too, I will say, you can always try, if you don't necessarily feel like playing the actual earnings thing for earnings, especially in this situation, the airlines generally move together. So you can always look at AAL as well. You can also probably look at the LUV. I mean, you can look at some comparables as well.
Yeah. AAL is earnings next week, the 23rd.
That's the best thing about it. You get like the free look, right?
Yeah, for sure. But yeah, United reporting first, and then LUV, AAL, and then DAL.
DAL, that's what I was trying to think of.
They must have. Did they already report?
They might have. I think last week, actually.
Yeah.
I think. Oh, yeah. Well, see, that's the other thing. Yeah, what'd they do last week? Was it last week? Was it like late last week?
It had to have been.
I think it was.
Double check on that.
Yeah. Wait, where is it? Oh, jeez. I don't know. I think they did, though. I don't see it for some reason. October 9th. Yeah.
There you go.
Yeah. So,
yeah,
last week.
On the day before the mayhem.
Yeah, exactly. So that's a little tough. It's really tough because a lot of times I like to look at that and see what they did on earnings and what they said. And I mean, obviously, you know, if DAL sneezes, AAL catches a cold, and the rest, you know, and so.
Yep. I like that. If DAL sneezes, UAL catches a cold.
That's what it is.
Love it. Cassie actually had she said it's like having six in one hand and half a dozen in the other.
Yeah, yeah.
I was like, that's amazing. I've never heard that.
You never heard that one? Oh, yeah, yeah. 6 in one hand, half a dozen in the other. Oh, yeah. Yeah. Tomato, you know, they all kind of mean like.
Yeah. All right, some questions from the YouTube chat. Again, if you want to join us there, Tasty Live channel. You'll see this video streaming live. What do you think about TSM? That was the first one I saw.
Yeah, so this is the other one that has, is this earnings tomorrow? It's coming up soon.
Yep.
Tomorrow, is it tomorrow evening or tomorrow?
Tomorrow before they open.
Before the open, yeah. I was looking at this one. I mean, this is usually one where I just like totally calendar called it up. I just feel like it hasn't been earnings that these semis have been moving on. It's been deals. It's been other stuff. So I don't know. I haven't decided yet whether I just want to throw money at it. I mean, if I do, again, the reason why I do the calendar calls is because it's usually for big upside plays, and I usually do it outside of the expected move. So in this case, I'd be looking at the 320 area, right? Like just a 320 calendar call, which is fairly cheap. It's $2 and change. I just don't know. I mean, does the thing I like about the calendar calls, I usually do it on stocks that are either sort of, maybe consolidating like this one. They're not necessarily on highs, though, and they might return to former highs. In this case, I would be betting on it going to no man's land. As far as I know, I don't know the last time TSM was this high. So I've been debating about it. I'd probably put on later in the day. I probably will end up putting on a calendar call. $2 is fairly cheap for the 320, but that's what's the expected move? Yeah, I mean, well, there you go.
14 points, so yeah, right there.
It's possible.
What expiration is he looking at?
Just front month, 2 days versus the October 24th. Just the 320 calendar call.
Yeah.
2 1/4 almost, probably, to a little over.
Yeah, so you're basically
just I've already talked about it. I might as well just do it.
Yeah, you're just banking on an upside move. The 9-day will hold some premium relative to the short that'll go to zero.
Absolutely.
Yeah. It's definitely a cheap way to get pure exposure to the earnings announcement and limit your risk if you're wrong. You can go more long-term too. You could do December, November. That's a little bit more expensive, but same idea. And then on these types of trades where you have a 60-day long option, you could turn this into a diagonal spread, do something like that. But yeah, plenty of implied volatility in this one as well. 13-point implied move relative to 30 in November. This one is projecting some pretty hefty implied volatility in these back months, which is why it's much more expensive. But yeah, I like the 9-day, 2-day for situations like this where you're really capitalizing on that 2-day short premium.
And it's fairly cheap. I mean, it's $200 in premium. And again, you do have the opportunity to win in a multitude of ways, like Mikey said. I mean, if of course you need the stock to move up, right? Like, and that's the most important thing. But you get the chance to possibly have a long call that gains a little bit more value in the one that's further out, as long as it doesn't completely blow through strike. And if it blows through strike, well, this is the other thing that happens in my head as far as chaos. If that blows through strike, there's probably a bunch of other semis that are moving really that big that day, and then it creates just other trading opportunities. So,
indeed. Bloom Energy looking for some help in managing an inversion. 65.90 strangle with 65 days left. So you're in December. So yeah, the 65.90.
Yeah, whoa.
Also have the 100 call with 93 days and short the 100 put with 37 days. Should I just wait for time to pass? So you've got a lot going on here. The 100 call.
Do you believe in going inverted?
Yeah.
You do?
Yeah. Especially in like products. If you're going to do a strangle like in a product like this, like 100% IV, going inverted and manipulating the strikes is a lot easier to do than if you're doing it in like a 30% IV product.
Yeah, correct.
But yeah, I like to go inverted and keep the inversion under my total credit received. So like if I have $1,000 in credit, I won't go more than 10 points wide, just to make sure that if I'm right and the stock retreats between my strikes, I can still profit at expiration.
Go inverted.
Yeah.
You got to do it,
Yeah.
Somebody says it.
Especially in like products like this, like you really have no choice.
You got to do the Top Gun.
Yeah. But yeah, it depends on what your credit is, honestly. You need a sell-off regardless here. The 37-day 110 put. So if we just look at this in totality, it really depends on where your credit is here. Like if you have, let's just say, $50 in credit, you have a locked-in loss regardless of where you're at with this current setup. So you would need like a $10, even more. You need, $100 credit.
I love it, Chase. Mike
There
was
you
in a
go.
4G inverted dive with a MiG-28. I love it.
There you go. Yeah, I mean, it's tough. You've got a lot of different positions here. You clearly need a sell-off. But if you get that sell-off, I might be looking to peel off some of this, manipulate the strikes, ideally getting yourself back into a scenario where you've got a couple $1,000s in premium and you've got a straddle like near the current stock price or an out-of-the-money strangle, something like that. But yeah, it's a tough one.
I actually just put a strangle on here the other day again. I had one maybe a week or two ago. Wasn't working, got out. It after the big move more recently, got back in, actually just 2 days ago, and I got the 80-140 on. And I've been debating whether to roll the 80 to the 90 strike. So maybe you do get your sell-off at some point back down towards 90. Maybe that helps some. That will definitely help, obviously, in your situation.
Yeah. And don't forget, there's also, like, you don't have to follow the lean short narrative here. Like, if you had a strangle on and you were neutral, you can move all your strikes up. Like, you can do that. So what we just had on was a $12,000 credit with all 4 of those strikes. If you wanted to neutralize the delta, you can just buy that back and move it up and do it for a scratch or close to it. So, like, if I had, for example, a 100 strike, 80 inversion in November, this is $5,400 and it's leaning short. If I wanted to neutralize this, I could buy this back and do something like a 135, 120 inversion or 115. I can do this for a scratch. So like if you look at my greens that I'm buying back and my reds I'm selling, you can do stuff like this and just shift your current credit all the way up and offset your deltas if you don't want to be short. I've done that in iBid a couple times. I've done that in DraftKings a couple times. So you don't have to underhedge if you don't want to. You can move the strikes entirely and just do it for a scratch. So that might be another option, especially for a position that if you don't want to be that short with 4 legs, you can shift all that stuff up and just reestablish where you're at.
Yeah, there's plenty of ways to make it easier on yourself.
Yeah. How are we picking our one-day SPX strikes? So I'll throw one on right now. So we've got the one-day PM settled that we're going to choose here. So the AM settled is the expiration where if I threw this one on, I'd have to wait until Friday morning to get the settlement price. So if we want to stick to the 3 p.m. close, we're going to go with the one-day weekly here, October 16th. And basically, I've just been going to near or just inside the expected move, leaning a little bit long usually, and picking up $200 on a 5-point wide spread. So let's just see what we can get here. If we go right to the expected move, $1.90, on the 66.15, 66.10, and the 67.20, 67.25. So this orange bar implied move is basically your 50-50 shot, kind of 25 delta area. I like to pick up, because I'm holding overnight risk, I like to pick up more in premium rather than less, because if there's a huge blowout move, I'm going to be a loser anyways, and I would rather have more credit to offset my loss. So I'll just do this. I'll route this for $200, see if we get filled here. And this would lean me slightly long. We've got 50 points to the upside. Yeah, pretty neutral here. But if
you're trying to get it for 2?
Yeah, for 2. And yeah, you can do stuff like that. So like we've sold off from the highs. If you think we'll retouch the highs tomorrow, you could move this put spread up. You could bring it up to like 66.40, 66.35, or anywhere in this range. And then you can bring this call spread out above the expected move here and get a similar premium. So you can skew them slightly. But yeah, generally speaking, 5-point wide spread, collecting $200, sort of a chicken iron condor setup. And like we saw this morning, I was actually tested on the upside, and then we got that 20, 30-point sell-off, and it went from a $100 loser to a $100 winner really quickly. So these things will move with smaller moves in the market than you might think. So I always have a GTC order in for these, just in case I'm away from the desk and you get, a flash sell-off or whatever you need. Mm-hmm. But yeah, we'll see if we can get filled there. Got it at $2 right now. And we'll go from there.
Yeah, I'm trying to join you on that trade. Same thing, $2. See what happens.
Sweet.
I love the 0 DTEs.
They're great. They are great. Nick and I just did an Ask Tasty Live segment all about 0-day stuff. So we got
nice.
Mm-hmm. If we want to get more deltas in gold and silver, how should I do that with my existing positions? I've got some diagonals on close and reestablish, add contracts, close and do a zebra. So you could do what Liz and Jenny do, which is ratcheting. That would actually reduce your deltas though. So ratcheting a zebra is like when you have a zebra on, it starts to become a profitable trade. You buy back you close out of your current one and you just move to a new one that's at the money again, and it removes the monetary value from the table, but it still gives you that continued upside with a basically stock rental position. So if you want more deltas in gold and silver, same kind of thing. Like if you have, let's say you have a 360, 390 diagonal spread on gold. Let's say you bought it for $1,500. It's trading for 21 now. This is completely in the money. So what you could do is you could sell out of this one and then just reestablish, go to like a 390 December and go to a 415 or 410 November. So now you're technically reducing your deltas, but you're giving yourself a lot more upside profit potential because this is not yet in the money. So I would consider doing something like this if you're trying to play for continued upside movement, but remove some of that monetary risk from the table.
Yeah, I mean, that's the simplest way to do it for sure. And you take in a little bit of profit, right? Now you're playing with house money a little bit.
Yeah.
Almost, given that scenario. But you're playing with some house money.
Yeah. You definitely reduce risk in that scenario for sure. TSM. Let's see, a 400. Okay, so yeah, that's exactly what Jamal was looking at. The October 17th, 24th, 400 call calendar.
400?
400 call.
Whoa.
So
easy.
This is not what I would do. Because, first of all, you're not selling this for anything. Maybe you're looking at the 300 call calendar.
I would assume so.
But yeah, any of these. So the problem with this trade. So the 9-day, if you stick within the expected move or around the expected move with the 9-day, it's fine because if you get the rally, these options are going to appreciate in value. When you go this far out of the money, if you get a TSM move that's only like 3 or 4 points, these 400 strike calls for 9-day are going to zero. Like this premium exists because it reflects the possibility of TSM having a blowout move to the upside. If that doesn't happen, these options go to zero. So that's going to be a losing trade, even if you get an upside move. You need a blowout upside move for this thing to work for you. So yeah, I like to stick within the expected move or at the expected move. Like we're looking at the 320, which is right at the expected move of the 9-day. So you got to be closer to the stock price if you're doing the shorter duration diagonals. But if you're talking about the 300, I think that's fine. It's just a super neutral way to play it. You're playing for a really inside move where if you create some delta here with the 320, you have way more profit potential because you're going out of the money versus just trading this extrinsic value that exists right at the money. So I like to go out of the money and lean a little directional, but it's up to you.
Yeah, an expected move is a lot of what this trade is about, like Mikey said. And so what you ideally do want as you're putting these on is, A, for the expected move to kind of jibe with what your strikes might be, and possibly a little bit more upside. Like, again, in this case, we saw the $14 expected move gets us the 318. But if they blew out numbers a little bit, you could see it exceeding that, maybe 320 or 325. And this will actually still kind of work out on that.
Let's see. Follow up on AMD. In a poor man's covered call, want to roll the short call up and out. How do you think about the strike and expiration choice, and how would you manage?
Good question.
So let's check it out here. Okay, AMD is just
rocking. I mean, a lot of things have pulled back today. This is not one of them. This hasn't pulled back much at all.
This has been the craziest trading year where it's just like things are just right in front of you, just waiting to explode to the upside, and it's just
I know.
It's insane.
I know.
Literally all these stonks. All right. 165, 225. So you've got April 2026. Okay.
They're long or short? Oh, they're short that one?
Yeah.
They're long that one. Oh, okay.
So the Nov 7th, 225. Okay, so you've got a $1,000 winner here. Nice trade.
Nice.
Want to roll the short call up and out. So let's just get rid of the long and just focus on the short here. So this move has pushed this in the money, which kind of hurts you in terms of your flexibility because now you have $10 of intrinsic value here that you have to replace with extrinsic value when you roll out in time. With that said, if you were to buy this back for $2,200, I keep it simple. I'm just like, okay, I'm buying this back for $2,200 in isolation. Where can I collect $2,200 out of the money? So you could go to December. If you buy this back, which is right in the earnings cycle, and you go to December, you can sell the 240 and pick up 62 cents. So this offsets all of your intrinsic value with extrinsic value. It gives you another 7 points, 6-7 points of upside movement to the upside. Plus, you're removing that intrinsic value. So you're moving the 225 to the 240 for a 50-cent credit. So that gives you all that upside profit potential. If AMD continues higher through earnings, it's going to yield a lot more profit potential than your current setup because your current setup is offsetting your gains in your long call. So I would consider something like this if you wanted to be even more directional and basically get rid of the thought of implied volatility contraction and theta. You could go to January or February and go even further out of the money. But I might go to December for now, considering the upside move, because the nice thing about this trade is if you go to December and you sell that 240, if you get a reversal of this move tomorrow, you could buy back that 240 and then you could go to January, move it up and out that way. Or you could just keep the 240 or, leg in and out. So I would go to December and keep it more near term personally, but that's pretty much it.
Nothing to add. It's perfect, man.
Couple minutes left here. Just a quick recap on what we've done today. So did you get filled on SPX?
I did not. No.
I did not either.
No. It's at 195.
They're going to make us wait.
Yeah, they are.
Ooh, it's bouncing around. Tasty FX, I got short the pound dollar, 5 microlots, and then I got another 5 microlots of the short dollar CAD. So I'm up to 15 microlots there. Need a little sell-off there. But yeah, what else did we do here? Oh yeah, UAL. So we got the UAL call diagonal spread on. That is the 100 December long, short the 110 November for 645. If you get an upside move, it'll be perfectly fine. And yeah, we'll keep our eyes peeled for some other stuff later today.
Yeah, I think I'm going to do a diagonal in there too. I got to think about some strikes, but it's clear this is kind of a risk off market a little bit today. Like I mentioned, some of those high flying names that have been moving around a lot seem to be quieting down today. I don't think it's it though. I think it's just it's just a breather day, and I think this market is here to stay for a little bit.
Yeah, it's good to see two-sided action, even intraday. Yeah. I mean, we've had a 50-point sell-off from the open this morning. And yeah, like you said, vol is staying bid, not really moving. All three of the remaining futures, the V, X, and Z for this year are flat. So the contango has been zapped out of the market, which speaks to what Jamal said in terms of these markets continuously flying around or being projected to continue to fly around, which we will take.
Absolutely.
Love it. All right, I think that's it. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Again, Glenn is at Glenn Freibarger with an A. Give Tasty FX a follow as well. But yeah, we'll see what happens the rest of the day. We will be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. That's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. We got a very exciting installment plan for you today. We're going to talk some virtual reality, some augmented reality, the future of the world as we know it. But before we get into all these exciting topics, I'm here with my wonderful co-host, Errol. Errol, how are we feeling? What's
going on, brother? It's a good day. We ripped in the morning, consolidated for a while. As you can see, my life consists of the market. Every time, how are you doing? Oh, it's great. The market's doing X, Y, and Z. Like, this is my life. So market rips to the upside.
Bro's got a whole girlfriend, by the way.
Yo, if she could throw away the market, she would. But I love her very much. So, that being said,
obligatory fine print.
The market ripped to the upside today. We consolidated for a long time. Market sold off. I haven't really got to do much today, to be honest. And honestly, I feel for this fast-paced trading right now, I'm not in the best emotional state to be throwing these dollars around right now, if I'm being completely transparent. So I've been watching a little bit from the sidelines today, so I feel like I've been missing out a little bit.
Sure, I think that's very mature. Yeah. I think that's all you can do.
Yeah. What about yourself, though? What's been going on? What's new?
I'm doing well. Yeah, I don't know. Not a whole lot new. I've started eating bagels.
Okay.
Yeah, I wasn't.
You want more carb? You put more carbs? Or what?
It's just kind of become like my carb around the house. I was on a cereal kick for a little while, and then while I was shopping the other day, I saw some blueberry bagels. I said that sounds good. A little bagel with some cream cheese. So that's
regular cream cheese.
My new snack fixation. Yeah. Just light cream cheese. Nice. It doesn't need to be overpowering. Just a little bit.
I feel you.
So I don't know. I guess that's something new in my life. But
bagels with the salmon and cream cheese.
Oh yeah,
it's one of my favorites. My sister made it one time. Went to go visit her, and it's been one of my favorite snacks.
I love smoked salmon.
Oh, it's amazing. Yeah, all four. That smokiness. Yeah, fire.
It's good. Especially if it's made well. It's
100%.
Good stuff. What's going on, everybody in chat? Dan. Is that Hothead? That's what I'm supposed to be reading there. I don't know why YouTube did this to y'all with where it shows the usernames instead of just the names now, but it makes them harder to read. I apologize. Stephen, Woof, good to see everybody. Happy you're here. Today, I wanted to take a little minute and talk about Meta. I think that this has been coming for a while. I was talking at length about how I was going to get a Meta Quest here soon. Yep. And I got it. It came in last Thursday or Friday, something like that.
You've had it that long?
Yeah. So I've been playing around with it for a little while now, and I'm finally ready with some takes here. So
because we have questions.
Yes.
We're
so
curious.
The first and most glaring of these is that, especially after last night, which I'll get into in a minute, but I'm bought in. I think that Zuckerberg got laughed at when he brought up this metaverse idea and the fact that this could ever be a thing.
Right.
I think that he might be right. I honestly think that he might be really ahead of the curve thinking of that, and I'll tell you why. They have. Go ahead.
I do have a quick question just so we can have full context. Have you used the MetaQuest 2 before, and are you explaining this experience relative to the MetaQuest 2? Where is this coming from? Is this completely new? Never used one of these before?
Sure. That's a good clarifying question. Okay. Yes, this is my first experience with not any virtual reality. I had PlayStation VR. So I'll
get that out of here.
Yeah, so I've played some VR games before, and that was pretty well done, especially for the time. Enjoyed it. But I've never done anything where there's online multiplayer or interactions with other people in these virtual worlds or anything like that. This is a totally new experience. I also have the 3S, if that's an important clerical point for anybody.
Right.
But it is very impressive. This virtual worlds concept that they've come up with. It's really interesting, and I think there really might be something to it now that I've actually been involved with it. They're called Horizon Worlds, is what they call them. Anybody can create them. It's full UGC, actually very reminiscent of Roblox, where there's just like different ones to do anything you think. Oh, I like last night we were looking for something to do. I was like, let's play ping pong. Like ping pong would be fun in one of these. And I'm playing with one of my friends, and so he went and found us a world where we could play ping pong, and there's other people in there playing on the ping pong tables and talking to each other.
It's like a lobby.
Yes,
like,
basically a lobby.
like
but
a server.
the most interesting part, and what I thought, what I've never really been able to get over from the outside looking in, is that it really does feel it is a different level of personal connection than like video games where you're just talking. Like having even though it's like a kind of funny looking cartoonish version of my friend like standing in this world or whatever, being able to actually turn my head and look at him and mess with each other like physically, it is a different
physically, yeah.
Yeah, it is sort of a different level of connection than just playing a game and talking to someone, which I found to be very interesting. Go ahead.
No, I was going to say I got more questions, but continue.
Sure. What really, really sold me on this thesis is that you can, in these virtual worlds, if you just walk up and high five somebody, you follow each other on Instagram. You have to You have to link your Instagram and or Facebook account to your MetaQuest to be able to use it. And so you can just, if you're like vibing with somebody in one of these rooms and you like each other, all you do is high five and then you follow each other and it's done.
Oh, I'm about to.
So then all of a sudden we've bridged into the real world from the video game really quick, and that's never been done before. It's always been the opposite. Strangers you meet on video games aren't people you want to interact with in the real world, but they're managing to kind of strip that barrier back and make it a little more personal.
Yeah.
It's interesting.
I'm about to start catfishing on VR. 6'5" finance guy. No, that's hilarious. But it's funny you mentioned that too, because I remember I actually learned how to play poker on the VR. You should download some type of poker VR. Let me know how that goes.
Sure.
It's been years, but I remember having such a good time with it. And I remember like some guys you could hear they just got home from work, sitting at the VR table. My boys are across the table. And I remember I'm looking at this guy to my right because he's making weird sounds. I'm just looking at him. And then all I see him do is just look at me back. I'm like, I forgot people can see your heads turning and where you're looking. So it was a fun experience. But I'm glad to hear that the MetaQuest 3, they're making moves on it, because Horizon was on 2 as well, which was like that lobby and kind of start off in.
Sure.
But it sounds like they're making a lot of progress over there.
Yeah, it is very robust, and I was just very impressed with the level of, it just feels much more personal than connections that you would really ever make on the internet before, and I really think that there is something to that. And I don't know if this, descends into a Ready Player One dystopian style situation where we all only are ever on our headsets and do our communication that way. Like, I'm not necessarily proposing that thesis. This thing that I have perceived as, quite frankly, corny for years now, that I'm actually...
I was on the same page.
Yeah.
That's exactly what I thought of it.
Yes. And now that I'm actually experiencing it, I actually do think that there may be some legitimacy to that. It feels real. Like, it does enough to trick your brain into... and it's because it's face to face.
When you say real, it feels pretty immersive.
Yes.
Is that what that?
Well, yes, it's immersive, but also it's just, even though it's a cartoonish thing or whatever, you're actually standing there talking to a person.
Yeah.
As opposed to
because you have your area marked out and you're standing there, right?
Yes,
so
you're standing
free
there.
Space.
Yeah, and you can walk around, you can move your area anytime you want, all that good stuff. But yeah, it's very different from like a Call of Duty lobby where like you might make some friends or whatever, but it's going to take. Some rando you meet on COD, it might take 6 months of talking to that person before you're like, hey man, what's your Instagram?
Right.
And so I just think that the ability that this world has to kind of bridge the real world into the virtual is very intriguing to me.
And I mean, I understand the judgment and reaction whenever you hear metaverse I get it.
Yeah.
But especially, I feel like it is one of those things. Look, I haven't used the latest technology. I haven't even used the MetaQuest 3, but I do remember using the MetaQuest 2 and just thinking, no pun intended, I see the vision. Well, and the hardware and software hasn't caught up yet, but I see the vision, I see the direction.
Absolutely, and I think that we are still in that stage for sure. It's very, very immersive. It's robust. It looks good, but there's still just it's just slightly. Well, I shouldn't even say slightly. It's very much clear that you are still in a video game. You could never actually remove that aspect. But yeah, just the physical part really helps to add to that to me. So anyway, all's to say, I'm going to get long some meta here.
Is meta selling off along with the rest of the market right now?
It is. Okay. Well, yes. It's they're up slightly today, but meta kind of beaten down against the rest of the market action. They've pretty much stagnated since really late July, early August. So I'm just going to get something long dated. I am buying into this thesis. So yeah, I'm eyeing this is December 17th, 2027 expiration cycle. So
2027. That mustache is going to be touching this table in 2027.
No, I keep it trimmed up. It's actually a little disheveled right now. But, yeah, so maybe this 740, 750 vertical or something. I feel that I have to go define risk and some kind of vertical like this because you guys see these prices. If I wanted to do a naked leap, that was my initial thesis in my brain. Is I was like, oh, I'll do a naked leap, and then I saw that they're $16,000. So I think that's somewhat out of the equation. But yeah, I mean, I'm thinking.
Yes, this is completely live. We are live.
Oh yes,
Gus, snap your finger. This is live. This is live.
We're in the same room. You don't need me
This is for them. This is not for me.
Oh well, yeah. I don't know. You guys want us to put a spoon on our head or something?
No, we're live. Markets are moving.
Yes. That was just a long intro into our first trade of the day here. But yeah, I'm thinking about getting kind of aggressive with this. I might be able to get a really good buying power to credit ratio here, and with this much time, I'm willing to be kind of crazy because we're at 7-11. So, 10% on that is $70. We're talking about north of 2-year time frame right now, 26-month time frame. So, yeah, I certainly don't think a 10% move in 26 months is unreasonable, and frankly, I don't think 20 is too unreasonable either. What if let's get real speculative. What's this look like? Yeah, I could get a 2-to-1 credit to buying power ratio on this 840, 850. What if we do 840 instead, make it kind of around 20% that we're looking for?
I like that.
Yeah, 360 for 640 is also pretty good. No way I can do this wider, right? That's going to get too crazy. Yeah, it's a bit too crazy.
You're getting some good credit on that.
Yes. Yeah, well, and this wider, if I had a bigger portfolio, I would be inclined to jump it at something $20 wide like this. But I think that, I know that would be irresponsible, so we're gonna keep it $10 wide. 358, 642, and then what's this look like? 352. 648. Oh, that's just better. All right, we're going to go 820, 830, December 17th, 2027. And we only have to tie up $350 in buying power for all that time.
Not bad.
Which is quite nice. See if we can get a fill. Might have to replace it.
Yeah, this market is insane. I gotta say, this market is volatile. This is a directional market right now.
It is, yes.
We're up and down all week.
Yeah.
Same price points.
We have been, yes.
Yeah.
We can zoom out a little bit here. Let's go something like this. Have a look at this week. I guess this month. But yeah, September, it's brought some shop. It has not just been the automatic unlimited upside that we saw in the months leading up. October is what I meant to say just now. I realized the error in my ways. But yeah, we've had, pretty much forever since the beginning of April when we had Liberation Day. It's just been straight upside to that point. And then, late September, we got a little bit of a dip here, September 22nd into 26th. And we've kind of had some chops since then. The volatility is certainly here. Pop over and have a look at VIX. I saw VIX mentioned earlier. There it goes.
There it goes.
There it
goes. What are we at right now? We're almost taking the highs for the week.
Yeah, close to it. That looks like it would be, what's that, 22.93. So we're chasing that pretty aggressively. So yeah, we'll see as vol continues to expand. Is something happening right now, or is this just the market being the market?
It's hard to say. Need to check up on seeing what other news. We'll check right here and make sure we don't have any breaking news because that can happen at any moment, any tweets. Let us know what you guys see, but we'll look it up on our end as well. But I know we're giving up a lot of the gains from even just last night. So we sold off right before the close. We rallied all the way into the morning. We ripped and had a breakout in the morning, consolidated for about an hour, and then now we're giving up most of the gains, and now we're sitting at the low from where we almost closed at yesterday. So it feels very volatile because it's giving up the gains so quickly. I think that's what it is. It takes all night all day to build
and the
it
inverse,
up.
right? When we open down, we take back the losses so
100%.
quickly too. Yeah, it's because all of this. Yeah, I see what you're getting at. Is that
it's the grind? It's a grind up, but it really is an elevator.
It really isn't. Yeah, the volatility. It feels more volatile, but holistically, we're pretty much staying at the same level. It's just whether we've opened lower and gone higher to chase that level, or vice versa, where we open higher and then have to come back down.
Yeah.
Let's get some chat here. I haven't meant to be ignoring you guys.
Oh, there we go.
Let's see what's going on. I think today is Friday. That is incorrect. I can tell you that for sure.
It's going to be a long week for you. It's going to be a long week.
Waiting a little bit longer, we'll be selling some puts again. Yeah, Jared, I know you've been taking good advantage of that premium. I think that's a good call. If the same buy spot is going to present itself, why would you not do that? Break above VIX 22, no surprise. Absolutely. Yeah, pop back over there. Let's just, this might be a more fun thing to watch. Oh, it's back down. Sorry, there goes your break above 22. We are back below.
Yeah,
22.
no, I mean, the market looks like it's trying to bounce right now.
Choptober, that's a bar.
It is a bar. I know in this market environment, right, we never want to hold on to our losers, but especially in this market environment, I would definitely be mindful about holding on to those directional futures positions longer than you would really want to.
Yes.
Because the market's bouncing an easy 50 to 100 points like it's nothing.
Well, yeah, and I think that this action that we're talking about is, very. I think it's a great exercise in why you should not panic sell and why emotions should not come into play. Because, you get a situation like, what was this when we opened lower? The 13th is Monday? Yeah, right? My days are all confused here. It feels like we've had this same pattern like 4 days in a row. I guess we have. Anyway, Monday, when we open lower, we make the lower lows on Friday, we get a little bit of it back, and then we open lower. That's like your classic panic sell situation. Like, oh, okay, we dead cat bounced. Things are really going to die and correct now. Like, let me get out before too much goes wrong. But yeah, I mean, we just get the gains right back, and then today we open higher, and then say psych, and we go back down to the downside. And conversely, if you thought things were collapsing down here and you got short, and then suddenly we take this bounce, maybe you're thinking, oh my gosh, like, okay, I made the wrong move. I shouldn't have done this. This market just rallies no matter what. But sure enough, we just come right back down. So there may be a little more risk tolerance required to trade directionally in this market.
No, 100%. And then again, you never really want to be risking 20 points and then realizing, wow, that was actually a 60-point move just because we're used to those smaller ranges, But yeah, no, vol spiking, we can take advantage of the more premium as well. So I know I'm going to be looking at some of my premium positions and getting some of those on too, because we don't get vol spikes every single day,
I saw this NEE mention, sell call vertical spread, 85 chart resistance, gang, says Dan. Yeah, you know what? I mean, I think this certainly looks juiced. I mean, that's the thing is the quantum stuff and I understand that the rare earth stuff is a little bit more substantiated with these trade talks going on, but which one of these is this? NextEra Energy. So I take this as being a energy / materials type stock. I know the battery companies are all flying as well. This has to end. I mean, the quantum stuff especially has to end. I mean, is it not a bubble yet? Like some of these companies, I don't know.
It's a bubble. It's been a bubble. We can just call it's a bubble. Yeah. You guys all know it's a bubble.
Yeah, it's a bubble. And if we want to continue, anybody who wants to continue to take advantage of the bubble as it continues to run, because I have no idea when it's going to stop. But yeah, like what's one in that vein? Like MP, actually saw this one's already starting to come back down today. USAR is another one.
Okay.
Quad U's is another one. Yeah, so maybe we're finally starting to turn over on the rare earths and energy stuff here, but it's
Anthony, he says, what happened? I was up 10% on my plays, and I had to make breakfast and drive kid to school, come back and red.
Yes, absolutely.
No, yeah, hey. Once you pick your kid back up, we might be green. So
that's true. That's true. Whenever you got to go pick your kid back up, I guess that might be after close. I'm not sure what time zone you're on. Yes, RGTI, another great example, Dan. Thank you. I already got burned trying to short this last week, and I just might do it again because, yes, as you said, they have $7 million in revenue and a $17 billion valuation, and we have so many companies like that. And this is a particularly exaggerated case, but I mean there are so many companies right now that are $5 billion companies trading at 40.
100%. And it's dragging the rest of the sector up.
Yes.
That's like the IONQ, all these other names, right?
Yes. So just please don't get caught bag holding here if you've been long in these for some time.
Yeah. The backside is going to be fun, but we got to be careful, hitting the short on the front side of the move still, right? I do that. That's why I'm warning,
Oh yeah.
When did I ripping higher? These bubbles are no joke.
RGTI? 10:14. I exited it yesterday.
Jared.
I got out of my RGTI shorts yesterday. Yeah. I'm learning. Oh.
Jared got a couple words.
If only he had a trailing stop set for the sell-off. True. I think Luis shorted this 6 months ago. Real. Yeah, it's getting nuts. And then what are...
Stefan said, drop all the kids off.
What are some good quantum names here?
I know I'm in IONQ right now.
Does Oclo fit that mold? IONQ, that's the big one, yes.
I've been eyeing that one. I took part of that one a little early. I know we haven't topped out on these names. I know the risk, playing with some of these names, but that's why I ended up going to find risk Maybe we'll add to the position, get a little bit more aggressive once the backside is actually in. But until then, defined risk all day for me.
Yeah, I just realized that was on too short of a time frame to like properly illustrate how up these things are right now. Yeah, I mean everything, you name it. RGTI, boom, boom, it's way up. ASTS, let's throw that one out. We're getting all excited about space now. Rocket Lab, like I can sit here and just rip through all these stocks that are mooning that I feel like are a bubble. I still need to respond to a text. I had a buddy earlier today text me and say, what do you think about ASTS and Rocket Lab?
Yeah,
it's like brother, please,
Brody,
if you're watching, don't do it.
Reread the text.
I haven't responded yet. Yeah. My bad. I saw it. I haven't responded, but I think overextended, especially in a long-term investment context, which is what he's asking me about.
Okay. QBTS. I think that was the other one.
QBTS. You're right. That is another one.
Shout out to Ann.
Here we go. We got the freaking Palantir curve going on all these things.
Palantir curve.
Yeah. I mean. Yeah, like GE Vernova.
I had a buddy text me about gold. All right, guys, we got to do our own market research. Everybody put a 1 in the chat if somebody outside of the market has texted you about the market. This is for our own research purposes, but I just got to know.
That's true.
How many outsiders are asking about the market
That's true, because I feel like this is a very relatable experience. Like if you are the trader that people know, like I feel like people are constantly reaching out to you. And the other thing too for me is that like at large, I don't really care. Like I shouldn't say I don't care. I don't think much about what I think the market is going to be doing in like a year or two from now. And that's usually what I find that people are reaching out to me to, inquire about is actual investments that they're going to buy and hold for a while. And it's like, my main concern is kind of what the market is going to do. Everybody's spamming them. I guess Soul Train. Tons. One, I get asked about it. Yes. Okay. I'm happy we're unified in this because it's just once being the trader is your identity, everyone wants to reach out. And that's the thing is I'm usually thinking about in an options context with expirations and strikes. I'm not usually thinking long-term investment. Like what do I think could have a good 10 years outside of Meta, which is obviously going to take over the world. But it's outside of, your Mag 7 things. Like I never, like if someone's like, oh, what's your sleeper stock for the next 5 years? I have no idea.
Yeah.
I don't like NVIDIA. I mean,
NVIDIA,
just you don't. Yeah, people want to reinvent the wheel.
I feel like when it 100%.
My friends are all degens though, so mine too.
Yeah. When it comes down to those questions being asked, when it comes to long term, I feel like it's a little bit easier because you can always just bet on, the ones that seem like they can't fail. That's always the safe blue chips. You got index funds, and it's like, okay, when should I buy? I'm like, look, you can dollar cost average or just wait for whatever to pull back or crash. But you can go about it that way.
Well, I think that social media has done a lot of that too because there's just a lot more noise of these people who, I drilled this stock at 50 cents and now it's $15 and everybody wants the parabolic returns. I mean, you want to translate that to sports betting. It's why everybody our age only ever does parlays. They don't know what expected value even means. They just want to see, I can bet 5 and win $100,000 if all 7 of these people score a touchdown on Sunday. I don't know. We have a risk-seeking generation that we live in.
We do. And you know what I think a lot of it comes from? Not the risk-seeking part, but more so I feel we kind of collude these ideas together. If you're outside of the market, you don't have much experience with it, there's so many different contexts that we can speak about the market. In intraday fashion, a selling premium, maybe holding for 20, 30 days, holding for long. There's so many different niches in the market, different styles in the market, different approaches in the market that aligns with people's different goals, ambition, all the risk tolerance, all the above. It's such a difficult answer to answer straightforward.
Well, and that's like the other thing too, especially with people our age, is like, what's your horizon? Like, is this a portfolio that you're trying to use to retire on? Do you want to buy a house in 5 years? Like, what's the ultimate?
They might be like, no, 20, 30 years. I'm going to be a nomad for the first 10. Then I'd be like, okay, you see, you would guide them in a different direction.
Exactly. Yes. It immediately makes things change. Yes. You would you'd want good, liquid, blue chip names. But I mean, pretty much though, it's.
Lastly, to your point though, again, whenever anyone sees anything about the market, it's like, yo, what should I buy? It's not even about when should I buy or what it's just, yo, what should I buy? What should I buy?
That's a good point too. So yes, agree.
I'm trying to buy
food.
Bro, Big Deal and Grumpy Mike, they always catch me off guard with the comment. Always.
There are a trillion ways to make money in financial markets. Yes, absolutely.
No, there are only 2 ways, brother. Maybe 3. Up and down and sideways.
Yeah, Steve, with like on those Monthly Fool articles, if you put 1K into this stock 20 years ago, yeah, you'll see all those all the time. But I have a TikTok I posted some weeks ago where I did some research into a Fortune article from 1999, and it was called "The Top 10 Stocks to Last the Decade." And they just gave out 10 stocks that they said were gonna like moon by 2010. This article was written in 1999. And there was like 4 of them went bankrupt. Enron was on the list. Like there was 4 of them that went bankrupt before 2010. There was like 3 others that went to zero and got sold. And then there was also like Oracle was one in there. But even in that decade, Oracle traded down. It's really hard to judge these things in a long-term context, which isn't usually what we talk about on this show. But in a long-term context, you're pretty much always going to be better off just buying the market, buying the blue chips, a little bit of diversification, and that's all you really need. You don't have to reinvent the wheel. My advice is buy Realty Income, reinvest dividends into Powerball tickets. does have a great dividend. Tickers O, Main, and Gain are all 3 excellent dividend stocks. I've used those in my income portfolio before. Well, thank you, Anne Marie. That's very sweet of you. We appreciate the kind words. Okay, I haven't read further Big Deal, but he said not to sway the convo. I think this is about to sway the convo drastically. Not to sway the convo, and this might sound stupid, but if you're betting on a team and one team has higher odds and you bet an even $10 on each team, how do you lose? Juice, the VIG, is the answer. Sportsbooks put a hold into all of their markets. So all a sportsbook wants from their bettors is to perfectly balance the money 50-50 on either side of the market. So an example I would give is any spread, it's typically going to be minus 110 both ways, which means whether you want to lay Team A or Team B, you're going to bet 11 to 10 odds. And so if they can just get 50% of people on both sides, then they keep the juice because every single bet is 11 to 10. That's the answer. It's not like the stock market, which is zero hold. And say in that situation, you just took a call and a put at the exact same strike and same expiration, they would theoretically, I guess that's a lot more nuanced. That's not a great example. If you got long and short shares of a stock at the exact same time, you'd be break even no matter what. But there's VIG in sports betting. Another bear flag on the spoos.
Another bear flag on the spoos. I'm not gonna lie. I don't
know what time frame we're talking. Okay. I'm seeing that. Seeing what you're getting at.
Yeah.
Yeah, there you go.
We've been volatile. We're still selling off a little bit here. We're trying to bounce. See if we make new lows for the day. It feels like whenever we're on this segment, we're juggling if we're going to be making a new low or not. It's always if we're going to make a new low, not if we're going to make a new high.
That's true. We rarely go all the time. I guess we have before, but it does seem much more rare. Time in the market will always beat timing the market. Yes, absolutely, Jared. Knocked it out. CYTK, is that a ticker? Okay. Cytokinetics. Dan says, watch, 5 minutes, /ES. Somewhat weird question. Here's a somewhat weird question. If constantly trading market versus buy and hold, are you always kind of in market though? If that makes sense. If you constantly trading the market, I guess I see what you're saying. You're just saying trading versus buy and hold all the time. And then you're saying with the time thing, you're saying is that not time in the market also? It is if you're right all the time. I mean, that's kind of what it would come down to there because, yes, if you're a day trader, there's a quote from some really famous Warren Buffett level investor that's like, a day trader will take a stock at 10 and sell it at 11, and then take a stock at 20 and sell it at 22, and then take the stock at 30 and sell it at 33 and think that they did a good job, but someone could buy that stock and hold it from 10 all the way to 33 and make way more money. That's true, but the counterpoint to that is, no, because the day trader could buy it at 10, sell it at 11, short it at 11, let it come back to 9, sell that, then it runs up to 20, and then they buy and make that profit, and then they short it back down to 15, and so you're making profits while everybody else has to sit and wait. Those are both equally legit schools of thought, I would say. I think both parties are correct. They're not mutually exclusive.
I know Armenian here said both would be considered always being in the market. That's kind of what my thought first went to. I think that if you're active in the market every single day, I mean, you do still get that level of experience, just like if you were to be dollar cost averaging at a very slower rate. I think it's all about math and probabilities at the end of the day. So I think that's just something to take into account.
Well, yeah, and risk propensity and value of your time as well.
100% opportunity cost, right?
Yes, because to be the second guy that is going to take it at 10 and 11 and then sell at 11 and make profit on that at 9. That's much more involved. You got to be constantly keeping up and doing that and thinking. Whereas someone who just buys and holds can just chill essentially, and they can.
And there's no right
devote their time to other things. And there's no right or wrong answer to that. It's just it depends on your risk propensity and how much you value your time.
100%. And I know trading intraday got a lot of flack and still does. It's becoming more normalized, as I think it will continue to do. But the only difference between day trading, swing trading, and long-term investing is the time in which you close your position. That's it. Yeah. Risk, reward, win rate, probabilities all still matter to the same proportion as it does for any other style in the market. So just to bring things back to perspective.
Yeah, absolutely. Bull flag on VIX. I don't.
Ironically,
of all of the tradable things in the entire world,
I've never traded VIX. You know, I tried to trade VIX, and I think Mike or Nick were like, "Don't trade VIX. You could do this." Like when I was first learning premium, because I was like, "What if we just trade VIX?"
I like to sling some VIX. Yeah, Nick always tells me that there's better ways I could go about it as well.
And I'm sure there is.
It's just it's just
fun.
It's just so
VIX.
direct.
It's so direct.
I think there will be vol.
Like let me get it straight
VIX.
from the horse's mouth.
Yeah,
let me trade vol. Like
it's right there. Right? I'm kind of tempted to get short some VIX at these levels actually, just because VIX is one that's like it. And somebody correct me if I'm wrong, but is it not logical to say anytime VIX is above 20, you should just short it and let it come back to 16?
So I mean, it does have mean reverting properties. We do know that. The one thing about volatility that our research does show, if I'm not mistaken, is volatility tends to cluster, and I think that's the risk. But I mean, volatility tends to contract as well. So,
I mean, if this were what I was going to say earlier, too, is of all the tradable assets in the entire world, I think chart patterns apply the very least to the VIX. But I mean, if this were just any standard company, I would look at this chart and say, this looks overextended to the upside. So, like, that also kind of, lends credence to that line of logic.
What are some things old people buy? Can we judge how they think the economy is from those sales? Example, RVs. Whoa. I heard Gus talking about RVs like today, talking about what are some things old people buy. Gus was literally talking about RVs today.
I was talking about an RV that I rented. Yeah,
talking about old guys.
What are some things old people buy? Can we judge how they think the economy is? So you're just saying, does the discretionary spending of people that have lots of money, is that indicative of the broader economy? I mean, I would say absolutely. Yeah. I mean, I think that I don't even know if you necessarily have to just include old people, but I mean, like, something that I've mentioned on air before is that, like, Victoria's Secret is a stock that actually tends to perform better in recession because as the economy weakens and people have less spending money, they will turn to cheaper luxuries so that they can still feel like they're treating themselves, but for less money. So,
treat yourself.
Yeah, exactly. So instead of buying, some expensive jewelry, you might go to Victoria's Secret instead, things like that. So, I mean, I think that what people are buying at large, just, anybody in the pool of people that has discretionary spending money, I think that's always indicative of the broader economy.
100%.
Why is Icy Hot being mentioned? Is someone injured? I'm so sorry, if so.
Icy Hot went crazy with the Shaq ads, I will say. That marketing campaign did in fact go crazy.
TJ Maxx, that's another good one.
I mean, if you could snag Shaq for anything, I mean, he's such a billboard. Like,
yeah. Well, that's like his thing too, is that he never ever turns down stuff if the money's good. Like he just wants to.
Right.
Shaq is an excellent businessman. We could do a full hour on just.
We get Shaq up here on the mics.
Oh, I wasn't. He would be. Think about how tall Shaq would be standing at that table.
We'd be looking at his waist.
Yeah. I mean, I think that table's probably like waist height for him.
100%.
The man is large. Well, they're probably spending on their kids' college. Suppose that's true. Yeah, I don't. What are my parents spending money on now that they're not spending money on my college anymore? I don't know. Very blessed in that regard. I'm about to make a low IQ move and sell a gold credit spread.
I love that framing of what you just
God
said.
Bless you, Wolf. Well, that's though. I mean, that's good psychological, emotional framing though. If you know that you're kind of taking a gamble when you get in, I feel like that helps you to manage a lot better and manage your risk upon entry as well. Because you could just easily be 100% confident about something and have it go against you and lose a lot more money.
100%. Once you're in a position and you think you're fully confident, I promise you that's the moment you should put in your risk parameters.
Yes.
Because even if you make money now, I promise you it's going to come. The market's going to come take it back.
Yeah.
Whatever you get away with in the market now, even if it's a month, the market is 100% going to come and take it from you the next month or the next year. So whatever bad habits we implement now, the market will take it. Anyways in the future, and that's just the reality of the market. It will not let you get away with your bad habits for a continuous amount of time. Shaq has a great Walmart story where his card declined because no one spends that much at Walmart. Oh, I did hear about that one.
I have heard that. Shaq is awesome. I mean, all of his comments and line of logic about getting his shoe line into Walmart as well are inspiring. Yeah, let's go like, I don't know.
What are we looking
these?
at? Some
I'm getting short some
$2
VIX.
wide. Okay, I like it.
Yeah, it's too attractive. 13 DTE. Just the thing with VIX, and especially in a defined risk like vertical context, like what I'm doing here, is that you might not always like. I don't know if I'll feel comfortable holding this until max profit because VIX, like, something can just go wrong. It's not like a company that I'm shorting where I'm like, yes, this has to catch up to its fundamentals. Like I can feel a lot more convicted about it. Just trying to get a fill here. There we go, 55. Got filled way better. I feel like that's something that we don't touch on enough when we're always talking about, trying to get the best fill and slippage and all that good stuff, is that we fill you at the best price possible, even if you're, lower. I threw that in at 50 and got filled at 55 on a 58 mid because I couldn't get filled at the 58. But
Did somebody say price improvement?
yeah. What's the opposite of slippage? Traction.
Traction.
I got $5.
Traction.
$5 of traction per contract just now.
Yeah, that's funny.
We coin a new term every single day.
Yeah.
Anyway, I once again am lost in the sauce. There it is. Yeah, so we're short some VIX now.
There we go.
Into the 29th.
We're bouncing a little bit here. We'll see how the market pans out.
Into spooky season. You a Halloween guy?
Honestly, growing up, no. A lot to do with just how I was raised and then going into college and things like that. I participated a little bit last year, but this year, no, more so due to inconvenience. Sure. To be honest, what about you?
Yeah, no, I'm not. I wouldn't say I'm a giant Halloween fan. I just feel like we're like in like such a weird stage of life for Halloween. Like we got no kids.
Oh, exactly.
We're out of college. Like there's like this little lull here where Halloween just ceases to matter.
100%.
But I've never cared a whole lot. Like when I was a little kid, I loved it. Like I was all about getting dressed up and I go trick or treating with my friends and spread out in the basement and sort all our candy and trade and all that. Yeah. Like that stuff was a blast. But since I've gotten past trick or treating age, it's kind of lost.
No, I feel
its
you.
flair. I did some Halloween stuff in college my freshman year, and I think that was like the only time I ever dressed up or like did anything major for Halloween. I really enjoyed sitting and giving out candy to the kids. That was always fun.
Right. No, I mean that was fun. Yeah. I even had fun with Halloween. As a high schooler, just having fun with my friends. But one thing I will say, so I remember the first year when I had moved out, I was in Florida, and I had just moved to Florida, so I didn't really know where I was at. And I was just trying to find a spot that was close and convenient to the things I needed to be close to. So I remember I got there, I recognized I was in a community with literally everybody that had kids. So I didn't have any peers around, right? I look out in the morning, kids going to the bus stop. I felt so alone. I was like, what am I doing here, bro? But anyways, I remember Halloween rolled around, and I remember I put a little thing of candy out. And just because I happened to be in that community at the time, I wanted to partake in it. It felt kind of cool. I'm sure once I have a family and kids, I'm gonna have a great time, showing out for the holiday season.
Yeah, absolutely. Yeah, we always had a similar funny thing in college where both of our neighbors, like to either side of us, would decorate like crazy.
Oh, that's fire.
Skeletons in the yard and the lights and everything. And we're poor college kids. We can't afford Halloween decorations. So every year I would literally just take a piece of paper from a legal pad and write, "We have candy, just no decorations."
That's pretty creepy.
And I would nail it to a tree in front of the house.
We have no candy.
I would say we have candy, we just don't have decorations.
That's creepy.
Don't skip us.
That's actually pretty creepy.
No, I'm just saying don't skip because we totally get skipped.
1,000%.
I started doing it
even
because
subconsciously.
The first Halloween I bought a bunch of candy and I was watching kids skip us, and I was like, they think we're not open. I got the porch light on. What more am I supposed to do?
Sitting across the street just plotting for next year.
Yeah, exactly.
Skipping my house.
Yeah, so then like midnight that night I was like, okay, like I got to do something about this. So that was the origin of that, and then I did it every year. I was like, we're open for business.
That's all she wrote.
We just don't have decorations, but it worked. It immediately worked. People would always come to our door.
Well, now you stand out. Yeah, when you're next to both of them.
Exactly. Yeah. You're
not blending.
I should have just been like, ditto or something. I don't know. But anyway, okay. I thought the government was going to take back the 2018 Farm Bill.
Grumpy Mike, I hate the holidays. That's very in line with your name.
That is. Get off my damn lawn, says Lone Sofas. Yes, precisely. Oh, man.
I knew that was Lone Sofas. He changed his name. I got
MSOS, pot ETF, I see mentioned. Yes, my personal favorite pot ETF is MJ.
I never found one razor blade in my Snickers.
That's true, too. That's true, too.
What were you looking at over there?
I was just pulling up I saw somebody mention the weed ETFs.
Oh, gotcha.
Running through those. Testing SPX pivot to 65, 72, 50. That is incredibly specific level for SPX. I like it, though. 65, 72, 50. 65, 72. I can't quite get it. There you go. This is basically your level.
Popping on the day. I don't know. The weed sector has been, I feel a little not as exciting as it was when the weed sector was really popping off. I think it was 2021. We'll still get some names here and there, but
yeah, I mean, I know that Tilray had some bullish news break here. At this time, some bullish news broke for Tilray, and then further stuff here. I believe this was something to the tone of the government is thinking about decriminalizing cannabis federally, and the other one was something to the tone of they got approval to grow in Germany. Those are the two things. I do not know the order. What I do know is that I was short here, and 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 then I've since trimmed back at this level, but. Yeah, my shorts did not work out. Tilray is just one of these companies that like, I'm just like I think it's Fugazi. Like I think it
easy Fugazi.
Yeah, I think it could just as easily go back to 50 cents any given day. So I have I think I actually might still have those super cheap shorts open, just sitting at me, staring at me at zero. Yep, here they are, unchanged. Oh, they're still worth a penny. Actually, that's pretty cool. But yeah, I've mentioned these before. I took 25 of these because they were 3 cents a piece, and I was like, I think Tilray is, I'm trying to not use foul language here. I think Tilray may be slightly illegitimate. I think that this run may be unsubstantiated. So yeah, I grabbed some 50-cent puts. They're still 65 DTE, so we'll hold out and see if Tilray does Tilray things.
Got some time on there.
Article on opioids related to pot. All pot stocks are up to Oh, interesting. What else we got? Do I know any other cannabis names? Is Hexo, that's still a thing? No. There's Altria. Is that?
We got ACHR.
ACHR.
RCAT, UMAC, we got from Anthony.
ACHR, RCAT, UMAC all had solid news today. They were pumping. ACHR was up 12%. Yeah, I can see that 1 point. Seems like we're giving a little bit of it back. What else? RCAT. Pretty similar. Are these? What is this company? Red Cat Hold. Oh, that doesn't.
Aviation. Okay.
Oh, aviation.
CGC Canopy Growth. CGC.
Oh yeah, ACHR is Archer. I'm so silly. Yeah, I know Archer was flying. Joby flying alongside them. We're really liking. We, as in the market, are really liking things that fly as of late.
As in the market.
Oh,
sorry, pun. Stupid pun.
Yeah, no, I'm with it.
Yeah,
I'm with it.
All right, cool.
Yeah, we're just, the market. It's like a 16-year-old boy or something. It's like cool stuff.
Cool stuff.
Quantum computing, rocket ships, weed. Like that's
rocket ships.
That's the
sports.
I mean, that is what it is for real. Sports. Yeah, that's another good one. Sports. ACB. Is that what I was thinking of? ACB. Yes, Aurora. Aurora is what I was looking for when I said Altria. Good work there, guys. That was great. Great interpretation of my phonetics.
Times really have changed, though.
Yeah,
I know Stefan brings up, if we just reclassified these stocks, we'll have a lot more upside potential. I just remember being 14 years old, playing a soccer game against.
Oh, yeah, because you were in Colorado.
I was exactly.
Yeah.
I was born and raised in Colorado. I was 14 years old. I was in ninth grade. I was going into my ninth grade year for my freshman year, freshman year. And we played a team from Nebraska, and they were all asking us, like, yo, how's the stuff got? Like, everybody that was outside of the state of Colorado at that time was asking everybody about weed.
I'm sure.
And I'm like, bro, I don't know. I've actually never smoked before. I was like, I know a group in Colorado, but I actually haven't done that. So I don't know, but let me get back with you. But it was a big deal at the time, I do remember. I wonder how the traders were. I wonder how that affected, like, being in the market now, I just wonder how a lot of outside factors made traders and active investors excited about things going on in the market that I didn't know about back then.
Oh yeah, that's true. Yeah, that's what was the first company that got listed?
I don't remember the first one. I know Tilray's just always been a very ACB. That brings back memories.
Yeah, that's what I have up over here.
Yeah.
Canopy Growth. Yes, of course.
CGC.
Of course, Canopy. Is it CGC now?
Yeah, CGC.
Oh, they're not weed anymore? That's a shame. They were ticker weed for a while. I remember that.
Why would you change that unless they were forced to? That's like getting the name Meta or Band-Aid.
Maybe they did force them to. Are we using it?
Yeah.
Okay, it became an ETF. Sure. That'll play. That flies with me.
Make weed legal. Again, the black market is suffering. I'm sure it is. Would the weed stocks be up, or would everybody just be able to grow on their own and not buy from them?
I think that they would. I think that with federal decriminalization, they would definitely go up. just because I think that people are too lazy.
I completely agree. I don't think somebody's going to grow their own.
I think that this is very much like someone in the, I guess alcohol's never been super illegal except for prohibition. But yeah, I mean,
we can make our own beef from a cow. I don't want to go butcher the cow.
Yeah, I could distill my own vodka if
it's legal.
If I so chose.
Yeah,
but it's just tricky. But I mean, that is a good point. I mean, there might be some slippage if people start to grow, and I think that in a world where this is legal in all 50 states and federally decriminalized, like that would start to turn over a little bit more. People who are maybe not even into weed, but just into like gardening and stuff in general would get into it and start giving some to their neighbors or whatever. But yeah, I don't think that would be like a considerable. It would the federal decriminalization would definitely outweigh that. Is what I'm saying.
Yeah.
Reclassification would make it a controlled substance, but the OTC level type would legitimize point of sale, and there would be a flood of these companies becoming banked. Yes, precisely. Well, yeah, and that's the other thing too with the federal criminalization is the banks. The banks don't want to deal with these companies, which makes the whole thing a lot more nuanced. Teenage trades. Distilling requires a license. Oh yeah, I suppose that is true. You can't just sling moonshine.
Yeah, that's that gasoline. That moonshine is that gasoline.
I knew some people in Texas slinging some moonshine.
Grow some hair in your
chest. For sure. We literally. I'm not going to tell that story.
I'm surprised you remember it.
When I was in high school, we were in touch with some idiot distilling his own moonshine. I'll leave it at that.
I mean, we do have a few moments left. We can take it over here to NASDAQ market, just get a quick update before we hop out of here.
Yeah, let's go for it. Show me those blue and white candles.
Show me the blue and white candles. I'm getting a nice little vibe going. We got the black charts, blue and white candles, and then I'm using yellow lines. I think it's a nice complement to what we're doing.
Can we go Errol's blue and white candles, please? Thank you.
You can't miss them.
Thank you, lovely production team.
No, just quickly, the market's still selling off. These are some of the levels that we had in here. Let me remove this one just so we're not confused. But this is the level of value that we're looking at right now. So even here, right, like this would be a question where I would ask myself, is the market going to try and, trade outside this level of value, or do we have the potential to trade back within this level of value? So this would be a price point now that we happen to be trading at this level that we would look at that from. So that's kind of where we can get that favorable risk to reward. Never that we'll always have the right direction of the trade, but just finding out where the market may make more pivotal decisions is very helpful in that manner. So market sold off. We consolidated from 9:10 to about 10:30, so about an hour and a half, and then we sold off to the downside, back to our level of value down here. And that's kind of where we're sitting. Again, didn't really take too much opportunity. I took one trade, I got in and just immediately got out. Because I wasn't going to trade today, and then I seen an opportunity. And it's funny, it would have worked out in hindsight, but I got short, took the position off because I already told myself earlier today I wasn't going to trade. And sometimes you make some rules for yourself. It's more important, in my opinion, just to stay disciplined to that. So with that being said, the market's trying to bounce here. Maybe that short VIX could pan out into tomorrow.
Yeah.
And if we gap up, it's going to kill the vol.
No, yeah. I mean, that's all it would take. And I mean, I just need. And that's the thing too, is it gets squashed so quick. Like it just, even if we have, 2 or 3 more days of vol and VIX goes to 25, 28, whatever, it literally just takes one day of stability and it'll come flying back down. So feeling good about that position. Who just said they're getting long IBIT? Steven, I'm tailing you on that. This is beaten down. I like to get long IBIT anytime there's good buy spots. I'm going to do that.
IBIT, some crypto. It's been a little quiet in the crypto land since last Friday. Crypto's been taking a little bit of a beating, trying to pull back. It's been resilient. Gold has been resilient. I know some have been trading silver too. I know some of those positions are working out pretty well right now.
Yeah, I'm going to do...
I don't remember moving this moon, by the way.
Oh.
But I also...
What the heck? Yeah, well, I can't...
No, we got to the moon. We surpassed it today.
We got to...
I thought I was on the daily. I'm on the 1 minute.
Oh, what the hell? We're just at 4,200?
Yeah, bro.
No wonder. We're at the moon.
Dan is rich.
What the heck?
Dan is rich.
Yeah, Bob. It's Bob. Yeah, Bob is rich. What the heck, guys? We reached the freaking moon on gold. All right. Well, we already established our contingency plan. Put a Saturn out there. Give me Saturn somewhere out there.
Take some profits. All right, guys. Some profits.
Yes,
put a
please,
Saturn
God.
out there.
We put this moon... Where were we? Like 3,600?
We were being funny about it.
Yeah, we were. Like, we threw this, like, comically high above the chart when we put this moon on here. I cannot believe that. That's hilarious.
That is hilarious. I know we just got a few.
It was so far from the moon yesterday. I mean,
no, just yesterday. And again, this is after the dip we got on gold.
Oh,
Like,
man. Yes. This is.
You go pick your kids up, the dip is gone, literally.
Yeah, because we had joked that when we got the big white candle in the middle there, that was, we were like, oh, we tested the moon. Like,
Yeah.
we almost got there. Oh, haha, guys. What the heck is going on?
We're there.
All right, I'm selling a put vertical on IBIT 63.65 strikes December 19th. Yeah, I feel like that's low enough and plenty of room for a rebound.
Nice. Go to this daily chart over here on Bitcoin so we can see what's been going on. I mean, it's down. It's been getting hammered. I mean, I like it. You're getting a little bit of long delta.
Yes.
First decent pullback we've seen in a while in
Just
crypto.
filled. Yeah, precisely. I mean, when my eyes kind of lit up when I opened this chart and saw how far down IBIT is trading right now.
Stefan said, we made it to Saturn.
IBIT 65.32 is a pull area. Take the money and run, says Kimberly. I do trust Kimberly. 65.32. You're saying if it gets back to 65.32, it'll come back down? Pull area. LOL the moon.
The moon was pretty good.
I found the VIX trade to make a quick $40 for dinner. LOL. Yeah, I mean, yeah, it is a cheap one. I got on, what, 2 of them? Something like that. Yeah. 4 of them. Like that.
Golly. We're on the hourly chart right now. Let me clean this up. We're on the hourly chart, but you can just see how massive the bottom of that wick on that candle is. Goodness gracious. But you know what's funny? Is to see a large wick like that, and I would want you guys to test it out and see for yourself if you see anything like this, but a lot of the times I notice large wicks happen within value areas. And my personal reasoning behind that is because these value areas have so much traded activity. For the market to be pushed that far, there has to be, it's not retail, pretty much. There's large orders in here, and I do think to fill that level of large orders, you need a lot of liquidity. You need a lot of trading activity. So I do think you need levels in the market where you have the ability to fill all of those orders. So I think it is interesting that a lot of the times when we get these very abnormally large wicks, they happen within value areas because I do believe they have the sufficient liquidity to be able to fill those level of orders.
Yeah, I mean, yeah, long wicks are always
specifically in value areas.
Yeah, I mean, I would really just say more broadly. I mean, there's a lot of times like wicks are like one technical analysis thing that I really do think carries some weight, and I don't even mean like in a this is a butterfly doji, we're gonna come back down sort of context, but the reason that dojis exist and work and people cite them is because of what Errol just said. It's because it indicates that we tested that level, and within, what time frame is this? Within an hour, within that 1 hour of that candle, people said, no, we're not. This is way too low, and it scooped it back up. So yeah, I mean, to get wicks of that length always is a little bit significant to me. I mean, it means that there's a lot of volume and there's a lot of battle. And in the case of these long downside wicks that we're looking at right here, it means the bulls won. And so when there's a ton of volume, enough volume to drag it that far down, but then enough bullish volume on top of that to drive it all the way back up, that's something that's worth noting. I always
100%.
think.
I know. Holy moly, Stop Scott ran. I mean, yeah. I mean, whoever had Stop, I mean, they were coming for next there because that was a crazy move.
It's true.
I do pay attention to those very long-wicked hammer candle reversal indicators, also long-wicked dojis.
Yes.
100%. I would say, too, like, a lot of it's nice to see, the wicks, this, that, and the other, but at the end of the day, it's like, where are our risk parameters at? Where are our risk levels? So it's fun to analyze the market, but at the same time, it's like, all right, let's not let the market make us emotional and just figure out what we were risking in the first place, regardless of what the market is showing as a crazy wick or this or that. It's like your risk profile doesn't change.
It's true.
So
it's true. Only wick I care about is John.
That's good.
After my speech about how wicks are like the only technical indicator, I actually give some credence to. Oh man.
Also, those wicks are market maker stop hunts. I hear you.
Yes.
Precisely. So I think
that's sort of what I'm getting at. Yeah, that's a good way of putting it.
I think in one of the tweets I put stop market orders. I didn't mean to say stop market orders, and I think Frank commented. I meant to reply, but he commented, "We need to talk." And he put in quotes like "stop market order."
Stop market order.
If I'm not mistaken, I could have sworn stop orders are market orders. If I'm not mistaken, stop orders, if you're not using a limit order, like regular default stop orders, change to a market order once that price level gets triggered, and that's why you can experience some slippage because it's a market order. But stop orders are technically market orders, unless you're using a stop limit.
Unless you're using a stop limit,
right?
Which that's typically what I do. Actually, is a stop limit if I'm going to put on a stop loss. But that's rare. Yeah, so folks, keep it. You keep your innuendos. In that case, they push the market down to slam buyers, then rip the market higher in their face after. Precisely, yes. Right there. There are two types: stop and stop market. Oh yeah, man, go out there and punch.
Maybe Frank was just getting on my head for like, why are you using a stop market? And in that case, you're right, Frank. If you're watching right now, you're right, Frank. Should use a stop limit. I don't even want an extra 3-point slippage.
A stop market order, and when it triggers, the entire market just halts.
No, literally. So, you know what's funny? I was looking at order flow the other day, and I was looking at one of the sell-offs we had. I think it was maybe Monday or Tuesday. There we have like a sell-off every day. It's felt like the last 3 days. But on one of them, I was looking at the order flow, and one of these sell-offs came so quick, there was no orders filled on the offer. Meaning, if you put in stop orders there, you would have got slipped like 10 to 20 points. And it's funny to kind of actually see those gaps in the order flow sometimes. If you look in the order book, you can see in those low volume areas, you're way more likely to get slipped a good 20 points. And if the market decides to sell off like it has been lately, slippage is not out of the question for sure. And it just messes up your risk parameters, slippage, right?
Yes, precisely.
Anyways.
Well, all right. I suppose that's about all the time we have. You got any closing remarks for the people?
No, that's all for me. It was a good time. Always enjoy chopping up the markets like Kimberly was saying. She loves a tasty community. I think finding something we all can commute around is one of the best parts because even trading felt like a secret society.
Yeah.
7 years ago.
No, yeah,
you know what I'm saying? So
I think that's the most powerful part about what we do here, and it's what I really love is the sense of community, and like I do feel like I am friends with you people for real. I mean, we will be out there and be like, oh, remember that funny thing Dan said or Grumpy Mike said? Like you guys are very real in our lives, so we appreciate you. Be sure to stay tuned for lots of wonderful action coming on next, all the way through the end of the market, as always. As always, thank you so much for watching. We love you all very much, and we'll see you guys next time.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
And this is From Theory to Practice. Welcome to the show. Welcome to the broadcast. Welcome to the Wednesday edition of what it is that we are trying to do. Today, we are going to shoot from strength, and let's talk about leverage for a little bit. So, Ryan, go ahead and get us onto the title slide there. So, how much leverage should you use, right? Like, as a trader, right? As someone who is using derivatives products to kind of, actively manage your portfolio, this is a question that you're going to have to answer at one time or another, because derivatives products by their very nature are leveraged instruments. And so you want to have a good handle on, how much leverage should I be using? And so I wanted to kind of walk through how much leverage you should consider, and it's all dependent on which side of the market you are playing. Are you short? Are you long? That's going to largely determine how I suggest you should consider the leverage that you're going to use. So go ahead and get us into the info. Thank you there, Ryan. So with a short delta portfolio, let's talk about short delta first, because I feel like long delta gets all the press, man. Long delta gets all the limelight. They get all the this and all the that. And I know it's all-time high after all-time high, but one of these days, we're going to be down more than 40 basis points. You mark my words. It's going to happen, at least in theory. With a short delta portfolio, a great reference point for starting to consider how much leverage you should carry is what is referred to as your delta theta ratio. Now, I have to give all the credit and all the kudos here to the Tasty research team, because they are the ones that developed this ratio. This was probably 5 or 6 years ago, maybe 7 years ago now, that really gave us a nice reference point for understanding how much short delta we should be considering. Okay. The delta theta ratio that you want to be targeting is approximately 0.5. Now, your delta, if it's short, is of course going to be negative. So this is 0.5 from an absolute value standpoint. Technically, for all my mathematicians that might be watching the show, it would be negative 0.5. But just speaking in terms of absolute values, it would be 0.5. So what that means is you want one short delta for about every 2 positive theta. Again, the assumption is you're short delta. The second assumption is, of course, you're a positive theta. You're a premium seller. You're selling options, like you're on that side of the fence. So one short delta for every 2 positive theta. Okay. So then how do you take that reference point and move forward? Like, what's the next step? Well, this is on kind of the right-hand side of the middle part of this slide. You want to determine your portfolio theta levels first. So the first thing you want to figure out is, how much decay do I want working for me? Like, how much positive theta do I want to carry in my portfolio on a daily basis? Generally speaking, we tend to be somewhere between, let's say, 0.1% of net lick and 0.5% of net lick in daily theta. And so that essentially means that, if you are 0.1% of net lick and daily theta, you're going to be a lot more conservative. If you are 0.5% of net lick and daily theta, that's going to be far more aggressive. Now, how do you determine where you want to be in terms of that spectrum itself? 0.1% to 0.5% is a pretty wide range. Well, here are a couple of things to think about. Number one, your experience level is going to factor in a lot when it comes to this. If you are a new trader, which I know many of you that might be watching this here today are new traders, you want to be on the lower end of the spectrum, basically irrespective of what volatility might be doing in the marketplace, because you need reps. Right? You need experience. You need market exposure. So give yourself time to kind of, acclimate to the markets. Your account size is also going to factor into this. Maybe not as much as experience level, but essentially speaking, but generally speaking, if you have a smaller account, there are fewer things that you can do. If you have a larger account, there are more things that you can do. And so beginner status or experience level, account size, and then lastly, your risk tolerance. Because the more theta that you carry, the more risk you have on, right? That is a direct relationship. Essentially, the only way to build up appreciable amounts of theta is by taking more risk with more uncovered units or wider wings on your defined risk positions or whatever. But it's all going to be riskier and riskier positions, which is not a bad thing. That's not necessarily a negative thing, but you have to understand what you're signing up for. So if you are kind of more risk averse and you like kind of being a bit steadier, a bit smoother, then you're going to be on the lower end of the spectrum. But if you like taking on more risk and you're okay with that, then you might be on the higher end of the spectrum. But all those things taken into consideration, the one metric that we largely look at to determine what our portfolio theta numbers are going to be is going to be market volatility. It's going to be, where is market-wide volatility right now? Again, understand that historically the VIX is, average about 16 or so. So a VIX at 16 is right around the historical average. So if you've got a VIX of 12 or 13 or like 9, like we saw in 2017 when it was like, man, why did you even get me out of bed today? The VIX is 8.8. Like this is some crazy stuff. That's low levels of VIX. That's a lot lower levels of volatility. You're going to be on the lower end of the spectrum because you're not getting paid, right? You're not getting paid for taking the risk that you are taking by selling options. But when the VIX is higher, so when it's maybe 18, 19, it's around 20 here today on October 15th, 2025, 22, 24. Now you are getting paid for that risk. You are getting compensated with greater premiums when you sell options. So this is when deploying more capital to build up and ramp up those positive theta numbers in your portfolio makes a lot more sense. And so that's essentially how you begin to think about how much theta you want to carry. And then once you have the theta number, the short delta just becomes plug and play. Like the short delta just becomes, you just kind of insert that in to the delta theta ratio. And so remember, I want to find my portfolio theta numbers first, and then my negative delta numbers fall into line. But then the other thing I want to bring up here, and then we'll kind of wrap up this little part of the finding the amount of leverage that you want to carry. We'll do long delta next here. When it comes to the objective, when it comes to the goal of short delta, like what are you trying to accomplish? Obviously, we're all trying to make money. If you're short delta, you want the market to go down, you have a bearish bias, whatever. We're all trying to move forward with our P&L. Like that's a given. But when you have a positive theta portfolio and you're carrying short delta, you might have a bearish bias. You might have a downside bias. You might have a hunch to the downside. That's all fine and dandy. But the short delta is essentially there to accompany the positive theta, and it's there to protect the positive theta. Because if you are selling premium, whether you're short or long, it really doesn't matter. You want the theta to be the real driver. You want the theta on your portfolio or in your portfolio to be the thing that is moving you closer to your objectives. The short delta is really there. Yeah, you're taking a shot, you're doing this, you're doing that, whatever, but it's there to shield at least some of that positive theta. Now, what do I mean by that? Remember, when you sell options, what are you largely exposed to? You are largely exposed to big volatility spikes, big volatility expansions, right? Because when you sell options, you're short volatility, you get paid when volatility contracts. So if volatility moves in the other direction, where volatility expands, now all of a sudden that's going to hurt your short options positions, and you're going to be showing, potentially losses on a lot of your positions, short puts, short calls. It almost doesn't even matter at that point if the volatility expansion is significant enough. Okay, well, what do we know about market volatility and market prices most of the time? They're going to move inversely, especially when you have a big volatility spike, like we just saw in just the last couple of days. I mean, the VIX going from 16 to 19, the VIX going from 17 to 21. I mean, those are pretty big moves in volatility that almost always is accompanied by a big market drop. Well, if there's a big market drop, what is going to help me? My short delta, because the short delta is positioned for a big market drop. And so just keep in mind, like when you're thinking about the delta of your portfolio, when you're thinking about the side of the fence that you're on from a directional bias standpoint, and you're thinking about positive theta and the role that it plays in your portfolio, it's helpful to remember, all right, what is the objective of each kind of role player here? Like positive theta is kind of the star of the show, but then the negative delta, what is that really there to do? It's mostly there to protect your positive theta. So that is what to consider when it comes to determining how much leverage you want to carry if you have short delta. All right, so Ryan, go ahead and bring us into the market. Man, let's take a look at this. All right, so we did a little short delta, and of course, if you guys saw the skinny on Monday, I did essentially the same piece on Monday, but man, that went so well, and I got such good feedback from you guys on that. I'm like, man, let's do that again. Let's do that again. And there were some things I added today that were not there on Monday when I had a chance to think about it a bit more. So even if you saw Monday and you saw it today, hopefully, the Venn diagram, there was a little bit of non-overlap between the two segments. But of course, it was very, very similar. So what I want to do is, man, let's take a look at the market. Look at this. Even the S&Ps up 16 on the day. Man, they were just down 30, I think, a couple of seconds ago. Weren't they up like 75 this morning? And now they're up 17, but we'll take a look at kind of the action today for the E-mini S&Ps. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, just for the record. But we know practically on the streets, we know what it is. NASDAQ up 120. You got the boomers only up 10. And then you've got the Russell 2000 Futures Index up 13 on the day. You got bonds are down. You got notes are down. You got oils down. You got UB40 is down. I mean, gold. Man, this is really, I mean, I've never seen anything like this before. I've never seen anything like this before. And I'm not talking about like, you know, some like new company, like a GameStop, like whatever. I'm not talking about like crypto and like all this like brand new, like novel stuff. Guys, we're talking about bullion. We are talking about the same bullion that they were talking about in like 1 AD. Like it's the same stuff. It's the same stuff. And this stuff is up 70% in like a year or like 6 months or whatever. That's insane. That's really, really, really crazy. Gold up to 4,200. Man, what's silver doing? Wow, look at this. You got SIL, which is your micro silver. SI is for the big dogs, of course. SI is going to be the same price, essentially. They might be out by like half a penny or something, but it's going to be very, very close. Silver, $1.70, up $1.76, up to 52.37. Man, is that a high? No, that's not a high, I don't think. I think it got up to 52.5, right? Like a couple days ago. Actually, I guess that day was just yesterday. A couple days ago. That was yesterday. 52.49.5. Silver hit. Now it looks like it's gonna, it just made a run for the high. Oh, it didn't quite get there. So 41.5. And so it's making a run though. And I mean, you know, $1.70 for silver, that's kind of a low day. Like this is a bit of an off day for silver. Like, you know, you've got obviously chest on Monday, back on Tuesday. You got legs on Wednesday, which is an off day. And so of course today is Wednesday. There you go. Silver only up $1.70. It's perfect. You got gold up 55. It's unbelievable. I really, truly can't believe it. And so let's go ahead and I see you guys in the chat. And I appreciate you guys, man. I appreciate you guys so much. And I'm counting on you guys. I'm counting on you guys for, you know, these educational pieces on YouTube, man. I'm counting on you guys getting in there. I'm counting on you guys for the watch time. I'm counting on you guys for the comments. Like I'm counting on you guys for all that stuff. And so, you know, tomorrow we'll do long delta and then you guys will see it come up on the YouTube channel this weekend. And don't forget, we also have the latest crash course is going to be released this weekend. And so I mean, that's brand new stuff. You don't even know what's going to happen in there. It's going to be the same B- humor that you've become accustomed to. I can assure you of that. But the rest of it should be new. Like the rest of it should be brand spanking new. And so that's going to be on Saturday. So I'm really, really excited about that. But let's see here. Man, look at you guys. I see Dan Ducarn in the house. DTM is in the house. Stephen Bivens, man. Look at you guys, man. Wit 7. RC Mindset, man. I'm not digging these usernames on YouTube. They really botched it there for the I see Anne Marie is even here. Man, they really botched it for the user experience, but you know, nevertheless, I mean, they're the powers that be. They're telling us what's going on. Like we're not telling them what's going on. So all right, let's go ahead and man, look at today. Wow, we got a couple things happening here positively in the portfolio. So number one, look at Bank of America, guys. Look at Bank of America. You know, it's funny. Like we're up 60 cents on the trade. This was our earnings play from this morning. This is a nice little start to earnings season. It's so interesting because, this is so perfect. Look at this. So look at this. The Bank of America, for those of you that might be listening to the show, the audio only version of the program, Bank of America is right now literally 52. My short strike on my butterfly is 52. So we could not have arrived at a more perfect price. And here's what's crazy. I'm only up 60 cents. Like I'm only up 60 cents. I could make another $1.10 out of this strategy. So I could essentially go up another almost 200% on my profits on the position, even though I've hit the perfect price. Now, why is that the case? And this is something we've talked about many, many times before here on the show. When you have a butterfly, and this is why I like Wednesday, Thursday butterflies a lot more than, you know, Monday, Tuesday butterflies, because even choosing the front week, it's hard to make a lot of money. Now, I'm not going to necessarily be super upset because it is a green trade and that's good and that's positive and whatever. But still, it's like, man, you know, we worked our tail off. Like I spent at least 3.5 minutes going over this trade yesterday. And all I'm left with is 60 cents. Like, come on, man. Come on, man. And so we got the perfect price and we were not able to get anywhere near max profit. That is nothing that we did. It's nothing that you did. It is a testament to the structure of the strategy. And so you just have to understand that for these butterflies to get anywhere near maximum value, you have to be very close to expiration. And this goes to show you that 2 days away is just not close enough. like 2 days away, it's still not really that close when it comes to wanting most or all of the extrinsic value to come off of the options. Of course, all of it would only come out at expiration. And so most of the extrinsic value coming out, it's not going to happen until Thursday, maybe even Friday morning. And so that's why a Wednesday going into Friday, a Thursday going into Friday are going to be my preferred butterflies. But, I mean, the gimme that comes alongside that gotcha is when you do a butterfly earlier in the week, you may not make as much money, but you have more opportunities to make money. And so again, it kind of depends on what you're trying to accomplish and kind of what you want to go for. But I'm super happy with this trade. I'm going to take it off. I'm not going to leave it on because that doesn't really make any sense to me. And also remember, I mean, at Tasty, I mean, there's no commissions to close. And so, they're going to get you on the way in, but they're going to kind of, pat you on the rear on the way out there. So let's go ahead and let's close out of this butterfly. Yeah, $1.43. I mean, that's fine. If they'll give us $1.43, that would be super nice. I mean, you can see it right here, just so that you guys don't have to take my word for it. Commission 0. I mean, fees, obviously, again, you got to pay the man a little something, for his time. But that's still a lot better. Like, that's a lot better than getting hit on both, of course. So let's go ahead and boom, we got approved for $1.44. So there you go. That covered our fees on the trade there. So Bank of America is over and done with. It's like it never happened. So we move on. Guys, look at Rigatoni. Look at this thing, man. It's crashing. It's crashing. Rigatoni down $3. Again, I mean, it's basic stuff. It's penne. It's farfalle. It's not rigatoni. Forget about rigatoni. Rigatoni is old news, man. It might even be like your standard spaghetti. It's not rigatoni. And so rigatoni down $3.30 today. Man, that's really, really nice. Obviously, we're still getting completely crushed on this strategy. But this could be, have we just found a little glimmer of hope? Do we see a bit of daylight there at the end of the tunnel? Maybe. Like, potentially. And so I like where we are. I mean, let me rephrase. I'm okay with where we are. I don't love it. I don't even really like it now that I think about it for an extra second. But I think we're gonna be okay, especially if Rigetti computing goes down just a bit more there. So, by a bit more, I mean another $10-12 would be perfect. And so we've got a 32-42 inverted strangle on. We're going to sit tight. We're going to do nothing and just continue to play the downside. And so that is Rigetti. And then, man, look at Starbucks screaming higher. A lot of people have been asking, with emails and whatever. A lot of people have been asking, somebody's coming in my studio? Okay. A lot of people have been asking, it's like, man, I'm doing my show. I've been doing my show the same time every day for 10 years, and here we are. And so, man, that's pretty funny. But anyway. Oh, they're leaving now. That's good. They're shutting the door, so that's good. I remember so this is funny. If you guys have been watching the show for a while, you remember this. So we got our house done. So quick little tangent. Hey, I'm doing my show. I can't help you. Excuse me for 1 second. I think that's my daughter. Hey, go see mommy. That's my daughter, Amelia. She's like, Daddy, hey, go find mommy. Baby, I can't help you right now. Okay, so we're back. So anyway, so we're getting the house remodeled, right? Sorry, I got a little thrown off there. But so we're getting the house remodeled. And this guy comes in and he says, hold on a second. Hey, my show now. Okay. All right, so, oh my gosh, it's too funny. It's too funny. So she's out there with one of her little friends, and oh my gosh, kids are the funniest ever, right? So she's out there with one of her little friends. They came over, right? She's banging on my door. You guys may have been able to hear it, I don't know, but you obviously saw me have to deal with that. So she was knocking on the door. Do you know why she was knocking on the door? She was knocking on the door to tell me she's okay. She was knocking on. It's too funny. I can't even get upset. It's too funny. It's too cute. But anyway, so we were getting our kitchen remodeled, and this was like 2 summers ago or whatever. And one of the contractors came out. I didn't really know the guy very well, but he knew I was out here, but he didn't know what I did for a living. So he came out like one day when I like needed to pay him, and he came out like in the middle of the show, and he was like, hey, I need to get paid. And I was like, I can't do it right now. Like, I'm live on the show, whatever. But anyway, that's pretty funny. So I appreciate you guys. So much. And I mean, that was our assistant. I should have asked her for some advice. Like, we need help. Like, what should we be doing for Rigetti? What should we be doing for, Palo Alto? Like, she's right there, and she's got reinforcements. And so, oh my gosh, man, it's too funny. But anyway, I digress. So where were we? Man, I don't even know. Yeah, so Starbucks, I'm not selling premium simply because it's still way below where we bought the stock. So again, this is an investment style covered call. So we sit tight, we do nothing. And if it keeps rallying, and that's going to be that. So, all right, so let me see here. But that's pretty much all I wanted to talk about here today. Let me look at ES though really quick. I meant to bring this up earlier and I forgot. Let me go into, let's do a 1 minute. Let me just do like a 2-day. Wow, man, look at that. So they actually, they squashed him a couple times, right? So if you look at ES, yeah, on the rally, on the open today, ES was all the way up to 67.65. And so it's rallied back from being down to 66.51. So it's come back about 50 points or so. But still, like when you look at the totality of the day, it's like, man, where are my Fibonacci retracement bros? That looks like about 71.8%, does it not? I'm just eyeballing it. It's just me, you, and the multifocals. That looks like around 71.8%. And so I don't know. This could be a good entry point. I'm not sure. I'm not a Fibonacci bro. I'm not even going to pretend to be one. But yeah, ES and Q obviously is following the same type of thing, and similar type of situation. You had the high right off of the open, and then boom, they just squashed him. And then gold, of course. Gold has followed basically nothing but an up day. Or actually, it doesn't look like that when you look at it this way. Wow, look at that. It's been very back and forth. Very back and forth. So lots of opportunities to do basically whatever you wanted to do today to try to make some money in the old bouillon. And so there you go. All right, so where are you guys at? Let me see where you guys are at now. Man, look at you guys. I appreciate you guys. Man, look at you guys. Oh, you guys are so patient with me. I appreciate you guys. You guys are giving Amelia so much love. That was Amelia, by the way. I have 3 children, but that one was Amelia. The older 2, I think, would know not to come in here. But you guys are really making me laugh. You guys are saying, why didn't you have her come out? Oh, that's so funny. That was a big brain Joe said, why don't you let your trading assistant on live? Maybe I will do that. Maybe we'll do that one of these days here soon. And then, oh man, it's too funny. Sam Alson's our favorite intern in the house. Just bring her on the show. I should. She would think it's the most unbelievable thing ever. Like, she would think it's like the most unbelievable thing ever. So I might have to do it one time. Joel James says, go help her. Yeah, I had to finally go do something. And all right, let's see. Ash Fan is digging it. I appreciate you guys, man. I appreciate you guys so much. So let me see here. Let me find somebody. Okay, here we go. Joel James. Right, right in the middle. Looks like a trading question. I may be fooled here in a second, but I'll give it a shot. So Joel James says, Dr. Jim, help. Dr. Jim, help. Would like your perspective. It seems like for the past year, if all you did was sell puts, you win. The second I add any sort of short call into my portfolio, I'll get burned. You're 100% right. You're 100% right. And, it's important to remember, right? And let's step away from like derivatives for a second. Let's step away from like being an active trader for just a second. And just remember that in a bull market, especially one like the one that we're in now. I know we had, the tariff crash of, 2025 on Friday. We had the cooking oil crash of 2025 just yesterday. But now that those things are, they're here and gone, like we're back, baby. Like, don't even worry about it. It's important to remember that in, one of the greatest bull markets of all time, the best trade on the board is just going to be long delta. The best trade on the board is just going to be owning shares and pretty much not doing anything. And so you need to remember, this is where the whole line of how everybody's a genius in a bull market comes from. Because you buy anything and you're doing great. Which again, by all means, for like your long-term holdings, retirement accounts, I think everybody should have some chunk of their assets in some kind of passively, just long delta. You own the market. You're going to make your 8, 10, 11%, 7% a year, whatever it ends up being. That should be a chunk of everybody's asset picture. I've been saying that for years. I've been saying that when Tom was here every day. Now that he's gone, I'm 100% going to say, because I think it's 100% true. But I do think there's so much potential with what what we do that it's such a nice complement to the rest of your assets. Now, how you split it up is totally up to you. Like whether you do, I don't know, 50-50, whether you do 75-25, like 75 passive, 25 active, whether you do 75-25, 75 active, 25 passive. It depends on a lot of things. It depends on experience level, it depends on, return objectives, depends on your, your skills and abilities, availability, like what type of schedule do you have in terms of trading and things like that. All that stuff factors in at that point. But you are correct, Joel, that selling puts in this market has been the best trade on the board. Like without question. Now, should you not sell calls like ever again? Like, should you sell standalone calls? I mean, I don't do it that often. I don't really think most people should do it that often. You want to take a shot every once in a while as like a short-term play, a scalp, whatever, go for it. But a standalone short call, don't love it. A short call with a short put for a short strangle, very different than a standalone short call. I've even talked about this just recently, but remember, you're getting paid so much on the short put because of the volatility skew that it's it changes the dynamic of the strategy so significantly that your break-even points are so much better. You have a lot more premium to go around, things of that nature. And so short puts plus short calls, very different than just short calls, in my opinion. Should you ignore short calls moving forward because the short puts have been so successful? No, I don't think so. I think that the short strangle, it's second in my book. It's behind the short put. There's a reason why the short put is my favorite strategy. And I've been saying this for years and years and years, right? Because you get so many things working for you, right? You get the positive drift. You get to take advantage of the bull market. You've got decay. You've got high probability. You have a lot of things working for you. Now, again, it's gimmies and gotchas, right? So what are the gotchas? Well, when it doesn't work, it can get pretty nasty. Like when it goes against you, like it did on Friday, if you sold some puts on Friday, like you were taking some heat right out of the box, like right out of the box, man. You were already taking significant amounts of heat. And so, it's gimmies and gotchas, but short put still is the number one strategy for me. So if you want to keep leaning on short puts for a while, I say go for it, right? And, keep going for it until you don't want to go for it anymore. But I would not completely ignore the short call with the short put for the short strangle. I mean, again, just pop into the old Google machine. I don't know. Google's like 2017. Pop into Claude, pop into Grok, pop into ChatGPT, pop into Meta's AI, whatever it's called. I don't even know what it's called. Pop into one of those guys or gals and whatever they are, one of those its. And are they still its? Are they sentient yet? I mean, if they're not sentient yet, it's close. It's real close. And so anyway, guys, gals, its, whatever. Pop in there and Google market measures short strangles, market measures strangle P&L, and you'll see for yourself, like it's actual data, like it's actual results, actual empirical findings. So that's what I would do. But Joel James, thank you so much, my friend. Let me see here. Where are we at? Org Denu's in the house, says greetings from Italy, Dr. Jim. What's going on? What is your opinion on jaded lizards? I think it's jade lizards. I don't know that they're jaded. Maybe for some they might be, but and how would you manage them? Thank you, and always the best show on YouTube. A++. Thank you, my friend. I appreciate you. So jade lizards are great strategies. That's obviously going to be a Liz and Jenny strategy. I don't do them that often. I don't have a good reason why necessarily. I know a lot of traders really, really like them. I would probably, because a jade lizard is a neutral strategy, but the way it's set up is you have no risk to the upside. So you're selling a put below, and then you're selling a call spread above. So it's similar to a strangle from the standpoint of you have unlimited risk to the downside, but you don't have unlimited risk to the upside. And that can be really, really nice in a bull market because you have that neutral region where you still make money on both, but you have no risk to the upside. So if the market just keeps, going higher and higher and higher, then you're not going to continually get peppered on that short call to where it's causing you all kinds of fits and all kinds of problems. And so that's really, really, really nice. Not to mention, with a short call spread, the long call that you buy that's further out of the money, that guy is going to, be less expensive because the volatility skew typically drops off as you go up in strikes on the call side. And so it has a lot of advantages working for it. The one thing I don't like about it is because by buying that call, even if it is relatively cheap, it is going to take down the overall premium collected. And so compared up against like a short strangle, the differences can be quite significant in terms of what you're able to bring in. But again, you don't have any risk to the upside. And in a market that's incredibly strong like the one that we're in, if you're like, man, I heard Uncle Jay yesterday, like it's QE infinity. It is back. It is 100% back. So if you're like, man, I want to be a part of this. I think we're going way higher. I think we're going to 7,000. I think we're going to 7,400. I think we're doing whatever. Then the Jade Lizard might make a lot more sense than the Short Strangle. And so that is how I would essentially kind of stack up a Jade Lizard relative to a Short Strangle. And then as far as like the management techniques, I'm not as privy. I've got to really, that's a Liz and Jenny question because I don't use them that often. It's kind of like a zebra, right? Like there's a few strategies where I can get you started, but in terms of like giving you like, the subtleties and the nuances that you can only really acquire by kind of being in there in the strategy, like, with real prices in real time. And it's not just like a podcast episode or like, a YouTube video, right? Obviously the irony of watching this very show today. I don't have that when it comes to a Jade Lizard. And so I would actually ask Liz and Jenny that. And so let's see. Kimberly Thomas in the house. What's going on there, Kimberly? Appreciate you so much. Stephen Bivens. Man, look at this. I see Dan Ducarn. We're talking about some books. Oh, there you go. Okay. Trading ETFs by Darren Wagner. All right. I've not heard of that one myself, but maybe it's solid. So thank you there, Dan Ducarn. Like we're all in this together, man. This is a team effort. Yeah, so Sam L, what's up, Doc? The midweek dose of chaos we didn't know we needed. Having the show on Wednesday just proves it's the best on Tasty. I don't know that it proves that. I think it more proves that we just ran out of arms in the bullpen. I think it was just kind of like, man, we got nobody else to throw out there. Is anybody left? Oh, Dr. Jim's left. Let's toss him in that slot. And like, here we go. Here I am, just eating innings, right? I'm the Jamie Moyer, of the squad. I'm the Rich Hill of the squad. And so yeah, but I'll get you some innings. I can get you some innings, no problem. But yes, there was a lot of chaos today in the market, man. That's really crazy stuff. If they take them down again today, that's gonna really be, man. It's like, what are we trying to do? I don't know. Like, I mean, it's like up and then down and then up and then down. And I mean, we're not talking about like 10 points or 5 points. I mean, we're talking about, EMI S&P's up 60, EMI S&P's down 30, EMI S&P's up 50, up 22 now. I'm gonna laugh when they close them down 27. Like that's going to be pretty crazy. But again, that is, the VIX is, I mean, you can see it yourself, right? The VIX is just over 20. So with the VIX just over 20, I mean, that's what the VIX means. That's literally what it's showing you. You're going to see movements like this. It's not going to be super calm. Like a normal, quote unquote, normal day, it's going to be a lot of fluctuations. It's going to be a lot of back and forth. And so, yeah. So let's see, Ordenu, let's see where I'm at. Where was I at? Scramble everything. Hey, Dr. Jim, this about sums it up. Here we are, born to be kings. We're the princes of the universe. Just don't get dinged for copyright infringement by the algo. Glacier freeze time. Yeah, the algo's in control. There's no doubt about that. So hopefully they don't ding us on this. But thank you there, Scramble everything. So Sam L, the doc, keeping us learning, laughing, and slightly regretting our fallen BBY position, education, entertainment, and emotional damage all in one episode. Oh my! Don't tell me it's over 80. I don't think I can handle. Okay, 78. I couldn't really handle over 80. I don't think that would have been very damaging to the psyche. Especially when we held on for so long. And then we finally cut the cord and it bounces over 80. That would be difficult. That would be very, very difficult. Not quite as difficult as learning that Domino's Pizza was up 17% today on nothing, but it would be up there. Like it would be in the conversation. Wolf's in the house. What's up there, Wolf? Ash Finn's in the house. What's up there, Ash Finn? I appreciate you, my friend, so much. Let's see. Grumpy Mike says U.S. regulators are poised to offer capital relief to community banks. According to Bloomberg, yes, that must be the reason. Is that the reason for the rally or the reason for the crash? See? It can kind of go either way. And so Dan Ducarn's digging the commercials. That's good stuff. Sam L says Bank of America never disappoints. Just like a double scoop of our favorite pre-workout. It hits hard, it gets the heart racing, and it leaves the P&L Open bros questioning life choices. Yes, our little 60 center in Bank of America, we really stuck it to them. Like we really got them good on that one. And so, yeah, they're not going to soon forget it. That's for sure. Jared says, melt up into the close after all the fun. I don't know, man. That would not surprise me either. If they just rip him right back up to the highs and ES closes at like 67.70 or something, get a little NASDAQ at like 25.1, 25.2 maybe. Yeah, that would not surprise me at all. Sergio's in the house. Let's see. Scramble, say bye-bye to Papa Powell. Hello, Helen Moran. Oh, did they announce Did they announce the new chair? Is that one of the things that happened today? I didn't see that yet. But you guys let me know in the chat if that's one of the things that happened today that could potentially help explain what's going on here. But let's see. Jared Kramer says Dr. Jim is here to save the kids. Yeah, apparently I have to save my own while I'm doing the show. Like I don't even get a break while I'm like at my show, doing my show. No breaks, not at all. And so let's see. I see Wit 7. I see RC Mindset. Well, look what the cat drug in Dr. J time. That's right, my friend. That is right. And then there's Joel James with the question, the surprise and delight from earlier. There you go. Dan Ducarn says, where's Dan Ducarn at? Oh, he just said, oh, hello, everyone. What's going on there, Dan Ducarn? It says it's crash time. Yeah, I don't know about that. It's cancel crash time. Let's see. Joe YQ in the house. What's up there, Joe? Sam L says, Doc, a real question. Does soy protein count as pre-workout tariff if you drink enough of it? I think it has to, right? Because I think soy protein is at best a net wash. Like soy protein is at best like net neutral, right? And so I think you're getting tariffed on that pretty significantly. You caught me off guard there with it's a real question when it really kind of wasn't. And so Half is he 17, also known as Brian Dowdy on the streets, says, hello, Dr. J, can you play UAL? So I know which direction to play it in. Ah, yes. I see what you've done there. Let's do it. Man, how about these Wednesday shows? Like we're a part of Wednesday earnings now. Man, so that means, we'll do UAL here in a second. So that means Uncle Jay, like we're there. Like I'm there. Like tell me where to be and I'll be there. Boom, we're here. NVIDIA is always on a Wednesday. Boom, tell me where I need to be. Boom, I'm there. Right? Man, this is great. I think NVIDIA is always on a Wednesday, right? If memory serves me correctly, I think that's right. Hold on. Let me bring up NVIDIA just to, you know what's funny about NVIDIA? Okay, so it's 11:19. I don't know. I don't really feel like figuring out if that's a Wednesday or not. But you know what's so funny? So I did the career thing at last Friday, right? And I was talking to the kids about stocks and whatever. And I even got my own kids like super excited about because they're not like trading or anything yet. I mean, Penelope's 10, but I'll probably start them off just buying some stock. I don't really want them slinging puts just yet. A little bit young for that, but it's coming, obviously. Short some Nasdaq futures, right? But the funniest thing was. When Penelope got home, she's very excited. Eli's kind of like, I don't know if I want to do that or whatever. And I'm like, well, okay, that's up to you. But Amelia's kind of into it too, but Penelope's like super into it. So she was asking me a lot of questions about the stock market and she'll sit with me like when I'm in my portfolio and I'm doing whatever. Like she has a lot of questions, but now she's like really excited about it because she kind of wants to like start investing. And I'm like, let's do it. 10. I mean, that's a pretty good time to start, I think. So we were talking about different companies. And the best thing, and you guys are going to be very happy to hear this, we were talking about NVDA. And I said, yeah, NVIDIA, like NVIDIA this, NVIDIA that, NVIDIA whatever. And so now she's saying NVIDIA, Eli's saying NVIDIA, Amelia's saying NVIDIA. So this is how you change the world, people, right? You need to be the change that you hope to see in other people, right? And so now the NVIDIA legacy lives on. And that is NVIDIA. Very exciting stuff. And so anyway, NVIDIA 180. I think that's a Wednesday earnings. So we'll do that. We'll do that when it comes around. But UAL, so United Airlines. Man, I'm really not a United guy. I'm more of a Delta guy. We've talked about this many, many times. So I kind of think, are we going to try to cheat? Can we try to cheat the system here? What about a downside butterfly? I mean, it's Wednesday going into Thursday, right? What if I do a 103.97? Oh, hold on. No. 103. 97, 91. Is that like $1.50 maybe? $1.32. Okay, so this is how warm-up sets should go, right? We did Bank of America. It was like $1 or whatever. We're doing United Airlines. It's $1.30, right? Then we're going to we'll get the warm-up sets done, and then you've got your Netflixes, your Metas, your Microsofts, whatever, where it's $3 here, $5 there, like however many dollars wherever else. And so I like this trade a lot. So Brian, there you go. We're going to play it to the downside. So you can pretty much buy whatever out of the money call you want to buy. And it should work out really, really well for you. 103.97. Now, anyone, because if you're brand new to the show, you should do the opposite of me on any directional play. I know I got Bank of America right. I don't know how that happened. Maybe it's the start of something new. I don't necessarily think so, but it is theoretically possible. 103.97.91. Let's do it for $1.32. Let's give it a shot. All right, so we got filled. Man, the markets are good. So $1.32. That's good stuff. So United Airlines, there you go. All right, there. Brian Dowdy, thank you, my friend. I appreciate you. Miko says, I am not a new trader. It just seems that way based on my performance. Hey, you are not alone, my friend. You are not alone at all. And so, but thank you so much for that laugh there. That's good stuff. Anne Marie's in the house, says, my favorite smile segment. Man, look at you, Anne Marie. I appreciate you so much. I'm going to send you that cash that we talked about for you putting that in the stream at this very time. And so you got a brand spanking new 20 coming your way. Could be in the next week. It could be a couple of years. I wouldn't wait by the mailbox necessarily, but it is on the way. So Stephen Bivens says, Schwab allows me theta up to 12.5 times my Netlick insane level, by the way. That is pretty insane. That is totally insane. And so not recommended, not suggested by yours truly. I think 0.5%, 0.6% is very, very high levels of theta. Very high levels of theta. And so going beyond that would not be something that I would generally suggest. Let's see. DTM, shout out to Dr. Jim from San Francisco. What's going on, my friend? Kimberly Thomas says gold is heading higher. Man, tell me something I don't know, Kimberly. Right? I mean, every day is the exact same. And it's not gold going up like 10 or 15 points. I mean, this thing is ripping through 1% to 2% a day. I mean, these are like fake internet furu gains. These are like screenshots on Twitter gains. Right? It's like, man, that's crazy stuff. Crazy stuff. But let's see. Oh, Dan Ducarn's getting long some type of gold or gold miner. Let's see. Oh, the Preston. Here we go. Dr. Jim, I'm generating a lot in short-term capital gains. Some problem, I know. That's a very high-quality problem. But what are your thoughts on in-the-money leaps for long-term capital gains? Sure. I have no problem with that whatsoever. So you basically would be doing that as like a stock substitute, I'm assuming, right? So you're probably buying like a 90 delta, 85 delta, using that as a stock substitute. I actually really like that a lot because you can save a ton of capital by doing that. Now, a lot of times it depends. It also, so if you're actively trading this, like if you're actively trading like a 90 delta option that's in place of like a stock or it's in place of like a future, like you could do it that way too. You're going to get a lot of capital savings by using the in the money option. So you're going to save a ton on the available capital. You can then use that for whatever you want. You can be on the sideline as dry powder. You can use it for other positions, like whatever. The trade-off, the gotcha, is the spreads on the options, especially the deep in the money ones, are going to be sometimes significantly wider than what you would have in the underlying product itself, whether the underlying product is a stock or it's a future. So if you're doing it all the time, you just have to be aware. I still think it can be a big part of what you do in terms of the capital savings and whatever, but just understand that you are going to be paying more in a bid-ask spread differential, and that could potentially, come back to haunt you too. Like if you get a move that you want and you're trying to get out, you may not be able to get out. Like you're trying to get out, you may miss the price that you want, and then it gets back away from you. Like I can say from experience many, many times that I've been there. So I know what that feels like. And that's largely going to be a product of the illiquidity in the money options. Now, again, if you're choosing like ES, if you're choosing, or SPY, if you're choosing NQ, MNQ, QQQ, these are highly liquid instruments. But even still, you're going to see the markets kind of widen out a bit. And if you're going to like individual stocks, it could be an even bigger problem when it comes to the spreads. Like, for example, like here, let me just look at one really quick. So like if you look at like NVIDIA, for example, you can see like to actually buy the shares, you're looking at penny wide markets, right? I mean, 1 penny between the bid and the ask, because this is one of the most actively traded stocks that's, in the whole market right now. But if I go to the trade page and let's say I want to use, a deep in the money call, and I go to like the December cycle, because you said leaps, right? Yeah, leaps. So, I mean, December is not even like, let's do January, 93 days. That's like a baby leap. That's not even like a leap. But if you go to like, if I go to like a 90 delta, right? Oh, wow. Actually, that's not too bad. I thought it would be a lot worse than this. You can see it's only 30 cents wide. It's actually not that awful. I thought it would be $1, maybe $1.50. That's not too bad, but you can see it's still significantly wider, right? So we're going to see that when you're comparing the option markets relative to the underlying instrument markets. That's not uncommon, but that's not too bad. And so again, I mean, it's going to largely be dependent on, what kind of stock you choose. But man, I'm out of time. I can't believe it. I looked down. I'm like, whoa, I'm out of time. But guys, I appreciate you. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering to Trade. I'm your host, Jamal Chandler, and today is a live Q&A. It's about you, so would love to hear what you guys are looking at, what you're thinking at. Of course, I'm going to tell you what I'm looking at, and I'm thinking nowadays as we enter a market that seems to be showing us a little bit more volatility. I know a lot of us are saying, oh, there's no volatility in the market. I don't think that's actually true anymore when you look at what currently is going on in the state of things. I think just since last Friday, we have definitely entered an environment where there's a little bit of volatility going on. When you got VIX above 20, that tells you something is actually happening in the market. And I don't think you can go around and tell your friends there's no volatility, because it's there. And I think we're teetering on an edge, if you ask me. So let's dive straight into it. Let's pull up the platform. Let's take a look around at all the stuff that I'm talking about, because there's a lot going on here, and you can't dismiss it. The S&P 500 today did not touch a new high, but it was up nearly 70 handles this morning, right? We were upward. The high was 67, 66, and then, of course, we faded basically over 100 points. So 115-point range today. Look at yesterday, 129-point range. The day before, 81. Obviously, Friday, we had 266 points of range. Prior to that, look at this, 51 points, 49 points, 55 points, 31 points. So, yeah, folks, I think there's a little volatility here in the environment. Now, I think a lot of times we all think of volatility, we think of, down move, big down move like Friday, right? But volatility can still occur in an environment where markets are up too, or even slightly up, as we're seeing right now. Take a look at VIX. When you look at the VIX futures complex, the V contract, which is October, which expires next week, well, technically, we're in a little bit of backwardation. This one is trading over the very next month of October, of November, by a nickel as of right now. And then that's trading under still December, but they're all basically right around the same area, kind of flat. So, we'll see how it goes. My brother Mike, man, I didn't do any GDXD. This thing, you know what? So I looked up the holdings, and it says it's 78% GDX and 26% of GDXJ. It just makes me wonder, what kind of move do you need from gold to get this thing back up to do $2? And I feel like it would need a sizable move for any of that. So, I'm sure this is a good one. I mean, you can load up on shares, that's for sure. You know, my biggest fear about something like this is that the gold move to the downside doesn't happen as fast as we would like, and this thing ends up just staying kind of where it is, or maybe going up to $1, which again, I'm sure is a huge win if you have a ton of shares. My biggest fear is like a reverse split in this thing. That's my biggest fear. And how many times has it done a reverse split? I wonder. But I know people are, you're the first person I actually heard looking at this. I'm sure people are looking for alpha in the gold space. I just prefer selling the MGC contract, honestly. And I'll tell you what, because I always kind of give you guys an idea of what I'm doing in the Tasty account, which again is Tasty Mechanics, and what I'm doing in potentially other accounts that I have. I have 2 other accounts that I kind of trade regularly. And one of them right now in the Rogue account, I have GLD calls in there, honestly. That's really kind of one of my 2 plays for gold right now. And I know if you've been listening to me on this gold short, I've talked about how I've had a short MGC contract, and what I've often said is I was probably going to sell it out for a close. I got it at 4,000, got short. I was going to sell it probably at 4,200. We got close to it yesterday in the after hours here, where we got upwards of 4,200. But I always said it was the fashion in which we did it. Now, if we had pulled back big and then went up to 4,200, I'd probably be scared. But we're still well above this green line here, which is the 1-week moving average. And that's really what I'm waiting for. That's kind of my cue. Like other times where we've gotten strongly above this, look at July, we got strongly above it, and then we got a fade, maybe even a 2-day fade. I'm kind of looking for something like that. And nothing crazy, honestly. I would like to see it just go back towards, maybe a fade below 30. I'd say a fade down to, I would like to see a fade below 3,900. Nothing wild, I would say. That would be very helpful, obviously. But essentially, I like being short as this thing gets really extended above the 1-week moving average. So you see it again here in September, and then we got a fade. It wasn't very long, and so that's the other thing about it. It's not going to be a very long fade. If I felt that, there was a 3 times leverage, and I'm sure there probably is, 3 times leverage sort of energy play that was in the sort of, under $1, I'd probably buy that, because I feel like when that crashes, that market crash is going to crash. I don't necessarily know if gold is going to crash, 10% over a 2-day period. As much as I would love that, I feel like that's what these 3 times leverage type of products are made for, because then you get a 30% move, right? If gold crashes 10%, you get a 30% move in that stock, and maybe that gets up. But I just don't know if 5% is going to be enough for one of those 3 times leverage. So to be honest with you, that's one of the reasons why I haven't played it. I'd like to see something. I wish that thing would already reverse split. Honestly, they should reverse split that thing now, that GDXD. It would be nice if they reverse split that thing to like $60. Then I think we could get a meaningful move, because then if you get a 5% move in GDX, right, that's like a 15% move. And right, what is it, 3 times? Yeah, 15% move in the GDXD, and then if it were a $60 stock, that's a bigger move, right? Like that's a bigger dollar move, and I feel like that would work more. So that's kind of one of the reasons why I'm not looking at it. But I mean, I don't blame you. It's pot odds. I mean, it's cheap. It's very low. Why not see what happens? I mean, something could happen. I see somebody mentioned AMD. AMD has been strong, man. So I still have this strangle in there. God, I'm waiting for it to calm down a little bit. This is another one where maybe I just end up sort of, I might end up sort of folding on this soon, more so than just like a gold short. I feel like, this and Oracle, if you see the show, I closed my Oracle short strangle the other day. I just kind of got tired of it. The stock has not really stopped moving a whole lot, and the vol really hasn't come in much. So if you listen this morning to the morning show, actually, Nick Batista was talking about this. You really haven't gotten paid in something like a Oracle where it's high IVR. There's a lot of volume, but the stock is continually drifting higher to some degree, not as much as AMD, of course, but the vol just hasn't come in. And that makes me wonder, and there's no earnings here, right? And the implied vol, and this is a massive name, and the implied vol is still in the 50s. It makes me wonder if there's like an event coming out that's going to push the stock even higher. So for that reason, I just decided to close the Oracle short. And AMD, I'm kind of feeling the same way soon too, especially since this already has earnings baked into it. Again, I don't usually sell names that have earnings coming, but I sold earnings in this because, well, I just figured, after this huge move, at some point there was some implied volatility on top of the earnings vol, and maybe that would come in, but it's not. So this is another name I'm keeping an eye on. I'm watching day in and day out. We'll see. Nat Gas, I still have a strangle in here. I know it's fallen more recently. It's getting to the point where it's starting to. This is $3 and change. This is the November futures. I'm in the Z contract, which is 366. So I feel good about my strikes here. 320, 510. Matter of fact, if I wanted to, I could move my strike up, I suppose. I mean, is that worth doing? I guess maybe. I could, hold on, let's see, /NG, Z5. I could move this strike down to 460 at this point. I guess $1 away is probably not a crazy idea. Oh, what does that look like? Yeah, still 16 delta. We should do that. We should do that. And it's twice what I'm getting right now. Let's do that. Probably a good idea to do. Close that. Only $100 credit. There we go. Yeah, so I'm going to keep this strangle on for a little bit. Vol is still fairly elevated in there. We'll see. What do we got here? Questions. Kumar, Target. What do you got here? You're okay. You are in Target. Nov call. 745 debit. The which call? The Nov 95 call. Okay, you paid. So you paid 745 for that. You're playing for a call ratio. The long Nov 92 of the short 2 of the Nov 95s. Okay, you want to sell 2 of the Nov 95s. Sorry. Short that. Sell an extra one of that. Well, Again, this is an earnings cycle. And I would be a little bit nervous personally about doing that one. If I would do any one of those two, I know you like the $1.50 credit, but I would personally prefer doing, if I'm going to do one of these, I would personally prefer being short the 100. Again, this is, you're already at the 90. You give yourself a little bit of room in between the two. You actually get a lower breaking buying power on that situation. The only thing, of course, you have to be cautious about is Target has been on lows for some time, and all it takes is for some positive news, like what we just saw in Walmart the other day. Target could end up having the same thing, right? And you saw what that's done for Walmart stock, that they had some news around OpenAI. So, Target tends to copy Walmart a lot. I would be a little bit wary about that. But if you're not worried about that, and even with that, I think this trade could actually still work. Even if you get some news, maybe it gives it a $10, $8 to $10 move, maybe a 10% move. I mean, that's about, what did Walmart do? Again, that's a good way to sort of estimate your potential risk here. I mean, Walmart was trading 102 before that news. It's gone up $6. That's not even 10%. So actually, I would prefer to do that. If I were you, I would prefer to do, if I'm going to do a call ratio, I'd rather be long one of the 90s and short 2 of the 100s. That's kind of how I would do. Let's see. Big Brain Joe, would a Jade Lizard work in what per se? Just let me know what name you're talking about there. But yeah, look at this. Markets are really kind of trying to bounce back to some degree. They're not getting anywhere near the highs of today as of yet. Earnings tonight. TSM put this on today, actually, during Options Trading Concepts Live. I did the 320 calendar. You guys know me. I love me some calendar call spreads. And I figured I would just do, I usually do look to do multiple, but I don't know. I'm just wondering how big of a move could this potentially make? Maybe it's worth doing a 325 as well. Let's see. Yeah, why not? How much did I pay? I paid earlier, though. Oh, I paid $2.25 earlier. How funny is that? Well, the stock has moved up some, or at least a little bit. We'll do 220 for the next strike up. It's fine. Publish the follow feed. Another one that has earnings tonight is, who's the other? Earnings play. Oh, pens. I see Dean Valenzuela asking me about pens. What about it, my guy? You got a question on it? You got a trade? You interested? Anything you're interested in doing? Let me know. Pens is not a name I've traded in a while. It's had some very wild earnings more recently. But if you got a specific name in pens, a Jade Lizard in that gas. Yeah, I mean, I think that'd be a good idea, honestly, for you. Again, I got the strangle on and I just adjusted. I'm gonna sit where I am, but I could totally see a Jade Lizard right now. And again, I think you're able to do it. Maybe you're able to do it. I'm not. Let's see about strikes if that works for you. Again, you don't want to get too carried away in your downside, but just pay attention to not this price. This is for the November contract of the nat gas. If you're going to do this expiration, make sure you're paying attention to this 360. You would want to use this. How far apart you go can depend up to you. Again, this is a dime. You could go a dime apart if you wanted. That's a trade you could do. Again, it's pretty decent actually. And again, you're collecting 13 cents. This is a dime in between, so you have really good upside. Sort of upside break evens there. It looks pretty good to me. Let's see. Hold on. Let's analysis. Let's take. Oh yeah, it's just showing me that, right? Yeah, I mean that'd be pretty sweet in a way. This doesn't seem right though. I don't think this is the real. Yeah, this is not what I want. Just pay attention to that. Upside would look pretty good in this. Again, your biggest worry will be downside. Well, you know how a Jade Lizard works, though, but you could work with that one. I think that would be pretty nice, actually. Long on IBIT, huh? Yeah, I'm curious to see what's going to happen here with Bitcoin. I'm actually kind of waiting some. I'm waiting to see if Bitcoin has another break. If it does have another break lower, I'll get long IBIT. That is definitely going to be the vehicle in which I'm going to do it. No zebra as of yet, but it is something I am paying attention to with this drop right here. I'm wondering if Bitcoin has a little bit more to go. Again, I kind of feel like the market is teetering, and I haven't really jumped in with too many longs. Matter of fact, I've been reducing some over the last 24 hours just to try to get some cash in case we get another Friday-like move towards the end of the week or something. So yes, you picked the strategy if you were compelled to do something specifically with the 11-day to expiration. Well, I don't want to. Let's see. There's another earnings name I know I want. Oh, UAL. UAL has earnings. I should have probably done the trade earlier. Mikey and I were talking about an earnings trade in UAL. Mikey did it, I'm pretty sure. I should have done it when the market dipped, and that was my idea. But I was looking at doing a diagonal in here, the 105 and Dees, and selling the 120. And November, right now it's 668. Let's just make it 670. You can buy this. Obviously, this is a $15 wide spread, so the most you can make is $8.30 or $830. That would be a nice little trade if this bounces, of course. I mean, it is at the end of the day a directional trade, and we need UAL to do its part. Hopefully it says something positive on earnings, and by positive I mean like this current level of oil in this environment is very low and very beneficial for our business. I hope that's something that they say, because that's one of the things with these diagonals or any of these calendar call spreads on earnings. We need some positive news essentially on earnings. So that's what I'm hoping for with this trade here. Let me just go ahead and check that. So that's supposed to be tomorrow before the open. I also sold tomorrow Iron Condor. Did this also earlier today on Options Trading Concepts Live. Mikey and I both did this. Did a 5-point wide, basically at the expected move at the time it was. Did the 66.10, 66.15, 67.20, 67.25 Iron Condor. So that's what we're doing here. Strategic resistance, I tend to agree with you. Most earnings I'm going to kind of sit out. Maybe some of the big ones are interesting to me, especially the ones that sort of dictate certain things in the economy. I think UAL is one of those, right? It's about travel. It's about, what consumers are doing, where they're going. And so I find that one kind of fascinating for earnings in general. this is the other thing with the O-close and the NNEs and the SMRs of the world. I'm actually waiting to see if there is a deeper pullback on these two. I mean, I'll be honest with you, these stocks are probably, they've been flying. We all know it, and the vol is kind of high. You don't necessarily get paid recently in selling some of these. At least if you're selling strangles or something, you got to almost be directional anyway. Selling puts on a day like today is probably beneficial. I chose not to, but I could see why a lot of people would, especially on today's pullback. I mean, SMR actually surprisingly did not pull back. This is one that I had short puts in prior to today, and I decided to close it because, well, it worked out well being short those puts. Steven, yeah, I did close my UNH position. I had a UNH Jade Lizard. Worked out well. I closed it for 45% gain. It was one of the bigger positions in the book, and I decided to close it, gain some capital. We've been moving around quite a bit. I feel like this today, honestly, was a day to give you a break, a breather from a lot of the moves. It just happens sometimes. And I think the craziness maybe resumes a little bit tomorrow with some more of the rare earths, some more of the energy names, the battery names. You know what's been missing from a lot of the craziness has been the Mag 7. When's the last time you heard anybody say, the Mag 7 is so concentrated, there's too much concentration in Mag 7, et cetera? I realized, I feel like that has not happened as much, and it's been all about the AI plays or the talk of AI or OpenAI coming out and saying that they have a deal with somebody. As a matter of fact, the one deal yesterday they admitted with Walmart, I personally thought was refreshing. It was a company that wasn't a tech company that already had chips or some other stuff attached to it. It was something completely, in a separate field. I thought that was fairly refreshing. So let's see. Right now, I mean, everything that you see sitting here on these positions, I'm basically sitting on. I'm waiting until they either work. And for the most part, I have calendar calls as some longs, or I have strangles or short puts as my shorts. And it's kind of how it's going to go. If there's a super interesting trade right now, I'm all for it. I really haven't had to go searching for trades as much, right? Remember, like maybe 2 months ago, we were all, maybe it was 3, sometime in July. July was fairly kind of quiet. We were all looking for certain trades. We'd go to this thing, we'd flip by IVR, and it's like pray that we could find something to sell without earnings. Well, one of the few that I did do that with a long time ago was Accenture, and Accenture has just been starting to work. This trade is starting to work here. It's starting to work, this short I've had on for a little bit of a while. Hims, I know that's one that everybody is favored of selling short. I'm trying not to sell any vol in names that have earnings coming up. I just don't like doing that in general. I know this one is cheap from the standpoint of what you can sell it for buying power wise, and that's probably a draw for a lot of people. But I'm not doing that. Fig is interesting. I did sell a strangle in there not too long ago. I've been short this for a few days now. Short the 55.95, holding on to this right now. And again, I like it because there are no earnings, so that's one that I have on, holding that for a while. I've looked in this space, this NNE. Again, I know some of these names are a little bit jacked, but I have eyed this one up as a potential short. Again, one of these type of names, these are the ones where you think about at night and you wake up in the morning, as soon as you open the account, you hope it's not like up big. That's been the recent plays, right? Like that's how they've been. So I've tried to stay from having as too many of those. Which ones do I have? I'm short BE, strangle, short AMD, strangle, short NG, strangle, short puts in Lulu, short strangle in MP, which actually has done well. I just sold that yesterday, I think. This has been coming in pretty good. Short this Fig strangle, short this Accenture strangle. And we are in that window, we're in that 45-day window here. And so I feel like I should just let these work for a while instead of worrying about anything else. I'm going to let a lot of these shorts and short strangles work over these next, 16 days until we get to 21 days. Why not? I mean, that's the strategy. That's the way with the research. Let's make it work. Let's see how it goes. Other than that, I think this has been a pretty good day, honestly, to kind of sit on hands, if you have. I don't necessarily know about adding too much risk on a day like today. I think today is we are going to get plenty of chances to add risk in the coming days. I feel like, especially with earnings coming, and I'm again, we talked about some of these earnings that are popping up. I'm playing a UAL. I'm playing TSM, but outside of that, I'm not really looking to throw on a bunch of earnings trades as these things come on. Some of them I just want to hear from. I want to hear about what the banks are going to do. USB and Schwab and some of these other ones are coming out tomorrow with earnings. You want to hear what's going on in the industry. CSX is another one. It's like freight and, travel. American Express, I don't know how interested I am yet. We'll see. Again, this is Friday before the open, so tomorrow maybe I look at American Express for some type of trade, but I don't think so. I mean, the stock price doesn't necessarily lend me to want to do anything in general. And so I just felt like today was a good day to sort of risk manage, take some risk off the table, if you will. You need those type of days. I might need to recenter this Ether situation. Maybe I'll do that. I'll do the 28.30. How about that? We will do this. We'll recenter this thing. It's probably worth doing. Although, I got to be honest. Wow. This vol is kind of high. The only thing about selling strangle in this ETH is that you just don't get a whole lot for it. $2.19. I'd rather be long this thing. I don't really care if the IVR is high. Sometimes it just makes more sense. So what I'm going to do is I'm going to close this. And I'm just going to recenter it. Oh, I knew you were going to do that. Replace. Let's do that. Close out of that. Let's do the 28.30 this time around. Maybe 27 even. Get a little bit more delta on there. How about that? Don't be stingy. How about 60? All right, well, hopefully that gets filled. And my play there has always been that, even though remember when not too long ago Bitcoin just touched all-time highs once again, I saw something one day. We were sitting here on Options Trading Concepts Live, and we were talking to Ryan, who of course knows everything about crypto, and he put up a chart and put up some numbers that basically made me realize that Ether's kind of underperformed Bitcoin more recently. So I decided I wanted to get long Ether instead. And again, I don't want to double down yet, as both of these have fallen. If we get to a point where we do see a break of the 110 level that so far Bitcoin has clung on to, then maybe I'll jump in with getting a zebra on IBIT. But for now, I'm just going to keep the Ether working, and that's just going to be the play right there. So, but yeah, I really haven't added a whole lot of risk today, folks. As a matter of fact, I've taken a bunch off. It is, you heard me earlier from the very beginning of the day, and I started looking at taking things off. SMR, I took off. It was a short put. I was up 50% on it. ASML I actually added, of course, but Costco, these were. Oh, I'm sorry. ASML was a earnings play from overnight. Closed that out for a very small gain. Costco, these were calendar call spreads that I had on the 950, 975, 1000. Closed those out. UNH was a Jade Lizard. Closed that out. And I had a yen call diagonal that had been working since the dollar has pulled back, and the yen was kind of oversold. It bounced, and so I closed that out. So I probably did more closing today than anything. I also, again, mentioned the SPX 0-day Iron Condor. Well, it's 1-day Iron Condor, sorry, because it's for tomorrow, but that's mostly been the trading day. Again, I've just been kind of watching here and observing here today, and I really haven't seen many value adds on the day. If there anything, it's been more about closing and sort of getting some capital, getting ready for, hopefully, some more of what we saw on Monday and Tuesday to occur on Thursday and Friday is kind of the way I'm playing this week. So, folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See ya.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Hey everyone, happy Wednesday too. Continue trading in our data-free world. As you know, next week things get more interesting because the earnings will really start kicking in. These days, the only thing you need to know, the only data point you need is the White House staff saying friendly or unfriendly things about China. That's better than any insider trade you could possibly have. That's the only data that matters. And it changes day to day, it changes hour from hour. I mean, today we had like a 500-point reversal in the NQ over the course of a couple of hours just because some not friendly things were said, and that's bounced, and we're up a couple of 100 points almost on the NQ. So it's just, ever since Friday, it's been just like a roller coaster. Having said that, I've got some charts ready for you, and let's thumb through them and see what's cooking. So we begin with a spider. Everything's pretty much up to date, about 0.5% or so. Ever since Friday's big drop, it's been kind of healing. So we have almost undone, I mean, at today's high, we'd pretty much undone Friday's drop. But, you know, as I keep saying every day, it's the wedge that I'm watching that's clearly broken and has established a big new trading range for us. The range which apparently seems to be dictated by the aforementioned Chinese sentiment. Here's the diamonds. Also a little red bar. The only thing the red bar means, of course, is that the present price is lower than the opening price. And we are hanging out roughly near lifetime highs on this. We actually today got above the highest point on Friday, so clearly what happened with the 100% tariff threat on Friday is a distant memory at this point. Over in Cube land, up a little more heartily, about 0.8%. And the lifetime high on that was on Friday. It also did a pitch perfect job tagging the now broken trend line. And the past 3 days have just been a grind fest. As you can see, some pretty long shadows above and below each of those bodies on the candles, and no real clear direction, except very generally speaking, healing since Friday's big washout. Of particular strength lately has been the small caps. These are at a lifetime high. They are at a lifetime high on an intraday basis. They're probably going to be a lifetime high on a closing basis. They are above their broken trend line. So a bit of a mess there. And we'll look at the longer term perspective on the small caps a little later on. But jumping overseas, as far as the EEM goes, this too is a bit cloudy because same trend line, same failure. This one on Friday, quite dramatic failure. For Pete's sake, I don't know if it's... Switch back. Hang on. My mouse keeps goofing off on me there. I don't know if that ever happens to you, but we seem okay. Anyway, we had this big plunge on Friday, and then Monday, Tuesday, Wednesday, playing hopscotch with the with that trend line. Some things are clearer than others. It's getting messy. Friday definitely threw a monkey wrench into the works. And very, very broadly speaking, the fact that gold and silver are just blasting the lifetime highs almost every day now, and this debasement trade everyone's talking about is getting so much attention, that doesn't say great things about the future of the U.S. economy. I mean, it's great if you own a lot of gold and silver, if you own gold miners, but it's kind of a pretty loud ringing, clanging bell about what's really going on with the value of the trust in the U.S. and its importance, the value of its currency. So just saying, we'll get back to precious metals in just a sec. China is also up over 1%, and this is still below its broken trend line. So this has been a weaker market. So that trend line is helpful because you can at least tease out on a relative basis what's weaker than others. Like the small caps, for example, have shaken that off completely. Whereas China still seems quite prone, understandably considering the trade tensions, to that weakness. So we're well below the broken trend line in that case. One thing I find kind of interesting is the semiconductors. And this, of course, is a big ETF that has NVIDIA as its principal component, but also things like AMD and Intel and so forth. So a couple of things to note here. First, as I mentioned, pretty much on a daily basis, this is one of the few ETFs that has not broken its trend line. It is still in an uptrend, and we got perfectly close to it on Friday, but did not fail. However, and I haven't seen anybody mention this, I think it's worth noting, look at NVIDIA. Now, NVIDIA has been the absolutely foundational to this mega rally, to this AI rally, to this semiconductor rally, and it is not holding itself in good form right now. Let's see what's going on. This was at a lifetime high on Friday. And this line here is important because that is the gap that took place between Monday and Tuesday. And so to my mind, that is a minor point of resistance right now. It also roughly defines, take note of this bullish pattern right here. So this is a nice bullish setup, but what happened afterwards is just a mess. This is not what you want to see. It went above and below the line. Yes, it pushed higher eventually, but it gave that all up. And curiously, today and yesterday have all been below that gap. And 2 red bars in a row. A little bit odd, considering the market is so strong, the incur's up triple digits again, and it's having this kind of performance. What's coming to SMH's aid, I believe, is the likes of AMD, which is up almost 9% today. So this kind of saved its bacon. today, and it's looking like a lifetime high close on AMD as well. So it's this kind of daily company A and company B make a deal, Oracle and OpenAI, or NVIDIA and Anthropic, fill in the blank, whatever it might be. So AMD has been shoring things up, but I think it should be noted that NVIDIA, which is crucial to the support of tech and of SMH, isn't doing so peachy. Okay, now let us turn our attention, as we have been doing daily lately for obvious reasons, to precious metals. They are doing splendidly. And so the front month in gold, for example, is up, almost $64. And getting speechless at this point. $5,000 gold this year could happen. $10,000 gold in the next year or two could happen. And it's really bleeding into the public sphere. When gold was just ambling along at $1,300 for the longest time, it was just Dullsville. And a year or so ago, when I kept yakking to my friends about precious metals, the response was always, gold's boring because it's gold. It's the same stuff from 4,000 years ago. It's not NVIDIA. But gold has been just a superstar. And although we're all waiting for some kind of eventual easing back, I think long term it's just going to keep just tromping higher. Silver, 3.11% on SLV. And I would just point out a little bit of an interesting tidbit. Look where we're at on a long-term basis. Just about a perfect tag on a nominal basis, remember, not inflation adjusted, of where we were back in the spring of 2011. And as I've mentioned, on a real money basis, I think silver's got a long way to go. I talk about $10,000 gold. I could just as easily say, $100 silver or $200 silver, who knows? Because it is not in any normalized terms anywhere near its lifetime highs. But on a nominal base, it is kind of interesting that SLV is approaching, and it'll probably be at a lifetime high for the entire history of its existence as a financial instrument. Miners, naturally, are having a grand old time. They're up over 4% today, lifetime high on those. XME is quite lofty, but it is throwing a bit of red right now. Let's adjust this. So the trend line on this one is clearly unfractured, but a little lifetime high on an intraday basis for the XME, but a little bit of sinkage there. As I've said over and over again, my dream would be for, please, Palladium, come on, give me another chance. I won't do it again. For this to ease back to this wonderful basing pattern here. It is just such a dynamite chart, but it's just, I think, too risky to get into at these levels. What else is cooking out there? Well, bonds are starting to look a little bit weary. They're down about 0.25%. And if they keep sinking, if interest rates start to tick higher, I think that would kind of spoil the party for the home builders. My biggest profit now nominally is DHI, which is D.R. Horton. And that has a lovely top right there, which we've pushed right up against. It is, even on a very green day like today, we are starting to reverse away from that. It's down more than 1% right now. So yeah, watch those home builders. I would also say other intriguing short setups can be seen with, for example, Salesforce, CRM, Hilton Worldwide, HLT, that's down not quite 1%, and Murphy Oil, MUR, which is flipped more than 1% lower today. Oh, and one more, a little risky here considering its strength. I've gone ahead and entered a small short position in Palantir. It hasn't, obviously if it gets above this, I'll be out of there in a shot, but it has not completed that right triangle. And yeah, got a tight stop on that one as well. So I'm seeing we're getting close to the bottom of the hour. Let me just jump to the bottom. We got almost dollar symbols done today, so yay. But I'll just jump to the very bottom. This is the RTY futures, these small cap futures. Lifetime high on this And as we back far, far away on this, you can see that we do have a completed cup with handle pattern on this. So it's absolutely plausible. You can make an argument for this being, strange as it sounds, consider how much it's gone up already, good days ahead for the small caps. This, you can see here, month after month after month after month, we've been banging out these green bars. April, we set in this huge hammer bullish pattern. So as long as we can sustain above this admittedly broken trend line, but we're above it now, things look good for the small caps. If we start to sink below that again, that should set off some sirens. Okay, well, that's it for me today. Thanks for coming by. I'll see you on Thursday. Good night.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
seen you in a while. We raced home, got here. I'm gonna go see your brother after this. But you know what? It's been a wild ride since we left the show because spoos were down, then spoos came back up, but not up enough. Do you want to jump in the platform?
Oh, yes, let's jump in the platform. Not up enough for our put spread that we sold. We sold in the beginning of our show when we went over a study, we sold a put spread, just a put spread. And as soon as we sold that put spread, the market went down. I think spoos were up, 45 or 50 when we put this on. And
entering trades mechanically will teach you where the market was because we sold the
at the market was 60.
So
yeah,
6,700.
6,700. So 30 points higher. 30 points higher, right? So 55. Yeah, spoos are up 55 when we placed that trade, and I don't think we've had an uptick since.
No, I mean, honestly, though, but we were red on the train. We were down about 30. So this has been, it's been kind of going all over the place. Let's take a look at the bar. I want to take a look at the SPX. I mean, I know it's not going to look that crazy, but if
you go to the minutes, if you go to the daily minutes, it's going to look crazy.
But I mean, you could see the low. I was just going to go high and low, and I can go to the daily minutes if you want to, but the high is 67.24. That's probably about where, I'm just kidding. And the low was 66.12. So that's significantly lower than it is here.
Right. We had a wild range. Do you remember there was a period of time where we were, and I wish I could remember like studies and results and what to do, but I remember a period of time where we'd have these days with wild ranges intraday, but have a small like open to close move during those days. Do you remember this period, and do you remember the studies back then?
No.
Okay, I'm gonna have
more sugar, Jenny, more sugar. Give them to me.
Okay, I'm gonna no joke. I'm gonna call someone from the archives. I'm gonna call someone who doesn't work here anymore. I'm gonna call them. I'm gonna call them after the fact, and it's not Tom. It's someone from our research team who's not with us anymore. But I remember him.
I mean, he's alive. He's just
alive.
not tasty anymore.
I am gonna call him after the show and ask about these periods where we've got these wild intraday moves, but the open to close moves maybe aren't so wild, because that's what we had today. And I think there's may have been a certain type of strategy for those days, or like what came after we had that.
That is true. What came after? We can take a look at those. You get more details, and then we'll take a deep dive into them. I have a question for you now. We were talking about this today. We were only up $100 in HIMS. Now we're up 36% in one day, but it's a roll, so we're leaving that one.
I put that 50% GTC in this morning. I put it in. I said, I'm putting in the 50% GTC. We need all 50%.
Okay, Jenny, we've got you all earnings on deck. I want to see when Delta are. Delta's dividend is today. Okay, tomorrow. But the Delta's earnings have already passed. We've got 4 earnings today, which we never get to look at. United Airlines. And it's still a 5-point. The rank has come up a little bit. Today, during our show, it was a 22. It's 23. I'm not saying it's a big deal, but it's a $5.90 expected move.
Okay, so what I said was 22 rank, 585, 590 now. Expected move seemed low to me for you all. So I personally am going to pass on you all earnings. I just am. I'm going to pass on you all's earnings. I don't want to take the risk of naked options here. I think 590.
Yes, I agree with you. I wouldn't go out there and sell a strangle because the risk reward scenario isn't there. You're going to put up $1,500 to make 90 to make $200 if it stays within its expected move. We've seen lots of movement and things are going crazy. Like, take a look at this. ACHR, this was today. So today it was up a ton. I'm going to take a look at the chart, and let's see the high of the day today. It was 1462. Did you see the news in Archer? I wanted to show you this.
Oh, no, I didn't.
Archer Aviation was to buy Lilium's 300 patent portfolio for $21 million, and the shares jumped. So that was the news that came out today.
Okay. So, and it's right back down. So
that's what I was saying. I literally said that on the show. I go, Archer goes up and then comes right back down. Archer comes right back down. It's a vertical lift technology.
Funny. So you know how we talk about when there's vol in the market and things to do, earnings kind of take a back seat. And I know we're coming into earnings season, but when there's vol in the market and there are things to do, earnings do take a little bit of a back seat, especially if the rank's not high, the expected move doesn't seem like it's enough. Now the move's getting higher. Oh no, you're in the 2-day. That's why I was like, I thought it was the move's getting higher as we speak.
Oh, it is getting higher as we speak because I was in the 2-day.
You're in the 2-day now. You're in the 2-day now.
It was the 2-day. It was 590 just a second ago.
Oh, so it is. The Val's ticking up as the show is going on.
You know what I will use earnings for, and I'm not going to put this in our account because 1,500 is a little bit too much for it. But in you all, like it's a stock that I'm sometimes in, sometimes not in, and I've been in it for a long time. I actually got in decently low, rode it all the way up, and then I couldn't take enough because I had sold calls against it. I might wait for the eve of earnings because you're never going to get this far. Like, look, I can get my break even to 95 if it's a product that I wanted to get into on earnings.
With the downside ratio spread.
With the downside ratio spread, because you're never going to see that in a 2-day. Do you know what I mean? Without earnings.
Yeah.
So it's something we might do. We're not going to put it in the show account because, to your point, we don't. And especially with this, we're going to lose about $700 in this today.
Yeah, but that one should not have anything to do with the other.
But they do, because like I think when you're firing on all cylinders, I think that's trading. I think that is it's a head game to begin with. They shouldn't. You're right, Jenny. They shouldn't. But to me, they do. Like I don't want to take that risk reward.
Here's the thing, Liz. I'm not trading you all because it's a 22 rank. They have earnings, so why take the risk? If the rank were an 80 and maybe the risk was worth the reward, I would trade it regardless of that SPX trade. So to me, like one should not have anything to do with the other.
I don't know. So it's interesting. So like here, I'm just going to show you something. This was the study we did today on that SPX trade. And this is my favorite. This is I'm controlling it. So this is my favorite chart, right? So opened 9 a.m., closed at 25%. This is my favorite chart. So this happened to me today. Now we did it at 10:30. Okay. So we did it at 10:30.
We did it right after show, 10:10 probably, like right around if the show started. We got into the.
Oh, I think it says, hold on, let's go activity. Yeah, maybe 10:10ish.
Yeah,
but
we started the
10:22.
Okay.
10:22. That's what I was going to say. I thought it was 10:23. It's 10:22:45. So we did it a little bit later, right? So no big deal. But here we go. Now, this is what this maximum drawdown is. This is the thing that I got the most questions about today on email. Max drawdown means right now we're going to lose about $700 in ours, ish, $650 or something to that effect. And so max drawdown means you start at an unlucky time and you stack up a couple losers in a row, which is a very big possibility.
So that max drawdown was if you started when you had a losing streak, like loser in a row. And so, 4 in a row, you're going to get to this max drawdown. Does that mean, and so on this news, on this slide, this doesn't say to me like, oh gosh, I lost on this trade today, I shouldn't do the trade tomorrow. Because tomorrow morning, I'm going to put this put spread on tomorrow morning.
I know, but it's hard to do it in the show account. That's all I'm saying is, are we going to do it in the show account tomorrow?
No, I think if we were going to do it in the show account, we almost like one of us has to pop in there early and do it early.
That was, I think, I'm glad you came to that concept because I do think that 10:22 is a little bit too late because the pop up is usually around between 9 and 10, in my opinion. And I saw a couple people that were tweeting or texting or whatever this, I mean, I sound like an old person. I sound like a mom being like, I got that tweet, saying that during our show was when it had popped up during our show. And that's when we put it on. I think it was one of the highest levels was at 10:22.
Right. So I think like if we talk about these trades, if you're going to be mechanical, be mechanical. The hard thing is we get these studies. Our show starts at 10 a.m. and we get these studies and we do these studies and we're like, wow, this trade looks great. But we're not on our show at 8:30 when the market opens. We're not on our show at 9 a.m. at the time of the trades. And we're always like thinking, oh, I want to put this trade on, but it's just not a trade for our show because it's a trade to go on in the morning. Now, I know we have done studies. Jacob has brought in studies, putting some of these on later, or the double dipper. And so, and he's going to bring the double dipper into this of, if you put it on once and take it off for a win, can you double dip and put it back on again? So the double dipper would be going on later. And we just had a double dipper study showing like if you can get back into your double dipper trade by a certain time, it's worth it to do it. So
I agree. It's just very challenging when we're going to take that loss that we're going to take today to do it again tomorrow. But consistency is the key. And I've said this in my account. I'm going to try to be very, very, very consistent, meaning that I'm willing to have my max drawdown.
And from all these slides, I like the $10 wide taking 25%. And honestly, for me, like between 8:30 and 9, that's probably the ideal time for me to put it on. And for you too, I think.
I did it this morning, so that's what I'm saying. It kind of depends on the day, right? I did it this morning. Was out in 6 minutes for 25%.
So the question is, do you think one of us should be popping into the show account and throwing this trade on between 8:30 and 9?
Possibly. There's a real possibility of it because, I mean, yes, probably. But I want to show just shameless self-promotion. Jenny Andrews, take a look at this. YouTube, you're in. So if you want to hear more about what we're talking about, Jenny and I go over the 0 DTE SPX strategy live from the SIBO pit, the SPX pit at the SIBO.
Yeah, you can click on that and see me live in my referee outfit. I mean, you know,
it doesn't. If you are a referee, she's gonna blow a whistle. I'm getting you a whistle.
I'm gonna blow a whistle. I'm gonna blow a whistle.
There we go.
Oh yeah, there. Oh, look at that. See, black and white stripes. Told you.
You're in your referee outfit. That's funny. But yeah, there it is. It's on YouTube. Everybody can go take a look and see.
Yeah, if you missed it, honestly, that's just the segment, that's just the piece on just selling put spreads. It's something that we specifically asked Jacob to do, just selling put spreads, because we found that if you're just selling put spreads, you can get in and out really quickly. I think you were in and out of yours in 6 minutes.
6 minutes, right? 6
minutes. So, and I agree with you, Liz. Like, I don't think we can put them on during our show anymore. For a long time, we tried, and it, you know, the $10 wide short put spread is similar to the $5 wraparound call spread, similar to the Jejune, and we did not have successful results with that putting on at 10 a.m. I think it's got to be earlier.
Yeah, I think it's got to be a little earlier. But you know what? We live and learn. There we go. But it is, I think that's great information because it is. I like the fact that it can be done at between 8:30 and 9 instead of 9 o'clock.
Yeah, I think anytime. The results show anytime between 8:30 and 9. Didn't matter. Anything crazy happening today? I didn't really see, you know, oil's down a little.
We have a small oil position. Oil was down.
But a lot of people are in oil because it's been down and the rank was, you know, decent. And so a lot of people are in oil and it's, you know, continues to fall. I think when it hit the 60 level, everyone was jumping in.
Yeah, dipping below 60 was pretty hard. Okay, so you know what I'm going to do? I'm going to go to Tasty Movers, Fast Movers, and we're going to sort by IVR. So take a look at this. And I want to just validate something you were saying. So you were saying you all's got a 22 rank. Now, and I kind of agree. When you all's got a 22 rank, sometimes we're hunting pack where there's no IVR anywhere. So we'll take a 22. Like my bar gets real low when volatility's low across the board. But to your point, I just sorted by IVR and you go down pretty far to get to a 22. It's the last thing on here.
Yeah. You know what's interesting? The top of the list is IREN. Sorry. Well, the only people who can bypass my silencer are my children. They don't know I do an afternoon show now.
Is it number 1 or number 2?
Number 2.
It's number 2.
So
she's number 1. Not she's number 2 in your heart. I meant
number 1 in my heart.
We're talking birth order. Yes.
So we took off a position in IREN today or yesterday. I just want to see what it's doing. Can you go to the chart and see? Yesterday it was way up.
Hold on, I just want to show you what we did. So I ran 7 days ago. So we put it on the 8th and took it off on the 9th. So it was last week sometime.
Oh, it's last week. Seems like
it was last. What's your assumption? Last week, what's your assumption?
Seemed like yesterday. All right, let's go to the chart and see what it's been doing. Is it still straight up?
Still straight up?
99 rank.
And they have earnings coming up, but that rank, so when you see this, that rank has nothing to do with the earnings. It's just high across the board, right?
It's high across the board. Can you check FIG? Can you check the rank in FIG? I saw put spreads in FIG today. Yeah, okay, so 61 rank, and it's not at the top. I know it's up 260 today, but it's kind of had a little bit of a shake up earlier, Friday, a drop.
And this was that new IPO Figma, right? So it IPO'd right around here and you're beneath your IPO price. So that's not a bad place to be.
Yeah, 61 rank in November. Earnings are after November.
Fun fact, we put FIG on the same time we put IREN on, which was 10-8, which was last week's. What's your assumption?
No, but we're out of it. That was closing.
Oh, let me see when we put
that was a closing order. So I sold put spreads in there today. Yeah, we had the 50-55. That was October. Then the 50-55. That was closed. Then we rolled it. Then we closed it.
Then we rolled it. Then we closed it. Okay.
But anyway, I sold some put spreads in there today. It just seemed like there's a lot of premium in there.
There's not. The premium isn't bad. So what did we have in here? We had the 50-55 put spread for 208. That's not bad. I'd put it right back on.
No, I sold the I just made it wider. I sold the 55-45
I wanted to see. We just took this off. I just wanted to see.
Yeah. No, we just took that. We took that one off. But it was just something I got into today. 55.45 for $3. I thought that wasn't bad.
Can we talk about something that you and I have uncovered? And I know we kind of jump around a little bit, but we were talking about those SPX trades. And to Jenny's point, if you were going to take and do 2 of these, so if I was going to double my size in something that's a 37-day option, we would say, no, don't do that. Widen it, right? So you're getting $2. I'd rather get $3. It moves your break even. Those zero DTEs, I think, are the exact opposite.
I think with the zero DTEs, it's a different story. I would rather do. Yeah, I don't, because the zero DTs you can get in and out so quickly, where this is on for a month and it takes a long time to get out.
Yeah, and so that break even really does move.
Yeah, the break even helps you.
And we're talking about SPUs are $6,800 product. Here we're looking at a $63 product. So a break even move of a couple dollars is a lot in a $63 product. But I don't mind being what is Figma?
Oh, we don't have to get back in. I was just looking at my account and looking at what did I do today. That was one thing I did today. I sold puts in Pfizer. That was another thing I did today.
This was fun on the train today. Because she's like, I'm long Pfizer. I was like, oh, congratulations.
Yeah, but you know what? I don't hate my position because I'm always either selling calls or selling puts or making it. I can see when. It's always nice to see your P&L on the underlying total, and when it's a lot higher than just your P&L on your stock position, that means you're actually doing something with options and making money with options around the stock, whether it's going up or down.
Right, because you're winging the prayer program. You're kind of it's a bitter pill to swallow. If you're like, yes, Pfizer, go, and then it plummets right back down. So if you're just holding on to stock, that's hard to watch. But you can keep selling puts. You can keep selling anything. This only has a 31 rank and it's got earnings coming.
But you know what? So when we talked about if you're looking for picking things that don't have too far to fall, or maybe won't get too shaken up, or your risk. This is a $24 stock. Your risk on this. Where could it go? Only go to zero. It's had quite a fall lately. And if you look at return on capital, those November 24 puts, it's using $449. So you're getting $83 using $449. Sorry, in my account, I was only using $200.
Yeah.
That's why I was like, that's a great return on capital. That's
a great return on capital, and I don't mind. We're kind of in Put City USA. We've got a lot of puts on right now, and we've got a lot of bullish positions. Our beta weighted delta. Let me look down here. What do you think for our account? What do you think our beta weighted delta is?
20.
135. Which I think is high for this. Let's do this. I think the beta is giving us
14.
Yeah, I was going to say that this and this SPY is giving us that's giving us a negative.
Yeah.
So down here it's SBET and IBIT, which are essentially the same thing.
They're in crypto, and all the cryptos are down. Like, I looked at my account, everything I have that's crypto is down. Solana, XRP, every crypto is down.
Every crypto is down. And so all of our beta weighted deltas are coming from the cryptos. SBET, IBIT, ETH, SPX isn't, but this is where all your deltas are coming from.
So it's interesting, Liz, if you have your account and you're looking at your beta weighted delta and you realize that your long beta weighted delta is coming from crypto, do you take that and bucket it differently than the rest of your portfolio?
Well, I'm actually glad we're having this discussion, because when I was on with Tony on Monday and Dr. Jim came on, he brought on a beta weighted delta and theta segment. And I was trying to say, you can game it. I don't consider crypto beta weighted delta this SPY. I consider these are different trades. Now, granted, we're not buy and hold. We're not collecting assets here. We're actually selling premium and everything.
Yeah, in this account, this isn't like buy and hold collecting anything.
Yeah, so in my account, a lot of times, because I am asset gathering, and I know I've said this before whenever we've got like Dan on, or I said it with Ryan Grace the other day, I have a tendency to do that with crypto, where when it goes down, I'll buy a little bit more, and I'm more asset gathering than anything else. I do sell premium in it, so I guess this beta weighted delta is true beta weighted delta, but I don't look at it with my other ones. I want to see if there's a delta in. Hold on, I'm going to go into mine.
And because I don't really think of.
So I will tell you, no cryptos go into your beta weighted delta.
Oh, did someone just text you that?
No, I just looked at my account.
Oh, really?
Cryptos do not go into your beta weighted delta just because we're premium selling. It's the options in these that do.
But the options. Yeah. So like,
so if you're gonna, what I'm saying is, if you go in and you buy, I just checked my account. If you go in and I'm buying something here,
like
say
Bitcoin.
Yeah. So say I'm buying Bitcoin in there, that does not go into your beta weighted delta.
No, but all these options. So I just wonder, and I can't remember. Recently, we had a correlation a matrix on crypto versus the S&P or Qs or the market. And do you remember how correlated were they?
They were not that correlated.
They're right. That's what I in my mind, I don't think, like, I almost wish we could remove the deltas of our crypto positions from our beta weighted delta.
So you got 45, 60s, 75. 75 of our 130.
So cut our delta in half.
Yeah.
Oh my gosh, my child keeps calling. Hold on.
She might need something. Did you watch Dr. Jim today? Because Amelia came into his room and was like, I'm okay, Dad, I'm okay.
Yeah, I know she's supposed to be at her tutor at 3, so I'm just making sure she's not in a car accident.
Oh, yeah. Make sure she's not in a car accident.
Yeah. So anyway, like when she kept calling and calling and calling, woke me up at 5:30 in the morning when she hit a brand new Mercedes in the Target parking lot.
Yes, a parked Mercedes.
Yes, a brand new 2025 parked Mercedes.
Yes, at 5 o'clock in the morning. Wasn't that on Black Friday?
On Black Friday, she had to be one of the first shoppers in the door. Go racing in the dark.
I remember when I used to have that type of get up and go. We've got about 3 minutes left, so we're not getting the end of the day rally that we were looking for. As a matter of fact, the Dow has stayed red all day. I mean, nobody quotes the Dow. Why is that even on there?
Well, because like the public does. The public does.
Yeah.
Okay, so let's just put a mental note in our head. UL is trading. Let's look at UL so we can check it in the morning. $6 expected move.
Oh, I'll tell you because I'm in UL.
So $6 expected move. It's 104. That's the only real earnings we're watching. But I think, when we have earnings and we have a crazy market, the market can move these things, right? So whatever earnings happens, if there's a big move in the market one way or the other, it's going to move these products too.
But and I've seen a decoupling with UL and American Airlines and Love and all these things. Oh, I was telling you, Vanetta is telling me is getting a fourth wind, a fourth lifeline. But so I've seen a decoupling where UL went up, and the rest of them didn't. And I have no idea why. I'm not in the industry that much, but I know a lot of the stuff has to do with oil and gas and all that stuff. So we'll see. But Delta already had earnings, and I don't know what their move was.
Yeah, go to Delta and take a look at the chart.
Maybe you can't really
tell. Down. It must be that down day. Or no, that was Friday.
No, that was Friday.
That was Friday.
Down day.
That was
And so
Friday.
you really can't tell from that.
Yeah, no, you can't. Again, when the market's having such crazy moves, you can't tell. Now, as far as the market, how are you setting yourself up for tomorrow? Is there anything you did, like going into tomorrow thinking we've had these wild moves? I'm going to do this, getting ready for the rest of the week.
I have tight stops. So I'm literally like tight stop lids right now, where I am taking my profits quickly and I am protecting profits. And I'm willing to give up a little bit of profit potential for tight stops and protecting profits. I am quick to take things off these days. Quick, like the 36% in Disney, gone in mine. Like I sold it yesterday with us. I already took it off. But that's because I have a bigger account. I can do that. We need 50% sometimes.
No, it's fine. If you want to take some off because the market's whipping around, sure, go ahead.
Yeah, that's all I was saying is like, so I did right before the show, I took off my puts that were in Disney, but now they're not up as much. Now we're only 20%. But if you take a look at both of these, it was 33%. It's with the calendar. I sold puts yesterday too and took it off this morning.
Okay, so I just want to clarify so people know, when you say tight stops, you're not putting on stop losses.
Stop gains. I'm just saying I'm keeping my head down and I'm taking profits where I can. Stop gains.
Okay.
Because this year, I mean, I've been doing like this market, knock on wood. I'm sure I'm going to regret this tomorrow, but this market has been very good to me.
Yeah, but you have to be, I think when things are moving, you got to be quick in and out of things, right?
And sometimes
and taking advantage of the movement on both sides.
And how are you setting yourself up for tomorrow?
For tomorrow, this morning, we're done.
I know. I just wanted to put a pin in this for tomorrow because look at this return on capital. You are going to make $400 and put up $400. I was going to take a look at that.
We'll look at you tomorrow.
Put a pin in
Stay tuned for the boys. We've got who do we have on? Ilya, Dylan, Mike Butler.
Yep. For overtime. So everybody stay tuned for overtime. Those guys always have a great show. And remember to trade small, trade often.
And watch Tasty Live. We'll see you tomorrow.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
And we are back on yet another seesaw day in these markets. Surely these gentlemen will try to talk me off my bearish wedge. Let's see if they succeed. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan. Mike Butler in Chicago, who looks happy and probably ready to talk me off my bearish wedge because I'm thinking and it's all good. Gentlemen, we have another little seesaw day here. The pendulum swingeth, and it swingeth in all directions, and we end up with nothing. Is the market looking for rallies to sell? Is that what's going on here? Or am I thinking again?
It feels like it.
Well, first of all, I'd like to say that Mike Butler has a charming smirk that is laden with unspoken information.
I saw the smirk. I am,
and he should be granted the floor to make commentary.
Right. I'm excited in advance.
Aren't we all?
So yes and no. I think it depends on what you're trading. If you're involved in the nuclear energy that powers AI, then you're doing just fine. Or if you're a bullish gold and silver, which will never go down again, then you're doing great.
Apparently not.
But yeah, it's fun. I was smirking because this morning when we were up 70, I was literally just sitting at my desk. I'm like, this is the funniest market. It's the most predictable, funny market I've ever seen in my life. And then we went down 20 net. And I was like, ooh, we're crashing. Like everything's over. It's all done. But yes, we are. It seems like we are selling the highs, but we still end green on the days, at least the last couple. But
we ended down yesterday, but it was only. I mean, I don't think it counts.
No,
I think we'll call that unched.
Yeah, but some of the things that we call out all the time, looking at volatility futures. Volatility futures had like a 2-point contango where there was 2 points of a discount between the near term and the next term contract. Now we are looking at a flat curve. So the V, the X, and the Z are all in the 20 handle and change. And that's what we want to see if we expect to see these two-sided action moves continue. So I think that's great for traders on both sides of the market. And yeah, I think it's really just a lot of sector-specific moves. You had your chip stocks like AMD going nuts with TSM, NVIDIA, what have you. And then today you had just an explosion in products like SMR. And yeah, I think if you're involved in the hyper-specific chip AI nuclear energy sector, like I think that's obviously been doing well today. But yeah, I think we are certainly in more murky waters than we were a couple weeks ago. And it's interesting because we have basically 100% probability that we are getting a 25 basis point cut in 2 weeks and another 25 basis point cut in December. And yet we are more volatile than we have been since really April.
Which lends one to believe that rate cuts do not solve whatever the markets are concerned with here, or at the very least that they have so thoroughly priced them in. I mean, we're well north of 90% likelihood on both the October and the December cut if you look at the CME Fed Watch tool. So whatever speculative juice there was to have in speculating on rate cuts and saying, well, if this thing goes our way, and by that we mean it makes rate cuts more likely, that's a good thing. Risk on. There's a reaction function there to go do something with risk sentiment. To go say, well, on the basis of this, I'm going to go buy something or sell something or whatever. There's not that impetus, perhaps, in the Fed story at this point, if what we're looking at is this year. There's still this massive disconnect between what the markets think is going to happen next year and what the Fed is saying, but it doesn't look like anybody is really bothered to reconcile that difference here and now. That seems more like a let's look at the economic data kind of thing, and obviously with the shutdown, there is no economic data. So if there's no economic data, then there's nothing to speculate about beyond what's immediately in front of people's noses. And that part is so locked in at this point that perhaps the Fed story is just not a story. I mean, Powell actually said something of kind of substance yesterday in the sense that he signaled that quantitative tightening is maybe months away from being over. Markets could have taken that as encouragingly dovish. They didn't. They didn't care. Mirren came out today and said a bunch of Mirren-ish things. Nobody cared. Maybe we're just done with that narrative until there's data and we can think beyond these next two meetings.
Might I offer a few comments in the spirit of the first principles analysis as it sort of aligns itself with modern parlance?
Yes, please, sir.
So let's work on base assumptions we can all agree to and take it from there. First and foremost, we're in some version of an AI supernova bubble / exuberance. Call it what you want.
Without question.
But it exists. Whether you believe in it or not doesn't matter. AI bubble / supernova.
I mean, that's just a function of numbers. We know this empirically.
So take that as a first principle of this market. Second first principle, the President of the United States is an egotistical loon bird, capable of saying anything at any time, specifically targeting China. Fair?
Certainly no shortage of cuckoo birding vis-a-vis the trade war situation.
I'm not saying he's wrong, but I'm saying the President of the United States is a fruit bird / loon bird with a specific hostility to China.
Certainly no shortage of aggressive statements vis-a-vis China coming out of the White House. This much is clear.
So two first principles. One, AI supernova / bubble. Two, president of the most powerful country in the world, anti-China fruit bird loon bird. Fair?
Fair. So far, so good.
Three, worst year in 50 years for the US dollar. And I don't know what the metrics are on gold, but I got to figure it's one of the best years, if not the best year ever for gold. So it's an anti-fiat year.
I would say that story ended in July, because since July, which is now some amount of time. I mean, it's been 3 months. I mean, that's not nothing.
2 months.
That's not nothing. But the dollar bottomed in early July. We are now in mid-October.
I'm less dollar focused than I am gold, silver focused.
Yeah, gold and silver, to Mike's point, apparently
extravaganza, sir.
Extravaganza. They apparently could not care one iota about anything. They're just going higher.
So I've got a gold extravaganza. I've got an AI supernova / bubble. And I've got the president of the most powerful country on the earth as an anti-China fruit bird loon bird.
And by the way, in the tradition of anti-China birding situations, going back to not just even the first Trump administration, but to some extent Obama and Biden, because a lot of the steps taken, for example, against Huawei, against ZTE, that kind of set the stage for what then becomes this. It's been coming.
What's been coming precisely?
A more combative stance against China, as inspired by China's more combative stance under Xi Jinping.
Make it a referendum on the behavior of the American president. We're going first principles. AI supernova / bubble.
Yes.
China-US rhetoric / policy, sort of heated.
Hot heat.
Hot.
Yeah.
Fiat currency / metals enthusiasm at an all-time high.
Without question.
Fed in a rate cutting cycle, to Mr. Mike Butler's point.
Mm-hmm.
So let's just stop there. Is there any other first principle that either of you think that I'm omitting from this proposition? That's a sort of an organizing, unequivocal, undebatable, indisputable fact of the current market dynamic.
We still, I would say, have a war in Europe that shows no signs of.
Don't care.
I mean, it exists.
With all due respect, don't care.
It exists.
Irrelevant.
I would say that the non-response to the ending of the other one in the Middle East would suggest that indeed, yes, it doesn't matter. Nobody cares.
I mean, in the scope of, if we're thinking purely a market, a sort of satanic, inhumane, market-based analysis, The AI supernova / bubble must be acknowledged. The heated China-US rhetoric must be acknowledged.
Yes. If the non-response to the ceasefire in Gaza is any indication, then the Russia-Ukraine thing is not even good for a day's worth
So then
of
forget, so it's not in the first
relief.
principles, it's an adjacency. But the other first principle is, to both of your points, highest level of intraday market volatility since April.
Yep.
Right? We've got
to be sure
prone to these big sell-offs. It can get crazy, it can get wild. You know, you can get these.
We're seesawing in crazy
Whatever it
ranges.
is. So you got a ton of vol. You got a lot of China-US tension. You got an AI bubble / supernova. And you got this gold mania / fiat skepticism. How about if we just use
the only thing that I would take issue with there is the fiat skepticism, because bonds are going up in this environment, as is the dollar.
So then how do you justify, so again, and I don't disagree with what you're saying, and listen, I'm long the dollar, so I'd love for you to be right, but how do you express an opinion of the gold euphoria, if you will?
In my
not a fiat based.
In my view,
thing.
What gold is doing is much linked to what dollar and the bonds are doing. They're just doing it better in gold, because gold answers not just the anti-risk, we want a haven, we want to park our money someplace that isn't stocks kind of a dynamic, because it does, to your point, have this anti-fiat thing. But it's not enough of an anti-fiat thing to actually inspire fiat, because fiat is in fact going up. So money is going into places, I would argue, that reflect both the uncertainty of the moment politically in the US, because first of all, we're sparring with China. Second of all, the Supreme Court is due to rule on the lion's share of these tariffs and whether the president can even do them. And that's maybe weeks away. So it's right here, that ruling. And there is clearly this AI thing, which for whatever reason has produced a very steady, very aggressive rally. And now, for whatever reason, the markets seem to think that things are kind of at a price level where they're having a hard time continuing to go higher. Are they fairly priced? Who knows what that even means? As Chair Powell would say about the neutral rate of interest, we can't know where it is. We know it by its works. So we don't know if the stock market has already reached peak or fair value for however much AI hype there is. We know it by its works. It hasn't managed to continue to rally. And Friday was a massive washout. And NASDAQ has been the leader on the downside, despite this idea that this is somehow motivated by the US-China trade war. The Russell, which might be more vulnerable cyclically to that kind of an economic threat, has actually outperformed. The NASDAQ has underperformed, and it's probably the most insulated because it's full of rich, big tech, which is probably the most insulated from China risk, generally speaking. And so with all of that in mind, you get the sense that the market is not so much selling for trade war reasons, so much as the trade war is just another thing in this bucket of we're at record highs. There's these risks that you've, I think, absolutely rightly identified. Let's lighten up. The destination then for capital to go as people lighten up has been the precious metals, the dollar, and bonds. But the precious metals have this added kicker that if the U.S. goes full fruit bird, you're not in the dollar and bonds. So it's not so much that people don't like the dollar and bonds, it's that fiat has this added cherry. Or metals, rather, have this added cherry. And so they're outperforming.
You have to ask yourself, though, Mike Butler, what exactly is a fruit bird?
You do. You do.
That is a great question. That is great. But
How
yeah,
is it that the president of the United States, who is an obvious fruit bird?
I mean, I've been trading and looking at gold for over 10 years, but this is the only time where I've felt like it's very clear that the public consensus is the safest thing to invest in right now, even into this massive rally, is something like gold or silver. To all of your points. So
yeah,
and we keep bringing this up. Like, how many times we got to say it? IV rank at 84, implied volatility only at 20%. It's a joke. It's crazy. Like we had 2 week periods, two 2-week periods where we had a 40-point rally here and another 40-point rally here, and we're not getting another 40-point projection for another 200 days. So like this is the biggest implied volatility blowout I think I've seen in consecutive weeks, months, probably ever. So like it's just very interesting that the demand is so high for this that the markets can't even price implied volatility correctly because it's a gold ETF or gold futures. It's just it's an anomaly that I haven't seen before, I think, is the right way to put it. Outside of like your standard squeeze to the upside for your, heavily shorted stocks that get talked about on Reddit threads. But yeah, it's wild.
But I mean, if you're to go back to the first principles, AI supernova, China super rhetoric, without reference to birds or fruit.
Yeah,
metals mania. You got metals mania, China heat, and supernova. Let's just take those three. Make it real simple. Sort of that there's two perspectives on that. Like if you accept that those are the three first principles of the market: metals mania, China heat, and AI supernova. And you can either be long all three, long gold, long the Mag 7, short Nike, I guess, short the FXI, long, US domestic auto parts manufacturers, whatever the manifestation of the China heat trade is. Or you can be short all three. In other words, if the vectors around which opinions are formed are either in agreement with the supernova, the China heat, and the metals mania, or in opposition to, I think that the most interesting question becomes sort of how do you posture yourself as a trader, either in alignment with those things, in opposition to those things, or in some version of neutrality to those things that sort of harvests volatility or time or whatever it is. I mean, I say this for the benefit of the audience and also for my personal self-interest. I don't know what to do because I'm just as inclined to stop thinking and get long gold, get long the Mag 7, and call it a day, which probably is the right decision based on history, or to do some thinking, get short gold, get short at least Nike, maybe some more China adjacent names, and just hold no position in the Mag 7. I just think we do ourselves a disservice not to observe the actual sort of the core pillars of the entire market dynamic right now, which seems to revolve around those three things, lest you disagree.
I mean, in my mind, you don't need to make a decision that says I am voting for continuity of first principles or not continuity.
Or opposition thereof. You're saying I don't have to have an opinion on those three dynamics.
That's right. I think in the spirit of not thinking,
I love that.
The not thinking here isn't so much as to say, oh, well, I'm going to not think and assume these things persist. The not thinking, I think, lends itself to saying, I'm not even going to have an opinion. I'm going to let the price action have the opinion for me.
I mean, how can you do that look at the market since Friday?
I think if you look at the S&P,
the price
for
action
example,
tells you to call a psychic and depends on the hour. I mean, we're in a full like schizo. I won't insult schizophrenics. We are in a market that is directionless and psychotic.
I think if you look at the S&P here, in particular, as a kind of generalized barometer of overall risk appetite, catch-all, whatever.
Sure.
I think what you see here is fascinating. It's fascinating because the price action is telling you very clearly where its head is at least vis-a-vis the first principle that we are in an AI supernova, which I think is clear. If we were in the kind of blinding supernova that we've been basically since April's lows, the market would be inclined to buy every dip. And we've seen that clearly. Whereas what we've seen since Friday's sell-off is the market is inclined to sell every rally.
That's why I bring up the second first principle, which is the fruit bird principle.
Right. But I think in our analysis of fruit birding as a catalyst to what we're seeing, I think one of the most critically interesting bits is that the underperformer index in all of this is the NASDAQ of all things. And so it seems like people are not...
Make sense? In other words, if fruit birdery is the new first principle adjacent to the supernova, doesn't it make sense that the most vulnerable index to the birdery based on fruit would be the NASDAQ?
Well, and this is the thing. Why are people put off by the fruit birding? Are they put off because they think that there is an economic risk? Or are they just saying, this is erratic and a good excuse for me to take money off the table in the place where it has been the most concentrated?
But also just elevated uncertainty without judgment on anything.
Exactly. And so in my mind, what we're watching here, just looking at the price action alone, just what the prices are saying, they're not saying to me that people see an economic risk in a US-China trade war as such. What they're seeing is a reason to go sell where they've been overexposed, which is the supernova. And
the supernova is the most vulnerable to the China heat. Without getting
not for economic reasons, but for speculative exposure reasons.
Or speculative exposure due to elevated uncertainty. And the greatest beneficiary.
And people just don't want elevated exposure.
Is metals mania. They're all kind of correlated. As uncertainty comes up, the supernova becomes more volatile / vulnerable to sell-offs. And metals mania actually takes on more momentum. I'm only going through this sort of rhetorical exercise in a genuine effort to find a rational trading thesis.
And I think this is where the rational idea comes.
What am I doing here, pal?
Well, so I think this is where the rational idea comes. If we take a look at the NASDAQ here, which Mike has up helpfully, we can put a horizontal line through this chart at give or take 25,000. And we get a very clear line in the sand. And we've tried to get back over this line in the sand, which was resistance, became support, got crashed through like a hot knife through butter on Friday.
Or like a butter knife through hot butter.
Or like a butter knife through hot
Or like
butter.
a fruit bird carrying a butter knife that is related adjacent to hot butter.
I think that's probably the clearest example here. And so
I'm just trying to make Mike Butler smile. Anyway,
so you look at this and you go, okay, well, every attempt to undo the bloodletting that was Friday has failed now for 3 consecutive days. This is telling you something. And that it's concentrated in the NASDAQ and not in kind of growthy areas of the market, that tells you something too. because if the trade war is a growth risk, the price action isn't showing it. The price action is showing the trade war is an uncertainty catalyst that people are using as an excuse to divest from those things where they've been heaviest. And so it's...
But
so,
let's assume we've got a fresh marginal dollar. That
yes.
You've got $1, Mike Butler's got $1, I've got it's a new day.
Yeah.
New day. And we walk into this.
I'm shorting NASDAQ.
More than
and
long,
buying dollars.
More than long. So you're short NASDAQ, long dollar. What about the gold?
I don't touch it.
Nothing doing.
I don't touch it. I'm not standing NASDAQ, in front of the locomotive, and it feels a little bit rich to buy, which is not to say. I mean, I've spent much more time long these things.
Or your long volatility by virtue of being short NASDAQ.
I think you get the exposure that you want, that you would have been looking for in gold, by not buying gold near the highs, but by instead buying bonds and dollars and selling the big indexes.
Selling NASDAQ by virtue
I think it's the same idea.
Spreads or by virtue of directional?
I think buying puts.
Really? Look at you.
I think so, because I think what you want here, gold. I think, at least that's the way I'm exposed at this point.
Okay.
I don't think you want to make the bet that volatility is going to contract from here, because I don't think you know that.
You don't.
I think instead what you know is that it's probably going to like if your bet is that this is the washout, then vol's going to expand.
Yeah. Okay. Mike Butler, what say you?
I mean, yeah, I think when you have big market washouts, the NASDAQ will always be a leader to the downside relative to the S&P, because at least the S&P has...
Would you buy, if I gave you a fresh dollar from my wallet on this lovely afternoon, $1, nothing crazy, don't get excited, would you use it to short the NASDAQ?
No. I would...
You would not?
No.
Would you use it to buy the dollar?
Yes. I think that's a safer or more predictable play.
More higher probability of profit, as they would say.
I mean, I think that's probably right.
Yeah.
And what would you use it to buy a bond?
No.
Not so sure.
No.
Would you use it to buy gold?
Yeah. I haven't seen gold go down once.
Buy gold and the dollar. You would buy gold and the dollar.
So I could buy gold.
Those things have been happening in tandem.
I could buy gold, and then tomorrow I'd have $3 or $4, and then I can buy the dollar.
And then you buy more dollars.
Yeah, but just
Step
from a very
profit.
Yeah, a very easy, just in case people don't realize how concentrated the NASDAQ is. Like when you think of an ETF or a market leading indicator like the NASDAQ, you have to always remember the top 10 holdings make up 53%, almost 53% of the total allocations of the NASDAQ. Like in QQQ,
Mag 7 is the NASDAQ. Basically.
Exactly, right. So when you have anything that threatens the success of the top 10 holdings of the NASDAQ, you get a massive washout like we saw on Friday. This is the biggest intraday move to the downside we've seen since the gap down when the poster board came out on TV for the tariff stuff. So
yes,
Liberation Day.
Exactly.
Yes. The man with the foam.
Exactly.
The original bird with fruit.
But
that, by the way, is going to be a great movie later. The man with the foam board.
The man with the foam board.
I thought you were going to say the bird focused on fruit.
Oh no, fruit birding, the man with the foam board.
Thank you.
But yeah, anyway, to Ilya's point, if you're choosing something to get short and you're deciding between QQQ and SPY, it's 100% QQQ, because based on what I just showed.
But you won't do it with my dollar.
I won't. No, because I'm a perpetual non-thinker. Just buy every dip. Because
you'll have nothing
habitual. Whereas I am a habitual line stepper.
Yeah, because if we look at this chart,
I mean, that's quite a chart. Lay it on us, brother.
Yeah, I mean this is just the beginning of the AI supernova. It feels like it's a mature thing, but it's absolutely not. And for better or worse, I think these companies get bigger and bigger. They get more monopolized in their individual sectors, and eventually, somehow, the Nasdaq gets even more concentrated, if that's even possible. But yeah, I think I agree in the sentiment of, if you think this volatility curve is going to flip into backwardation and all of a sudden 20 VIX futures gets to 30, I would want short exposure in the Qs, because I know that the Qs are so concentrated to the sector that would have a big downside move if that were to happen. And we saw that on Friday, and we would see it again if we do get that volatility spike continuation. So it's nice because, like other ETFs, you know that you're going to get a bigger move in QQQ versus SPY, and QQQ, even into this implied volatility expansion that we've seen since Friday, it's still only 25%. It's nothing. If you want to buy puts or do a diagonal spread, like, you can get a pretty nice return on capital if you are correct. Like, even going December, November, I'm just going to throw up a classic 20-point wide for $10. Like, you can risk $1,000 and you can make $1,000. And even if you get a rally to the upside, you can move this 580 to 590. You can manipulate it however you want. But there's definitely asymmetric return to the downside or upside when you're dealing with a product that is moving in a big way, but implied volatility isn't reflecting that. And you can see that here in gold too. Like, if you wanted to short gold through GLD, this is still low implied volatility. Even with an IV rank of 84, you're looking at 26% IV. And again, we've seen GLD go from 300 to 390 in the course of, let's say, a month. And that's a 90-point move. Where's the next 90-point move? You have to go all the way out to the Jan 2028 cycle. I think it would be 40 at this point in time. That's crazy. So yeah.
Are you suggesting that's old, Mike Butler?
No, it's the new 25. I think
the new 25. I appreciate that.
Yeah, but like, just looking at November. Let's say you're looking for a quick reversal of this thing. Getting into this relative to the notional value of the product. So if I wanted to just get 100 short deltas in GLD and have a 37-day time frame, if we look at the P&L risk graph here, we're basically looking at a stock rental risk graph. I'm putting up $2,800 to short 100 deltas or 100 shares of GLD, which would cost me or have a notional value of 38 grand. So you can get extreme leverage relative to the cost of this thing and still define your risk and protect yourself if it does continue to the upside. So I like zebras and GLD. I like diagonal spreads too, but given the magnitude of the moves we're seeing in GLD and SLV, I think a debit trade like a zebra to the downside, if you want to short it, makes a lot of sense, because you can get big returns relative to the cost on a swift move to the downside. So,
and this is where the price action thing, I think, is the most critical for me as a not thinking toolkit.
You think, because don't lie to us. I know you think.
I mean, I do, but I can't. There's somebody that commented on one of my my YouTube videos saying, knowing the macro is very good, but if you let the macro supersede the price action, you might get your head kicked in.
Sure.
Paraphrasing the kicking in of heads. That's my parlance, but it's right. I mean, that's exactly right. The issue with putting narrative in front of the price action is how all of these people are out here screaming bloody murder about this gold move like it's some sort of dollar devaluation something, when all you need to do is open your eyes. The dollar hasn't set a lower low since July. I mean, that's obviously not what's going on. Bonds are up. if there was really a dollar-based asset devaluation thing that was going on there, if people had lost sovereign confidence in U.S. assets, bonds would be cratering.
They would call it the debasement trade in the
right. This chestnut. If that were real, we'd be in early April where we saw it. We saw the dollar and we saw bonds and we saw stocks going down at the same time. And it was a sell America kind of sovereign risk thing. We know what that looks like, and it's not this. So the problem with letting narratives define what you think, absent the price action, is you can twist yourself into some pretty ridiculous arguments that don't survive contact with reality. And so when you look at, I think, gold, yeah, okay, it's gone up a lot, but as we've clearly learned, nothing in the world says that it can't keep going. So you might be queasy about buying it here because it's gone up so far. I know I am. And I've been long it and silver for most of the year. Where I've taken positions, they've been on the long side. I'm not attempting to sell any of these things. But I'm out, and it's kind of dicey to go buy it here. It feels dicey. But I think in the spirit of looking at the price action, you got to get a reversal signal on the chart, and then you can go shopping for a short. And that short might still be wrong. I've learned that clearly every time that there's been a downtick that I've looked to sell in stocks this year, absent the February to April sell-off, which obviously worked. It hasn't worked. Thankfully, I've had other positions. I'm not only doing one thing. And those have worked more than this has not. But I think you need a downtick, and gold just has no downtick. There's no resistance level against which to even evaluate risk. We had a level like that a few days back where last week, if memory serves, on Thursday, we had a big washout in gold, but it was a one-day washout. But at least that high told you, okay, if this is the high, and that's the last red bar you see here, if that's the high, if we're going down from here, you at least have a point of resistance to say, okay, if you go above that high, then no, it's not a top, the move is invalidated, get out. And that's your risk management framework. Over the past 4 days, you don't even have a downtick. I wouldn't short this until at least there is a move lower to tell you, here's a potential top, maybe.
So might I answer my own question?
Oh, of course.
Not to disagree with you.
A proud tradition.
not to disagree with you objectively and directly. And baselessly, I might add. But I would short the living hell out of gold.
Here or pending some sign of weak behavior?
Right now.
Okay.
It's an absurdity. It's a preposterity. It is a comedy. Are they kidding us? Look,
this is where thinking gets you.
Different issue. This is why I don't have as much money as I should, but that's a different issue. I'm not saying that it's proper.
I mean, I agree. I agree. I have been known to think as well, to my own detriment.
He won't sell gold. He won't sell the NASDAQ, but he's happy to use my dollar for the dollar. That's fine. I'm telling you, short the living bejesus out of gold. Are you kidding me with this thing? I mean,
there will certainly be a day here soon.
I mean,
unclear when, but there will be a day here soon when gold rips people's faces.
I mean, this thing is going to get destroyed at some point. I mean, come on. First and foremost.
Yeah.
I mean, from what level, with what instrument, God only knows. But for the love of all that is a fruit bird, gold must go down in a big way at some point. I mean, catastrophically.
Yes. I think that's the case. I think
we
are going to have at some point.
Just to complete my answer to my own question.
Yeah.
I love long the dollar. I think we could all agree to that. You agree to that. Mike Butler agrees to that, which probably means it's wrong. But anyway, we have consensus on that one thing. And I wouldn't short the NASDAQ because I believe that the heated rhetoric of the president and commander in chief is less inclined to support anything that's NASDAQ negative, but is more inclined to support something that would be FXI or Aussie dollar or China adjacent negative. So short gold, short China, long dollar would be like my fresh US dollar trading events of the day.
So my question is,
sounds like what you want to be is short the Aussie dollar, because what that takes together with it is a short China, long US dollar kind of a bet.
Doesn't take advantage of my short gold sentiment, but yes.
Gold is kind of on an island. If you're going to short gold, you got to short gold. Now, Australia is a big producer of metals, obviously, but any kind of sense that it is a proxy for metals is obviously wrong, because it isn't doing what metals are doing. It's doing what stocks are doing, which is to say falling since last week. So in the sense that the Aussie answers at least two of your points here, I don't think it addresses the gold one. I think if you're gonna go sell oil or gold, you got to kind of do that there, because those things are kind of off on their own thing.
Mike Butler, what?
That was my question: is if you want to get long the dollar, which pair would you utilize, or what is your favorite few pairs that you would utilize? You brought up the Aussie dollar,
Canadian dollar.
Mm-hmm.
I think euro.
Come on, help a friend with
euro, yen. I don't think the pound is great at the moment. It seems to be a little bit more supported over the past 24 hours. I'm short it also, but if I wasn't putting it on, like if I didn't have exposure there already from higher levels, I wouldn't be putting it on now. I like selling the yen here. I like selling the euro here. I love selling the Aussie here. And I'm in all of these positions already. I don't want to get too huge. Buying the dollar against the Canadian dollar also looks pretty good, although I think the Aussie might be a little juicier given that it's China that we're fretting about here, and that's obviously a direct line. So in my mind, you could short the euro right here. You could short the yen right here. You could short the Aussie right here and have pretty good risk reward on all of those.
I just shorted
What about my short gold? What about short gold? Come on, short gold.
I need a downtick. I need a thing. So my biggest kind of lens on everything and for all time is risk reward. Does the bet make sense? Does taking the risk make sense relative to the reward I'm looking to get? There is no way to calculate that in gold until you have at least some kind of a swing high where you could say, okay, if it goes above this, I'm wrong. And that's my risk. Now, how far do I think it can go relative to what that risk is? Obviously, it can go down a lot from here.
Yeah.
So I just need a swing high. Give me a swing high against which to benchmark, and I'm there.
Well, the good news, Dylan, is you can short gold at higher prices tomorrow, most likely. But
thank you, Mike Butler.
Well played, sir.
I did just short the euro dollar. So the nice thing about the Tasty FX platform is these are continuous currency pairs.
I love it.
And shorting the euro dollar means you're shorting the euro, getting long the dollar by proxy. But the really nice thing about this position is if we zoom out on the daily chart, we are near highs, but the swap bid is a positive number, which tells you that regardless of your trade size, if you hit the bid and you short this thing, you are getting paid every day to hold this position. And it's
You're
not
earning positive carry.
exactly. So it's not a huge number, but it is a nice thing to know, like, okay, I want to hold this short position. And the longer it's not working out for me or not getting to the point where I want it to, I'm at least getting paid every single day as an adjustment into your account to hold that position. So I love when positions that I want to have on also offer a positive swap bid if I'm shorting it, or swap ask if I'm buying it.
Yeah.
As it's just like it's kind of like a theta decay component. That's the way I think about it, is like you have the static
in
delta.
the futures, it's very much like a theta decay component, because this same financing cost is built into futures contract prices. And the closer the futures contract gets to expiration, the more it sort of converges on spot, because the more time elapses, the more of that swap degrades out of the price. So if, for example, you wanted to kind of mirror something similar to this, and you wanted to give yourself the most positive swap, you could, for example, go and short the M6 contract, but F6 rather than Z5, and just give yourself more time to the expiration of that contract. You'd have more positive swap baked into the future. And so it would decay less in price than spot if it were going the wrong way, because you'd have that added component. So lest you think there is an arbitrage opportunity here between the futures and spot, there isn't. But spot lets you see transparently what that carry is. It's sort of separated from the price, but also spot lets you manage your position size much cleaner, and there is no expiration. So you don't have to worry about the contract expiring.
The Aussie dollar lets you be long the dollar and short China all in one trade.
That's right. And it lets you do that in sizes. If, for example, you thought, you know what, it's all cute, this thing, but either I've never traded FX, futures, or spot, or I don't know if this whole thing has legs, we're just going to buy the dip later. If you're concerned, rather than having even an M6 contract, which would be 10,000 currency units, essentially a micro lot or a mini lot, you could go lower than that in spot. You could go to 1K, so a tenth of the mini futures. So you could have this exposure be very, very modest and control risk in a very nimble kind of way, in a way the futures don't let you past a certain size.
Yeah, that's the beauty of the TastyFX platform embedded here, is like I like to trade in micro lot, like 5 micro lots or 0.05. And that position size is so small to where like I regularly forget that I even have it on until a couple days pass, and I'm like, oh, I should maybe check on this. You can also put in profit loss targets too, or profit targets and stop losses. But with position sizes so small, I'd rather do the profit target side and just let the losses run. That's just me. But
I have those levels in my head because I want to allow the markets to kind of fuzz around them, and I can make the call. But if you wanted to lock them in, not unlike, by the way, on the option side, the analog is doing a vertical and saying, I am going to lock in my risk reward to some extent and say, okay, I'm risking this to make that. I've locked in a 2-to-1 risk reward. As long as I'm right 30% of the time, and I'm locking in a 2-to-1, a 3-to-1 risk reward, I'm going to make money. I don't even need to be right half the time. I only need to be right a third of the time, and I'm making money overall.
Well, you're breaking even based on the math you just described, with all due respect.
If it's 2-to-1, yes. If it's 3-to-1, you're making money. And so if that's the analog, you can lock that in with stop loss and limit orders in the spot FX side and basically end up with the same thing. Obviously, execution, as in all things, is a function of market conditions, and sometimes you get fruit birding from various places, and market rules go out the window, but such is life.
Yeah. one cool thing with currencies and futures, if you're using futures options, is not always, but sometimes you have these particular time frames like we are now with the euro dollar, where both of these expirations, the 51-day and the 23-day, they both settle to the Z5 contract. So you have no issues. You have no issues if you're long one and short the other of actually being long one contract and short a different contract. Both of these options settle to the same contract. So all that to say, it will feel like a regular diagonal spread if you were to do it in like SPY or the Qs. So you can throw something on like this where you're taking advantage of the near-term implied volatility, buying some longer-term option premium here, and you have yourself a theoretical risk graph that looks very similar to, if I can click the right buttons here, very similar to, you know, the ones that we talk about all the time. And you can define your risk similarly. Extrinsic value, $1,000 trade, you can make 500 on the way down, and you can hedge, you can manipulate this position, the short option, if it continues higher. But yeah, there's a lot of futures contracts right now that are in this window where you've got a 50-day and a 23-day or around there that settle to the same underlying contract.
Yeah. Now, it'll be no secret to anyone, I think, at this point, that I am a big fan of spot for all kinds of reasons. And much of them have to do with what we've discussed here. How nimble you can be with your size, how much you can customize your risk reward that way, how liquid this stuff is even after the cash equity close. I mean, obviously, most liquidity is still going to be in the London and New York overlap. So from about 8 a.m. Eastern to about noon Eastern, where both of those markets are on at the same time, you'll notice that's the tightest spreads you'll see on everything, including spot FX, just because the sheer volume of activity. But these things are, especially the major currencies, the G10 currencies, even the G8 currencies, they're going to be very, very liquid, even in Asia market hours, even in European, like sort of early Europe market hours. So you can put things on very, very tightly spread-wise in small size and really customize your level of risk exposure for not a bunch of money to execute very easily.
Love it. Couple minutes left here. I'm going to ask you the same question I always do, or try to. 1 day, 50-point move into SPX. The rest of the week through the 17th, 70 points. Where are you going to hang your hat? Inside 70 points to the upside or downside, or outside, upside, downside?
Outside.
Outside down?
Outside down.
Ooh. Well, that's to be expected.
I think we're getting to regime change here.
So predictable. All due respect. So it's what you do.
It's what I do. I've been waiting for what we've seen since Friday all year long.
If you look at his cufflinks, one says outside and the other one says down. So I'm going to say inside up.
And I'll take that one step further. I'll say outside up.
Got to make a market.
Yeah.
Outside up.
Yeah. Outside up. We'll be back to highs by the end of the week.
The one universal consensus amongst the three of us, for whatever that's worth, long dollar.
Yeah.
Do whatever you want with gold. Say what you will about NASDAQ and the fruit birds.
Yeah, sometimes it's as easy as just, and when I say easy, I mean when you're trying to find trade ideas in this market, just make it simple for yourself. Just ask yourself, what do I really truly believe is like a layup? And then you just build your trade around that with defined risk or risk within your threshold and a long time horizon to be right.
Yeah. Makes sense to me.
Cool.
What exactly is a fruit bird anyway?
I don't know.
Somewhere in the vicinity of a unicorn. It is a mythical creature.
I thought it was somebody at 1600 Pennsylvania Avenue.
It could be both.
I'll ask ChatGPT, see what they say.
And with that, overtime is out of time. If you have any thoughts on the nature of the fruit bird as a real or mythical creature, by all means, let us know. We'll be back to parse this discussion in a mere 23 hours, but don't go anywhere because I'll be right back for Macro Money, where we're going to unpick the non-data calendar of which there is nothing and try to figure out if, in fact, this is regime change for markets and see if we can get some sort of a macro narrative out of the price action itself. So don't go anywhere. We'll be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
And we have another seesaw day for the markets. We had all the opportunity, it would have seemed, to find a little bit more direction. We certainly tried, but the markets once again refused to find direction. There's certainly a lot of fire and fury. We end up with a situation where the markets certainly find a way to go to a lot of places, but ultimately not get anywhere. And what we're going to try to do here is figure out what's going on and what it all means. I'm Ilya Spivak, head of global macro here at tastylive, and this is Macro Money. And what we'll do here first and foremost is we'll take a look at the way that these markets behave. We'll take a look at the price action as it presents itself, and then see if we can't figure out what all of this amounts to, especially in the absence of economic data, in the absence of the sort of usual catalysts that might have been the driving force here, at least from the macro side, and ask a very important question. Are we finally in regime change mode for these markets? Now, it probably behooves us to then define what this means. What is regime change? What would be regime change? And probably the most helpful thing in looking at that story comes from the price action itself. And we find here that we get a little bit of a pop for the risky assets, at least at face value. S&P up almost 0.4%, NASDAQ up 0.6%. Decent showing in the bonds world, so not really going anywhere on the 10-year, a little bit higher on the 2-year, so yields a little bit higher, kind of lending credence to the idea that this was a mildly risk-positive day. Dollar is a little bit lower against the euro, a little bit lower against the yen. That Bitcoin is down is an interesting kind of thing here. It has been the order of the day recently, and for obvious reasons, that Bitcoin has been a kind of stocks on steroids type of asset, where if it's risk on, then stocks are up and Bitcoin is up more, and if it's risk off, then stocks are down and Bitcoin is down more. That's not what we're seeing here, clearly. And so looking at this, then, we seem to have, just looking at the daily close, as a kind of disconnect when it comes to Bitcoin, but everything else seems to fall broadly in line. Gold and crude oil, of course, continue to do their own thing. Crude oil doesn't really go anywhere. Gold apparently only knows one thing in the current environment, and that is to go up regardless of market conditions. It is up another 1.5%. But it's really the stock market that is the most interesting in this environment. And it's interesting in particular because of what the price action seems to suggest and how it was that we arrived at these end of day readings. And in the service of that, let's first take a look at the S&P, and of course the NASDAQ is going to be basically the same story. The upshot of everything that we're seeing here will be largely the same for NASDAQ. And so we'll just look at this chart as a kind of stand-in for risk sentiment in general. And what we find here, and this is where sort of our thinking about regime change comes into focus, we see this pointed rally here from April's lows. So here's Liberation Day. This is when President Trump comes out with that foam board of diverse tariff rates that everybody immediately freaks out about and says, oh my God, we're going to have bilateral negotiations of every single one of these tariff rates. We're going to have an absolute nightmare of trying to figure out what the rules on trade are in this environment. Holy moly, sell. And overlaid with that, of course, all the issues that follow. If you have a holy moly level situation on trade, then you also have one on the dollar. You also have one on risk appetite and the economy in general. And so you get this episode here where bonds and the dollar and stocks all go down together because the concern is that what the tariffs will do, among other things, is undermine the role of the dollar as a reserve currency and as a currency of commerce, undermine then the capacity for the U.S. to pay its debts at reasonable interest rates, and thereby sort of undermine the bonds, on and on and on and on. But from April, once the White House saw that kerfuffle and said, whoa, 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 hold on a second, here's a 90-day pause on the tariffs, this is too much, we hear you, let's back up. Since then, we've been in something of a regime. That regime being clearly bullish. Higher highs, higher lows, and every time that we've had, let's say, a trend chunk higher, where the slope is about here, higher highs, higher lows, then we get a downtick, whereby this is different from, let's say, something like this. This is just a day or two in the wrong direction, but the trend is intact. Here, the trend is ostensibly challenged, but in short order, we find a bottom, it's bought up, and we just change the slope, and the slope becomes this. Same thing here. You get a downtick, and it turns into a change in slope, not a change in direction. What we find here becomes fundamentally different in that context, where we get the downtick, much as we had here, much as we had here, but rather than the markets buying the dip quickly and getting us back into whatever resloped up move we've seen, what we see over the past 3 days are repeated attempts at a bounce that are consistently sold into. And so every time over the past 3 days that the markets have attempted to find their way through the dividing line here, if we kind of guesstimate that there is something, let's say, ugly as that line is, that there is something here, let's do that better, that essentially defines where this turn looks to be. So if, for example, we were to say, well, here is a line in the sand, right here, where this was the prior high, we got over it to restart the up move. We've now faltered and undone that breakout. And so instead, we're left with now a move lower. And every time, especially today, that we've attempted to get back over that line, we have failed. And so what you find here then is perhaps a change of regime, whereas every sell-off before was a reason to look for a buying of the dip. What it looks like over the past several days is every rally has become a reason to sell into this market. And so obviously it's early days so far, but what the price action seems to suggest here is that maybe we have finally turned a corner. Maybe this market has finally exhausted its resilience. Now, why do we think this? Why is this not just a pause to digest? And incidentally, it might be a pause to digest. But let's consider some of the kind of adjacent things occurring here that color what we think we're seeing. First of all, here's the sell-off on Friday. And what we're looking at here is the Russell, the S&P, and the NASDAQ. And what we find is that the NASDAQ has underperformed relative to the other two. Moreover, the Russell has outperformed. So on net, starting with the session open on Friday, so at the top of this red bar right here, starting here, we find that the S&P is net down 1.1%. NASDAQ is net down 1.5%. Russell is net up almost 1.8%. Which is a curious thing, because if what we saw on Friday really was a truly kind of straightforward, as it appears, reflection of this concern about re-escalation in the U.S.-China trade war, which was, of course, the triggering headline. The president went to Truth Social and posted a bunch of combative things about a 100% tariff on China, kicking off November 1st because China has decided to put significant export controls on rare earths minerals. If that's what this was, then that's a concern about growth and a headwind to economic activity. Surely that is a more vulnerable kind of story for the Russell, where small cap, cyclically sensitive names live, rather than the NASDAQ, which is where cash-rich, big tech names live. And where we saw outperformance, for example, during COVID, when there was no global economic activity to speak of. Because those names are probably the most immune cyclically in the current environment. And the AI craze only helps in that direction. It's not about ROI yet. It's still about picks and shovels and building what AI will need. That's been the driving narrative here. So if what we're concerned about is a growth risk because of the US-China unpleasantness here, one would think it's the Russell that does worst and NASDAQ that holds up better. And clearly that's not what we're seeing, which makes one think that this is not about what the impact of trade war escalation would mean as such, and more about here is a reason to de-risk and reduce exposure in the place where most of that exposure has been. Big tech. Obviously, these are giant nodes of market cap unrivaled elsewhere in the space. So that suggests that the markets are in a mind to be liquidating, and the trade war is an excuse, not a reason as such. We had a couple things on the calendar today. Of course, economic data continues to be on pause while this government shutdown continues, but we did have some comments from Fed officials, most notably newly minted Fed Governor Stephen Miron, the White House's contribution to the FOMC group. And what we see, that's me being charitable, by the way, and because clearly it's highly unusual that somebody who is still technically employed at the White House, if technically on pause from that, also serve on the ostensibly independent monetary policy board. Very unusual, as far as I can think, unprecedented. But here we are. And the comments are what you might expect. Current Fed policy is more restrictive than people think. So basically all of the counter to the Fed consensus that you might have expected is on display. Differences in policy views for Mr. Miron relative to his colleagues is more based on speed of cuts versus the destination. This is certainly accurate. That we're cutting rates is consensus at the Fed at this point. He's more sanguine about inflation because he thinks housing costs are going to go down, and that's going to take inflation down for everything in whole. And if that didn't happen, he'd be concerned. He's also saying that there's no evidence that tariffs are raising inflation and that arguments are based on prior trends. I think that's a very difficult argument to make because, of course, the data seems to suggest otherwise by a long mile. We clearly have seen that tariffs are a factor here in PPI numbers and CPI numbers over recent months. Goods inflation is at multi-year highs. I mean, that much is clear. So it's an odd case to make, but nevertheless, there it is. Also, renewed U.S.-China tensions increase uncertainty, so not surprisingly, the very dovish Mr. Mirren has found a way to look at this as a reason to justify more rate cuts, which is where he wanted to go anyway. Makes sense, and also no surprise. Once again, exhorting the Fed to be seen as non-political, which is curious given how Mr. Mirren got to where he got, but no real bombshells here. And looking at the pricing for Fed policy, you can see that there wasn't really any bombshells here because the market did not really take this to mean much of anything as it pertains to policy expectations. If we take a look here at what we have on display, we find that we're still hugging the high 90s, as it were, for policy expectations of a rate cut at the October meeting. You can see that much has barely budged either versus yesterday or even versus a week ago. We see something very similar for December. Obviously, as of Friday, we had a massive surge in rate cut expectations there. But even a week back, so even before Friday, we can see we're really anchored into the high 90s here as well. Now, a week ago, this was closer to 80, so not quite as certain. But after Friday, we're clearly convinced that this move is coming, and it's coming at this point as assuredly as markets really get about an event in the future where there is always some degree of uncertainty because nobody has a crystal ball. So what we then end up with is an interesting situation because whatever Mr. Mirren said here clearly had no impact whatsoever as far as sort of the brass tacks of policy expectations. And the disconnect for next year, that basically remains frozen in time. The market's still baking in 69 basis points in cuts versus the Fed's bet on only 25 basis points. And the markets seem unwilling to want to reconcile that for the moment. Probably makes sense because there's no economic data to speak of, and so you don't really have anything to hang your hat on to think a little bit further ahead. So no big changes here, and in that context, not surprising that rates didn't really go anywhere today. The 2-year a little bit fuzzy, but 2 years more volatile than the 10-year, so that's not surprising. But ultimately, nothing ends up running away this way or that, and that makes sense. If we take a look at the way that policy expectations have behaved relative to what we've been seeing in stocks, we're actually seeing this new dynamic here, which helps to make the case that we have some kind of a regime change because we're getting more dovish, and yet we are not seeing stocks find solace in that in any kind of a lasting way. That, of course, is a huge contrast between everything that's happened, let's call it, from about here, where stocks keep going higher, but the recovery in policy expectations after April's scare ends, and you get more dovish expectations coming alongside higher stocks. Well, now things appear to have changed course, and you get stocks getting, at the very least, stuck even as expectations get more dovish. So you're not really seeing that same uplift to sentiment. Meanwhile, the dollar continues to perform well. It continues to recover even as things get more dovish here. And so ostensibly the rebound in the dollar is not because rates are going to be stickier at higher levels, and that gives the dollar a greater yield advantage. Instead, the dollar seems to be gaining for other reasons, and I would argue for haven reasons, because this is happening, this rebound in the dollar, again, as stocks get kind of stuck. And so the dollar is rising as we get a kind of risk-off sheen to what's going on in stock markets. There's not much on the calendar, of course, over the next 24 hours because data is still on pause. We do get a bunch more speeches. We'll see if the markets decide to care about them, but policy is certainly not front of mind at this point. And apparently neither are earnings, because we get another big batch of bank earnings today, and there's a hodgepodge of responses. Ultimately, nobody misses. Abbott Labs comes in line at 1.3 EPS. The price response here, which you can see in the box, is a hodgepodge of gains and losses that seem to be sort of idiosyncratic to the names, but ultimately no unifying narrative and no immediate follow-through to bigger forces here. As far as the way that this earnings season is proceeding, and this is the framework from FactSet, we see that the amount of reward that markets have been getting for positive responses is only about a third of the historical average, whereas the negative response to misses has been greater than the historical average. And so you do get that sort of risk-off sheen that does point to regime change potential. And so exposure-wise, what I'm doing here is I'm still holding long the dollar against the Aussie, the pound, the euro, and the Canadian dollar. On the spot side of things, I also have a short exposure to the Swiss franc and the yen. And I've taken some put vertical bets here against the NASDAQ and the S&P, because it does seem like we're struggling to rebuild back higher. And so perhaps, again, we are no longer in a mode to buy dips. We are now in a mode to sell rips. Adding into that bond exposure, bonds seem to be clawing higher in this environment, which is interesting, of course, because that means lower yields, and that's not helping stocks, which only helps to reinforce the narrative, whereas before it might have been expected to help them. So still have these call verticals in the long end via TLT, still have a put vertical in crude oil as an overlay on all of this, and yet another risk-off piece of the puzzle. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host usually with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, and today I'm joined by Young Chu, CEO of StablecoinX, the first publicly traded treasury company established to focus on the Athena stablecoin ecosystem. Young is a CFA charter holder and brings over a decade of experience in leading both traditional finance and crypto companies. Young, welcome to the show.
Yeah, thanks for having me, Ryan. Thanks for having me, Dan.
Yeah, for sure. Let's just jump into it, because I think this is a really interesting topic. Stablecoins have been hot in the news, and we've integrated them on our platform. So what drove the decision to create a treasury company specifically for the Athena ecosystem? Why is this model more appealing to investors over a direct investment approach?
Yeah, so I started this journey. I've been in crypto now for about 8 years. Before that, I was in traditional finance for over 12 years, started my career at Citigroup. But when, as I was talking to you before, in the past, I was previously CFO of Hedera Hashgraph. Before that, I was Chief Investment Officer at Abra. But it's just wild. It's just wild how much we've progressed over the past 8 years in this space. And so recently, just about last year, a friend of mine asked me to join as CEO of TLGY Acquisition Corp, SPAC. He's also been in traditional markets in the past. He's been in SPAC world for about over 18 years. And he brought me on board to head up TLGY to look at what we can do in the crypto company with the new administration. And so we were talking late last year, and we saw what Michael Saylor was doing with strategy, obviously, what Sol Strategy, what Leah Wald was doing with Sol Strategies. And we thought we could improve on that model, right? So what those guys are doing is basically buying crypto at spot, putting it into a company, and essentially, just having that listed vehicle ride on the beta of those of Bitcoin or Solana. But coming from the layer one protocol at Hedera previously, I thought we could improve on that because a lot of these projects are looking for two things, right? I mean, they're looking for a public market advocate to help them get the word out about their protocol beyond just the crypto community. And so that's one thing that I think a lot of foundations in the crypto space are looking for. And the other thing is for investors, they're looking for a decent return, right? So being, again, historically at Hedera, we sold tokens at a discount, anywhere from 30 or 50%. OTC, and they're locked tokens, and we sold them to investors, hedge fund managers, VCs, and we thought we could create some value to investors by being able to create a digital asset treasury company, buy these tokens at a 30 or 40 or 50% discount, and then have those investors or shareholders benefit from that discount that we're purchasing these tokens at. So that's how we came up with the idea. That started late last year. We've been talking with several foundations in the space. And when we came across Athena, we thought this would be a fantastic partner to work with. Just the fact that they are in the stablecoin space. We know that Circle is coming up with their IPO in the next several months. This is early this year. And so we saw their S1 filing. And the stablecoin narrative is a pretty simple yet very compelling narrative to give to Wall Street and Main Street. So that's how we came to where we are. We signed an LOI with the Athena Foundation back in April, and we got the definitive merger agreement with them back in July 21st.
Awesome. Yeah. And I think it's a really interesting insight. It's an awesome story, by the way, just kind of the background and how this came to fruition. And, if you're a crypto native like I am, like you are, even you're following the space, obviously Athena was kind of a big name in the stablecoin space over the last couple of years. So it's getting more traction now. Obviously, stablecoins, to your point, have been, accepted widely with this new administration. And, I'm curious, I read in the press release and doing my research, you guys raised close to $890 million in financing to go on and purchase the token ENA, which is the protocol token, USDE being the stable coin. This is a huge bet, obviously, and makes you the largest holder of ENA. So can you just walk through that ENA investment thesis for us?
Yeah. So, like I mentioned, it's there's a great shift happening in the stablecoin market, and we call this a stablecoin super cycle, right? The Treasury Secretary, Scott Bessent, he expects stablecoins to grow from, I believe right now it's just under 300 billion, right? Because there's been a massive rise in USDE over the past month or two. So now we're close to about 300 billion. And Treasury Secretary Scott Bessent expects stablecoins to grow to about 3.7 trillion by 2030. So that's a 12x increase in just the total addressable market in the next 5 years. On top of that, the yield-bearing stablecoins, they're currently about 5% of that 300 billion. And there's been research reports out there from JP Morgan that estimate in a bull case that the yield-bearing stablecoin market could grow to about 50% of the stablecoin market in the next 5 years. So you're seeing, not only you're seeing a 12x increase in the TAM of stablecoins, you're potentially seeing a 10x increase within the stablecoin market of yield-bearing stablecoins growing to be half of that $3.7 trillion market. So that's a massive compounding effect. And we think that is by the definition of what the stablecoin super cycle is. And INA and the Athena protocol is well poised to benefit from that.
Yeah, no, it's a great point, and I think any investor, right, when they look at this asset class or they look at stable coins and they think, I want to yield, right? That's kind of what investors are looking for. And Circle, USDC, some of these traditional issuer stable coins, USDT, they don't pass that yield on. So I think that's where, if you do the research into Athena, that's where kind of it stands out. So, it's a great point and definitely something that, sets it apart. So for our audience they're typically familiar with traditional derivatives, options, futures, can you explain where that yield comes from? Can you kind of dig into that a little bit, that delta neutral approach?
Yeah, so this is a pretty common strategy that's run by a lot of hedge funds in the crypto space. It actually came from the traditional finance guys. They've actually done this with US Treasuries. And so what they do is they typically sell the futures and buy spot. And that's in TradFi. But in the crypto world, what a lot of these hedge funds have done in the past, and because there's a pretty nice premium with it, they sell Bitcoin futures and then they buy the spot Bitcoin. So they're hedged, right?
Right.
So whatever happens to the price of Bitcoin, it's always delta neutral because it's hedged. You're buying spot, but you're selling futures. And there's a premium to futures because typically people pay for that premium because they're getting leverage on those Bitcoin futures. So that's what the Athena protocol does. They sell the Bitcoin futures and then they buy the spot. And then they pass on that difference, that premium that you're earning, that you're gaining from that selling the Bitcoin futures. They pass it on to the USDE holders. And so that's what's called a delta neutral hedge position. And this is very common with a lot of the larger hedge funds in the crypto space. And this has been proven in the TradFi with US Treasuries, like I mentioned before. And so that's where the yield comes from.
Gotcha. Okay, so it's kind of like a carry trade in other words,
exactly.
And so digging in that a little bit, and I think investors, a lot of them want to know how to value things, especially in crypto, right? Sometimes it's vague, especially if you're coming from TradFi. Maybe they want to value it on fundamentals, but there's not often one-to-one fundamentals with TradFi. So with this ENA stablecoin X. In ENA, what would you say you would value that on for investors? Like, is it token price? Should they look at protocol revenue? Obviously, the carry trade's a big component. Or is it just a broader bet, to your point, on stablecoin innovation and adoption?
Yeah, so for valuing stablecoin X, I mean, you got to think about it like in two different ways, right? There's the beta component, right? Basically, because we are a big treasury company of the ENA tokens. But then also there is the alpha, right? And so that alpha will determine at what sort of premium to MNAV we trade at. The NAV is going to be based on entirely by the price of ENA tokens. So that's what I call the beta component, right? And so the ENA token price is driven by a lot of things. It's driven by the growth of the USDE. It's driven by the USD users of the Athena protocol, the protocol revenue itself, and increased distributions of USD on more wallets like exchanges. Like they had a recent announcement with Binance where they're basically partnering with them to quote a lot of the cryptocurrencies in USD. So there's all that. And that to me is what determines the MNAV. And that is the biggest component of the stablecoin X price. And that's the beta, right? But then the second component, like I mentioned, is the alpha. The alpha is really how good of a job that we do, the stablecoin X management, in terms of getting more ENA tokens per share for shareholders. And so that's things like we intend to stake our ENA tokens onto the validator network, on the Converge network when it launches. We're also looking at different ways where we can potentially earn yield by maybe even buying USDE and taking out debt so that we can, well, the debt's got to be at a lower cost than the yield we can earn on USDE. But there's things like that we're thinking about. And then also we have a collaboration agreement with the Athena Foundation. It's a 5-year collaboration agreement where we have a right of participation to participate in their future discounted token offerings that they provide to the OTC market. So we can purchase, ENA tokens we purchased tokens at a 30% discount in our previous pipes. But going forward, we have a 5-year right participation, continue that, buy more ENA tokens at a discount. And then that's one way we can accrete value to our shareholders. As long as we're buying these ENA tokens at a healthy discount versus then the shares that we can issue at. If we're issuing shares at a 1 times MNAV or 1.1 times MNAV, and we're buying these tokens at like a 30 or 40% discount, we're accreting value to our shareholders that way. So that's how, those are the 3 different ways we can earn alpha on the ENA token so that we can trade at a premium to our MNAV.
Yeah, no, that makes a ton of sense. I appreciate the illustration and you simplified it a ton. And I'm actually interested, you're going to go out and it sounds like you'll go out and actually try and run some DeFi strategies. So would you, to try and earn a little bit more of the yield, would you be using like Aave, or would you be going out like Pendle is another one I think is interesting? Or is that kind of something you're still figuring out?
We're still figuring that out, and we have to be careful because we are going to be a listed company.
Sure.
And so some of these protocols that you mentioned don't necessarily run the right KYCs.
Gotcha.
And so we have to be careful on which particular platforms we decide to run these strategies on. But yeah, I mean, we're exploring all those different things, but we have to be mindful that we are an SEC reporting company.
Of course, yeah, for sure. So, I think when I hear yield-bearing stablecoin, I think other crypto natives, when they hear yield-bearing stablecoin and carry trade and some of that, we look at maybe, you think of like Terra Luna, you think of some of these other blow-ups from last cycle. So a lot of critics will point to like the funding rate risks of the perps markets, futures markets, exchange counterparty risk. Obviously, you pointed to the protocols not running KYC, regulatory oversight risks there. So how are you addressing these risks and mitigating them at being, the largest CNA holder?
Yeah. So, I mean, we've come a long way since the Terra Luna debacle. And, that was an algorithmic stablecoin. This is a synthetic collateralized stablecoin with the future spaces trade as its collateral, like I mentioned. But there's the ways that we mitigate risk is, there's a lot of different things that the Athena protocol can do itself, right? And then there's the things that stablecoin X does as a participant or as one of the larger holders of the Athena tokens. But just to kind of broadly talk about those different topics that you mentioned. So the funding rate is one of the risks. It's historically been mostly positive. It's ranged anywhere from 5 to 25% over the past 3 years. But the funding rates do from time to time go negative. And the Athena protocol does have a reserve to buffer losses when rates do go negative, right? It usually happens, I think in the past, it's happened about to 10 or 15% of the time, right? So they also can close a future spaces trade and purchase USDTB to fund those, yields to USDE holders as they wait for the, funding rates to go from negative to positive. By the way, the longest that the funding rates stay negative is about hasn't been longer than 13 or 14 days.
Oh, wow. Okay. Yeah.
I mean, but this is something that the Athena protocol does itself to manage those risks. But we, as largest holder of the Athena tokens, we participate in the governance, right? The governance of the Athena protocol. And so we don't manage directly those types of decisions. We can basically, participate in any sorts of decisions or any sort of votes that come up where we can either, appoint or maybe, give suggestions or change some of the risk committees within the Athena protocol, but we don't directly manage that ourselves. Right. So that's, as a large Athena holder, token holder, that's how we can mitigate some of the risks. Then there's also questions about the counterparty risks, right? Because the Athena protocol is running these future spaces trades on various exchanges. Well, the exchange that they run, the biggest exchange that they run on is on Deribit. And Deribit now, as you know, is they're owned by Coinbase or merging with them, and they're going to be a $80 or $90 billion market cap company when they close a merger. I think they already closed actually. So they are the counterparty risk there is pretty mitigated in my opinion. So There's various different things that are happening, but we've come a long way since those Terra Luna days. And in fact, when the funding rates do go negative, when you close those positions, there is this kind of mean reversion, right? Back up to, that's why the funding rate hasn't been negative for more than 1 or 2 weeks. So that mean reversion does allow the protocol to get back into a positive funding rate environment.
Gotcha. Yeah. And like we were talking about before the show, like we've come a long way since we both entered the space, and, liquidity, we've seen more liquidity come to the space. Obviously, with the positive regulatory environment currently in some of the, regulations passed here in the States, it makes it a more trusted environment to operate. And then Coinbase, some of these counterparties you talked about, they're well capitalized, right? So that as a participant, that makes me feel pretty good, and obviously come a long way since last cycle. So I want to get into this stablecoin super cycle narrative and dig into this a little bit, because here at Tasty Trade, we're traditional finance first. We provide access to derivatives, futures options, forex. And stablecoins was one of the big things that we've implemented and seen a huge boost with not only current clients but new clients funding. So I want to know your opinion on what's driving demand for stablecoin adoption, and then how Athena kind of fits into this.
Yeah, so as we've seen, there's a lot of institutions that have been kind of waiting on the sidelines. Banks in particular, we're kind of joking about this, like if you're old enough to be in this industry 5 or 10 years ago, you probably had your bank account shut down a couple of times, right? Yeah. But now banks have been waiting for regulatory clarity. They have it now with the Genius Act, and banks and institutions are just starting to dip in, right? That's why we've seen just in the past 2 months, man. The stablecoin market cap grew from 250 billion to 300 billion, 50 billion in just a couple of months. And you're seeing more and more institutional adoption. So that's what's really driving a lot of the growth in the stablecoin super cycle. We've seen, the Genius Act was passed, this is my opinion, because the stablecoin industry participants are now the 12th largest U.S. Treasury holders in the world. And when you have a lot of these sovereigns that are a little uncertain about holding U.S. Treasuries, or a little uncertain about the geopolitics with the Trump administration and the tariffs and all that, China, I think they're not a net seller, but they're not renewing. They're not buying any more U.S. Treasury. They're not buying as much to redeem or to replenish. So a lot of these countries are starting to dip down in terms of their U.S. Treasury holdings. And you see this little industry participant called stablecoins and Tether and Circle and some others that are now going through up in the ranks of U.S. Treasury holders. And so, in my opinion, that's why I think the Genius Act was a priority for Washington. And with that, you're seeing a lot, now that you have that clarity, a lot of the companies, a lot of banks, a lot of sovereigns are paying attention to stablecoins. And so I don't think that's going to slow down anytime soon. It's going to continue. You're going to have other countries doing the same thing, passing something similar to the Genius Act, and you're going to see a lot of adoption here.
Yeah, no, it's a great point. And, obviously if you're in the finance industry and, you follow some financial media, there's always this talk about, government debt, and I guess China, some of these sovereigns are reducing exposure, and then if you're in crypto, you're realizing, oh wow, these issuers, these stablecoin issuers, they are the buyers, and they're the big buyers, and nobody, if you're outside of the space, nobody's really paying attention until obviously this year to these issuers. So yeah, the regulations had to catch up, the laws had to catch up. So, I think it fits with that stablecoin super cycle narrative. And, you mentioned Circle. Circle was a massive IPO. I saw it here at Tasty when it went live, on the trade desk, some of that stuff, kind of how it traded, beginning during its IPO, and obviously Tether, right? And Tether just launched Plasma. And it's the biggest stablecoin, US dollar Tether being. And so I'm wondering, how do you view competition from those players? Obviously Athena is a little bit different, but there's those incumbents and then the new entrants. So how do you view that competition?
Yeah, so they, like you mentioned, they are different. USDC and USDT, they don't offer yield to their holders; they keep it all themselves, right? So we don't necessarily view them as competition. In fact, Tether, they're very complementary to Athena, right? So USDT, they comprise about like 15 to 16% of the collateral. Or we have the Athena protocol has a redemption liquidity pool. So that they can stay liquid and they can have people that are redeeming, they can pull their points or their cash out through USDT. So they're very complementary in that regard. So we don't really view them as competition. But there are new entrants. We encourage that. There's more innovation to come. We're just scratching the surface, right? And so even though Athena is the largest yield-bearing stablecoin with roughly about 4 or 5% of all the entire stablecoin market, there's definitely a lot of room for new entrants to come in. And so we haven't seen any other compelling other protocols, but I'm sure there's going to be some. I'm sure there's going to be others. And we have many years to run wait until we get to a $3.6 trillion market, $1 trillion market cap in stablecoins, 50%. I mean, there's so much room for other participants to come in. So we welcome that.
Yeah, no, I think rising tide lifts all boats in this space in some respects. And obviously, you want to keep the bad actors out, and so obviously encouraging and working with each other, like you said, Tether makes up a portion of Athena. It's good. It's positive for the space. I've been in the space since 2017. I know you've been in longer, and just seeing people, seeing the way it's developed, and seeing how these protocols kind of work together. We should welcome some of these new entrants, some of this competition, and hopefully it'll grow the space even bigger. So, I guess, if we look ahead, right, and you talked about, you guys are well capitalized, you have a long runway, multi-year outlook. What would need to happen in the Athena ecosystem for Stablecoin X and what you're doing here to be considered a major win?
Yeah, so I mean, like I mentioned in the past, two things. It's the ENA token price performance. If that is our biggest driver of our stock, because that is what our MNAV is benchmarked against, right? So if the ENA token performs well, we do well as Stablecoin X. So that's one. And those things are driven, like I mentioned before, like growth in the USDE, user growth in the Athena protocol revenue increasing, distributions of USDE, all that stuff is what we would love to see. And the other thing that we would love to see and would consider a win is if we increase our ENA tokens per share. That is how we get that extra bit of juice to go from just a MNAV benchmarking the ENA token price, but if we trade at a slight premium because we're able to grow the ENA token per share, that would be also another huge win.
Gotcha. Okay, so we have to look at MNAV, have to look at ENA price. Like we mentioned previously, that's kind of what we're benchmarking and what we'd like to see, what you'd like to see over the next couple of years. So, being in crypto for so long, you always get kind of the skeptics, right? Or you get, why should I buy this? Or it's, all the stories, all the critics. So what is your message to traditional investors who might be hesitant about this approach to stablecoins and crypto exposure?
Yeah, so I mean, for TradFi investors, which is the market that we're targeting, right? Primarily on top of all other crypto investors, if you want exposure to explosive growth, right, expected in the stablecoin market, there's only really a couple investments you can really make, right? So there's Circle, right? There's Circle stock, which is now trading at, I think, about 130 PE or something like that. I mean, they had a phenomenal ride. They went up to about $50 billion market cap, and now I think they kind of settled somewhere around 30 billion. But they're still, I mean, this is not investment advice, but if you ask me, it might be a little rich at 130 times PE. And so there's you can invest in that, or you can buy Stablecoin X stock. Stablecoin X stock, we haven't gone effective yet. We expect to sometime in the next several months. But when we do become effective, there's going to be now potentially 2 different types of vehicles or investments that you can deploy your stablecoin investment thesis into. And so we think that is going to be an interesting dynamic between, we think some of these things will probably trade at close to MNAV or maybe slightly above, but this is where investors that are in traditional finance, if they want to express that stablecoin narrative that's thematic, there's really only a couple investments that they can make that circle the stablecoin X potentially in the next couple months.
Gotcha. Yeah, we'll definitely have to look at that, and I'll be following it closely as you guys progress to get listed. So we got a minute left. I just want to allow, where can our audience find you and follow along after today's show?
Yeah, so we're on X. The Twitter handle there is @stablecoin_X. We post there pretty regularly, so there's a lot of posts that we make about what's happening with the Athena protocol. We give them updates on what's happening with us particularly. So they can follow us on X. That's the best way to follow us, sir.
Awesome. Yeah. So, Young, I appreciate it. This was a great conversation. Would love to have you come on again. Maybe as you get closer to listing, always down to chat. Love hearing about this. It's really interesting, and I wish you luck. And I'll definitely follow along. As you guys get closer to listing.
Thanks, Dan. Thanks for having me.
All right, that's it. We'll see you guys Wednesday. I'm Dan. Peace.
Good morning. It is Wednesday, the 15th of October.